we'll get started with chapter number 1 of our accounts. Okay, the main heading is theoretical framework. So under this you can write the scope of or the meaning or introduction to accounting, you can call it. Fine. See, look, this particular chapter is about almost 20 pages in your study material. Fair enough. But all those contents, it's a theoretical concept. This one is first chapter, unit number 1 to, I think first 2 chapters in your study material is all mostly theory. Fair enough. So I've summarized that into about 3 pages of your chart book. So that is the importance of the chart book. We'll be able to collate things, reduce the pages and revise faster. Let's see how we can take the help of chart book and cover the things conceptually a lot earlier. Okay, let's give it a go. Fine. All right, first. So common question everybody will ask now. When it's an accounting topic, what is the first question any teacher will ask you? What is accounting? Yes, that is the primary question which everybody asks. I'll also ask you to the same thing because we'll have to follow the trend, Yes, fine. What is accounting, sir? Somebody is saying debit credit. Okay, I'll just go one step back. What is accounting? First of all, okay, I'll modify it slightly. Why do we need accounting, sir? Why do we need accounting? Yes, if accounts was not there, things were simple, no? Yes, you and I would not meet. Yes, whole lot of things would have been easier. Yes, many things would have been easier. Why do we need accounting? Can you tell me that? Somebody is saying to record the transactions. Fine. A simple mathematics can also do that, no? Mathematics can also do that. I received cash. I paid cash. So when I receive the cash, I'll take it as plus. When I pay the cash, I will write it as minus. Like this, I can do. Yes, a simple maths also can do that. To know profit or loss, to know financial position, for accuracy, to have an overview of money spent. My God, you are super duper active. That is awesome to see. Awesome. All right. Yes, you're all right. Yes, a simple mathematics also can record the transaction. But there is some loophole between maths. The mathematics, everything you can't cover. Like if I have to give you an example. See, to conduct the classes, I have brought a camera, correct? Yes, I purchased a camera. I require camera, mic, laptops, iPad. These are the things I require to give online classes. Yes, let's take a simple one. I purchased a camera by paying 50,000 rupees. I spent 50,000 to purchase a camera. Okay. Now using this camera, I am conducting a class. So when I conduct a class, you're going to pay me fees. Yes, no. I'm going to collect some money from you. Yes, let's say I collected a total fees of, let's say, 30,000 rupees. I spent on a camera 50,000. I conducted the class. Through that class, I earned about 30,000 rupees. Can I tell, listen to this question carefully. Can I tell I made a loss of 20,000? Can I say I made a loss of 20,000? Because 50,000 spent, okay, I got 30,000. I spent 50,000. That means I made a loss of 20,000. Can I tell like this, sir? Because if you do maths, that's what you will be doing. Yes, no? When money comes in, you will say plus. When money goes out, you will do minus. Yes. So you're going to compare this plus minus and accordingly you will get the result. Yes. Now that's what I've done here as per mathematics. I spent 50. So minus 50 I've did. I received 30, so I've written plus 30. I did a plus 30 minus 50 and I'm getting minus 20. A simple question is, can I say I made a loss of 20,000 current year? Majority answer is absolutely no. Why? Sir, this is the loophole of mathematics. See, mathematics may plus minus works. But am I going to use this camera? One simple concept we are forgetting. That is, camera I purchased, sir. Am I going to use it only for 1 year? Am I going to use this camera only for 1 year? Like one batch I will do and throw off the camera. Yeah, to hell with you. Go. I don't want yours. I'll throw it off like that. Yes. I feel I can use it for 3 years. That is my assumption. Yes, the camera ka life is for 3 years. I'm just saying. Okay. That means, can I compare this with this and say I made a loss? That will be wrong. Why? Sir, camera you will use it for 3 years. But the fees that you took, the 30,000, that is only for 1 year. When you are comparing, things have to be on the same platform. Then only you will get profit or loss. Correct? Yes, if you want to get a comparison, Apple versus Apple comparison, you need to do. Apple versus watermelon, if you compare, will you get the good result? No, right? So that is the loophole of mathematics. Okay, that is where accounting came into play. Fair enough? Because just recording inflows and outflows, no, you will not get everything. It just takes off the purpose. Like here, if you do the plain comparison, it looks like I made a loss. Probably it is not a loss. Why? Because I'm going to use this camera for 3 years. That means 3 years I'm going to get revenue. Then only I'll be able to check whether I made a profit or loss. Yes, this is one of the primary loopholes. Hence, they start building upon the ideas. Okay, we need a system through which we should be able to record it. Okay, and then ascertain whether we made a profit or loss. That is where the thinking started, and there goes the need for accounting. If we understand this, okay. So mathematics also will serve the purpose, but it will not serve the purpose greatly. Hence, there was a need for an accounting system. Okay, awesome. So let's come back now. First thing is transaction. Okay, what do we mean by transaction? Transaction is what? Because in accounting, if you just say, if you remember accounting a definition in your 11th standard or first PUC as we call it in Karnataka, yes, 11th standard. What was the definition of accounting, sir? You said, some of you said recording. What do we record? In accounts, we only record two things, transaction and we record event. These are the only two things we record, yes, transaction and event. This is all we record. That means we need to know what is a transaction. Everybody correct? Don't look at the screen there, unfortunately. It's visible though for you. What do we mean by transaction? What do we mean by transaction? Or here only it says, transaction means what? Performance of an act. If you do any activity, that we call it as a transaction. Only if there is an activity, then only there is a need to account. Otherwise, it is not required. Do we understand this? Yes. In accounts, we only record transaction. Transaction means an activity. Performance of an act or activity, we call it as a transaction. Okay. So only transaction we record. Sir, okay, yesterday I had a super duper dream. Okay. That I won a lottery. In my dream, I won a lottery of 10 crore rupees, sir. In my dream, okay, no, I dreamt big. In that dream, I won a lottery income of 10 crore. Can I record this in my books? This came in my dream, that you will win lottery income in the next 1 month. Can I record this in my accounting records? No, why da? You can express in money, no. Somebody said monetary transactions are recorded. That's the reason I'm putting you this pointer. Okay, somebody said, sir, only if the transaction is monetary. Meaning if you can express in terms of money, then you can record. So I'm giving you an example. I had a dream that I will win 1 crore or 10 crore rupees in 1 month. I should not record. Why? Don't tell me. No, in dream books you can record. But why? Give me the logic of this. Why we don't record? Because is this really a business related one or is this a notional one? Did this actually happen or this is a notional one? This is a notional one, yes. So we don't do notions and stuff in accounting. Fair enough. So we want those transactions which has actually happened. That is the first thing. Notional accounting, we don't know. If this happens, what to do? If that happens, what to do? That and all we don't do. Got it? If the transaction has happened, do a recording for that. That is observation. All right. Second one, let me give you another example. Okay. Mr. Narayan Murthy again. Mr. Narayan Murthy, okay, was appointed, let's say, as a managing director of Infosys. Can you pass a journal entry for this? A particular managing director was appointed. He was fired. Okay, a particular employee joined. A particular employee quit. For these sort of things, can you record in accounts? By recording, I mean journal entry. Yes, all of you must have heard about something known as journal. Yes. Can we pass journal entry for these sort of transactions? Employee joining, employee quitting, etc., etc. Can we record this? Can we record? No. No, sir. Why, sir? Why, sir? Because in accounts, we only record monetary transaction, meaning only those transactions which you can express in terms of money. Those transactions which you can express in terms of money, only that can be recorded. Okay. So all this, you cannot find out the value in terms of money. How much is this worth? Do you know? Do you know exactly how much is this worth? We don't know. Yes, you can't express this particular transaction. It may be transaction, but it is a non-monetary transaction. If it is a non-monetary transaction, sorry boss, we cannot record in accounts. Fine. So I hope transaction is clear. So transaction means a performance of an act. Okay, but that act should be monetary act. Can I say like this? First definition, is it okay for everybody? Okay. So that's about transaction. I told accounting is done for transaction as well as an event. Event. Yes. Now what is an event? Now event is the result of that activity. The result of the transaction, we call it as an event. Like, to give you an example, sir, let us say I purchased. Okay, I'm a dealer in this pen. Okay, I buy and I sell this pen. That is my business. I purchased 100 pens, sir, with an intention to sell it. That's my business. Okay. I sold during the current year, this year, I sold about 70 pens. I purchased 100 pens. I sold 70 pens. Is this a transaction? Or let's say I purchased 100 pens by paying 1 lakh. I sold 70 pens, let's say at 90,000. Is this a transaction? These two. Purchase of goods, sale of goods. Is this a transaction? Transaction is an activity, meaning a monetary activity. So I have done two activities here. One is the purchasing, another one is selling. Both the things can be expressed in terms of money, no? Purchase ka value is 1 lakh, sale ka value is 90,000. Yes? So you are able to express this in terms of money. So that means both of this are transaction. So far, okay? Fine. Can you tell me how much pen is remaining with me, sir? Because I purchased 100 and I sold only 70. How much pen is remaining with me? Purchased 100, sold 70. That means how much is remaining? 30 pens is remaining with me, no? 100 minus 70, which is 30 pens. Whatever goods is remaining with you, that only we call it as a closing stock, if you remember. Yes. Whatever goods which you purchased, but which you did not sell, that only we call it as closing stock. Now, is this a transaction? This is 30 pens. Is it a transaction or is it an event according to you? This 30 pens or this closing stock, is it a transaction or is it an event? Can you tell me this? Confirm me this number. Transaction, T or E. That's all you type. T for transaction, E for event. That's all I'm looking for. Transaction or event? Event. Perfect. So this is not a transaction. This is an event. Because I did not buy this 30 pens separately. I bought 100 pens. In that 100 pens, I sold 70 pens. Whatever. Due to these transactions, I'm having some effect. Okay. Because I did this transaction, I am getting some residue. Yes. I'm getting some effect. That effect we call it as an event. Okay. So accounts is only concerned with recording transaction events. That's all. So both, is it okay for you? Transaction is an activity which can be expressed in money. Event is the result of that activity or the result of that transaction. So now you tell me, sir, if I make some profit, is it a transaction or is it a loss? Because I purchased some pens, I sold some pens. That means I would have made some profit or I would have made some loss, no? Is that profit or loss a transaction or is it an event? Is this profit or loss? I don't want how much profit and all. Leave that. Okay. Whether this is a transaction or event. This becomes an event. Yes. I purchased the goods and I sold the goods. So that I'm getting a result. That result is nothing but profit or loss. That only we call it as an event. So another example for event is profit or loss. That's all. It's a funda. Okay. Now can we get to the other one? Next is accounting. What do we mean by the term accounting? Sir, accounting is simply, this definition you must have got it, 11th standard also, no? Accounting is nothing but what, sir? It's a process of recording, classifying, summarizing, analyzing, interpreting, and communicating the transaction and events to the interested parties. Yes, this definition must have been registered in your head, no? No? First time listening, anybody listening to this for the very first time? Yeah, I don't think so, but still asking just to be sure. Yes, so what do we do in accounting? Sir, accounting simply deals with process of recording. Recording means journals. Recording the transaction. If you pass journal entry, we call it as recording, because that's how we record the transaction, by passing something known as journal entry. Okay. Not only that, accounting also deals with classifying, which means preparing ledger accounts. Okay, all this also is a separate topic for you. We will be doing them a little bit in detail also, but for now the time being, I'll just give you an overview of what this means, which I'm sure majority of you already know. Okay, so classifying is nothing but ledger. Recording is journal, classifying is ledger activity, summarizing is nothing but your trial balance, TB. Preparation of trial balance, we call it as summary. Because what happens was, see, just by journal entry, can you prepare balance sheet? See, some of you have already done. So I am asking you some questions. If some of you are not able to remember, or if you have forgotten, absolutely no problem. All these are separate topic any which way. Okay. So don't have to freak out. Okay. I am just thinking that some of you know these sort of things, and I will ask you some extra questions. If you know it, answer it. Otherwise, it is okay. Just with journal entry, can you prepare balance sheet or P&L straight away, sir? Just with journal. Imagine an organization like Reliance or Tata. They will have just 1 or 2 journal entries. They'll have lakhs and lakhs of, or maybe crores of journal entries. Yes. Can you go through all the 100 crore? If they have 100 crore journal entries, will you go through 100 crore journal entries and then prepare P&L balance sheet and all? Then that P&L balance sheet will take probably 1 or 2 months to get prepared. Yes, no? Because that much data, if you have to go through, you need a lot of time. Hence, journal will not serve the purpose of preparing balance sheet. Hence, they said, let's do something known as classifying activity, which is nothing but ledger. Ledger means what, sir? See, in journal means you take one account. Using 2 accounts, you pass journal entry. Yes, no, sir? To pass journal entry, you require 2 accounts. Yes. On single account, how many ever transactions are there? Like cash account. How many ever cash transactions a company has done? All that you will get it in one bucket. I'll repeat that. All the cash transaction which the company has done. If company prepares a cash account, meaning cash ledger account, then all such transaction will be visible in this cash account. That is your cash bucket. That is your ledger activity. Okay, just grouping of the transaction. That's all is ledger. Clear? Fair enough. Whatever accounts you have, you're going to prepare like, in the T format. We call that as a T format. If you remember, this account will look like a T. Yes. You'll also do this, but just saying it. Okay. Yes. So it just gives you how much ever transaction that has happened during the whole year. Fine. That is your classifying activity. Next is summarizing. Summarizing means trial balance, meaning, sir, you may have 100 crore journal entry, but you may also have maybe about 10 crore ledger also, because you might be dealing with a lot of people. Yes, right now I see that more than 100 students are attending the class now. Yes, that means we would have received the fees from each of you. Correct, no? That means I have to maintain 100 ledger accounts just for one course, sir. Yes, correct. That's a big number. Yes. So still ledger account also maybe many number. So ledgers also will not help you to prepare your financial statements. Hence they look at one more activity, that is summarizing, which is preparation of trial balance. In TB what happens? All these ledger accounts. Yes. All the ledger accounts will have some balance. We used to write to balance carried down or by balance carried down like this. Each ledger account will have some balance remaining. Yes. That balance remaining, you put it in one particular format or in one particular statement. That statement we call it as trial balance, and that activity is what we call it as summarizing. Meaning with trial balance only we prepare financial statements like balance sheet, P&L, etc. Is this okay so far, guys? Whatever I'm speaking. Going in or full G? In and out or going in? What is it? Able to follow? No issues, no? Fine. All this will not come as a straightforward question in your examination, but we are just discussing it in detail. Okay. Generally from the first topic, no sir, they're mostly asking you true or false question. That's all they're asking. This first particular in your study material, there are two chapters. I have bifurcated that into 10 chapters. From all those 10 chapters, you can expect about 5 to maybe 10 marks from in your examination. All the 10 or 11 chapters put together. Fine. Well, these sort of things they will not ask, but we just have to be prepared just in case they ask anything. Got it? We will not take a chance. If there is a concept, we will do it. That's how I work with things. So far good, no? Give me a quick confirmation that yes, things are okay, or you need any repetition. All clear. Awesome. Okay, so we looked at recording, classifying, summarizing. Next one is analyzing. Now, some of you have already prepared balance sheet. With that intention, I will just go ahead and explain this. If you have not done, absolutely not a problem. We have to any which way do it. We just started the party. Party is going to go on for another 120, 130 hours. Yes? Okay. So now, in balance sheet, sir, some of you have done balance sheet. First, what do you show, sir? First component on the asset side. We'll do it in the T format. Remember, you used to do like this: liabilities amount, assets amount. Like this, you used to prepare balance sheet, not company's balance sheet, a sole proprietor's balance sheet. Yeah, I'm talking about that. What is the first thing you will show under asset side, sir? Which asset will you show first? First, generally, we show fixed asset. Yes, no? Yes. Under fixed asset, we will show land, we will show building, we will show plant and machinery. Like this you will show, correct? Then you will show something known as current assets. Under current assets, cash, debtors, etc., etc., which some of you must have done, correct? Now, analyzing means putting them in particular order or preparing financial statements in one particular order. Okay, so that users will understand it. Meaning, I should not show land under fixed assets and I should not show building under current assets. Can I do this? Land, I will show it under fixed asset. Building, can I show it under current assets? No. That deals with your interpretation wala or analyzing wala activity. Meaning, showing the components in a way that people will be able to understand it. That's all is analyzing. Basically arranging it, you can call it. Okay. Whatever components belongs to that component, show it there only. Meaning land, building, plant and machinery. All this we call it as fixed assets. So show it there only. Okay. Fair enough. One fixed assets, you can't show it under current assets. What do we mix up? You should not mix up. Okay. Then it will not serve the purpose, Varsha. Is that okay? Yes. If you just mix it up, it will not serve the purpose. I will not understand. Suppose your company you mixed up. Okay, you said, no, I want to do chow bath accounting. My mercy, I am doing it. I will prepare the way I want it. Now you prepared the way you want it and you gave that balance sheet to me. Will I understand it? Okay, your chow bath balance sheet. Will I understand? Absolutely no. Yes, no. So you should prepare financial statements in such a way that you should be able to understand. People should be able to understand that. So hence this. Got it? All right. That is the intention of your analyzing. Next is interpreting. Interpreting means, sir, just by looking at balance sheet, balance sheet, generally financial statements, we give it so that it will help you with the decision making. Like, I have 10,000 rupees with me, sir. Okay, I have 10,000 rupees cash with me. I want to buy Infosys ka share out of this. I want to go to stock market and buy Infosys ka share. How will I decide? Or let's say I want to invest that 10,000 rupees in share market. Okay. How will I decide that? Because there are more than 1,000 companies which trade or which are listed on stock exchange. Yes, no, not just one company. There is Infosys, Reliance, like this. Thousands of companies are there. How will I decide which company ka share I should buy, sir? Company ka profit, somebody is saying, okay. Company ka profit you will get it from which, sir? Which one will give you company ka profit? Which statement will give you company ka profit? profit and loss account. Yes, no, correct. So basically, by analyzing financial statements like I'll check balance sheet, I will just check P&L, then I will decide which company ka shares I should buy or not. Correct? Yes. So interpreting deals with, just like that, if you write a land and building 1 crore, will investors know about this? Will investors know how many land does this company have? How many land does the company have? How many plant and machinery does the company have? Okay, how are they depreciating this? All this data, can you look at a balance sheet and conclude? Just by looking at balance sheet, can I tell how much land, how much building, how much plant and machinery company has? No. Yes or no? That means I need to give some explanation to my shareholders, or I need to give some explanation to the financial statement, meaning I have calculated all this through this. Some explanation you need to give it for those numbers that you give here. That we call it as interpreting. So give some extra data about the components in financial statements so that people will understand it better. That's your interpretation activity. Done. Yes. Just basically you can think of this as an additional information. That's all. Now I give examples to make you understand the concept, like that to me. Okay. Even company needs to give additional data so that the shareholders will understand financial statements. Balance sheet, profit and loss account. These are the things we call it as financial statements. Got it? Okay. So accounting deals with recording, doing all this. Doing all this for what? Doing all this for transaction and events. Result is nothing but event. After doing all this activity, what do you do, sir? You tell it or you communicate it to whoever is interested in it. So all these financial statements, you will give it off to whoever is interested. That could be investors, government, debtor, creditor, employees, management, whoever. You do all these functions and give all this data to somebody, whoever is interested. That's all is accounting. Okay. Almost we spent about 20 minutes just on accounting. Went in Okay, yes, don't worry about the time. It's fine. We can always catch up. Oh, okay, no problem. Balance sheet. Somebody saying I'm a science student, sir. I don't know balance sheet. I told no, Rohan, absolutely no issues. Fine. Okay, we will cover all this stuff. Balance sheet is a statement which gives you assets and liabilities. No worries, we will cover them. No problem. It will get covered also in the due course. No issues. Other than that, Rohan, you are able to understand nobody. Don't worry about terminologies, P&L, balance sheet and all. We have to anyway do it. You'll get a more clarity on this. Now, if I go on spending time on that, no, it'll be waste of time because we have a separate concept for that. There I'll be able to explain you. Okay. Next is objectives of accounting. Why do we do accounting? What do we achieve from accounting? By doing all this drama. Why? First is you will be able to record all the transactions. That is the first objective. Everything, if there is any monetary transaction, okay, it should be recorded. That is one of the objectives you will achieve by accounting. Okay, you can't skip anything. Fair enough. If it is monetary, you need to record. There is no choice. Okay, so it's only 500 rupees. I will not account. Sorry, there is nothing like that. If a transaction can be expressed in money, you need to record it. Okay, so that means every organization will record every monetary transaction. So you will not skip anything. So that is one objective of accounting. So that all the transactions will be systematically recorded through passing something known as journal entry. That is the first aspect. Okay. Second one is ascertainment of results. Meaning by doing accounting, you will get to know whether you made a profit or you made a loss. Because everyone is doing business for what, Joyce? Why am I shouting this so much? Why am I doing all this? To know ultimately whether I made a profit by doing this or I made a loss. Yes, no. So basically you will know the result of that business, meaning profit or loss, by doing something known as accounting. Okay. That is the second objective. Third one is ascertainment of financial position. Meaning, see, if you're doing transaction, then you will have some assets, you will have some liabilities. Asset means something which the company owns. Asset means which the company owns. Like, I have a cash of 100 rupees. Is it my asset? I have a cash of 100 rupees. Is it my asset? Yes, because I own it. Yes. Something which we own, something which the business owns, we call it as an asset. Got it? Something which the business has to pay somebody. Like if you if you must have in liability side, you must have heard about something, or if you take a bank loan, let's say to start a business, I took a bank loan of 1 lakh rupees. To start a business, I took a bank loan of 1 lakh rupees. Does this 1 lakh rupees belong to me, or I have to pay back to the bank? Does this 1 lakh rupees belong to me, or I need to pay back? I need to pay back. Yes, no, correct. So that too we call it as liability. Something which the business owes. Something which the business owns, we call it as an asset. Something which the business owes, OWES. Something which they have to pay. Okay, that we call it as liability. That's the difference between asset and liability. Some of you said science background, so I'm just telling you a little more extra there. That's it. Okay, fine. Okay, so far. So this asset and liability position, how much asset I have, how much liability I need to pay. Okay, by doing accounting, you will get to know this. So that we call it as financial position. Meaning financial position means assets and liability ka position. How much asset I have, how much liability I need to pay. So by preparing balance sheet, you will be able to ascertain that. Okay, that is also one of the objectives of accounting. You'll be able to achieve that. Okay. Last one is providing information for decision making. See, as I told you now, if I want to buy some company ka shares, I need to know their balance sheet and P&L and all, right? Yes. So accounting will give me that data, that balance sheet. By doing accounting, I'll be able to give the data to whoever is interested. Based on that data, okay, so companies can take, or the persons can take whatever decisions they want. That is another objective of accounting. Providing the necessary information to take the decisions. Alright, next, bookkeeping and accounting. There is a difference between bookkeeping and accounting. There are two terminologies. Now, bookkeeping means simply recording the transaction. Bookkeeping simply means recording the transaction. Okay. So basically, bookkeeping versus accounting is something which generally gets asked in true or false questions from this topic. So we are getting the difference so that we'll be able to answer that true or false in our examination. Let's understand the points. Then I will give you some true or false questions. You tell me how easily or you're able to solve that. That is the intention. Okay. So bookkeeping simply means recording the transaction. Does accounting mean simply recording the transaction, sir? Does accounting mean only recording, or what is it? Recording is just one function. We record, we classify, we summarize, we analyze, we interpret, we communicate. Yes, these are the functions of accounting. So what? Bookkeeping is a smaller function. It involves only recording. Accounting is a much larger activity which involves not only recording but also other things. That is the first difference between bookkeeping and accounting. Okay, bookkeeping is only recording. Accounting involves recording, summarizing, recording, classifying, summarizing, analyzing, interpreting, and communicating the results. So it is a much larger activity, you can call it. That is the first difference. Okay. Now you tell me, sir. Now let's understand whether you've got it. Yeah, you can call it as this is a smaller scope. This is a wider scope. Bookkeeping has a smaller scope. Accounting has a wider scope. Agreed, Vasudev. Thank you. Now you tell me, in bookkeeping, will we prepare financial statements? I think Rohan, science background student. I want you to answer, buddy. Okay, others I'm sure many of them would know it. Okay, you tell me, sir. Financial statement means balance sheet, P&L, etc., etc. Okay. Will you prepare balance sheet in bookkeeping activity? No. Bookkeeping is only what? Bookkeeping is recording. Just recording. Bookkeeping deals only with recording. Fine. So financial statement ka preparation is not part of bookkeeping. Whereas under accounting, you also need to prepare financial statements. That is the second difference between bookkeeping and accounting. What is the third difference you could tell? Sir, will accounting give you the results? Through accounting, can you know profit or loss? Yes. Through bookkeeping, can you know profit or loss? No, because you're not preparing P&L balance sheet. No. So bookkeeping will not give you results, nor it will give you financial position. That is an other difference. Okay. So where is that? Yeah, it's not given. Maybe you can include that also. Okay. Through bookkeeping, you will not get to know the results, nor are you going to get the financial position. Financial position included here. Results also, like, you can include if you want. Okay. Now, decision making. Can you take a decision just with the help of bookkeeping, sir? Can you take the decision just with the help of journal? No, you require a lot more data than journal. Yes. So decisions cannot be taken with the help of these bookkeeping records. So with accounting records, you can take MD. MD means managerial decisions. Managerial decisions like whether should I do the business, should I expand the business, or should I reduce my business, should I appoint somebody as a managing director, okay, or what price I should sell the goods. Yes, whom should I sell the goods? Like this, many decisions will be there. Yes, no. Like if you talk about academy, right? Our headache will be what? Should we provide coaching for CA Foundation, CA Inter, and CA Final also, or just for CA Foundation, or just for CA Final? Like this, we may have to take a lot of decisions. No. Yes. Right now, our academy is only in Bangalore, ArivuPro. Yes. We may also think to expand. Yes, if many people are attending from Chennai or Hyderabad, we may also think about opening a branch in Hyderabad. Yes, Tamudu. Arthamainda. Alright. So we may think on those lines also. Yes. Those are your managerial decisions. With accounting, you will be able to take those decisions. With bookkeeping records, you will not be able to do it. That is another difference. Arthamainda. Awesome. Okay, Tamudus. Alright. Next is no subfields. Bookkeeping does not have any subfields. It does not have anything under it. Okay. Bookkeeping just deals with recording. Okay. But accounting has various subfields, meaning it has something under that. That is, you have something known as financial accounting, management accounting, cost accounting, human resource accounting. Like this, you have various subfields also available under accounting, which is not there for bookkeeping. That is another difference between bookkeeping and accounting. Arthaita Guru? Awesome. Alright, so these are the differences between bookkeeping and accounting. Alright, let's do one thing. Let's have a quick recap. These are all topics which you need to remember. Let's see how much of it we'll remember. We'll throw this out. Let's try to recollect like that only. First, accounting deals with what, sir? No need to write down, sir. You can purchase all this. This chart book, you will be able to purchase it. As I told you, okay, I think you can, Shreya, you logged in late, I think. Yes. No need to write all this. I've given you in the form of notes also, all this. Okay. But in this format, you will be able to learn it faster. That is the intention of the charts. You can buy this chart book from learn.arivupro.com. I think I told that. Yeah. Maybe you logged in late. No issues. If you still want to write down, you're free to write. Your pen, your books. Yeah, your time. Oh, am I to say no? Correct, no. But not required. Yes? Fine. Okay, awesome. Let's have a quick recap. So, accounting deals with what, sir? Only transaction and events. Transaction means what? It is an activity. But that activity should be expressed in terms of money. Okay? What is event? Event is the result of that activity. Meaning it's the result of the transaction. We call it as an event. Like closing stock, profit, loss, all these are events. Okay. So accounting deals only with transaction and events. Now, what do we do in accounts? Accounting is an activity which deals with recording, meaning passing journal entry, which we will see. Next, it deals with classifying, which deals with ledger accounts. Third one, it deals with summarizing, which deals with trial balance. Fourth one, it deals with interpreting. And fifth one, analyzing and interpreting. And finally, communicating those transaction events to those interested parties. The party could be anybody, employees, government, debtor, creditor, any person involved. Okay. So that is the primary function of accounting. Next, what do we achieve by accounting? One objective we can achieve is you can record all the transactions. So systematic recording of transactions will happen. That is one objective. Two, with the help of accounting, you will be able to know the results, meaning you made a profit or you made a loss. That you will be able to achieve. Third one, You'll know the financial position, meaning how many assets does the company have, how much they need to pay, meaning how much liabilities the company has to pay. That can be achieved. Okay. And also all the decision making. Yes, accounting gives you all the necessary information through which decisions can be taken. That is the objective. Next is difference between bookkeeping and accounting. Bookkeeping only deals with recording the transaction. Accounting deals with much more than that. One is that. Two, with bookkeeping, you will not get to know the results. Whether you made a profit or you made loss, you will not get to know. With accounting, you can know the results. Third one, with bookkeeping, you will not know the financial position. But with accounting, you will be able to know the financial position. Fourth one, with bookkeeping, you cannot take managerial decisions because data is not available. But with accounting, you can take those managerial decisions. Okay, anything if you also add, like bookkeeping does not have any subfields, but accounting has subfields like financial accounting, managerial accounting, cost accounting, etc., which subfields we will cover next only. Okay, so far any doubt anybody? All good? Okay, awesome. Next, subfields of accounting. Just now we discussed the subfields of accounting, correct? So there are various subfields of accounting. Let's understand that a little bit. First is financial accounting. Financial accounting means it is that branch of accounting which deals with preparation of FS. FS means financial statements. Like balance sheet, P&L and all, just now we discussed, that only we call it as financial statement. So financial accounting deals with preparing that financial statements. Okay, that is one. Second is management accounting. Now, management accounting means what? Now, see, sir, I prepared, let's say, ArivuPro ka balance sheet. Or let's say I prepared ArivuPro ka P&L. Okay, last year I prepared a profit and loss account of ArivuPro. And I got to know that, let's say, company made a profit of 1 lakh rupees. I prepared profit and loss account of ArivuPro, our company, and I got to know that we made a profit of 1 lakh rupees. Now, I am asking you one question. See if you can answer me this. Now, I want to open another branch, let's say in Delhi. Like Bangalore, I want to open another branch in Delhi. This is a decision, like managerial decisions. I can call like this, managerial decision. Can I take this decision just by looking at this data? Just by looking at P&L, can I take this decision of opening a branch in Delhi? I made a profit in Bengaluru, so that means I will open another branch in Delhi. Is it as simple as that? Just with this information, can I take this particular decision? Can you give me this? No. That means I need to know some more data. Yes, no? Like in Bangalore, I might be giving coaching for CA Foundation, CA Inter, CA Final. Does it mean in Delhi also I will provide all the three? Does it mean in Delhi also I will provide all the three? Not possible. Yes, because I need to know a lot other data. Yes, no, because Delhi audience may prefer Hindi. Yes, possible they may like to watch the videos in Hindi. But Bangalore audience may prefer English. Yes, that means I need a data like in my Bangalore. Alright, in the Bangalore that I'm operating, how many students in Bangalore are watching Hindi videos, English videos like this? And within my Bangalore branch also, I need to know which course is producing this profit. Like it's possible. Overall, the company made a profit of 1 lakh. In CA Foundation, let's say I made a profit of 90,000. CA Inter, let's say I made a profit of 70,000. Or let's make it as 1 lakh. Or 70,000 only. In CA Final, I made a loss of 60,000. Is it possible like this? Yes. CA Foundation, I gave the coaching. I made a profit of 90 by giving that coaching. CA Inter, I gave the coaching and I made a profit of 70,000. CA Final, I made a loss of 60,000. Can you tell me overall profit or loss? Overall profit or loss is how much? 1 lakh. Yes or no? By adding all this, I'm getting 1 lakh. Yes. That is what my P&L is showing. 1 lakh profit. Now, if I have to open a branch in Delhi, again I need to take a decision. Should I give the coaching for all the three or just one, etc., etc.? Yes or no? Correct? So just by looking at P&L balance sheet, you can't take all the managerial decisions. You require some other data also. Like how many students are registered for CA Foundation? How many students registered for CA Inter? How many students registered for CA Final? Like this, yes. How many of them look for coaching? Yes. How do they prefer the coaching? Whether they want face-to-face batch, live online batch, recorded sessions. Yes, I require all many other data also to take these decisions. Yes or no? That is nothing but management accounting. Because if you want to take management decisions, right, your just P&L and balance sheet may not be sufficient. You may require certain other data also. Providing that other data, whatever management wants, that comes under management accounting wala funda. Whatever data management requires to take the decisions, providing that information or providing that data comes under management accounting wala principle. So management accounting simply deals with providing various reports for decision making. Whatever reports, like I'll give the report. There are about 1,000 students in CA Foundation, 200 students in CA Inter, 10 students in CA Final. Like this, if I give some extra data, based on this extra data also decisions could be taken. That providing that extra data comes under management accounting wala funda. That's all. Okay. Next is cost accounting. Cost accounting means what? So now some of you have joined for face-to-face classes. Some of you have joined for live online class. Yes. You might have got one fees. Okay. Let's say I don't know the exact fees. I'm just going to assume. Let's say we charged 15,000 rupees. Don't argue with the academy later on. Okay. I'm just assuming this. I don't know the fees. Let me be very clear. Let us say we charged 15,000 rupees from you. Okay. To give you CA Foundation coaching. 4 subjects. And we charged 15,000 rupees. Assumption. Okay. Just like that, I made up this number, sir. One fine day, I got up and said 15,000 CA Foundation coaching fees. Did I decide this like that? Or based on some data, I decided this number? Did I decide this 15,000 randomly, or I would have worked it out? I would have worked it out. Yes or no? Based on my workings only, or based on some data only, I would have worked out this. Yes. That deals with cost accounting. At what price? Cost accounting basically deals with finding the cost of the product. If you are selling any particular product, okay, first you need to produce it. Yes. To produce it, how much cost it requires. To sell it, how much cost you require. Or we are not selling you any product here. I'm giving you some service. Yes, no. Teaching is a service. I'm not giving you anything. Yes. Product I'm not selling. I'm giving you a service. To give this service, teaching service, how much money we require? Because if we have to give the coaching, we need to hire teachers. To teachers, we need to pay the fees. Yes. We need to have other admin guys also. There will be 101 cost. Correct or no? So basically, cost accounting deals with finding the cost of a particular product. Because only if you know the cost of the product, okay, then only you will know at what price to sell the product. No? Like suppose, let's say a particular product, I'm buying and selling this pen. To purchase this pen, or total cost associated with this pen is 100 rupees. If I know this, can I decide my selling price as an SP? My total cost associated with buying and dealing with this pen is 100 rupees. If I have this particular data, can I decide at what price I can sell the goods? Yes, I can easily find out the selling price. I may say, okay, on each pen, I want to make 20 rupees profit. This pen will cost about 100 rupees. On each pen, I want to make 20 rupees profit. That means I will sell this pen at 120 rupees. Yes or no? That is the funda of cost accounting. To give you this cost data, how much cost is required to give a particular product, to produce a particular product, or to give a particular service. That comes under cost accounting wala branch. Fair enough? Okay. And also it deals with controlling cost. See, if I know the cost, then maybe next year I can also think about reducing the cost. Yes, no. If I know exactly how much it will cost, I can strike a better deal. I can negotiate, and there is a possibility that I can also reduce this cost in future years. Yes. So cost accounting deals with that. Ascertaining the cost, meaning finding out the cost, and controlling that cost. That branch comes under cost accounting wala funda. You'll learn there is a separate topic known as costing in your CA inter level. You'll be learning all about this in your next level. You don't have to worry about cost accounting for the time being. That is a separate subject altogether. Okay, awesome. Next is social responsibility accounting. Another subfield of accounting, which is social responsibility accounting. Now, what is this now? Now, recently, if you just observe, due to COVID, many companies donated thousands of crores. Yes, you must be aware of this. Tata Limited, Reliance, they donated thousands. They set up COVID hospitals. Many of them gave like ambulance kit, ambulance, PPE kits, like this. Many service they gave. They donated Prime Minister Relief Fund, Chief Minister Relief Fund. Yes. Why do you think they did all that? Because anyway, if company makes profit, on that profit company has to pay tax to the government. Whatever profit company makes, they have to pay on that profit tax to the government. Why should they also do all this extra activity? Goodwill, okay. Somebody say social responsibility, correct. Sir, simple. See, imagine a company like any company for that matter. Let's say Tata only. Okay, let's say they're producing. Let's say Tata Steel. There is a company known as Tata Steel. Sir, to manufacture steel, you obviously require some raw material. Yes, no, sir? Yes. Raw material you require. Yes, using that raw material only you can produce a steel. Correct? Whatever be the raw material. Okay? If you want to produce something, you require. Correct? Where will you find that raw material? In Bengaluru, you'll find that raw material under Mother Earth only, no? Correct? Everything Dhartima only provides. Yes. Whatever minerals you use. Yes, there is a gold company. They make gold out of it. But where do you find gold? Bhumi. Yes, no? In Mother Earth only. That means you are utilizing the natural resources. Yes. Air, KGF. Yeah, KGF. Now KGF where you don't find gold. Full dum-dumar. It is gone now. Okay. See, if you're doing any particular company, if you're operating in a society, you will use that society resources. Like you, if you are in Bangalore, yes, you use Bangalore like BBMP service, no? Yes, you use bus service, you use electricity, you use road, air, water, minerals, everything, etc. A company invariably will use it because without it they cannot function. Correct? No? They are taking the help. They are using society resources. Yes. So the company also has a moral obligation to do something for the society. Okay. That comes under social responsibility accounting. Somebody mentioned CSR. Perfect. Corporate social responsibility. If you have learned that, that is awesome. Otherwise, it is fine. Okay. So this is social responsibility accounting. Meaning deals with what? The organization is doing how much social benefit. Like contributing for COVID, opening hospitals, okay, giving free educations. These are all social benefits, yes, which a company does. There'll also be some social cost. Like if you are a manufacturer, let's say I'm a chemical company, sir, chemical manufacturing company or petroleum manufacturing companies. I will obviously release some waste also. No? If I'm doing some manufacturing activity, there'll be some hazardous substance or waste substance also. Correct? What do I do with this waste? I will keep it inside my factory. I will store this waste in my factory or I will dump it. Generally, all this waste will be dumped into ocean. Correct? No? We'll dump it. Correct? That means somebody has to clean this. If you release so much of hazardous substance into the ocean, it will affect the other, animals and mammals gets affected. Yes, the water bodies, creatures. I mean, somebody has to clean up that. That comes under social cost. Due to the company existence, what is the harm done? What is the benefit done? Measuring this is social responsibility accounting. Is that okay? Basically, social cost and social benefit. Benefit that you're doing it to the society versus harm that we can't say harm, we'll call it as cost. Yeah. But in reality, it's basically the harm that you're doing it to the society. What you're taking away from the society, what you're giving it to the society. Keeping a tally of that, we call it as social responsibility accountings. Alright, next is what, sir? Human resource accounting. If you observe any top managing director's commentary, the one major sentence which most of them will use is, okay, if you ask them, why are you successful? One common dialogue they will give is, I have a wonderful team. I have a superb employees. Have you heard about this? Almost every successful businessman tells this. I have a wonderful employees. Yes. Let's say I joined Infosys. I quit teaching and I joined, let's say, Reliance company. Can Reliance company find out my worth? Can they measure my worth? Like Elon Musk. Okay. Can you find out the worth? Exactly, can you find out my worth? By looking at this face. Sir, your face is worth 100 rupees. Sir. Yeah, like that. No. So human resource accounting basically tries to deal with what is the worth or what is the value of the employees. Okay, it's not concrete value, it is trying to estimate. Earlier, this human resource accounting was there in your CA final syllabus, one of the small topic. For now, it's been removed off. Okay, maybe when you come to CA final, it might be again introduced. Okay, this is not a concrete thing. This is just somebody had given some formulas how to find out this human resource accounting. We used to apply that. This is just a reasonable guess to how to find out the value. That is your subfields of accounting. Any confusion? Anyone? Anyone having any sort of confusion? No? Move on to the next then. Okay. Next is users of accounting information. Who and all can use the accounting information? 1. Can an investor use the accounting information, sir? Very much yes. What will he use this for? Investor will use accounting information to find out whether should he buy the company, should he invest in that company or should he not invest in that company. Yes. So investor can also use accounting information. That is one. So that is one user of accounting. Next is employees. Can employees use financial statements or accounting records? Yes. Like they can use accounting records to tell what? Like the company made wonderful profits this year. The company made super profits this year. Bumper profit. Okay, what will the employees tell now? What will employee? Hey, give me bonus. Yes, no, Deepavali bonus, that bonus, this bonus. Please give me hike. Salary hike, bonus and all you give me. Yes. So based on financial statements or based on accounting records, they can decide how much bonus they need to ask for, or they can also decide how long should I stay in this company. Company is doing very bad, sir. Full loss company is making. Will you stay in that company? Do you think majority employee will stay in that company or they will start quitting? If company is making full loss after loss, then what will happen? Employees also will start slowly quitting. Yes or no? So that way employees can use accounting information. That is one. Okay. Next is creditors. Creditors means whom we purchase the goods from. Okay. Some of your size background they are telling. So I'll just give you a little explanation. What is a creditor? Let us say I purchased 100 pens whose value is 1 lakh rupees. I purchased this on, let's say, 5th May 2021. On 5th May 2021, I purchased 100 pens whose value is 1 lakh rupees. Okay. But I told, let's say I purchased this from X Limited, one company known as X Limited. I purchased my pen from this particular company. But I told this company, boss, I will not pay you the money right now. Though I am purchasing it from you, immediately I will not pay you the money. I will pay you the money on 5th July 2021. When did I purchase the goods? 5th in May. When am I paying for the goods? In July. Yes or no? That means there is a delay. How much is the delay, sir? There is a delay of 2 months. Yes. Fair enough. That means you need to pay somebody. On 5th May, do you have any liability? Science background students, can you tell me? On 5th May, let's say I am A Limited. That is the name of my company. Okay. Does A Limited have any liability on their head? They purchased the goods for 1 lakh, but they have not yet paid. They will pay it on 5th July, meaning 2 months later. On 5th May, do they have any liability on the top of their head? Yes. Meaning they have an obligation or they have a liability to pay how much? 1 lakh. Yes. To whom they need to pay this 1 lakh to? They need to pay this 1 lakh to X Limited. That X Limited, we call it as creditor. Creditor means somebody whom the business owes money, not owns. The business owes the money. Meaning the business has to pay that somebody money. That we call it as creditor. Sir, he must pay a small amount as advance. That is a business decision, sir. Advance may be taken, may not be taken. All that is a business decision. We don't have to worry about. Accounting does not comment how you should do the business. That is your call. You collect the money or you pay the money after 2 months, 3 months, 4 months. That is your headache. Accounting will never come into the business, how you do the business. Okay, accounting is recording the transaction. What you have done, it records. That's all is accounting. Got it? Advance collected, not collected and all, secondary. Let's not go there. Fine. So now creditor you know now. Yes. How can creditor use financial statements? Or how can creditor use accounting information? Now in this example, what was the delay in payment? How much delay I am making in making the payment? 2 months credit. Yes. Is it necessary it has to be 2 months? Is it necessary this number has to be 2 months, or it could be anything? It could be anything. Yes or no? Correct. So in deciding this, we call it as credit period. Okay. In accounting terminology, we call this as a credit period, that delay. Yes. So creditor can use financial statements or accounting information to find out this period. How much credit I should give it to the company, whether 2 months, 3 months, 1 month, 15 days, how much ever. In deciding this period, creditor can use accounting information like that. Okay, that's your creditor. Always. Next is your debtor. Debtor means what, sir? Ulta case. After buying, what will I do, so? Now I purchase this 100 pens. After purchasing, what will I do? I will sell. Yes, no? Let's say, same, A Limited only. Or what? Name of the company was A Limited, no? Let's say A Limited sold those 100 pens to W Limited on, let's say, 1st June 2021 for 3 months credit. Now, can you tell me when will I get the money? I'll tell you this scenario. The company, that is A Limited, first they purchased the pens. After purchasing the pens, they sold the pens. The day on which they sold the pen is 1st June 2021. The party to whom they sold is W Limited for 3 months credit. See, if A Limited has sold the goods, means we will recover the money. From whom? W Limited. When is the payment due date? Or can you tell me due date when I will get the money from W Limited? 3 months credit, no? So count that. June, July, August. Full 3 months. Yes. Can I say 31st August or can I call it as 1st September? Would that be okay with you? Yes. So I will recover the money on 1st September. I've just calculated 3 months of this. Is that okay? Fair enough. That means on 1st June, if you prepare balance sheet on 1st June, does A Limited have any asset? On 1st June, if you prepare any balance sheet, 1st June, A Limited has any asset? Asset means what? Something which the company should collect. Should they have to collect? Let's say the value of this is, let's say, 1.5 lakh rupees. On 1st June, should A Limited collect any money? Yes. How much they need to collect? They need to collect 1.5 lakh rupees from whom? W Limited. That W Limited only we call it as a debtor. Debtor means from whom we need to collect the money. Creditor means whom we need to pay the money. Debtor means whom we need to collect the money. Instead of debtors, it is also known as trade receivables. That is another name. Okay. Sometimes we say trade debtor, sometimes we call it as a trade receivables. Okay. Fine. Trade receivable also includes one more. Let's not go there for the time being. Yes. Is that okay with you? As somebody who's new to accounting or forgetting, is that making sense to everyone involved, in fact? Is that okay? That is your debtor. Now, debtor also can use accounting information. For what purpose? Debtors will use this financial information to find out should he buy the goods from you. Because for for A Limited, they are selling the goods to W Limited. But for W Limited, it's a purchase. No? For A, it is sale. For the other company, W, it's a purchase. Yes. So using financial statement, W Limited will get to know should they buy the goods from A Limited or should they not buy the goods. Like this, they can use that financial information in making that decision. Because like you need to know if you want to buy something, there are hundreds of people. Now if you want to buy phone, you can buy Samsung phone, iPhone, 1 plus, etc. There are many things. Yes. So based on features, based on goodwill, based on the status, etc., we decide. Yes. Same goes for this also, W Limited. Based on that, they can decide whether they should buy from A Limited or they should ignore from A Limited. Correct. Okay. Now lenders. Lenders means providers of finance, who gives you the money to start the business. Like bank loan people. If you want to start any business, you require bank loan. Yes. So lenders, bank people, they will use accounting information to find out whether should they give you the loan or you will not give the loan. Are you that Vijay Mallya category wala people, or are you the right kind of people? Because if they have given loan means they have to recover that loan also, no, sir. Yes. So that recovery, they'll be able to ascertain by looking at accounting information. Because if you want any loan from the bank, first thing they'll ask is what surety you can give, and give me your balance sheet, give me your P&L. Like this basic information every lender will ask. Okay, based on that only they will decide whether they should give the loan or they should not give the loan. That's how lender can use accounting information. Government also can use financial accounting information. For what purpose? To know how much tax to collect. Yes, no. Tax rate they can decide based on financial information, and other things also they can use it for. Okay. Primarily it's for the tax. Management. Next is management. Management we already saw. Management uses accounting information to make the decisions. Decisions could be anything. Hiring, firing, expanding, paying dividend, could be anything. For every decision, management also needs the accounting records. So these are the users of accounting information. Okay. So don't worry, the elaboration version of this I have given it in your normal notes also. I have given you normal notes also here. Okay. Don't have to worry about that also. This is a synopsis, but we'll be able to revise the things faster through the chart. Hence I'm just doing it from the chart only. The detailed explanation notes also I have given it to you. If you want, you can refer that also. That is your choice. Okay. Next is limitation of accounting. Yes, accounting is not all goody. There are some limitations also. What are those limitations? One, sir, when you say you're preparing balance sheet, balance sheet is basically a statement that gives you asset and liability ka position. Okay. But balance sheet is true, meaning that statement is true only for that day. Meaning if you prepare balance sheet today, then that balance sheet is valid only for today. If you prepare balance sheet on 31st March, then that balance sheet is true only for 31st March. The next day you cannot utilize 31st March ka balance sheet. Numbers would have changed. That is one disadvantage of the balance sheet, because you prepare balance sheet using accounting only, right? Yes. Meaning balance sheet will give you financial position only for one day. It will not give it for future. That is one disadvantage. Self-explanatory. Okay, no? Yes. Ignores inflation. Now, I purchased the pen, sir. Same example we'll take. I purchased the pen for 1 lakh rupees. You tell me, should I record this? Should I record this transaction? I purchased 100 pens by paying 1 lakh. Should I record this transaction? Yes. For what value will I record this transaction, sir? You're saying I will record. For what value? Obviously, you will record it for 1 lakh only, no? Yes. If you purchase it by paying 1 lakh, then you will record also for 1 lakh only. Correct? Let's say this transaction happened on 1st May 2021. Let's say on 10th May 2021, the price increased to 1,20,000. You purchased the goods by paying 1 lakh rupees. You paid cash and you took the goods by paying 1 lakh rupees. 5 days later or 10 days later, the value of that goods has become 1,20,000 due to inflation. Due to whatever reason, the price is increased. Will we worry about this 1,20,000? Will we scratch off this 1 lakh and write it as 1,20,000 now? I passed journal entry for 1 lakh. Will I strike off this amount and substitute this 1 lakh with 1,20,000? No. So accounting information deals with historical cost, we say. Meaning how much did you pay? How much did we pay to buy these goods? 1 lakh. So we will only record it 1 lakh. That is one of the limitations of accounting. It is not day-to-day data. It is not realistic. It doesn't keep up pace with market value. Okay. How much ever you paid, that much only will be accounted in records. So it will not give you the market data or realistic data. So it ignores inflation, we can call it. Okay. After you purchase the goods, whether the price increases or decreases becomes irrelevant. Manageable. That's what we mean by it ignores inflation. That is not taken into account. Third factor is it ignores non-monetary items. See, in accounting, we only record a monetary transaction. Meaning, if you can express a transaction in terms of money, then only we record. If you cannot express, then we cannot record that. Okay. So that is one of the disadvantage. Okay. So like human resources, skills, loyalty, because employees, many of them might be working for 10 years, 15 years in the organization. They'll be very loyal to the company. Yes. All that you cannot record in accounts because you cannot measure their value. So that is one of the limitation in of accounting. Okay. When we say loyalty, it is not goodwill. All right. Goodwill is something different. We will take it later. That one. Okay. This is not, when I say loyalty, it is not goodwill. Fair enough. Goodwill we'll see another day, not now, for the time being. Certain items have to be estimated. Accounting is not foolproof. Certain estimates are also required, like to calculate depreciation. Some of you must have calculated. Those of you who don't know what I'm saying, it is fine. Okay. To calculate depreciation, you require useful life. If you remember, yes, you require useful life. You require residual value. These are the things you require to calculate depreciation. These are not precise numbers. They are just estimated numbers. Estimates can change. Yes. So accounting records is not totally foolproof, not 100% accurate. There are certain limitations also. Certain estimates are also required. We learn about all this when we get to depreciation, separate topic. Okay. Some of you may know it, hence I've just brought it out here. That's it. Okay. These are some limitations of accounting which we generally see. Next is role of accountant. Now you are pursuing CA course, Chartered Accountant, one of the famous or reputed courses in India. All right. What do you think after becoming a CA you can do? What and all can you do after becoming CA? Let's see. Because on some ground you would have chosen, no? All right. Somebody would have told you, you can do all this. Okay. Somebody is saying audit. Fine. Anything else? What and all can you do? Sir, we can do audit, we can do taxations. Dhanush is saying we can travel. Buddy, I'm asking about work related, not your passion. Mergers and acquisition, taxation, perfect. All right. So these are some role of the accountant. One, he can help the company in maintaining the books. Accounting, he can give a service in accounting domain only. How the books should be maintained. So he can help the company there. Two, he can do something known as a statutory audit. Statutory audit deals with checking. Okay, there'll be something known as statutory auditor. That's what you're going to be later, okay, after qualifying, if you just take up company audits. Yes, thereby you will check the company records, balance sheet, P&L and all, and then certify whether the balance sheet is true and fair. The numbers they have shown, is it true and fair? Auditor will check and certify that. Okay, that's what we do in statutory audit. That could be one role. Or internal audit, like every organization will have certain policies, okay, certain accounting system. Whether that system is working fine or not, that is the job of an internal audit. Internal auditor should check whether that process is correct or not. Like if you just check your college, okay, can you pay the fees to anybody in your college? I think majority of you are still in your college. Can you pay college fees to your accounts faculty, sir? Let's say in college, there is one accounts faculty. Can you go and pay the fees to your accounts faculty? Here, sir, madam, this is my college fees. Can you give? No. You have to go to a particular department, then only pay it. Yes, there will be something known as accounts department. There only you need to go and pay it. Yes or no? Yes? Like that. Because that is necessary for college to function properly. So that is nothing but internal audit. Every company will have certain procedures for accounting also. Yes? So job of internal audit is to check whether those systems are adequate and is it performing properly. Is it working properly is what you need to check in internal audit. Okay. And accountant can also give a service in taxation role. Tax planning, how to save the tax. Yes. How to reduce the tax and all. That is also one area of like a service which the accountant can give. Meaning it can also help the company in calculating how much tax should the company or an individual pay to the government. That is one area in which chartered accountants or accountant can contribute. Another is consultancy service. Consultancy could be anything like teaching, company law matters. Some of you said mergers and acquisition. Yes, all this consultancy also you can give it, whatever area. Also, you can give some financial advice like which investment to buy, how much insurance to buy, from which company should we buy insurance, etc., etc. These sort of financial advice also an accountant can give. So these are some role of an accountant. Manageable, sir. Is it okay? Second point. What do you mean by second point, sir? Are you asking some doubt, Kaiser? Or you are saying me something? Statutory audit. Statutory audit is just checking, sir. Checking the records. Balance sheet, P&L on all. No, chartered accountant will check. Like one company ka balance sheet we will check. Like let's say Kaiser, you have a company. You appoint me as auditor. Then I will come to your company, check your accounting records, check whether have you prepared balance sheet properly, have you prepared P&L properly, all the information have you shown it correctly, at correct value, like this. So all this comes under statutory audit. Basically checking whether the accounting records is fine and balance sheet and P&L is it true and accurate. That's all is statutory audit. Manageable. Internal audit deals with internal accounting policies. Okay, certain accounting policies. I gave you a college example, right? Even organization will have it. Like organization also will have like there'll be one person for purchasing the goods. Only that person will purchase the goods. Nobody else will buy. There'll be one person or one team who will sell the goods. Nobody else will sell. There'll be one person who will pay the cash, who will receive the cash, like cashier. They will only do that duty. Yes, these are some policies which the companies have it. Internal audit is checking whether those policies are fine. Is it sufficient and is it working fine? Or is there any loopholes in that? That is what internal audit deals with. That's all. Manageable. Okay. Awesome. A quick revision of everything. Sure. Okay, no problem. Fadafat we'll try to recover. Accounting deals with recording, transaction and event. Transaction means it's an activity, performance of an activity, but that activity should be monetary. Event means it is a result of that transaction. What is the definition of accounting? Accounting is recording, classifying, summarizing, analyzing, interpreting and communicating transaction and events to the concerned person or to the interested parties. Okay, that's the first thing we learned. Next is objectives of accounting. Through accounting, what can you achieve? Through accounting, one, you can record all the transaction. 2, you will know the financial position of a business. 3, you will know the result of a business. 4, you can take all the management decisions, whatever is required with the help of accounting. Those are objectives. Bookkeeping and accounting, there are certain differences. Bookkeeping only deals with recording the transaction, nothing other than that. Just systematic recording, that's it. But accounting not only deals with recording, it deals with much other functions also. So a second difference between bookkeeping is bookkeeping does not give you financial position because we don't prepare balance sheet under bookkeeping. Whereas under accounting, we'll be able to know financial position because we prepare something known as balance sheet. With bookkeeping, you will not know the result of a business. With accounting, you can know. With bookkeeping, you cannot take managerial decisions, but with accounting, you can. Fifth one, bookkeeping does not have any sub-fields like cost accounting, management accounting, etc. But accounting has sub-fields. Okay. Next, we discuss sub-fields of accounting. First is financial accounting. Financial accounting simply deals with recording the transaction and preparing financial statements like balance sheet, P&L, etc. That is what is financial accounting ka whole scope is all about. Management accounting deals with whatever additional reports management requires to take their decisions, making sure that report is available to them. Providing those reports, we call it as comes under management accounting wala funda. Cost accounting. Cost accounting deals with ascertaining the cost of a product. And if you know the cost of a product, you also have a scope to reduce that cost. So that comes under cost accounting. Next is social responsibility accounting, which deals with social benefit and social cost. What is the harm you are doing to the society versus what is the benefit you are giving to the society. That comes under social responsibility accounting. Next, human resource accounting. This deals with finding the value of the employees of the organization. That is HR accounting. Users of financial statements could be: one, investors. They can use it to take investment decisions. Two, employees. Employees can use financial statements to decide whether should they stay in this organization or should they quit, or how much bonus should they ask for, or hike they should ask for, etc., etc. Creditor can use this financial statement to determine credit period. Next, debtors can use financial statements or accounting information to decide whether should he buy the goods from the company or not. Next, lenders will use the accounting information to determine should we give the money or not to this particular entity. Management can use the financial information to take decisions. Government can use the accounting information to basically find out the tax point of view. Accounting also has certain limitations. One limitation is balance sheet. No, that's a statement. It is only true for one day. Whichever day you prepare balance sheet, it is only valid for that day. It is not valid for the future. So that is one disadvantage. Two second disadvantages is accounting records, the financial statements, right? They ignore inflation. After you purchase, what happens is ignored in accounting currently. Yes. So hence inflation, something which is ignored for our accounting purpose. It also ignores non-monetary items, something which you cannot express in value in monetary terms, like employees ka worth, employee ka loyalty, skills, etc., etc. That you cannot measure precisely. Hence, we cannot record them also. That is one limitations. And accounting is not totally foolproof. You need to estimate certain things also. So that is some of the disadvantages or limitations of accounting. Last was the role of an accountant. Accountant can give a service in mainly bookkeeping, in maintaining the records, or he can go for statutory audit, or he can go give a service under internal audit, or taxation service, financial advice, etc., etc. These are some of the roles of an accountant. Okay, and that's your quick revision on the topic. See, now we spent so much time, probably more than 1 hour to discuss this. But revision, we were able to do just under maybe what I think we took about maybe 5 minutes at the tops. Yes. So that will help you on the last. By just looking at this table, you can just revise everything. First chapter in 5 minutes. Now, how is your confidence? I give you this normal notes to you, and I said you go through this. You will take at least 15-20 minutes to go through each and every point. But if I just give you the same format in the summary version, all right, then you can revise it fatafat. So this way I told, with the help of chart, you can revise the entire syllabus in under 3 hours. That is the importance of chart. Okay, fine. And I generally do charts for everything. For all, I handle about 8 or 9 subjects overall, for everything included. I prepare charts for everything. Okay, because many of the feedback that I have got from the students is it is really helping them for in their last day examination revision. Hence, I prefer to look at this. Done? Okay. Now let's do one thing. Let's see how much we got. I full throat arkonne. Yes. Let's see how much you understood. Let's solve some questions. Basically, I'm telling you, from these sort of topics, you can expect only true or false kind of a questions. Generally, those are things comes. Let's see. Which of the following is not a subfield of accounting? Management accounting, cost accounting, bookkeeping. Which is the right answer according to you? Option C. You just tell A, B, C and all. Poll and all, no, I cannot conduct because the system is a little far and it will take a lot extra time. Just say the answers. A, B, C, that is good enough. Which is not a subfield of accounting? Management accounting is, cost accounting is, bookkeeping is not. So that is the answer. Okay. Next, purpose of accounting system includes all the following except. They're saying which of the following is not a purpose of accounting? Yes, somebody is saying, sorry, you have given the answer already. Yeah. Some I would like to give it as homework. So I've already highlighted it. Okay. But read the option. In accounting, do we do interpretation and do we do recording? In accounting, we do recording also. We do interpretation also. Do we do classifying activity in accounting? Yes. Okay. Dictate the specific type of business enterprise transaction that enterprise may engage in. Will any accounting tell you this business you should do, this business you should not do? Does accounting give such? Does it dictate terms like this? No. Accounting just deals with recording and the things, recording and other things. Yes. It will not dictate you whether you should take a particular decision or not take a particular decision. That accounting will not override. Hence, this is not a purpose of accounting. Answer is C. Manageable. Book, okay, no? I know you know the answer, it's given over there, but still, are you able to get it? Alright, no? Okay, bookkeeping is mainly concerned with what, sir? Is it concerned with recording, classifying, summarizing? Does classifying, summarizing and all will come in bookkeeping? No. Will interpreting come in bookkeeping? No. Bookkeeping only concerned with what? Systematically recording the transaction. That's all it is. Yes. So option A is the right answer. These sort of questions generally they ask in examination. Generally the first question in your examination, okay, is a 12 marker one. They'll ask you 6. Generally it's the thing. It's not necessary. It has to come like that only. Fine. So, but you told 20 marker. Sir, initially when I told each question carries 20 marks. Under that, you will have subparts. You may have 3 parts like 10, 5, 5. Question number 1, totally it will be for 20 marks. Under this, you may have subpart A, subpart B, subpart C like this. A part can carry 10 marks. B part can carry 5 marks. C can carry 5 marks. Like this, there could be various subparts. Any ratio. It could be 10, 5, 5, or it could be 15, 5. Or it could be 12, 5, 3, like this. Any combination institute wants, they can ask it. But overall, that question will have 20 marker question like this. But it will have subcategories. No, fair enough. So generally, 2 or 4 question comes for about 12 markers. If you just check the paper trend, they'll ask you 6 true or false questions. Each carries 2 marker. You need to find out whether it is true or whether it is false and give a reason why it is true or why it is false. Don't please write nonsense. Sir, it is true because it is not false. Okay, please don't write all that in ACA. That may work in your PUC or as a 12th standard or in your BCom. It will never work in professional examination. Don't add unnecessary masalas. If you know the answer, write it. To the point you write. You will get correct marks just because I think some students have this notion. So I will fill the pages. One question I will write for 5 pages. Will I get high marks? That is nonsense. If you write nonsense for 5 pages, you will get 0 only. You will not even get a single mark. Masala and all, you leave it at professional course. Keep it at your BCom level. There it might work. Here 100% it will not work. In fact, they will be so irritated by you that you may actually start losing marks. Answer always to the point in professional examination. Little bit masala, okay. Don't write nonsense, please. If you don't know, leave it. It's fine. Move on to the next thing. Okay. Negative is not there. Negative marking is not there, but don't add masalas. Too much masalas. Little bit okay. Acceptable. We are Indians, of course. Yes. Spice is there in our blood only. Little bit we whether whatever we do, it will come out. Okay. Too much not required. Control. Done. Okay. Financial statements are part of what, sir? Is financial statements part of bookkeeping? No. Is it part of management accounting? No. It is part of A. Option A, accounting. That. Because through accounting only you will prepare financial statements. Correct? Financial position of a business. Which statement gives you financial position? P&L, balance sheet, which one? I'll give you 2 options only. Balance sheet, P&L, which one? Balance sheet gives you the financial position. So that is the right answer. Financial position means asset ka position, liability ka position. How much assets we have, how much liabilities we have. That is given, that a particular statement gives. That statement ka name is balance sheet. Okay, so that is the right answer. Alright. Users of accounting information include. Who cannot use the accounting information? Can creditors use it? Creditors are also known as suppliers. Can they use it? Yes. Can lenders or customers use it? Yes. That means what is the option? Both of them can use it. Yes. So option C as in Chennai is the right answer. Paklama, artha problem paklama anda. Everyone following? Purinjada. Okay, next. Question number, okay, paklame. Awesome. Sir, we have to take the whole question as option, right? Yeah, the whole question is an option. Both are the right answer. So this is the option we need to select. Awesome. Financial statements do not consider what? Asset expressed in monetary terms. Will you include monetary monetary items in financial statements? Yes. Will you include liabilities which can be expressed monetarily? Yes. Assets and liabilities. Basically, if a transaction can be expressed in monetary terms, you will record it, so it will come in balance sheet or P&L also. However, if you have non-monetary items, will you show that in financial statements? They're asking financial statements do not consider, meaning which will not come in financial statement. Which will not come? Those assets and liabilities or those transaction which cannot be expressed in monetary terms, meaning which is non-monetary. Those things which are non-monetary will not be part of your accounting system. Okay, hence it will not be part of your financial system. So C as in Chennai is again the right answer. Okay, any doubt, please shoot up. So I am thinking, since there is many of you here, everyone's chat and all, I may not see because sometimes what happens, 10-15 of you will send the chat in one go. Okay, so if you have any doubt, please don't hesitate. You're paid full fees, you have full right to ask the doubt. Okay, don't hesitate. If there's any issue, kindly speak up. Always free to. Don't have that hesitancy. Okay, next. On 1st January, Sohan, one person, he paid a rent of 5,000. Okay, this rent paid, is it transaction or is it an event? Or is it both? They're asking. He paid a rent. It's a transaction, yes, no? Doing an activity is a transaction. So Sohan paid a rent. So this is an activity. So right answer is a transaction. Okay, awesome. On 31st March 2020, after selling the goods worth 2,000, he is left with a closing inventory of 10,000. Some company or some person, he purchased the goods. After purchasing, he sold the goods. Even after doing all this activity, some goods is still remaining with him. He bought it, he sold it. After doing this transaction, you remember in my example, 30 pence was remaining. 100 I purchased, 70 I sold, 30 was remaining. That only we call it as closing stock or closing inventory. They're asking that closing stock, is it a transaction? Is it an event? What is it? Or both? That closing stock, a transaction, event or both? It's an event. Yes, no? Because you did purchase and you did sell. The result of that buying and selling is your closing stock. Hence, it is an event. Yes. Sir, in question number 8, he paying and getting a result. Now, if he pays, sir, with just one rent expense, can you know the result means profit or loss, sir? Basically, that's what we're looking at, basically. Okay. Can you just by doing one transaction, can you know, can you know the result? Not possible, no? Yes. So, hence, this is transaction only. Fair enough. Any activity that you're doing is a transaction. The result of that transaction. Okay, if you want it in simple terms, closing stock, profit or loss. These are the only two events. Let's keep it like this. Okay, not to just confuse you. Okay, events majorly consist of two things. That is, one is a closing stock. Closing stock is also, we call it as inventory. Okay, we use the term stock or we can use it as inventory. All right, same it is. Okay, or another profit or loss. The profit or loss which the business makes and the closing stock generally which the business has. These are considered as an event. Manageable? Comfortable? Okay. Somebody is saying, sir, this is a transaction of 2,000. They're not asking that, sir. They're asking in this question, he is left with the closing stock, closing inventory of 10,000. This is, when they say this is, they're talking about closing inventory. They're specifically asking about this question. Yes, I agree with you. Sale of goods is a transaction. I'm not debating that. They're not asking that in the question. They're asking closing inventory is what? Whether that is a transaction or that is an event. That is what they're asking. So it is an event. Clear, sir? Yes, understood. Awesome. So, next, some true or false question. Let's go through that. There is no difference between bookkeeping and accounting. Is it both are same ante? Correct? There is absolutely no difference between bookkeeping and accounting is what they're making. Absolute nonsense they're telling you. It is false. Just now we looked at 5 or 6 differences. No, how much ever you can remember, write that difference. 1 or 2 differences you write as a justification. That is sufficient. Don't write all the 5 or 6 for identifying the right answer. No, you will get 1 mark. For justifying it, you will get 1 mark. No need to write all the 5 or 6 points. just write 2 points as justification. That is sufficient. Any 2 points. I've given you 5 or 6 in the chart. No, 1 or 2 I think ideally should be sufficient. Even 1 is okay. 1 or maximum 2, not more than that. Anything of your choice. Done? Okay, that's how you will answer in the examination. Alright, next. Management accounting covers preparation and interpretation of financial statement. Does management accounting deal with that? Huh? Which deals with preparing and interpreting of financial statement? Financial accounting deals with that. Yes. Management accounting deals with providing the reports necessary to take the decision. So this is not activity of management accounting. Interpreting and communication of financial statements and all is an activity of financial accounting. So answer is false there. Next, question 12. Financial accounting is concerned with internal reporting to the managers of business accounting. Financial accounting deals with that. Does it deal with only internal reporting? Financial accounting, does it deal with internal reporting? No, it deals with more with external reporting. Yes. Providing internal reporting to managers for decision making is which function? It's a function of management accounting. Financial accounting does not deal with that. Hence, it is wrong. Yes, no. Management accounting gives you whatever data you require to take the decision. Hence, that is wrong. False it is. Next, question 13. Customers of a business should not be considered as users of accounts of the business. They are not interested to know the performance of business. Customer does not want to use financial statement, it seems. True or false? Customers also will use financial statements to decide whether should they transact with you or not. Should they buy the goods from you or not? To take this decision, obviously they will check financial statements or accounting information only. Yes. So that means everything is false. What, sir? All is false only. Don't write like this in examinations. 1 or 2 will also be true. Okay. Don't do that inky pinky ponky. Sir, everything I'll write false and come off. Anyway, 1 mark I will get. Okay. Don't do that. Institute is smart enough. Alright. Everything they will not give as false also in the examination. Some will be true also. Okay. Just check and do. Don't do this mug up activity. Customer. Customer is not there in the chart, eh? It's there, no da? Kaiser, where are you? Customer. Customer is our debtor, sir. Okay, a specific word is not utilized. Debtors only we call it as customers. Okay, fine now. That is your customer. Debtor. If you want, you can write like that. Manageable, Yeah. Okay, awesome. Next, summarizing is the basic function of accounting. All the business transaction of financial characteristics evidenced by some documents such as sales bills, passbook, sales slip, salary slip are recorded in the books of accounts. Sir, is summarizing the basic function of accounting, or what is the first function of accounting, sir? Summarizing means preparing trial balance. First only you will prepare trial balance, or what is the first thing you do? First thing you do is bookkeeping. That is nothing but journal, we say. Yes, no? Recording. Yes. Recording is the basic function of accounting, not summarizing. First you will record. Okay, that recording only we call it as journal. Recording we call it as journalizing. Okay. So that is the first or the basic function of accounting, not summarizing. So answer to this is also false only. Why debtors need to access accounting information? I told Macha here. This one, this example I gave, where that example went? Here. Here. See, A Limited sold the goods to W Limited. Remember this example? Yes. So, if A Limited is selling the goods to W Limited, that means can I tell W Limited is purchasing from A Limited? W Limited is purchasing from A Limited. Can I tell like this? Yes. Should W Limited buy only from A Limited, or he can buy from someone else also now? Should W Limited buy only from A Limited, or can he buy from anybody else also? He can buy from others also possible. Yes or no? So W can use a financial statement of A Limited to find out whether this is a good company or a bad company. That's how you do it, no sir. If you want to buy a phone. Yes. Whether will you go for a Nokia or will you go for a Samsung, sir? I'll give you a simple choice. Whether will you go for a Nokia or will you go for a Samsung? Probably most of them will go for a Samsung. Yes. Because a better product, better features, maybe lesser price, could be anything. Yes. Yes, same like that. Customers also can use financial statements in finding out whether this company is good or bad. Okay, that's all it is. Whether it is true or whether it is false, justification is a must. Okay, somebody saying break, sir, 1 minute, sir. We'll finish off this topic and then take a break. Hang on, another 5 minutes. That's it. I understand. Balance sheet shows the financial position of a business on the day of its preparation and not on the future day. They're saying balance sheet gives you financial position only on that day and not the future. Is it right? Absolutely yes. There goes the truth. Many of you were looking for truth. Here came the truth. Okay, fine. So you'll just write the same thing. Justification is balance sheet is a statement of financial position as at a given date. For a true, you'll copy more or less the same thing given in the question. You can't give further justification there. Okay, same thing what is given in the question only, you write it off. That is sufficient. Because if it is a true statement, what else can you justify? Yes, no. Copy the same thing. That is fine. Okay. Hence, majority of the question in the examination might be towards false. Because there you have to give the reason why it is false. Okay. So hence, majority of the questions will be towards false. But 1 or 2, they may make it true also. Possible. Okay. Objectives of bookkeeping are complete recording of transactions and ascertainment of financial position. Yes, complete recording is what bookkeeping deals with. So this statement is also true. That's all bookkeeping primarily deals with. So with this, our first chapter we have completed. Okay. So let's take a small, we'll take about 20 minutes break. Then we will continue with the remaining topics, or we'll start with the next topic. Thank you guys. Alright guys, welcome back after the break. So let's get started with the next topic. The second topic is accounting concepts. If you have to do certain accounting, yes, everything will have certain rules. Yes, like in mathematics, you had certain formulas. Yes, applying those formulas, you did solve those equations or whatever. Yes, for accounting also, if you want to do like accounting, there are certain rules or there are certain assumptions using which you do the accounting. That we call it as accounting concepts. Basically, accounting concepts are the assumptions or certain concepts or certain rules under which the accounting is based on. Okay, these concepts are very important because using this only we do the accountings. Okay, so is this second chapter or unit 2? As per study material, this is unit 2. Okay, but I have kept each unit as a separate topic. Fine, whichever way you consider, sir, it is not really problematic. Unit 2 or chapter 2, what difference does it make? We have to cover it. That's all it is. That is my intention. So I have not cluttered the things. I've kept each topic as separate topic for me. Okay. All right. Entity concept. The first such concept is entity concept. What this particular concept says is business is separate from its owners. Like, let's say I started a coaching center. Sandesh coaching classes. Like this, I started one academy. Fair enough. Yes, I only started it. So I'm the owner of that business. Yes, the business ka name is Sandesh Coaching Classes. The owner of that business is Sandesh. Yes, as per the entity concept, owner is separate, business is separate. Meaning business and owners are separate from each other. We always do the accounting. Meaning accounting is always done from the business point of view. We don't do the accounting from owner point of view. We always do the accounting from the business point of view. That's all this concept talks about. Now, why is this there? If you have to look at it, like if I have to say same thing. Okay, I started a coaching center. All right, the name of that coaching is Sandesh Coaching Classes. All right, yes, fine. Now to start the business, I require money. Correct? No. Let us say I invested 5 lakh rupees. Because to do any business, we require many things to do. Like to provide coaching, I require many equipments and things. Yes. So let's say I invested 5 lakh rupees into this coaching class wala business. Okay. Can you tell me, or will I get this money back? Suppose now I started the coaching. After 1 year, if I stop the coaching, if I close down this business, if there is any money in the business, will I keep it as it is or I will take it back? I invested 5 lakh now. after 1 or 2 years or after few years, if I plan to close down the business and if business has some money in it, will I keep it as it is or will I take back? I will take back. That means, can I say for me this 5 lakh rupees is an investment? From my perspective, from Sandesh perspective, can I say this 5 lakh is an investment? Or specifically, can I say this as an asset? Because investment is an asset. Yes, cash, investment, land, building, these are assets. Because using this, you can earn something. Yes, those only we call it as assets. Fine. But just stop there for a minute. Think from the business perspective. Business is coaching class. Yes. Does business have any obligation to pay me my money back? Does the business have any obligation to pay its owners? Yes. If the business shuts down, the money left in the business has to be paid back to the owner. That means, can I say from business perspective, this 5 lakh rupees is a liability? Okay, it's more like a capital, but for simplicity, can I say it as a liability? Would I say in that? Yes. Fine. Correct. No. See, from one perspective, from one's point of view, this 5 lakh rupees is an asset. From another point of view, the same becomes a liability. Yes. In this case, how will you do the accounting? Because for accounting of assets, we do the accounting of assets one way. We do the accounting of a liability another way. Same transaction is asset for one party. It's a liability for business. So there is a tug of war, or there is some confusion. Hence, they introduced this concept. They told, as far as the business is concerned, the business and the owners are different. And do always the accounting from business point of view. Everything, you'll always think whether a component is an asset, liability, expense, income, whatever. All these components, you will assess it only from the business point of view, not from the owner's point of view. That's all entity concept says. Is it okay? That's the first concept. Like this, we have maybe like 10 or 15 concepts. One by one, we need to go through. Clear? Can I move on to the next? Small fatafat concepts, but good to know. Because after becoming CA, if somebody asks you this and you tell I don't know, that will be very wrong. Okay, learn the basics properly, guys. Okay, yes, because basics is something which people study at CA Foundation and forget it off. If you go to a chartered accountant and stuff, now ask him basic questions. Sometimes they find it difficult to answer this because they would have forgotten it. So understand the things properly and learn it. That will help you in the long run. Okay, next is money measurement concept. This we have already discussed. In accounting, or you do accounting only for those transaction and events which can be expressed in money. Only those transaction and events which can be expressed in monetary terms or in money value terms, that only should be accounted. That is as per money measurement concept. If a particular transaction or event, if you cannot express it in terms of money, then we don't do any accounting for it. That's all money measurement concept talks about. Fine. Can I go for the next? Awesome. Periodicity concept. Okay, let's take a small example. Periodicity concept. Let us say I want to start a project. Let's say I want to construct a metro. Now that's what they're saying. Metro rail. Namma metro, bega katro. That's what they've been telling, the meme going around. Yes, metro construction in Bangalore is going on since 10 years almost. Yes, no. Okay, so let's say I got a metro construction contract from the government. Let's say this project is for 5 years. I applied for the tender of this particular project, metro construction ka. Okay, the construct this metro. Let's say it's a 5 kilometer or let's say it's a 50 kilometer stretch. For 50 kilometers, I'm going to construct a metro rail for the metro lane for the government. This I feel it will take about 5 years for me to construct this particular lane. Now, this is my business. Yes, no. I'm doing a particular activity means that becomes my business. Yes. Should I find out the result of my business? Result means should I find out profit or loss? After 5th year, because this project ka life is 5 years. Should I find out the result of this particular project or result of this particular business at the end of 5th year? Should I have to wait for 5 years and then find out profit or loss, or should I have to do it every year? Should I have to find out profit or loss every year, or only at the end of the project ka life, which is 5th year? What is the answer according to you? We should find out the result for every year. That is as per periodicity concept. Okay. So basically, whether you want it or not, all right, because others also would, they would be interested, right? So accounts should always be prepared at the end of every period, and in accounts the period is 12 months. Generally, that period, most common period is accounts will start. The accounting year will start from on 1st April. Let's say we are in 1st April 2020. If it starts on 1st April, it will end on 31st March 2021. April to March generally is the accepted accounting years. We don't follow calendar year, meaning Jan to December is not something which the company follows. Every company follows the accounting year, or most of the companies follow accounting year as April to March. From 1st April 2020 to 31st March 2021. And then it will go on like this. Next year will be 1st April 2021 to 31st March 2022. Like this it will keep on going. Okay. For this period, for this 12 months, April to March month, you need to prepare the results. Okay, you need to know the results. That is given under periodicity concept. Okay, whether you want it or not, 12 months ka results, P&L, you need to prepare. That is as per periodicity concept. Okay, so why, sir? Sir, if you imagine, sometimes a project ka life could be 20 years also. Like you are doing a nuclear power project, Hydra power project. That project ka life could be 20 or 50 years. Does it mean you will do 50 years, one set of accounts? Can you give like that? That will be voluminous. It will not make sense to anybody. Yes or no? Hence, they've just kept this periodicity concept for 12 months. Every 12 months, every year, you draft accounting records. You prepare financial statements and give it. That is your periodicity concept. Got it? Is it okay? Can I move on to the next one? Yes. Okay, next. Accrual concept. What accrual concept says is a transaction should be recorded. Irrespective of if a transaction should be recorded as and when it happens. As and when it accrues, you should record the transaction. Whether you have paid the cash or you have received the cash is irrelevant. Like, let us say I'm running a business. Okay. Let's say for the month of April, I have a few workers under me. Okay. I'm able to see Yonika or Yavanika. Am I saying correctly? Alright. Let's say Yavanika and Apurva, I'm able to see that. Okay. These two are my employees. Alright. I've hired them. They're doing my business. I mean, in my business, I've hired them. So I have to pay them salary. So April month mein both these girls came and worked, right, in my business. They did whatever job that they had to do. But I have a policy that April month ka salary I will pay only on 7th May. That month ka salary I will pay it by 7th of the next month. That's how I'm going to pay. This is my policy. Like April month ka salary I will pay in 7th May. May month ka salary I will pay I will pay on 7th June. Like this. You tell me I'm paying salary to these guys. That means for me it's an expense. Agreed? Yes, I have to pay them. It's an expense. Agreed? Should I account that expense in April? Let's say for this instance, should I record this expense in April? Should I record this expense on 30th April itself? Or should I record it on 7th May? On which day should I account this? 30th April or 7th May? On which day should I account? Some of them are saying 7th May. Okay, others, we should record it on 30th April itself. Why? Sir, this is April month ka salary. No? April month ka salary, when should you pay, sir? April month ka salary, when should you account it? In the month of April only, yes or no? That is what accrual concept is telling about. Enough. Whether cash paid and cash received is irrelevant for your accounting. Check whether transaction is accruing, meaning it happened or not. Like here, April month mein those two girls, did they come and work? April month mein, did those girls come and work? Yes. Has the April month passed? Yes. That means compulsorily you should account it on 30th April only. That is as per the accrual concept. So why, sir, we can pay on 7th May only? Sir, instead of 7th May, I will pay it on 11th December. Or I will pay in 1st December. Can I pass this entry in 1st December? Instead of, let's say, 7th May, I make this as December. I did not pay only. Alright? Okay, conjuice I am. Alright, they kept on asking, sir, we came and worked for you. Please pay a salary. I told, I will give you. I'll give you. Like this, I kept on postponing. Finally, I paid them in December. Now tell me, when will you account that salary? April or December? You will account it in April only. Okay? But on April, we did not pay, no sir. Yes, on April, you did not pay. Hence, you have to record something known as outstanding expenses. Yes, you remember in your 11th and 12th and all, you have done this. Yes. So, on 30th April, you have a liability. I have a liability to pay these two guys. So, I create something known as outstanding expense. Okay, but that is for an entry perspective. We'll see that later. But accounting has to be done in April only, not on the date of payment. That is as per the accrual concept. Okay, cash paid, cash received is irrelevant. Okay, I'm saying cash, it could be interpreted as check also. Whether I receive the payment in cash, check, or I make the payment in cash or check, that is irrelevant for accounting. What is relevant for accounting is the accrual, meaning the happening of the transaction. As soon as the transaction accrues or happens, you should record it. That's all accrual concept says. Is it clear, everyone? Bolo ji, clear hai? Yes. Awesome. That means I'll move on. Okay. Matching concept. Okay. I'll take the same example and help you also here. What does matching concept say is revenue and related expense both should be accounted in the same year. Meaning both should be matched and accounted in the same period. Like what do we mean by that? Take the same thing. April month mein those two girls came and worked. They did their job. Yes. Sir, if they come and work in my organization, will I get any benefit out of it? Asking a simple question. If I've hired, if my workers come and work, alright, if my staff come and work, will I get any benefit? Yes, correct? Yes. So let's say if April month mein they come and work means I will get some benefit. When will I get the benefit? In the month of April only probably. Yes, they've done means I'll get the benefit in April. What matching concept says is, see, you're getting some benefit in April, correct? Yes. But will I get this benefit at free of cost? Without incurring any cost, am I getting this benefit? No, I'm hiring certain employees. They are working. Because of their work, I am getting some benefit. And since they are working, I am paying them some salary. Yes or no? I'm paying them salary. That means I'm making some payment to them. That is a cost. That only we calling it as expense. What matching concept says is, so okay, to earn this benefit, you got some benefit in April. To get this benefit, you have to incur some expense also. Because if you want this benefit, then you have to pay salary also. Yes. So if benefit is recorded in April, then expense also should be recorded in April. Because these two go hand in hand. Without expense, you won't get a benefit. So if benefit is recorded in April, expense also should be recorded in April. That's all matching concept says. Okay. If revenue means benefit. Okay. If you are getting revenue or some benefit, to get that benefit, you will always incur some cost or some expense. So that benefit and expense should be accounted in the same month. That's what we mean here. Okay. Meaning the same period. In the same year, it should be accounted. Is the matching concept okay? Any doubts you have for me? Or all good? Oh, sir. Awesome. Going concern concept. What does going concern concept says is the business, the entity, okay, the company. The company, it is assumed that the business will go on for a long period of time. Now, if you have to talk about ArivuPro Academy, that's the entity. Yes, it's a business. As per going concern, we assume that the business will go on for a long period of time. We say in accounting terminology, that is foreseeable future. That business will continue for a long period of time. It neither has the necessity nor the intention to shut down. Okay, so that is the going concern assumption. It's always assumed that the organization will continue for a long period of time. On that basis only you do the accounting. Because if the company is planning to shut down, okay, this year, the accounting totally changes, which you will see in your CA inter level. Okay, going concern, if it is not valid, how you should prepare balance sheet. These data more you learn in your CA inter level, not for the time being. Okay, but for now, if you just know the meaning, that is good enough. The meaning, simple meaning is, we always assume, any business for that matter, not just one business, every business whom you're doing the accounting for, we always assume that that business will continue for a long period of time. That is a basic assumption under which accounting is done. If that assumption is not valid, or if that assumption fails, then how you do the accounting entirely changes. Okay. If going concern assumption is valid, you apply one rule of accounting. If going concern assumption fails, then we apply another set of accounting. All right. There are some different ways to prepare your balance sheet and P&L and all. Okay. Let's not go there. Not required at your level for now. Okay. See, intermay will cover it up. But meaning, did you get it? Just a simple thing. It's assumed that it will go on for a long period of time. Neither it will shut down nor it will curtail its operation. Meaning it will reduce the scale of its operation. That's all is the thing all about. Okay. Not dissolution of firm. Leave that. Where it is and all not required. Fine. We will see it later. Fine. Inter syllabus not required. Leave it. It's fine. Because I have to explain it with numbers. I have to take up a question. To solve that one question, I have to spend half an hour. Which is something which is there in syllabus only. First, let's do that. No? Out of syllabus, we'll do it later. Some other day, some other time. Okay, cost concept. What cost concept says is the value of any asset can be found out, can be ascertained on the basis of historical cost or acquisition cost. What this concept simply says is, let's say I purchased a plant and machinery. I purchased a plant and machinery for 1 lakh rupees. I purchased a plant and machinery for 1 lakh rupees. I should record this plant and machinery at what value? Currently, its value is 1.2 lakh rupees. I purchased it for 1 lakh. Currently, its value is 1 lakh 20,000. But I paid only 1 lakh for it. I should record this plant and machinery at what value? I should record this plant and machinery at the price I have paid. What is the price, or what is my purchase value? How much did I purchase it for? 1 lakh. So you record that asset only at 1 lakh because that is what you have paid for it. That is your acquisition cost. To buy this asset, to acquire this asset, how much cost did you incur? Okay, that's all cost concept says. Fine, ignore inflation. Perfect, correct. That's what we discussed previous chapter. No? Same thing. Yes, cost of concept simply says whatever price you pay for that particular asset, record it at that value only. Don't worry about other things. Current value, fair value could be whatever. Okay, that's all cost concept says about. Or historical cost concept says this only. That's it. Can I run through the next? Okay. Realization cost or realization concept, you can say. What that says is any change in the value of the asset should be recognized only when the entity realizes it. If any asset ka value changes, then only if the organization or if the company receives it, then only you should account for it. Otherwise, ignore it. Meaning, okay, let's say we'll continue it. Let's say the plant and machinery ka value in my records, in my accounting records, plant and machinery ka value is 1 lakh rupees. Okay. That's what I paid for it. But currently the fair value of this particular plant and machinery, if you sell the machinery today now, you can easily get 1.5 lakh rupees. I'm showing plant and machinery at 1 lakh because I purchased it for 1 lakh rupees. But the fair value of that product, if I sell it, no, around I can get 1.5 lakh rupees. Can I record this plant and machinery at 1.5 lakhs? Or will I still show it at 1? Will I show it at 1.5 or 1 lakh only? I will still show it at 1 lakh, yes. Because, yes, if I sell it, I will get 1.5. But have I sold it already? If I sell it, I will get 1.5. But have I sold it already? No. That is what realization concept says. If there is any change in the value of the asset, meaning from 1 lakh, this value has become 1 lakh 50,000. That means there is an increase of 50,000 in the value of this asset. Yes, no? Asset means something through which you can get some benefit. If I have machinery, using that, I can get some benefit. Hence, it is an asset. So there is an increase in the value of the asset for 50,000. But did I get this 50,000 already? No, I will get it only on when I sell the asset. That is what they are saying it. Okay. If there is any change in the value of the asset, you recognize it only when the entity realizes it. Fine. Are we okay? For cost concept, whichever price is lower, we should take. No. For cost concept, you take whatever value you bought for it. How much ever you buy the asset for, you record it at that value. Market value is irrelevant. How much ever you pay to acquire that asset, that's all you will record it at. Okay. Realization concept also is one more extension of it. If there is any change in value, you can ignore it because you will get to this 1,50,000 here only when you sell the asset. That is the reason. Okay. Otherwise, you will not get. That is all is your realization concept wala funda. All right. Okay. I think I've repeated. It's fine. Realization concept once again. Sure. You purchase, same thing, we'll just take it down. You purchase the asset for 1 lakh rupees. If I sell it, I can easily get 1,50,000. I have assumed this number. If I sell this asset, I will get 1,50,000. That means there is an increase. This asset ka value has increased. From 1 lakh, it has become 1.5 lakh rupees. That means it has increased by 50,000. Now the question is, should I show this plant and machinery in my accounting records at 1 lakh still, or I should show it at 1.5? As per realization concept, you will show this plant and machinery still at 1 lakh only. Why? Because this 1.5 you have not yet received it. You will receive this 1.5 lakh only when you sell it. Okay, since you have not sold it, you still continue to record it at 1 lakh only. That's all. Now is it clear? Yes. Okay. Dual aspect concept. What dual aspect concept says is, if you want to pass any accounting entry, which we call it as journal. Okay. Accounting entries are always done through something known as journal, or we pass something known as journal entries. If you want to pass journal entry, you require 2 things. Only by having 2 things, you can pass journal entry. One that we call it as accounts. Those we call it as accounts. One account will be debited. Another account should be credited. Okay. The simple assumption of this concept, or the funda of this concept, is if there is a transaction, right? That transaction will affect 2 accounts, or it will have 2 aspects. Every transaction will have 2 aspects or 2 accounts. One account will be debited, another account will be credited. That's all is this. Okay. You will not just have only one. Like in mathematics, you only have plus, right? In accounts, we have a debit and credit. Okay. If you want to do anything in accounting, there has to be a debit, there has to be a credit. Without debit and credit, you cannot pass any journal entry. There is always 2 components. Without it, there is no accounting. Fine. That is all is a dual aspect concept all about. Can I get to it further? Okay. Conservatism. Conservatism simply says, conservatism concept, name itself is saying conservatism, meaning traditional. Yes, no. What conservatism says is, if there is any anticipated future income, you ignore it. In future, if you are anticipating that you will get some income, ignore it. But if there is any future loss, if you are expecting that there will be a loss, account it right away. Meaning, let's say after 3 months, I am expecting that I may make a loss. As per conservatism, you don't have to wait for 3 months to account it. You can account it right now. But in the same 3 months, if I'm expecting some gain, okay, that you ignore it. Okay, that a little bit of partiality. Many people don't agree with this accounting. They say it is biased, but we still need to go ahead and do it because many of the accounting principles are based on conservatism. Yes, fair enough. Basically, what the funda of this is, see, if it is a good news, okay, if it is a good news, then do you think investors, the government and all will be unhappy about it? If there is good news, will they freak out? If the company is doing very good means, will they freak out? No. But however, if the company is doing bad, then they would like to know the bad news as early as possible. Yes or no? So that they can safeguard their position. If they want, they can sell off or stop transacting and yes, they can escape from it. That is the idea behind conservatism. Okay. So laws information, try to give it as early as possible. Okay, future gain, it is okay. You need not have to recognize. Let that future period come. Then you can record it. That's all is conservatism. Many don't agree with this. They say both should have been recorded, but that's for another day. There are some arguments in favor or argument against also. That's not for us to decide on things. We'll have to just go ahead because, as I told, many principles are based on this. Is it okay? But there'll be pressure in the company if they think good will happen. But what if bad happens instead of good news? See, you don't have to go in the entire notion. Bad debts, man. Perfect example for this is bad debts. Okay? Like provision for doubtful debts. You have sold goods to a particular debtor worth, let's say, 50,000. Of course, sold goods to somebody, 50,000. He will pay you the money only after 2 months because you have given him 2 months credit. Okay? But now you got to know that his financial position is bad. Okay, he has ran like Vijay Mallya. He took the loan and he ran. Yes, no, correct. Fine. Does it mean we will not recover this 50,000? Just because debtor's ka financial position is bad, does it mean we will not recover at all? No, we may recover, but we may not recover entire 50,000. No? The company feels maybe we will recover 40,000. 10,000 probably is a Tirupati toss. Put it in Tirupati Hundi and forget about it. Like that. Okay, that's what company feels. Yes. This only we call it as a provision for doubtful debts, if you remember. Those of you who have done accounting, I mean to say. Yeah? Are you able to remember this? So this is nothing but conservatism. This is your expected loss, not actual loss, but you accounted right away. Okay? That's the funda of conservatism. That's all. Okay? There's future loss accounted, future gain, push it. That's it. No need to account. That's as per conservatism. Any further doubts or okay? Okay. Consistency. What does consistency say is? See, for doing the accounting, right, there are certain accounting policies. Like, some of you might have heard. If you have not heard also, it is okay. You have closing stock, just now we heard, no? To find out the value of the closing stock, no, you have various methods. Like you can use a first in, first out method, weighted average method. We have an inventory as a separate chapter. It will come. I'll tell you each and everything how to calculate. If you have not done, no problem. Okay, just listen to what I'm saying. Entire meaning, it's not required for the time being. To find out the value of the closing stock, right? There are a couple of methods. You can use first in, first out, which is popularly known as FIFO or weighted average method. Fine. Like this. Can company follow both? 1 week I will use FIFO. Another week I will do weighted average. Like this, I'll keep dabbling. Can they do that? No. These are accounting policies. So there will be various accounting policies. Okay. The company cannot follow everything. They have to choose one. Among the various accounting policies, the organization should choose one. Either they will go for FIFO or they will go for a weighted average cost. Okay. One they have to choose. Organization has a choice, but they need to choose. Like you had a choice to join various academies. Now, fortunately or unfortunately, you have joined us. Correct or no? Yeah? Whether you're happy or unhappy, that is a secondary issue. Yes. But you have made a choice. Yes. Like that in accounting also, no? There is a choice, which we call it as accounting policies. Okay. One of the two. Okay. What consistency says is, you have chosen one, right? Stick to it. Don't keep changing. Okay. From here, FIFO, I will go to weighted average again, I'll come back to FIFO. Don't keep jumping like a monkey. Okay, whatever you have chosen, follow it consistently year after year. Okay, because each method of if you follow FIFO, no, you will get one closing stock value. If you follow weighted average, you will get a different value. Every year or every month, if you keep changing, no, your accounting records will become incomparable. Okay, it'll lead to a weird scenario. Okay, it'll be a little off. Consistency simply says whatever accounting policies your organization has chosen to follow it consistently year on year. So that last year you followed a FIFO, means this year also you follow FIFO. So that last year ka financial statements, no, can be compared with this year ka financial statements. If you keep changing this, no, financial statements will not be comparable. You cannot compare. So that is what consistency says. Name itself is saying consistency. Follow it like on a consistency basis. That's it. What else to say? Okay. Is that clear? Okay. Materiality. Now somebody is saying, I'm happy I joined the class. Oh, yeah, awesome. Thanks. All right. Materiality concept. What materiality concept says is, I'll just read it out and then give you an example. Items which have significant economic effect on business should only be disclosed in financial statements. What this means is, so let's take a company, Reliance Industry. Okay. Probably, let's say the turnover of Reliance, I've not just recently checked. Let's say the sales, the revenue of Reliance is 50,000 crores. Assumption. I've not checked the actual numbers. We'll just go ahead with this. Okay, not 50,000, 50,000 crores. Okay. All right. Too big, no? Correct? Yeah. Reliance company. They purchased, 100 pencils, sir. Nataraja pencil or Camlin pencil or whichever brand ka pencil they purchased. 100 pencil they purchased by paying 1,000 rupees. They purchased 100 pencil by paying 1,000 rupees. Okay, that's all they did. For their employee, one pencil they gave. Hey, you joined my company, take one pencil. Like that they gave. Okay. 100 pencil, each carrying 10 rupees. So total value is 1,000 rupees. Now, do you think Reliance will pass 100 journal entries? Because accounting is done through journal entry, I told. Meaning one will be debited, another will be credited. They purchased 100 pencil. That means will they pass 100 journal entries? And show this 100 pencil in balance sheet saying it's an asset? Okay. Or let's say instead of pencil, let's take it as calculator, because pencil we may not use it, no? Okay, calculator, let's say. They purchased 100 calculators. Normally we use calculator for more than 1 year, no? Correct? Calculator generally we use it for more than 1 year. Yes. Do you think Reliance will show this asset, calculator, in their balance sheet? 1,000 rupees calculator. Will they show it in balance sheet? Do you think it makes sense? Think logically. Do you think it makes sense? It's a 50,000 crore company. 1,000 rupees for them. Is it really material or immaterial amount? Immaterial means very insignificant. This 1,000 rupees is nothing for them. Yes or no? Yes. So that is what materiality concept says. Don't clutter your financial statement by giving every data. Okay. Fair enough. You give in financial statement, only give that data which has significant effect. Okay. Meaning which is significant. How can you say it is significant? You can say something is significant provided that something affects your decision making. Do you think as an investor, you will see that they purchased 100 calculators, so you will buy Reliance shares? Huh? You will see this 100 calculators shown in balance sheet and then decide to buy Reliance ka shares. Will you decide like that? No. Because for you, this 100 calculators is irrelevant. Yes or no? Anybody will look at that and buy? No, right? Irrelevant it is. So that is what materiality concept says. Only those which are relevant, those which are significant, only show that. Don't put everything and clutter the balance sheet. If you do that, no, then it will become like what? The balance sheet only will become like what, the 1,000-page book. Okay. Straight away, you give it and the investor will straight away put in kabaddi only. Yeah, Raddi only he'll put it off. Nobody will use that. Yeah, nobody will have patience to go through so much. Correct? That is what materiality concept says. Meaning only significant items you show. So how to find out whether it is significant or not? That is the management judgment call. You need to take a judgment here. Okay? So what is material depends on company to company. For a 50,000 crore company, this may be immaterial. But if there is another company, their turnover or their revenue is only 10,000. For a 10,000 revenue company, is this 1,000 rupees material? Very much yes, because it is 10% of this, correct? No. Like that you need to take a call. What is material depends from company to company. It's a judgment call. There is no limit. Like 5% is material, 2% is material. Like this, nowhere there is a limit. It's a judgment call, management judgment call it is. So they need to judge it and accordingly show it. That is your materiality. Material. Okay. Can I go over the next or any doubts in this you guys have? Hello guys? Awesome. Next, fundamental accounting assumption. There are 3 fundamental accounting assumptions, guys. Going concern, consistency, accrual. GAC we will call it for remembrance sake. Going concern, accrual, consistency. What these 3 means we already studied just now. Going concern, accrual, consistency. These 3 are considered as a fundamental accounting assumption. So what does that mean now? If these 3 assumptions, if any organization fails, If they violate any of this concept, then you need to disclose the fact in financial statement. Meaning, if any company, if it is not a going concern, if any company, if they are not following consistency concept, or if they are not following accrual concept, then that company should specifically make a disclosure. They should make a statement saying, I have not followed these three in while preparing financial statement. Like this, they need to make one statement. That's all it is. Is this okay? Fine. Right? If it is followed, you don't have to do anything. You need to disclose only if it is not followed. Only if it is not followed, then only you do it. Otherwise, not required. Is this okay? This is again a favorite true or false question can come on this, or MCQ question. Which are the three going concerns? They will put two. Third one, they will put something else. So you should be able to figure out what that is. So you can remember it as GAC. Okay. Done. Can I go over the next two? Okay, qualitative or quantitative characteristics of financial statements. If you are preparing financial statements, that should have a certain characteristics. It should have some features. What features are we looking at? It is understandability. What does this mean? See, if you're preparing financial statements, a reader, whoever is reading that financial statements, he should be able to understand it. That user should have a reasonable knowledge. Okay, if he's a science background student, okay, and then you give him financial statement, he may not understand it. But if he's a commerce background student, then he should be able to understand financial statement. Meaning, prepare the financial statement in such a way that somebody who has a reasonable knowledge should be able to understand it. Okay, that's all it says. Okay, fine. How do we ensure this? See now. Anyway, I told you in financial statement, some explanatory notes is also required. Some explanations you should give. Yes, we discussed that in the chapter number 1. First point, I have written 10 explanation points. First point, I wrote it in English. Second point, I wrote it in Telugu. Third point, I wrote it in Kannada. Fourth one in Tamil. Next, Urdu, Arabic, everything. I'm writing. I have a high language prowess. I'm showing off here. 10 points I've written in 10 different languages. Will everybody understand that? Huh? If I write in Greek and Latin, will everybody understand that? No. So present it in a way or use that words through which, don't use Shashi Tharoor wala English. Okay. Present it in a way or a simple in language that people should be able to understand it. Like that. Okay. This is one. And other ways, I told you need to disclose accounting policies. Yes. Disclose those policies at one go. Like here I gave you previously example. If you remember, closing stock can be valued using FIFO method or weighted average method. These are two accounting policies. Among them, or these are two choices. Among these two choices, company has to choose one. Yes, the chosen one becomes accounting policies. Okay. What we say is that accounting policy should be disclosed in financial statements. Okay. But let's say first in page number 1 mein I disclose accounting policy 1. In page number 45 mein I disclose the second accounting policy. In page number 75 mein I disclose another accounting policy. Will it help? Will it help if I scatter the information throughout my financial statement? Bits and pieces. Like a thriller movie. I made financial statement like a thriller movie. Little bit only I'm showing. Will it help? No. That is what understandability concept says. Present your financial statement in such a way that your users should be able to understand it. That's it. Okay. Next, another characteristic of financial statement is relevance. Okay, you can say financial statements are relevant. Okay, when can you say, okay, here, my coaching, sir, whatever coaching I'm giving you, is it relevant for you? Is it relevant for you? Yes. How can you tell whether it is relevant? Because you are able to understand it. Yes, maybe on that ground you are judging me. Yeah, some are not responding. They're saying, hey, nothing we are understanding. Nonsense he is speaking from that time. I am also seeing. Rodal Sigle on Gide Mariappa. No, anything like that. Any hundas? You guys have? No. Following? No. Okay, yes. Like this. So you are judging. My coaching, you're feeling it is relevant because you feel you are able to understand it. And you see the material you feel that will help you to clear your exams. Correct? No? That is what probably on those two parameters you are judging me. Yes. Same. Even users of financial statement will judge financial statement on what grounds? If financial statements help them in their decision making process. Okay, then we say financial statements are relevant. You can say something is relevant only when it helps in the decision making process, whatever decision they want to take. Okay, decision could be an employee could take a decision to join your company, an investor could take a decision to invest your company, management could take a decision, whatever expansion decisions or whatever decisions could be anything. If financial statement is helping those guys in their decision making process, we say financial statement is relevant. That's all it is. Okay, so basically it should help in decision making. That's all as a quick summary on that. That is the next characteristics. Third characteristic is reliable. The financial statement that you prepare should be reliable. When can you say something is reliable? So you looked at my material, sir. Okay, full error it is there. Full error, sir. Hey, this is only for fun I'm saying. Don't think of it. We have prepared material properly only. Okay. Yeah, it is trustworthy only. We put everything. Just for simplicity, I'm saying. If my material is full of errors. Okay. Instead of putting CS syllabus, no, I put in CS syllabus. CS foundation syllabus, I put it off. Okay. Can you rely on my material now? Can you rely on my material now? If it is full of mistakes, if it is not like, and if I don't put in CA foundation syllabus but give you CS ka, no, yes, that is what we mean by reliable. Financial statements can be reliable only when it is free from error. There should not be any errors when you're preparing financial statements. It should be accurate, and it should also be free from bias. It should not be opinionated. It should not be going towards one point of view. All right, just because managing director feels something is correct, you should not do the accounting as per managing director whims and fancies. Accounting has a certain rules. Follow the rule and do the accounting. Okay. If what managing director is saying, if it does not agree with accounting rules, you have to ignore managing director ka comments. He might be in a reputed position, but irrelevant. Okay. For accounting, you have to follow accounting rules. Okay. If you are following that managing director ka instruction, knowing that it is wrong, then we say financial statement is biased. Meaning you're preparing from his point of view. That is incorrect. So for it to be reliable, there should not be any errors and it should not be opinionated. Okay. What is right, you should just do it. What is required, you should do it, irrespective of what somebody says. That's what we mean by it should not have any bias. Last characteristics is comparability. Comparability. Meaning whatever financial statements you prepare now, you should be able to compare it. Like, see sir, we always have a habit, right, of comparison. Yes. If like at your level, what do you compare? Oh, I have MI phone, my friend has iPhone. That is your comparison. Yes. Or my friend got 90 marks, I got 70 marks. Yes. Yeah, fair enough. My boyfriend has a beautiful girlfriend, I don't have. Whatever it is. Yes, yes. Like this, there are some comparisons we draw. Whatever level, wherever we are, we draw our own levels of comparison. Yes. Even financial statements also should be comparable. Meaning, if you're presented financial statement for current year, let's say you prepared a financial statement for current year. Current year means we already discussed, no? As per periodicity concept, year is for 12 months. For current 12 months, you prepared financial statement. You should be able to compare this current year ka financial statement with last year also. With this 12-month ka current data financial statement, you should be able to compare it with last year also. Only then you can tell, no, whether have you improved or have you gone bad. Yes, like these. Okay. All right, somebody's cracking joke on girlfriend, boyfriend and all. Done pa. Okay. All right. So basically this what is comparability. So whatever financial statements you prepare, no, it should be comparable. Both from current year data, you should be able to compare it with last year. Not only this, let's say there are two software companies, Infosys and Wipro. Infosys ka financial statement, you should be able to compare it with Wipro ka financial statements because both are anyway in software domain. Both are into software business. Yes. So even these two financial statements, you should be able to compare it because only then you can take the decision properly. Yes. That is what we mean by comparability. Comparable should be both year on year basis. Current year, you should be able to compare it with last year. And you should also be able to compare it between entities. You should be also able to compare your financial statements with other entities who are in the same business. Okay. Those are some characteristics of financial statements. With this, all the theoretical concept relating to this we are done for. Any doubts you have for me? A small recap. Okay, no problem. Okay. 2-3 minutes. Let's try to have a quick recap. First is entity concept. As per entity concept, business is separate, owner is separate, and accounting is always done from the business point of view. Okay, that is one. Money measurement concept. Money measurement concept says only those transaction in events which you can express in monetary terms, which you can express in terms of money, only that should be recorded. That is money measurement concept. Third one, periodicity concept. What periodicity concept says is you should prepare financial statement or you should have accounting record for a certain period of time you need to prepare. That is for 12 months. Every 12 months you need to prepare your financial statements. The life of the entity could be 20 years, 30 years, doesn't matter. Every 12 months you need to prepare financial statement as per periodicity concept. Accrual concept says account the transaction as and when it happens, meaning as and when it accrues. Whether you have paid the cash or you have received the cash is irrelevant. Okay, happening of the transaction is more relevant as per accrual. Next, matching concept. Matching concept means, see, if you want to earn some benefit or get some benefit, to get some benefit you have to incur some cost also. Okay, if you are recording in the current year, then that expense also should be recorded in the current year only. You can't record benefit in the current year and expense in the next year. That is not how it works. Benefit and revenue should be, meaning benefit and cost should be matched and both of them should be recorded in the same year. Going concern. Going concern means, and normally one basic accounting assumption is the entity, the business, we assume it will go on for a long period of time. It neither has the necessity nor the intention to shut down or curtail, meaning reduce its operation by a significant amount. That's all is going concern. Assumption. Cost concept simply says whatever price you have paid to buy the asset, meaning acquisition cost, show the asset at acquisition cost only. The fair value, current market price could be anything. It really doesn't matter. How much ever you have paid for it, accounted at that value. That is as per cost concept. Realization cost concept simply says if there is any increase in the value of the asset or if there is any change in the value of the asset, ignore it. Unless you realize it, don't account it. Okay. Again, like it's saying, just stick to the cost concept is what again this also is trying to say. That's all. Dual aspect concept. This says if you want to pass any journal entry, if you want to do accounting, you always require two accounts. Any two accounts it could be, but you compulsorily require two accounts. One account will be debited, another account will be credited. So debit and credit is a must. Without this thing, you cannot do any accounting. Okay, that's how the accounting works. Basically on a debit and credit mode. Conservatism simply says if in future if you are anticipating any loss, record it right away. You don't have to wait till the future. Record it right now. In future however, if you are anticipating any gains, then don't account it now. Account it in future when you realize it. Meaning when you get that gain, then only record it. Don't record it now. Consistency simply says the accounting policies that you follow, the choices that you follow it consistently. Don't keep jumping. Okay, follow it year on year, same thing. So that financial statement will become comparable. That's all consistency says. Materiality means you don't have to disclose everything in financial statement. Only those which are important, those which are significant. If you disclose that, that is good enough. Next, we discussed fundamental going accounting assumptions, which you can call it as GAC, meaning going concern, accrual, consistency. If these three are followed, or you can call it as GCA also, whatever it is. If these are followed, if these fundamental accounting assumption, then nothing you don't have to do anything extra. That's all, done. If any of these things falls, not everything, if any of these fails, then you need to specifically give a disclosure. Company should disclose that saying, we have not followed this. Like this, they need to make a statement. That's all this particular thing says. Characteristics of financial statement. One is prepare your financial statements in such a way that users will be able to understand it. That is first characteristic. Second one, it should be relevant, meaning it should help the users in making the whatever decisions that they want. Next, it should be reliable. You can say something is reliable when it is free from error and bias. It should not be opinionized. You should do what is right. That's all. Okay. Fourth one, it should be comparable, both between the entities and within the entity, same current year and last year. Like this, you should be able to compare it. Those are characteristics of your chapter 2 ka summary. I've given you detailed notes here. Okay, summary I've given in charts. Detailed notes also I've given. Fine. If you have any confusion, you can refer to the detailed notes. Otherwise, charts should be okay. All right. Can we get PDF? No, PDF, the charts will not be shared, okay, due to some copyright issues. So you can just buy the charts. Hard copy will give it to you. Soft copy cannot be shared. Yeah, you need to, as I said, I can just buy it out from going to learn.arivupro.com. Time being, it may not be available. Hang on. Regarding the prices, I think you can check with Academy, sir. They will host it. I am not deciding the price on that. Academy will decide on the price. Don't worry, we just keep the printing cost. All right, we don't make much and all here. Okay, for us, we'll just keep it simple. Okay, but you can check with the Academy. So will all companies in the same field maintain same method? Generally, they do, sir. Generally, they do. Okay. Generally, not necessarily though. Some can have a different accounting policies. Like to answer your question, like here, Wipro Limited can go for FIFO. Infosys Limited can go for weighted average. Nothing prevents them. That is nothing like that. But generally what they do is to make financial statements comparable. They also choose the same thing generally. But there is no mandatory rule that both the companies in the same industry should follow same accounting policy. Nothing like that. Okay. They are free to choose. Okay. Good question that is. Okay. Awesome. All right. Let's look at some questions. Okay, let's see some questions. Maybe some will do it. All the following items are classified as fundamental accounting assumptions except what? Which of the following is not a fundamental accounting assumption? They're asking. Is consistency a fundamental accounting assumption? Yes. Going concern? Yes. How about business entity? Is business entity a fundamental one? No. It is what? GAC. Going concern, accrual, consistency. Yes. So business entity is not a fundamental accounting assumption. So that is the odd one out. So you need to pick that. Two primary qualitative characteristics of financial statement is what? Understand relevance and reliability, sir. These two are the primary qualitative characteristics of financial statement. Okay, they've just called out this. You can remember that. Kanika Enterprise follows a written down value of method of depreciating machinery every year. Every year they're following like depreciation. Some of you must have done. You can follow straight line method. You can follow written down value method. You can follow annuity method. Like this, there are various methods to calculate depreciation. Those of you who have forgotten or not done, no need to worry. We have a separate topic known as depreciation, which we will have to calculate and do it any which way. Okay. So no need to freak out. You will do everything. Okay. But some of them might have done. So I'm just going a little ahead. Here, excuse me. No, every year one company, they are following WDV method only. Why do you think they are following this? Every year depreciation, they are following same method. Why they are following this? Due to which one? Due to consistency. Yes, no? Because they want to maintain the consistency. Hence, they were going for the same method. So that is the right answer. They're basically following consistency accounting policy. Okay, let's look at this. A car, A purchased a car, a person, A or A Limited, whoever, has purchased a car for 5 lakh rupees by making a down payment of 1 lakh rupees. Meaning down payment means paying it immediately. He purchased the car whose value is 5 lakh rupees by making a down payment of 1 lakh. Immediately he paid 1 lakh rupees and signing 4 lakh bills payable due in 60 days rupees. He told what is bills payable, we'll look at it later. Yes. Basically, he told I will clear the balance 4 lakh rupees in 60 days time. As a result of this transaction, what happened? Total assets. Or you tell me, sir. What happened to total assets? One, he purchased a car. Car is an asset. So you purchased a car worth 5 lakh. That means, can I say asset is increased by 5 lakh? Am I right in saying so? You purchased a car. So car is an asset. When you purchase it, car value has increased your total asset by 5 lakh rupees. Okay. But you made a down payment, no? Down payment means you paid some cash. Yes. How much cash did you pay? Down payment could be made in cash or through check. It's fine. Leave that. Let's not bother too much about that. So we paid a cash of 1 lakh rupees. Can you tell me what will happen to cash account? Cash balance will be same or it will reduce. You paid 1 lakh cash. So cash balance will reduce. Yes, no? That means both are asset. Even car is an asset, cash is an asset. Both are asset because using both you will get some benefits for more than 1 year. Yes, correct. That means what is the net impact on the asset, sir? One asset has increased by 5 lakh. Another asset has reduced by 1 lakh. So what is the net impact on asset? What is the net impact on asset? Net impact on asset is the asset has increased by 4 lakh rupees. Can I say so? Okay. This 4 lakh rupees, this particular A, the guy A, he should also pay a car vendor, no? Wherever he purchased the car from, he is only paid 5 lakh is the worth of the car. He's only paid 1 lakh. How much still he needs to pay, sir? How much he still needs to pay? Out of 5 lakh, 1 lakh he has paid. How much is yet to pay? 4 lakh. That means if he is yet to pay means he has an obligation to pay somebody. That only we call it as liability. Yes, he owes somebody 4 lakh. Liability means owing. Asset is owning. So this 4 lakh he owes. O-W-E-S. Owes. Yes. So liability, because of this transaction, liability also increases by 4 lakh because 4 lakh is yet to pay. So they're asking the net impact of this transaction. Can you tell me, because of this transaction, what is the net impact? Asset also increased by 4 lakh and liability also increased by 4 lakh. That is the option. This is the justification for that. Because of this, both asset and liability increased by 4 lakh rupees. That's it. Dana. Can I move for the next one now? Yes, Saru. Okay. Mohan purchased the goods for 15 lakh rupees and he sold 4/5 of the goods amounting to 18 lakh rupees. 4/5 he has sold means, can I say 1/5 he still has? Yes, because always fraction is what, sir? 1. 1 minus 4 by 5 is 5 minus 4 divided by 5, which is 1 by 5. Am I right in calculating this? Mathematics, yes, some of you already would have solved all this. Yeah, this should be there in maths now. Is maths already done for you? Or it's going on? Yes, sir. Then, I mean, this basic calculations and all, I think you are pakka now. Yeah? Okay, awesome. So that means, can I say 1/5 of the goods is remaining? Because they told 4/5 of the goods is sold. That means 1/5 is remaining. That remaining only we call it as closing stock or inventory. Closing inventory, or also known as closing stock. Yes. Yes. Okay, let's see. And he met the expense. See, buying and selling is not the only expenditure. There could be other expense also. So they're saying he had another expense of 2,50,000 during the year. Maybe salary to staff, rent, electricity, water bill, or whatever. He met the expenditure of 2,50,000. He counted the net profit as 3.5 lakh. Which of the accounting concept was followed by him? What is he doing, sir? He counted the net profit of 3.5 lakh. Check. He purchased the goods. That is like, purchase the goods means, can I call that as a cost? Can I call it as an expense? Would that be okay with you? Yes. And he sold the goods worth 18 lakh. That means sales is an income. So he took one expense, he took one income. There is also another expense of 2,50,000. All this he is accounted in the current year. All the three he accounted. 2 expense, 1 income. All these three he accounted and he got net profit. What is he trying to do here? He's accounted expense and income. As per which concept? What concept says that expense and related income and related expense should be accounted in the same year? Which concept says this? Matching concept. Yes, no? As per matching concept, to earn the revenue, to get some benefit, you will have to incur some cost. And both the benefit, meaning the revenue and expense, should be accounted in the same year. That is what he has done here. Sales is an income, the purchase cost is an expense, and other expense of sale also he has recorded. All of them in the same year he has recorded. That is as per the matching concept. That's all he's trying to do. Okay, like this you will get the question, sir. If you have a clarity with respect to what it means, easily you will be able to solve it. Otherwise, you will have a little hiccups there, here and there. Okay. A businessman purchased the goods for 25 lakh rupees and sold 80% of the goods during the accounting year. Okay, calculate. He purchased the goods for 25 lakh rupees. They're saying 80% he has sold. That means, can I say 20% he has is remaining? 80% goods he has sold means 20% is remaining. For 100%, if the value is 25 lakh. For 20%, what is the value? Because totally he purchased 25 lakh, no? So that is for full value. Only 20% is remaining, right? Can you tell me what is the cost of this 25%? Yeah, 25 lakhs are 20% is 5 lakh rupees. Yeah, you can calculate easily there here. Okay, fine. How to calculate easily? The way I calculate is, you can just follow that if you want. I just do 25 into 2. 25 2s are 50. So this I'll directly write it as 5 lakh like this. Or 20% is nothing but 1 by 5. Yeah, somebody is pointing out that. 25 lakh into 1 by 5 is 5 lakh. That way also you can calculate. Everything don't use calculator. It is fine. Some are very, very straightforward. Like 10% if they ask. Simple way is 25 lakh. No, 25 lakh mein 1 0 you cut off. What remains? 2.5 lakh. That is a straightforward answer. You don't have to do 1/10 also there. Whatever is the number, 1 0 you cut off. That is your answer for 10%. That is also another way. 20% is double of 10%. Okay. So some tricks which can help you solve it little faster. So everything, don't make it a habit to use calculators. Your mind will stop working. You are in number crunching, you are a CA. So numbers you should be a little good at. Some calculations, basic calculations at least. Okay, coming back to the topic. So he has 20% of the goods remaining with him. The cost of that is 5 lakh rupees. Okay. The market value of the remaining goods is 20%. The cost of the remaining goods just now we found out to be 5 lakh. The market value of that goods, these 20 goods, if you sell in the market, it will fetch you 4 lakh rupees. I am not telling you this, the question is telling. The market value of the goods is 4 lakh rupees. Okay. He valued the inventory at cost. But the market value is 4 lakh. Which, don't look at the question, just look at the screen. Tell me which concept D he violated here. He showed this closing stock at 5 lakh rupees. Instead of showing 4 lakh rupees, he showed it at 5 lakh rupees. Which concept did he violate? Perfect. Conservatism. Because what does conservatism say? If there is any anticipated future loss, you should account it. Yes. So here, see, you might have purchased the goods for 5 lakh, but you will be able to sell it only for what value? If you sell it today, you'll only be able to get how much? 4 lakh. That means there is a loss, a probable loss. How much? 1 lakh. It should be accounted as per conservatism. He did not do, because he is still showing the asset at 5 lakh only. Hence, he has violated conservatism concept. Did everybody understand this? There's only calculation question here, in fact, I think. The rest everything is pretty straightforward. Somebody is saying, Yuvanika is saying, sir, closing stock should be recorded based on cost concept. Okay, actually no. Okay, yeah, you're right at your level. That interpretation is correct. I am not violating this. But since you have asked this question, I will say a few words extra. Okay, listen to me. Even if you understand, it is not a problem. Each of the component, right? Now, accounting is not simple as you've been studying here. Next level, you'll understand. Whenever you're doing accounting, there is something known as accounting standards, which our institute, CA Institute, has issued. There is accounting standard 2, which deals with inventory valuation. How inventory should be valued. There is a specific guidance given on that. Like this, for each component, you have a standards. Like accounting standard 1 is disclosure of accounting policy. AS2 is for inventory. AS3 is cash flow statement. AS4 is event occurring after balance sheet date. For fixed asset, you have AS10. For intangible asset, you have AS26. And in this, you will learn in your CA Inter. In your CA final, you will learn something known as Ind AS. Okay? Ind AS. AS is local GAAP issued by our ICAI. Okay, it is given by ICAI but published by central government. Okay, Ind AS is international standard. In your CA Inter level of accounting and advanced accounting, you will learn accounting standards. In your CA final, you will learn Ind AS. Both these standards, what they say is inventory should be valued at cost or net realizable value, whichever is lower. As per these two guidance note or these standards, right? Inventory should be valued at cost or NRV, net realizable value, whichever is lower. We'll have to go ahead and apply that one. Okay. Only at your foundation level, we'll be doing all this stuff. Going forward, you should have an idea about each standard, what it says. Standard gives you a comprehensive idea as to how the accounting should be done. Okay. Standards are very interesting and also fully conceptual based. Okay. That for the next level. Okay, since you asked, I am just giving you. All right, fair enough. So applying this, they've given the answer. Yes, as per cost concept, you should have recorded at 5 lakh, but you will be violating a specific guidance given. Okay, hence you have to follow at this only. Okay, all right. Cost versus conservatism. Conservatism will prevail. You can think of it like that. Okay. Fine. At this level, I don't want to get into accounting standards. Some here and there, maybe I'll mention. Okay, like Ind AS number, if you want, it is Ind AS 2. Ind AS 2 we'll talk about like this. There are more than closer to 28 or 29 accounting standards, more than 45 to 50 Ind AS. Okay, lot of interesting standards. What standards you would have not even imagined that much complexity and that much thinking or like that accounting would be done. You would have never imagined that. Very interesting things, especially Ind AS. One of the fabulous way they've drafted. Okay, great. But anyways, no point in talking at this point of time with you on that. Irrelevant, yes? Okay, since you asked, I just spoke few extra words. Even if I have not got it, absolutely no problem. Leave it, it's okay. Capital brought in. Okay, sometimes I will say extra words, okay? Don't feel disappointed. Because that is one of the disadvantages of taking all the three. You will know what comes what. No? So I'll give you a little extra information, that's it. Even if you don't understand, don't be bogged down, it is okay. Alright, just listen from here and leave it off from there. That is good enough. But CA foundation syllabus, retain it, okay? Other than that, it is okay. Alright, next one. Capital brought in by the proprietor is an example of what? If any capital has brought in by the owner. Proprietor means owners, another name. Owner. If owner has brought in some money, because if you want to do a business, owner has to bring in some money. If owner brings in money, what will happen is what they're asking. If owner brings in money, what will happen? So let's say owner brought a money of 1 lakh rupees. I started a business by investing 1 lakh. I invested 1 lakh into the business and started it. That means cash came into my business. So can I say asset has increased by 1 lakh? I brought 1 lakh money into the business. So that is a cash. Cash increased by 1 lakh. Agreed? Alright, this is one. Should the business, let's say the name of the business is X Limited. Should X Limited, that is the name of the company, and I am the guy, I am the owner. Okay. Is X Limited liable to pay the owner? Is X Limited, is it liable to pay the owner? Yes, just now we saw business entity concept. Owner is separate, business is separate. You always do the accounting from business. Business has a liability or business has an obligation to pay to the owner. Yes. So capital we'll call it. Whatever money the owner has brought into the business, no, we call that as capital. Basically liability, you can think of it like that. So capital meaning liability also will increase by 1 lakh rupees because of this. Because asset increased because cash came in. But business has an obligation to pay the owner also. Hence liability also will increase. So the answer is, if capital is brought in by the owner, then asset also will increase, liability also will increase by the same amount. Amount they have not given. I have just taken an example and taken that. That's it. Okay. Assets are held in the business. For what joy? If I buy camera, mic, this iPad and all, for what joy am I buying the assets of my business? For what joy did I buy this camera and all? To earn, yes or no? To get some money, to get revenue or benefits. To earn revenue only, I am buying the assets. Not to sell them. I don't buy the assets. This phone and all, we use it or we sell it. We use it and get the benefits out of it. Yes, we don't sell it. Yes, goods we sell. Okay. Fixed assets and all, generally we buy it to earn some revenue out of it. So that should be the right option. Chennai. C as in Chennai is the right option. Revenue from the sale of products is generally realized in the period in which cash is collected. Meaning they're saying, when will you record the journal entry? When will you journalize? Revenue is sale. If you have sold any goods, when will you account it is what they're asking. When the cash is collected or when the products are manufactured. When you manufacture the product, you will recognize the revenue. When you receive the money, you will recognize the revenue. Or when the sale is made, you will recognize the revenue. As per accrual concept, okay? You will recognize the revenue when the sale is made. And it is not simple as that. There is accounting standard 9, alright, which talks about revenue recognition. There is Ind AS 115, one of the biggest standard in your CA final, which talks about revenue recognition as well. Alright. As per all of them, whenever sale is made, only you should recognize. Done. This is just for your extra shots, not required to be quoted in your examination. So basically, applying at our level, we'll stick to this. As per accrual concept. Transaction is accrued, it has happened. So the moment sale is made, we will record the revenue. That's all we will write. Okay, extra shots, it's fine. If you remember it, great. Otherwise, if you forget it also, absolutely no problem. The concept of conservatism when applied to balance sheet will result in what? if you apply conservatism concept, asset will be overvalued or undervalued. Like here, you applied conservatism concept. Inventory you will show it at 5 lakh or you will show it at 4 lakh. As per conservatism concept, you will show asset at higher value or lower value. Lower value, yes. So that's what conservatism says. No? If there is any future loss, account it off. So if you apply conservatism concept, what will happen to your asset value? It will be overvaluation or undervaluation. Overvaluation means showing the asset at higher value. Undervalue means reducing its value. As per conservatism, what will happen? It will lead to understatement of asset, meaning it will lead to decrease in assets. Because that's what is conservatism. Increase you ignore. Decrease you record, meaning loss you need to record. If asset ka value reduces, for me it's a loss only, no? Correct? So that's what conservatism says. Loss, you record it right away. So if you apply conservatism, and assets ka value will be understated, meaning it will get reduced. A decrease in the amount of trade payable. Trade payable means creditors. We just now discussed, no? Creditors. Let's say creditors is 2 lakh rupees. I have purchased the goods from somebody and I have to pay that somebody 2 lakh rupees. That somebody only I am calling it as creditor. Now I paid cash to them. I purchased the goods to them on, let's say, on 1st April. On 1st June, I paid them cash, 2 lakh rupees. I settled. Can you tell me what will happen because of this transaction? Because of this transaction, what will happen? Creditors is a liability. Yes, because business is liable to pay them. What happened to this liability, sir? It increased or it reduced? When you pay cash to them. When you pay cash to creditors, what will happen to your liability? Liability reduced. When you paid cash, cash is an asset. When you pay cash, cash also will reduce. That means what happened? When you pay the cash, liability also will reduce. Which question is that? Which question? Okay. The decrease in the amount of trade payable results in. If liability decreases, they are saying what will happen? Even asset also will decrease. That's it. So Chennai, C for Chennai as in is the right answer. Manageable. When you pay cash to creditors, creditor balance, asset balance will obviously reduce. No, cash is nothing but an asset. So asset balance also will reduce. That's all they're trying to say. C is the right option. Okay. Determination of expense of an accounting period is based on which principles? Determination of an expense of a particular accounting period. You will recognize expense only in that particular period. Why? Because in that period you would have earned some benefit also. Since you have earned a benefit, even expense should be accounted in the same period. Which concept says this? Matching concept. Yes, no? That's what matching concept says. Expense and income should be matched and accounted. So again, C as in Chennai is the right option. Economic life of an enterprise is split into periodic intervals to measure the performance. Project, I give you Metro example. Metro ka project life could be 10 years. Does it mean I will prepare my accounts, I will prepare my financial statement at the end of 10th year or every year? I have to prepare financial statements every year. As per which concept? As per which concept? Periodicity concept, right? That's what they're trying to say here. Economic life of the entity may be anything. It may be 20 years, 50 years, 100 years, doesn't matter. But you split it into a smaller interval. Smaller interval is nothing but 1 year or 12 months ka interval, yes? So which to measure the performance. You do the splitting activity as per periodicity concept. That is the right answer then. Next, if an individual asset is increased, if one asset increases, then there will be a corresponding what, sir? Then there will be a corresponding, see I told it runs with debit and credit system. Accounting runs on debit credit system. If asset has increased, if one asset has increased, alright, then option is another asset has to reduce. If one asset has increased, other asset has to reduce. That is one option. Like to give you an example. I purchased a car for 5 lakh by paying cash. What happened because of this transaction? I purchased a car for 5 lakh rupees and I paid cash. What happened because of this transaction? Car is an asset. So asset ka value increased. But I paid cash. Cash is also an asset. Cash increased or decreased? Cash decreased. That means one asset has increased, another asset is reduced. So that is one permutation combination. Alright. If one asset has increased, other asset has to reduce. That's one way. Or If one asset has increased, then a liability also should have increased. If one asset has increased, another permutation way is a liability should have increased. Like take the same example. I purchased a car 5 lakh by paying cash. That was the first example. But I purchased a car, same 5 lakh, on 3 months credit. Now you tell me what happened. 3 months credit. I did not pay cash to them. I will pay it after 3 months. Right now you tell me what happened. I purchased a car, so asset increased. Did I pay cash? No. But today when I purchase this car, do I have any obligation on my head? Yes, I have an obligation to pay 5 lakh rupees to some guy. Yes, no? That means my liability also increased. So these are the various combination. Check which option has this combination. Either asset should have decreased. If one asset increased, other asset will reduce, or liability should have increased. That's what they've given. Option B. B as in Bengaluru is giving that option. Yes. If one asset has increased, then another asset has to be reduced, or there should be increase in liability, because that's how dual aspect concept of accounting runs. Debit and credit. With if there is no debit and credit, there is no accounting. Okay. All right. So that is your question number 3, Wala Funda. Next, purchase of machinery for cash. If you do this, what will happen? If you purchase a machinery for cash, just now we gave an example. What will happen, sir? Machinery is an asset. So machinery asset will increase. But you paid cash. That means cash asset will reduce. Effectively, what happened here? Let's say you purchase this for 1 lakh rupees. That means machinery asset will increase by 1 lakh. Since you paid cash, cash balance will reduce by 1 lakh. So what is the net effect? Net effect is the total assets remains the same. Okay, because one asset will increase by 1 lakh, another asset will reduce by 1 lakh. So net impact is no change. So total assets remains unchanged. So C is the option. Consider the following data pertaining to Alpha Limited. Cost of the machinery is at 10 lakh rupees. Installation charges is 1 lakh rupees. Market value of that asset is 12 lakh rupees. While finalizing annual accounts, the company values the machinery at 12 lakh rupees. They bought this machinery by paying 10 lakh rupees. To install this machinery, they paid 1 lakh rupees. That means what is the total cost they have paid, sir? To make this asset ready for use, to get this asset ready for use, how much cost did they pay? They purchased the asset 10 lakh rupees. For installation charges, they paid 1 lakh. That means what is the total cost they have incurred to make the asset ready? 11 lakh rupees. That means the machinery ka value should be 11 lakh rupees. Machinery ka value not only includes purchase cost. If you are incurring any other expenditure to make the asset workable, like installation charges, transportation charges, okay, if you are doing any testing charges like this, if you are incurring any other charges to bring the asset to workable condition, okay, then that cost also should be added to the cost of the asset. This is told by accounting standard 10, okay, or Ind AS 60. Right, this is what those concepts talk about. Or simply you think like this at your level. If you are incurring any expenditure to bring the asset to the usable condition, working condition, okay, then that such expenditure should be part of the asset cost only, like this. So machinery value should be 11 lakh. Ideally, you should have shown the machinery at 11 lakh. Is the first concept okay for you? Machinery value is not 10 lakh, it is 11 lakh. Did everybody get that? Okay, now? Alright. But market value of the asset. Today, if you sell the asset, its value is 12 lakh rupees. The company, what they did is, they showed the asset at 12 lakh rupees. So which concept did they violate is what they're asking. Matching accrual or cost concept. Which one did they violate? A as in alpha, cost concept. Yes. Because as per cost concept, cost is only 11 lakh. You should have shown at 11 lakh. But they showed the asset in balance sheet at 12 lakh. So cost concept they have violated. Sir, then transportation cost also included in asset. Yes. If you are incurring any transportation cost, like suppose I bought this machinery from Jaipur. I purchased this machinery from Jaipur, but my business is there in Bangalore. If it has to come from Jaipur to Bangalore, yes, I have to incur some transportation cost. That also will be added to cost of the machinery. Any cost incurred to bring If you want the exact terminology, I can tell. Any cost incurred to bring the asset to the present location and condition so that it can operate in a manner as intended by the management should be capitalized. This is what AS 10 talks about. Simply this means to get the asset to the way management wants it. See, if somebody buys the asset, they want to use it someday, yes? To bring the asset to that usable condition, if you are incurring any cost, all right, that should be added to the cost of the asset only. All right, forget about the big statement I made. It's okay. All right, just I thought you might have studied AS 10, so I gave you that correlating sentence. That's it. If you have not studied, no, not a big deal. All right, fair enough. To answer your question, yes, any cost for that matter. Like if you're incurring any registration fees, okay, there could be multiple here. Anything for that matter. Okay, transportation cost, loading charges, unloading, whatever it is, to bring the asset to the condition, whatever condition they want to, management want to use it in. Till that condition is reached, you go on adding the cost to the, go on adding the expenditure to the cost of the asset only. That becomes a part. Have I answered your question? Can I move forward? Sir, after using it for few months, if you repair it, it will be capitalized. No. Once the asset has come to usable condition, later on if you are incurring any expenditure, it will not be capitalized. It will go off to P&L. That will come. In the next topic only is your revenue expenditure, capital expenditure. It will come. Okay. Akash will be dealing with that little better next also. Okay, next. The concept helps in keeping business affairs free from the influence of personal affairs of the owner is known as matching concept. They're saying as per matching concept, business and owner is separate. That's what they're trying to say. That's what matching concept says. Huh? Is it true or false? It's false. Which concept says this? Entity concept says this. No, yes. Business entity concept says business is separate, owner is separate. Matching concept says income and related expense should be accounted in the same year. So that means it is a false statement. They have given matching concept ka justification. If you want, you can write business entity ka justification. That is your call. Okay, this is a study material ka solution I've just brought in for your reference. Don't have to mug up the same thing. Whatever they've written, don't mug up pin to pin. Not required. Just write it in your own words. That's the reason we are explaining you the things with examples and all. No, fine. These are not standards, guys. Accounting standards, Ind AS and all. No, those are pronouncements. Those are law in a way. So you have to write exactly the same words. If you write it, there is a better weightage. You will get better marks. Here and all, this is all right. Fair enough, you don't have to write the exact same words. If you write in your own words, that is good enough. Don't have to mug up so much. Alright, entity concept means enterprise is liable to the owner for capital investment made by the owner. So they're saying as per entity concept, the business is liable to pay the owner because owner has made an investment. As per owner, it is an investment. As per business, it's a liability. Yes. As per business entity concept, they're saying business is liable. Is it true? Yes, that's what business entity concept says. Yeah, it is true. Okay, accrual means recognition as money is received or paid. As per accrual concept, will you do a recognition based on money? Money coming in or money going out is irrelevant for accrual concept. What does accrual concept says? As in when the transaction happens, you record it. Whether you have received the money or you have paid the money. That is irrelevant. Yes. That means this statement is true or false. Revenue accrual means recognition as money is received or paid and not of revenue and cost as they have earned or incurred. This is false. You will record the income and expenditure as and when they accrue, as and when they happen. Money received paid is irrelevant for accrual concept. The conservatism concept also states no change should be counted unless it is materialized. Which concept says unless you realize it, you should not record it? Which concept says unless you realize it, you should not record it? That realization concept says, no. Unless you realize it, don't account it. So conservatism does not say that. Okay, conservatism says future loss, if it is there, record it. Anticipated future gain, you don't record. So this is funda given by realization concept. The concept of consistency implies in non-flexibility as to not allow introduction of improved method of accounting. See, consistency simply says what? Whatever you follow, follow it consistently. Okay. Does not mean that it is non-flexibility. Okay. It is not very rigid. You can also change accounting policies. There are certain conditions. We will also see that. But that does not mean it is non-flexible. Okay, that is false statement. Okay, consistency means as much as possible try to adhere to what you have done in the past. That does not mean it will create non-flexibility. Fair enough. That is a false statement to make. Very lengthy answers. No, sir. You write it down. As I said, no. Getting it true or getting it false, that carries 1 mark. Justification carries 1 mark. One or 2 points, that is more than sufficient. Okay? 1 point is sufficient. Yeah, maybe maximum, write 2 points. That is good enough. Don't measure in terms of lines and all. See, you are coming to professional course now. Stop judging the answer by the length of the question. You write, I said, no, 2 pages you write. Nonsense. If you write bullshit of 2 pages, you will get 0 marks. Nobody will give a damn about all that. Okay? But if you write 2 relevant points, you'll get full marks. That's how professional examination works. You don't have to. Don't measure it by 2 lines, 3 lines, 4 lines and all. 1 or 2 points. 1 or 2 fundas. That's all it is. That's sufficient. Whether that funda is 3 line or 4 line, it doesn't really matter. Okay, so with this particular unit is also completed. Good evening, one and all. Welcome to the next class of accounting. So today we'll get started with the next topic, which is capital and revenue expenditure. Capital and revenue expenditure. Now, why are we studying this particular topic, or why do we need to study this? Let's understand a little background and then we will see this. Okay. Now, why do we need to? If there is any expenditure, what we have to do is first we need to find out whether that expenditure is a capital expenditure or is it a revenue expenditure. Any expenditure that the company incurs, first we need to find out whether it is capital or it is a revenue expenditure. Why do we need to distinguish like this is, if it is a capital expenditure, if that expense is a capital expenditure, then you will show such expenditure in balance sheet. If it is a revenue expenditure, then it will come in profit and loss account, trading and profit and loss account basically. All right. So it gets accounted or it gets shown in different places. If it is capital expenditure, it gets shown in balance sheet. If it is revenue expenditure, it will be shown in trading profit and loss account. That is the reason why we need to categorize an expenditure as revenue or capital. That is a necessity. So of bifurcation. Okay. All right. Now, what do we mean by capital expenditure first? Okay, what do we mean by that? We got it. Now, why we need to categorize is like we have got it. Okay. Well, now we'll understand how it is. Okay, somebody is saying, sir, how about unit 3 accounting terminology? Sir, unit number 3 accounting terminology or chapter number 3 accounting terminology in our notes is not really a separate topic. In your entire account syllabus, whatever accounting terminology or terms will be used, that they have collated and put it in one chapter. Let us not do that now. First, we will finish our syllabus and then we will run through unit number 3 accounting terminology, because it is not really a topic. It is like a glossary. It's an index. Fair enough. Every topic, whatever terms come, it is put over there. So we have not covered every topic, right? So let's put that on hold for the time being. Once we cover everything, we'll come back. Okay. For now, we'll get started with this particular topic. Thanks, Vishal, for reminding that. Okay. Now, revenue expenditure. Okay, so revenue expenditure, as I told you, it will be shown in profit and loss account. The reason for that is revenue expenditure will not give you any benefit beyond 1 year. If you incur any revenue expenditure, the maximum benefit that you can get, it will not be more than 1 year. Like, I paid a salary to my staff. Okay, I'm able to see Vishal. Let's say Vishal is a person working for my organization. I pay Vishal, let's say 40,000 rupees salary every month. Okay. I paid him 40,000 rupees. How many months do you think he will work? His monthly salary is 40,000. I paid him 40,000. How many months do you think he will give his service, or how many months will he work in my company? If I give 40,000, he'll work in my company for 1 month. Yes, no, because that is his salary. Can I tell Vishal, I'll pay you 40,000, work for 4 years? I will give you 40,000, work for 4 years. Will he work? Will he work for 4 years with 40,000? He will say, crazy guy, I will not do, get out. Yes. He'll quit my company and join someone else. Yes or no? So that is a revenue expenditure. Meaning, by incurring that expenditure, company is getting benefit for less than 1 year. if that benefit, see, if company is incurring some expense, there has to be some benefit. Correct? No, without having some benefit, nobody will spend money. Yes. Now we have bought camera, mic, all this phone and all this stuff. That's an expense for us. Yes. All right. Why are we incurring all this expenditure? We feel we'll be able to give coaching using these and recover the money. Yes. No. That is the benefit. Yes. By incurring expenditure, you will always have some benefit. If benefit of that expenditure lasts more than 1 year, by incurring that expenditure, if you get the benefit for more than 1 year, it is a capital expenditure. By incurring that expenditure, if you get the benefit for less than 1 year, it is revenue expenditure. Is this okay for you? Is it okay? Like, comfortable? Huh? There's a simple distinction. There are more features also. Okay, is this okay? Yeah? Like, to give you, like, to continue the example a little further. I bought camera now. Now, to conduct the classes, I need camera. Yes, I spent, let's say, 50,000 rupees. I spent 50,000 rupees in buying a camera. Okay. Do you think I'll use the camera only for 1 year? Do you think I will use the camera only for 1 year? Let's say camera has a life of 3 years. Let's assume. Normally, camera will last for 3 years. That means by incurring this expenditure, like purchase of camera, how many years benefit or how many years will it give me benefit? It'll give me benefit ideally or generally for about 3 years. Yes. That means you are getting a benefit for more than 1 year. Yes. In that case, the expenditure becomes a capital expenditure. Is this okay? That's how it's the primary distinction. Now, everyone, I hope is okay with this. Yes. So, capital expenditure we show in balance sheet. As I told you, revenue expenditure gets shown in profit and loss account. Capital expenditure gets shown in balance sheet. You show capital expenditure in balance sheet because you get a benefit for more than 1 year. That is just a simple, like, a distinction. Somebody is saying, sir, what if you are camera dealers? Come, hang on. I'll come to that scenario. This is not the only criteria to find out whether an expenditure is capital or revenue. There are more criteria. This is just one simple example I'm going to give you. Yes. Okay. We'll come to the other criteria also. If you're clear with this, can I go for the other ones? Okay. Now, there are certain other factors also using which you will decide whether an expenditure is capital or whether it is revenue. We'll look at those criteria one by one now. First is nature of business. Like our friend Gulam pointed out here. Okay, what if you are camera dealers? That comes here. Like what is this now? Let's assume, sir, I purchased a furniture. Like our academy means we'll have a sofa set. I don't know whether you have visited our academy. Generally in the receptionist area, we have a nice sofa. Okay, we call it as furniture. Let's say I spent 1 lakh rupees to buy that sofa set. Okay. Can you tell me whether this is a revenue expenditure or capital expenditure according to you? According to you, what is this? Academy has purchased a furniture. You tell me, will we use that sofa set just for 1 year? In your house, there must be sofa sets and all, no? Every 1 month or 2 months, you will keep replacing, or it comes for more than 1 year. Generally, you use it for more than 1 year. Yes. That means ideally, this looks like a capital expenditure. Ideally, this looks like a capital expenditure. Yes. On the outset, it looks like a capital expenditure. Yes or no? Correct. Now, let's modify this example slightly. Sir, let's say a furniture dealer, he purchased furniture. There is a furniture dealer, he purchased furniture. Now, can you tell me whether this is a capital expenditure or a revenue expenditure? There is a furniture dealer. Furniture dealer means he buys the furniture and he sells the furniture. That is his business. He buys the furniture and he sells the business sells the furniture. Now, can you tell me for this guy, that furniture dealer, is this furniture a capital expenditure or is it revenue expenditure? Now, you tell me, do you think this guy will put a stock or will store this furniture for years together? He will store this furniture for years together, or the moment he gets the customer, he'll sell it off. All right. Now, this looks like what? This looks like a revenue expenditure. Correct? No? Now, this looks like revenue expenditure. How did you decide? Sir, simple. For a furniture dealer, furniture is a goods. He will not store that for months together or years together. The moment he gets the customer, he will sell it off. So that is another, or that is the first criteria. So when deciding an expenditure is capital or revenue, always check the nature of business. Because for a furniture dealer, furniture is a revenue expenditure. It's a goods. But for you and me, if we are doing another business, if we purchase furniture, we will get the benefit for more than 1 year. That means for us, it will be a capital expenditure. Is this first point clear? Is it okay? To just say it once again, for a camera dealer, camera will be a goods. So it will be a revenue expenditure. But if you and I purchase a camera, we will not sell the camera, right? We will use it and make money. And we will generally use it for more than 1 year. Hence, this will be considered as a capital expenditure for us. So that's the reason first you need to check the nature of business. What sort of a business is that particular company doing or entity doing? That's the first thing. Okay. Awesome. Can I move forward? All right. Next, revenue expend or next is recurring. Next is a recurring, meaning revenue expenditure is recurring in nature. Recurring means it keeps happening. Like salary example I told you. Now, if Vishal is my employee, can I pay him the salary only one time, or every month I need to pay him? I need to pay him the salary to my employees every month. Yes or no? Meaning it keeps on coming. April month, May April salary, May month, May salary, like this. I have to keep paying him every month. Yes. So one of the feature of revenue expenditure is it is recurring, meaning it keeps occurring again. Okay, that is done. But capital expenditure is non-recurring, meaning look, you buy the furniture in your house every month. Every one month you keep purchasing new sofa setup. Every month you keep purchasing laptop, is it? No, right? You buy once, use it for maybe 3-4 years, and then look to replace it. Correct? So that's what is capital expenditure. Capital expenditure is non-recurring in nature. Okay, it comes maybe like once in maybe 3 years, 5 years, or 10 years, like this. It will not keep occurring. That is this. This is a second feature of capital and revenue. Is this okay? Everyone fine, no? Rajat has asked a good question. Sir, what if the furniture dealer, he has purchased furniture, but he has purchased furniture not to sell it. There is a furniture dealer who has purchased the furniture, but he has purchased it not to sell it, but to use it. Because even in his office, customers will come. Yes, he also has to sit. His employees has to sit. In that case, what will happen, sir? If he is not dealing it, if he is not selling it, now you tell me, buddy. That means he will use it for more than 1 year, meaning he will get the benefit for more than 1 year. In that case, expenditure will be capital. A very good question. Hope I answered your question, buddy. Okay? All right. Okay, awesome. Okay, let's move forward then. Purpose of the expenditure. Purpose of the expenditure. Okay. Generally, revenue expenditure is routine. Like, if you just check in your house, there must be aqua guard and all. Aqua guard, RO purifier. Kuditara, RO Niru. RO Niru. Yes, RO water filter you will have. You will have the maintenance of that. Yes. Generally, you will take maintenance of that. Some person will come every month or every 3-4 months and do some service on that. Yes. MI purifier you are using. Okay, good. No problem. Okay. So yes. So revenue expenditure are routine, meaning maintenance expenditure. See, if you purchased any camera, laptop, building, or any asset for that matter, right? It requires certain maintenance. I mean, like your bike. If you have a bike, you need to service that bike. Correct? No? You need to give it for service maybe once in 3 months, 4 months, 5 months, like this. Correct? Or you need to make some oil change. These sort of things will be there. So those are, we call it as routine expenditures. If it is routine expenditure, that is one of the feature of revenue expenditure. Got it? Is that okay? Praful or Pratul, is it? Yes. Are you okay, buddy, now? Are you able to get it? Yes, sir. Awesome. Okay. So routine expenditure, some maintenance expenditures are revenue expenditure. But same bike example only we will take. So if you are giving bike for service, okay, then you have to pay some service charges to the mechanic. That is a routine expenditure. It keeps coming every 3 months, 6 months or 9 months. Like this, it keeps coming in. So it is a revenue expenditure. Suppose you modified your bike. Normally they used to do it now. And probably when we used to go in college and all, no, the common was Yamaha. The one bike was there. They used to make a hole in silencer. It used to make some full crazy noise. Okay, crazier than RX 100, correct? Yeah, crazier than Bullet. At least Bullet make the duk 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 one. Okay, Yamaha was like crazy. Yes, people used to do that. A lot of modification. Like if you hear Mahindra Jeep car, just Thar. That is something which gets people do a lot of modification. Yes, correct. What about that modification expenditure, sir? Like I have a bike. I replace the engine of that bike. I replace the engine of a bike. Let's say earlier my bike used to give me a mileage of, let's say, 40 kilometers per liter. For 1 liter of petrol, I was able to run for 40 kilometers. That's my bike mileage. I replaced the engine. After I replace the engine, mileage is almost 70 kilometers. Now you tell me, is my bike operating at same capacity or capacity has increased? Earlier it used to give me a mileage of just 40. Now it is giving me 70. That means the performance or the efficiency of that asset has increased. Yes or no? That is the feature of capital expenditure. Meaning if the production capacity increases, if the efficiency increases beyond the normal capacity. Earlier you used to get 40 mileage. After replacing the engine from 40 it became 70. Yes, no? So there is a drastic increase. There is an enhancement. Okay, that is the feature of capital expenditure. Revenue expenditure is maintenance one. Alright. But if the production capacity of the asset increases by incurring an expenditure, then we call it as capital expenditure. That is another feature. Not necessarily everything has to be fulfilled. Alright. We have to, it's a case by case assessment. In just because one expenditure, you can't trust everything and then conclude. You need to go do a case by case study here. Fair enough? What if you add accessories, is Jamila asking. It depends on what accessory you are adding. Okay, suppose you replaced a mirror. Okay, mirror, maybe there is like, glass is broken. Alright, you replaced the mirror of your bike. Now you tell me, by replacing a mirror of that bike, will the capacity or efficiency of the vehicle increase? By replacing a mirror, okay, will you increase the efficiency, or you put indicator? Earlier indicator it used to show, now it makes that key noise. Okay, along with giving indicator, it also makes sound. Okay, fair enough. Now do you think that production capacity of the asset has increased? It's the same. Earlier also it is used to give you this much 40 kilometer mileage. Now also it is giving you 40 kilometer mileage. So you need to assess on a case by case basis. So if it is a routine accessories, if the capacity is not increasing, then it is revenue expenditure. But by putting in the new accessory, if your efficiency has increased beyond the normal one, then it will become capital expenditure. Jamila, is that okay? Have I answered your questions? Just for show they add. Okay, awesome. Can we move forward? Yes. All right. Next is another category we look for is materiality of the item, meaning how big the amount is. Generally, revenue expenditure is on the smaller side. What is small, what is high? Enough. Standard does not define. It's a judgment call. Okay. But generally, revenue expenditure is on the smaller value. But capital expenditure value will be quite big. Like, I purchased a calculator. by paying 1,000 rupees. Fine. I purchased a land and building. Can I buy a land and building for 1,000 rupees, sir, in Bangalore? Land and building in Bangalore, can I buy 1,000 rupees? No. I maybe have to pay 1 crore or 2 crores or whatever. Yes or no? Yes. So this also is one of the feature, or this also is one of the factor which gets considered in determining whether expenditure is capital or revenue. Generally, revenue expenditure will be on this of a smaller value. Capital expenditure will be of a higher value. Okay, this is another feature. Is that okay? What is small? What is high? It's a judgment call. Nowhere it is defined. Like 1,000 rupees is small, 1 crore is high. Like that, nothing is defined. You need to take, or every organization needs to decide what is small, what is big for them. Okay? It becomes a judgment call there. Done now? Okay. Can we go for the last one? Calculator can be included in stationery. Yes. You book it as stationery expenditure, so it will be going off to P&L. Calculator will be shown off in P&L. Land and building will come in balance sheet because it is a capital expenditure. In this example, this is a revenue expenditure and this is a capital expenditure. So if it is a revenue expenditure, it comes to P&L. If it is capital expenditure, it goes to balance sheet. That is the reason distinction between capital and revenue is quite important. That is the reason we are studying this. Okay. Awesome. Okay, then we'll move on. Revenue earning capacity. Now, by incurring revenue expenditure, we have already discussed this. By incurring revenue expenditure, generally, every expenditure will give you some benefit. But revenue expenditure will give you a benefit of not more than 1 year. Meaning 1 year or less. Like we took the example of Vishal's salary, right? Like that. Revenue expenditure will not give you a benefit for more than 1 year. But capital expenditure will give you a benefit for more than 1 year. So you need to check. By incurring the expenditure, if you're getting a benefit for more than 1 year, then it is capital. If you're getting a benefit for less than 1 year, it is P&L. Like that. So what if calculator is bought for office use? Doesn't matter, sir. Whether you buy it for office use or whatever use, it will still be considered as a revenue expenditure considering the materiality. Amount is small, right? Yeah, fair enough. So you will just book it as P&L only. Materiality there, okay, sir. Again, okay, no problem. All right. I'm conducting the teaching. I'll give you another example. See Chandu, if you're getting this. And guys, please make sure you have a good internet connection. Don't ask me to repeat just because your internet connection is bad, because there is a lot of people here. Repeating the things will make the recording time a lot higher. Okay. So kindly just check your internet speed. If it is not, kindly update it better. Okay. Go for a better speed internet connection at least for a 1 month, so that it will be a little easier. Only if you have genuinely not got it. Okay. Because what happens in online is like, I got a message. So you will stop listening to me, you will watch. Maybe your girlfriend, boyfriend is testing baju mein. You see that is more interesting and you ignore me. Then after 5 minutes you say repeat again. Okay, that will not work out because many people are there. Okay, please let's not do that. Yeah. Okay. Pay a little attention in online, because at physical I'll be able to at least see whether you're getting it or not. Online mein, okay, you just need to have that seriousness for yourself. Okay, Chandu, see if this makes sense to you. ArivuPro Academy, I am teaching. Yes, no? I am teaching. Yes. That means I'll get some ArivuPro Academy has to pay some fees to me. I'll not do it at free of cost. I will collect something. Okay. Let's say I charge 10,000 rupees. I'm doing this CA Foundation coaching. Let's say after giving the coaching, I get a fees of 10,000 rupees from the academy. Let's say coaching goes for 1 month. Let's assume. Okay. Generally it takes a little more than that, but for simplicity, let's say 1 month. Okay. Now you tell me, sir, by paying 10,000 to me, can academy tell you teach in my company for 2 years? By giving 10,000 rupees to me one time, that's all. By just giving 10,000 rupees, can academy tell me you teach in my academy for 2 years? I will pay you 10,000 for all the 2 years. Okay, they will tell. Do you think I will accept? I will say, bada po bada. Yes, I will quit and go. Yes, right? So that is revenue expenditure. Meaning, by now you just check academy, no, by paying this fees, yes, they will get the benefit only for how much, sir? For how many months will I give my service? How many months will I teach for this 10,000 fees? I will teach only for 1 month. Yes or no? That means academy will get the benefit only for 1 month. Okay, that is revenue expenditure. If you're getting a benefit for less than 1 year, it is revenue. Okay. If you are getting a benefit for more than 1 year, it is capital. That's all it is. Chandu, is it okay for you now? Yes. Okay, awesome. All right. Let's see how well we understood this. Unless we apply in the question, we will not get it, no? Okay, let's do a thing. Let's go and solve a couple of questions to see how well we have got it. Or let's quickly have a recap first and then we will start up. Okay, first, why do we need to categorize an expenditure or as capital or revenue? There is a need to distinguish because capital expenditure will be shown in balance sheet, revenue expenditure will be shown in P&L. Where it goes is entirely different, hence we need to distinguish like this. So on what basis can you distinguish? There are certain factors or parameters. First parameter is nature of business. Like for a furniture dealer, furniture is, if he is selling the furniture, then it becomes goods. So it is a revenue expenditure. But for somebody like you and me, who's just going to use this furniture for more than 1 year, for us it will be a capital expenditure. So nature of business is one criteria. Second one is a purpose of expenditure. By incurring the revenue expenditures, you'll only be able to maintain the asset. Efficiency will not increase. Okay, like your bike car service, etc., etc. By giving the bikes for periodic service, you'll be able to maintain its efficiency. Okay, it will not generally increase. But by incurring that expenditure, if efficiency increases beyond what you are getting, like from 40 mileage you got 50 or you got 70, meaning by incurring expenditure, if efficiency increases, then such an expenditure becomes capital expenditure. Okay, that is the second one. Third one is recurring. Generally, revenue expenditure keeps coming often, like salary, electricity bill, rent, etc., etc. These keep coming. Yes. But capital expenditure is non-recurring, meaning they turn up maybe once in 2 years, 3 years, like this. Next is materiality of the amount. Generally, revenue expenditure is on the smaller side of a low value. Capital expenditure will be on a higher value. What is high and low? It's management or the company should decide that. There is no benchmark or there is no value defined as such. Okay. Next is the revenue earning capacity. By incurring revenue expenditure, you will get the benefit. The company, the organization will get the benefit for 1 year or lesser, meaning not more than 1 year. But if you incur capital expenditure, you will get a benefit for more than 1 year. So these are some parameters. So let's go ahead and check out the questions one by one. Okay. Generally, true or false. As I told you in yesterday's session, generally first question in your paper is a true and false. Generally, you can expect one true or false question from this topic. That is a perfect. In fact, the chapter number 1 to chapter number 10 that we have in our notes, all that maximum will come for all the 10 topics put together. Maximum may come for 10 marks. Okay, 5 to 10 marks, not more than that. Those are basics. Don't expect too high funda marks from them. Okay, that's all is the weightage of those topics. But 5 may look very small. Okay. We know many students who have failed to clear CA exam just by 1 mark, 2 mark. We've seen many guys. All right. These are theoretical concepts. They are straightforward application. So you'll be able to solve them quickly and you don't have to break your head so much. Whatever we have given, if you cover it, then you can almost say that 5 to 10 marks is easy. It'll aram say you can score an examination. So don't ignore anything because it is like low weightage, high weightage and all that stuff. Yes, going forward, you will have big topics. They'll come for 8 marks, 10 marks and all that, one topic. But there'll be a lot of adjustments in them. In these topics, they are all straightforward. Check. See, within half an hour, we'll be able to revise the entire thing. Concept is over. Now we have to just apply the concept. So it takes very less time to revise them. Revision, we did in hardly 5 minutes with the help of chart. Yes, correct. So they can be solved a lot faster. So please don't ignore them. Okay, let's see. Overhaul expenses of a second-hand machinery purchased are a revenue expenditure. They will give you various statements. You need to tell whether it is a true or whether it is false. You don't have to copy anything. Answer is given to you over here. All right, fair enough. But first we will understand it. Overhaul expenditure of a second-hand machinery purchased is a revenue expenditure. They're telling this overhaul is a revenue expenditure. The first question, what do you think you'll ask me? Sir, you leave that. First, you explain what is overall. Yeah, that only we didn't get. How can we say yes or no? Yeah, some of them are telling, sir, in true or false question, everything is false only. So first write false, then we will figure it out what it is. Yeah, correct. Okay, don't go for that blind this thing. See, overall expenditure is basically correct. It's a repairs. It's inspection and repairs. Okay, fair enough. Generally, check, read the sentence again. Overall expenditure, like a repair expenditure, we'll treat it, of a second-hand machinery purchased. So you purchased a second-hand machinery, meaning Used machinery. You are not buying a new machinery, you are buying a used machinery. Yeah. So they are asking whether this machinery purchased, the repairs that you incurred on this machinery, is it a revenue expenditure or capital expenditure? They are telling it is revenue expenditure. Do you agree with them? Do you agree with them? Absolutely no. Yes or no? Because the moment you buy a second-hand asset, sir, yes, you will obviously incur some expenditure. Like if you buy a building, if you buy an old building, generally you will incur some repairs. Why do you incur the repairs, sir? To increase its capacity, to increase its efficiency. Yes or no? Correct? If you buy a second-hand car, you will replace its tires, you may replace its engine. Correct? Like this, you will incur many expenditures. Why do you incur it? To make sure that, like, that asset, like, efficiency increases. Yes or no? Correct? And yes, so hence these are not revenue expenditure, these are capital expenditure. So answer to this is false, because generally by incurring overall expenditure, the efficiency increases. Or you can also say, you can write the answer like this. Okay, one, you can write efficiency increases. Okay, and two, justification. I've given you the full answer over here. You can write the same thing. Short answer I'm giving it to you here. Anything you want, you can write in the examination. Got it? Second justification you can give is, see, why am I incurring this repair expenditure? Because I want to use the machinery in a certain way. Correct? No? Yes, that is the reason I am incurring this expenditure. Yes, so that justification you can give. These expenditure are necessary to bring the asset to usable condition. To bring the asset to usable condition. Hence, it is considered as a capital expenditure. Any one of the justification you can give it over there. Did you understand both the justifications, everybody? Is it okay? Because I want to use my machinery in a certain way. Right now, I cannot use it because there is some lacking in that machinery. So I am incurring that repairs expenditure. Then only I'll be able to use it for the first time. Hence, it becomes a capital expenditure. Or if you want it as a formula. Somebody said, sir, I am a science background student, sir, I can't remember so much. No problem. Simple formula you can remember it as. If you buy any second-hand machinery, if you buy any second-hand assets, building, machinery, car, whatever, at the time of buying itself, if you are incurring any expenditure, any repairs if you are incurring that time only, then it is a capital expenditure. This is a formula approach. I've explained you the logic and I'm giving you a formula also. I'll repeat that once again just to be sure. If you're buying any second-hand asset and immediately if you incur any expenditures, any repairs, anything, overhauls, repairs or whatever, at that time only if you incur, then it is a capital expenditure. That's the formula approach. Did everyone get at least one of the things what I said? Can I move forward? Yes. Okay, awesome. So answer to the first one is false then. It's given. As I told you, answer is given over here. You don't have to go for that. Even for new assets will come to it. Hang on. Or somebody saying, sir, if it is recurring expenditure, it should be revenue, right? See, first time when you incur the expenditure, fair enough. Why do you incur first time expenditure, sir? If you buy a building, yes, you bought an old building, 1915 car. You did some renovations like painting and all. Why did you do? See, painting comes, maybe every year you paint. Maybe people have, in like in Hubli, Maharashtra and all, no? Every Ganesha festival, Ganesh Chaturthi, they keep painting. Every Diwali also, everyone will keep painting. Yes. The moment you bought a building, if you do a painting for that, why did you do it? Because it was in old condition. We did not want to use that building in old condition. Yes, no? So by incurring that painting, I am bringing the asset to usable condition. Fine. If I don't do that, the asset will not function the way management wants it. Such is the feature of capital expenditure. That is another feature. To bring the asset to its usable condition, if you are incurring any expenditure, that is one more feature. It is not called out in the chart. I'm telling you here. If you are incurring any expenditure to bring the asset to its usable condition, first time only. This is very important. First time. Then it is a capital expenditure. Once you start using the building, then if you are doing route, then you do keep painting, no? Then it is a maintenance one. Because it is already in usable condition. To maintain that usable condition, you are going on painting every year. Then it becomes a routine. Okay? Is that okay, Pratul? Did I answer your question? Getting the difference? Yes, awesome. So because of painting, if we whitewash the building, sir, whatever you call it as whitewash, you call it as painting, yeah, that is your like that is the painter job, sir. Whatever you call it, really doesn't matter. Whatever you do, initially when you buy an asset, if you are incurring any expenditures like painting and all, no, it will be treated as a capital expenditure only. Maybe in your first PUC and all they categorize like that, I guess. Okay, here that is not the like in a criteria. Okay, is this sorted or any other thing is there? If a person repairs his own machinery by which he production capacity increases, sir, that becomes a notional cost. Then you can't how much what see I said you accounting can be done for what, sir? Only monetary transaction. If I repair my own asset, correct, how much will it cost? Can you tell me how much is the cost? Others, your questions I'll ask you only. You had a machinery, you only replaced it or you only repaired it. Efficiency increased. Can you tell me how much is the cost of that expenditure? Can you measure that? It is not possible to measure it. So we can't do that. That becomes a notional entry. Yesterday, remember I gave you an example. In my dream, I won lottery. Can I pass an accounting entry for that? No, because it is a notional one. Like that. Okay, now Adarsh. Sir, what if we buy calculator second hand and change the cell and all? Sir, you'll have to keep in mind the materiality. Don't pinpoint small things and all. Okay, for a company, do you think calculator and all is of really worth? Okay, calculator I buy, I replace the shell and all. Calculator will be 200 rupees. Shell may be 20 rupees. 200 and 20, both are immaterial. Fair enough, everything will be revenue expenditure. As I told you, you need to also keep in mind materiality. So don't blindly apply the concept, guys. See, all this records, your chartered accountants going to be, you are giving this accounting records to the shareholders. Okay, based on that, they are taking decisions. You replaced a cell, okay, of a calculator. Are they really interested in that information? Think on those lines. Okay, would somebody be interested? I replaced the cell of a calculator. Somebody is interested in that? Huh? Absolutely no. Yes, no, yes. So you straight away transfer it off to P&L. Don't need to. See, capital expenditure means it comes in balance sheet. Calculator and all, if you show, companies will have thousands of calculators. If you show 1,000 calculators in balance sheet, your balance sheet will become probably this size. Nobody is interested in that information. So you need to keep in mind the intention of accounting. Okay, that is also important there. Okay, I'm not denying your question, but when you are applying the concepts, you also need to think about its end game. What are we trying to achieve by all this? Okay, you're trying to give information, accounting information to the investors. Okay, or to any person interested. Information you give should help them in their decision making. Small things and all will not make much difference to them. So you don't have to break your head about revenue capital. Put everything to P&L. Doesn't matter. Whether you use it for 1 year or more than 1 year, it doesn't really matter. Transfer it off to P&L. Okay, now. Alright, next. Money spent to reduce working expenditure is a revenue expenditure, they're telling. I've spent some money to reduce the expenditure. Like in the academy, earlier I had an attendance register. Like one person used to maintain attendance register. He used to tick, okay, this person came in, present. This person did not come in, absent. Like you have in your college, attendance register. Let's say in academy also I had this to check whether employees are coming on time. Okay, they're taking too many breaks or are they coming, etc., etc. Okay. Now, all right. Now I purchased a biometric machine. Where employees have to just place their finger. Okay, it automatically reads that sensor. It will read their fingerprint and automatically it will mark present. Okay, so this I have incurred this expenditure. Can you tell me it is a revenue or capital? Looking at my example that I gave you, is it revenue or capital according to me? I purchased that biometric machine. What will happen? It is a capital expenditure in then. Yes, no, because my working expense is reducing. How it reduces? See, that person whom I appointed to check the attendance register, now I don't need that person. I can relieve him of his duty or I can use him for some other purpose. That job only is not required. Yes or no? Because that biometric machine only is doing that job. Yes, correct. Now it is giving me a long-term benefit also. So hence, is this really a revenue expenditure or is this a capital expenditure? It becomes a capital expenditure. So answer to this is false. Any expenditure which increases the efficiency or which reduces the cost, you need to look at it at both angles. Something which increases revenue or something which reduces cost. Both are benefits only for me. Okay, whether revenue increases or cost decreases, both are benefit, right? So those are the features of what? Capital expenditure. So hence this is not a revenue, it's a capital expenditure, so it's false. Getting it up? You can give the justification as long-term benefits. By incurring this expenditure, generally you will get a long-term benefits, hence it is a capital expenditure. Justification is given. I'm writing short notes there, that's all. Can I move forward for the next one? First one, understand properly. We'll spend a lot of time in this, how much ever required. Then next question onwards, we can speed up if required. Alright, legal fees. Legal fees to acquire property is a capital expenditure. See, I want to buy a building, sir. Or I want to buy a piece of land I want to buy. So before I buy a building or a land, do you think I will consult a lawyer? Do you think I will take a lawyer's opinion? Do you think I'll take a lawyer's opinion? Yes, because I want to know, is there any litigation? Is the title deed correct? Whether that guy only is the correct owner? Yes. Is there a problem in this building? I want to know, but I don't have the expertise in that law area. So generally I consult a lawyer and say, hey dude, I want to buy this asset. Kindly check the papers and tell me whether everything is fine. He told, no problem, I will check. And he told, okay, fine, I'll check. And he told, I will charge 10,000 rupees for you. Let's say building a cost is 1 lakh rupees. Simplicity. 10,000 rupees is charging as lawyer, or make less, let's say 10 lakh rupees is the building cost. Okay, 10,000 rupees is lawyer's fees. Now you tell me, sir, without incurring this 10,000, will I buy the building? Some of you are answering, no problem, that is correct only. But answer my question that I'm asking you here. Without incurring lawyer's fees of 10,000, will I be able to buy this building? Or will I buy this building generally? No. Yes or no? After consulting lawyer only, once he says yes only, then I will go ahead. Because we have to be safe, yes or no? That means, can I tell this expenditure is necessary to bring the building to usable condition? Can I tell the sentence? Do you agree with my sentence? I'm saying this 10,000 lawyer's fees is necessary to bring the building to usable condition. Because only if lawyer says yes, then only I will buy. Only if I buy, then only I'll be able to use. Only if I use, then only I will get benefit. Yes or no? Getting the correlation? Okay. That means this 10,000 is necessary to bring the building to usable condition. Everyone okay with this? Give me a quick heads up. Are you following or not following? Yes. Correct? Yeah. Alright. That means what, sir? If I told you previously only, any expenditure incurred to bring the asset to usable condition is what expenditure? It is a capital expenditure. Hence, the legal fees paid to acquire a property is capital expenditure. It is true. Awesome. You guys, most of you have got this right. Awesome. So what about taxes paid on land? Yes, if you're paying any property taxes and all right. Initially, when you buy a land, you have to pay something known as stamp duty or registration charges. That can be added. Because unless you pay registration fees, you will not be able to buy the building. It will not come into your name. That will be a capital expenditure. But after that, whatever property tax you are paying, that you pay based on the usage. Yes, that will not give you any extra benefit or anything. So that becomes a revenue expenditure in that case. Okay. Yes. Okay. So the same justification you can write. Okay, this expenditure are necessary to bring the asset to usable condition. Hence, it is capital expenditure. Somebody is saying, sir, generally the lawyer's fees will be on the lower side. Hence, it is building. I said, no, sir. What is low, high and all? It's a judgment call. Fine. What is low, high is a judgment call. You can't really say 10,000 is low. Fine. You have to take a judgment call there. If it is, let's say he charged only maybe 1,000 rupees. Okay, then I may think, okay, this is a very small expenditure. I will not capitalize, meaning I will transfer to P&L. Okay, but in this scenario, considering the building is 10 lakh, 10,000 is quite high only. It's actually 1% of building if you just calculate. 10 lakh ka 1% is 10,000 rupees. So that is not really that small also. What is high or small? Companies needs to take a call. I am giving you a standard answer that you need to write in your examination. Not 10%. 10 lakh or 10% is 1 lakh. Okay. So 1% it is. Okay. Anyways, that's fine. Let's not worry about the calculation. Okay. So you will write these only in the examination. Practically, yes, debatable. I'm not arguing with you, Pratul. Okay. Practically, it may be taken as a small and put it to P&L. That is fine. That is a practicality. But in examination, this is what you need to write. Because you will not be able to decide whether it is high or low. You won't have the data. That is the reason. Okay now? Fair enough? Alright. The amount is spent as lawyer's fees to defend a suit claiming that the firm's factory site belonged to plaintiff's land is a capital expenditure. So I own a particular factory site. A building, factory building I have. Somebody has put a case against me saying that factory or that land or that site belongs to me. Somebody has put a case. So I appointed a lawyer and told somebody has put a case against me. Kindly defend. Lawyer told no problem. We will fight it out in court. But he told I will charge some fees. They are telling that lawyer's fees is capital expenditure. Now you tell me, is it right or is it a revenue expenditure? Is this a true or false? They are saying it is capital expenditure. Is this no? This is false. It's a revenue expenditure. Why? Sir, you have already purchased the factory building. You are already using it. That means usable condition has already reached, Previously, you just check. Don't go with lawyer and all. Previously, we gave legal fees to acquire the property. Meaning only if the lawyer says yes, then I will buy the building. Otherwise, I will not know. That means it is necessary to buy the building or it is necessary to bring the asset to usable condition. Here I am already using my factory building. Okay. Now it is not necessary for me to bring the asset to usable condition. Now this becomes a maintenance expenditure. Because by incurring lawyer's fees, I am not going to get any extra benefit for more than 1 year. Yes, no? Yes. So this becomes a maintenance expenditure for me. Alright. Hence, it will be treated as a revenue expenditure. Done. Okay, awesome. Next, amount is spent for replacement of a worn out part of a machinery. Some part of machinery means it will have many parts. One of the machinery part has worn out. It has got damaged. So we replaced it. We bought a new part. They are saying that replacement cost, the new part cost is a capital expenditure they are telling. What do you think this is? Okay, this is actually very debatable. As per account, I'll say a little extra here, not required for your level, but still I need to justify this. That's the reason I'm telling you this. You have accounting standard at 10 and you have Ind AS 16. AS 10 you learn in CA Inter, Ind AS 16 you learn in CA Final. As I told you, for each asset there is a standard. For majority of the things, there is a standard which talks about how you should account them and all that. If you are incurring any replacement cost, okay, then what the standard says is, if you are getting a benefit for more than 1 year, then it should be capitalized, meaning it should be a capital expenditure. Okay. But if the benefit is for less than 1 year, okay, then it should be a revenue expenditure. That's what standard talks about. Not the same words. I'm simplifying it for you. Okay. But in our study material, they have assumed that all the replacement of a worn out part is a maintenance expenditure. They have assumed this. Okay. Hence, the answer you will write in examination is always false. Because they are assuming that the new replacement part or the new part will not give you any extra benefit. It will give you the same benefit as earlier. So it becomes more like a maintenance expenditure. This is the assumption our study material has made at the foundation level. Okay. Yes, some of you are saying it is capital. It is true statement. It is a capital expenditure. I'm not debating with you on this. Correct only. It can be capital expenditure also. Because if you are replacing, if you put in new part, see, old part has got damaged. If you replace it with a new part, you may get the benefit. The new part can give you benefit more than the old part, meaning efficiency can increase. If efficiency increases, generally it is a capital expenditure only. But at CA foundation level, our material has made an assumption that the new part will only give you the same benefit. It will not increase the benefit. So it's more like a maintenance cost. Hence the answer is false. Did you get it? This is what you'll write in exam for the sake of marks. But conceptually, some of you are saying true. You are also right. I'm not debating with you on this. Okay. But you can't justify beginning AS10 and all that stuff at your CA foundation level. So let's stick to this thing, answer properly. Okay. Remember, whenever there is a replacement of old part comes in, you treat it as a revenue expenditure, as a convention at this level. That's it. Next stage, we will study more about this and then we will figure it out. Manageable? Alright, next. Any part, sir. Any example is okay. Alright, any part, if you just check. Okay. So, see, if you have an asset, means you will keep replacing some things, right? Yes. Like your bike may require some replacements. Could be whatever, engine oil you'll replace. Okay. Some, you'll have small nut and bolts, brake lines you'll replace. Like this many, when you go for service, many things will be there, right? Yes. So replacing, whatever parts you have, if you're replacing that, if the part has got damaged, if you're replacing it, as a convention, we will treat it as a revenue expenditure only. Because it is considered as a maintenance expenditure. That's it. Okay. Expenditure incurred on the repairs and whitewashing for the first time, underline this, for the first time on purchase of an old building. Now you need to answer me this. Are revenue expenditure. First time you purchased an old building, meaning second hand building, you did some painting or whitewash. Okay. Now, and they're saying that is a revenue expenditure. Is it revenue expenditure or no? It is not a revenue expenditure. It is a capital expenditure. Why? By incurring this expenditure only, you will be able to get the building to what? By incurring this expenditure, you will be able to bring that building to usable condition. Yes, I wrote it already here. Same justification you can write. These expenditures are necessary to bring the asset to usable condition. Hence, these are not revenue expenditures, but these are capital expenditure. Hence, the answer is false. Same, this is a repetitive question. Correct? No? Alright. Expenditure in connection with obtaining a license for running a cinema is a capital expenditure. See, if you want to run any cinema halls, you need to take a license from the government. Yes, correct. So they are saying this. The license fees that you pay to the government. No, they are saying it is a capital expenditure. Is it true or false? Or I'll make you a statement. Without taking license, can you run the cinema hall? Can you operate cinema hall without taking license? Cinema hall is an asset for you, correct? Now that building. Can you run that business without taking taking this? Not possible. Yes or no? That means these expenditures are necessary to what? To bring the cinema hall to usable condition. Again, the same justification. That means what is the answer? This is a capital expenditure. So this is true. This statement is true. Okay, only one statement. I think finally we got it as one. Two. There's one more here. Okay. Yeah, true. Awesome. Yeah, alright. Next. Amount is spent of the construction of a temporary huts. Amount spent on construction of a temporary huts which were necessary for the construction of a cinema house and were demolished when the cinema house was ready is a capital expenditure, they are telling. Now, cinema is also a building, no sir? Yes. You are constructing, let's say you have a site of let's say 1200 square feet ka site you have. There you are constructing a building. In that building, it's a cinema building. So you will play the cinema. But for the construction to happen, you need workers. No? Yes, normally if you just check the construction workers, no, what they do is they build a small hut first. They will stay there and they will do the construction work also. Once the construction work is over, the small hut that you built, no, it will generally be demolished off. It will be taken off. Okay. So to construct this hut, you have to incur some expenditure. That they are telling is a capital expenditure. Do you agree with that? Or I'll tell you one more sentence. Without constructing this hut, can you construct a cinema hall? Without constructing this temporary huts, can you construct the cinema hall? Not possible. Why? Because worker need a place to stay. No? Yes. So that's how the construction industry works there. Yes. That means what? These temporary huts are necessary to bring the cinema hall into usable condition. These expenditures are necessary to bring the cinema hall to usable condition. Hence, again, this is what? It is a capital expenditure. So the answer is true again. For this, it is true. Somebody is saying, sir, license we obtain only once, no sir. So it should be revenue expenditure. So that's what I said, no sir. Everything you cannot check. Every parameter will not be satisfied. You need to take it's a judgment thing, sir. This is not a rule-based approach, Pratul. It's a case-based approach. It's a case-based accounting. This is okay. Okay. So, but without incurring the license fees, you cannot run the cinema hall. So that means to bring the cinema hall, license is absolute must. Okay. So for bringing the asset, if you are incurring any expenditure, then that expenditure will be straight away capital expenditure. Because if that expenditure is not there, then this asset also you cannot use. That is the reason. So hence you straight away add off. Other parameters you need not check. As I told you initially only, all the parameters will not be satisfied. You need to check and accordingly decide there. These lengthy questions we can expect. These are not lengthy questions. Yeah, but these sort of questions you can expect. Generally, one such case they will give you in your examination. One. So far, whatever we have done, like this. Answer is any which way given over here. That is fine. All right. Eighth one. One more was there. Eighth one we already did. No, true. I already wrote the answer. I gave the justification also. Maybe you were chatting with somebody, I think. Okay. State with reason whether the following is capital or revenue expenditure. Again, the same funda. Like this, you have many case studies. Let's run through to get our understanding right. No problem. First case, in these sort of things, generally some confusion will be created. So as and when we solve it, let's see, our understanding should get better. Let's test it out. Expenditure incurred in connection with obtaining a license for starting a factory is 10,000. So you paid a license. You paid some license fees to start a factory. Now, fatafat, you tell me. In the previous case, it was cinema hall. Now it is a factory. So what is the answer now, right now? Capital expenditure. Perfect. Every one of you are able to get this? Awesome. So that means this is not true or false. So you need to tell what sort of expenditure it is and give a justification. What justification will you give? Again, the same thing. These expenditures are necessary to bring the factory building or to bring the asset to usable condition. Hence, this is a capital expenditure. Same justification you will write here. Okay, no? Institute material, there are other justifications also. You can write this or you can write the one I am telling it. The choice is yours. Either way, you will get the marks. Don't have to worry. Okay, let's move forward. So first one, answer is capital expenditure. Second one, 1,000 rupees has been paid for removal of inventory to a new site. Let's say I have a factory in Koramangala. Okay. I have two factories, one in Koramangala, let's say one in, Indranagar. Two factories I have in Bangalore. These are the two areas in Bangalore. So I paid some transportation cost. I asked some courier guy, alright, logistics guy, and told, right now I have some inventory, some goods I have. Inventory is nothing but goods. Okay. From Koramangala factory, transfer that goods or transport that goods to Indranagar factory. Okay. And he told, no problem, I'll do it. 1,000 rupees I will charge. Packers and movers basically. Packers and movers ka 1,000 rupees I have paid. Now you tell me whether it is capital or revenue expenditure. By incurring this expenditure, did the inventory value increase? I hired one packer mover. Just because I hired him, value of my goods increased. Is that so? No, right? Efficiency of the asset is not increasing. Production capacity is not increasing. So that means what? These are all revenue expenditures. Correct? No? These are all revenue expenditure. Inventory is already brought into place. That means it's already there in usable condition. Now from one factory, I am transferring it to another factory. So for whatever joy it is. Maybe I have less storage factory space in one factory, hence I am transferring to some other factory. Reason could be anything, doesn't matter. But efficiency is not increasing it. Okay. No increase in efficiency of the asset. You can write the justification as that. No increase in efficiency of the asset. Okay. Hence it is a revenue expenditure. You can write this justification or the ones that is called out in a study material. Anything is okay. Yeah, can I move forward for the next one? Okay. Rings and pistons of an engine were changed at a cost of 5,000 rupees. So I incurred some expenditure, some for the rings and pistons. They're saying that expenditure is about 5,000 rupees to get, check this word, to get fuel efficiency. Underline that. to get fuel efficiency. That means what, sir? By incurring this expenditure, if my efficiency is same or is it increasing? By incurring this expenditure, my efficiency is increasing because you did this expenditure only to get more fuel efficiency. Yes. So if there is any increase in the benefit, increase in the production capacity, or increase in revenue earning capacity, then what sort of an expenditure it is? It automatically becomes a capital expenditure. You can write the justification as efficiency of the asset has increased. Efficiency has increased. That's the reason it is a capital expenditure. Like this, you can write it. Okay. All right. Now, money paid to Mahanagar Telephone Nigam Limited, MTNL. Like we have BSNL, no? And there's another company, MTNL. You paid some money to them, the telephone agency. You paid about 8,000 rupees for installing telephone in the office. If you remember, maybe 4 or 5 years before the cell phone and all, no? You had landlines. I think some of the house may still have landline, but it is very minimal. All right. They used to have landline. If you wanted the landline connection, you had to make a deposit. The BSNL, MTNL guys, no, they used to ask a deposit, saying you deposit 10,000 with me. If you, the day you end the connection, the day you tell them I don't need phone connection, we will refund you the amount. That was the agreement. First, you need to deposit the amount with them. Okay. Once you say I don't want the connection, the MTNL guys will refund the amount. Now you tell me, is this really an expenditure or is this just a deposit? Is this really an expenditure? On one hand, I am giving it. All right. Later, after 3 years or 5 years or whatever, I will recover this money back. Yes, no? Basically, I have deposited the money with them. Yes, I will get back. So these are not really an expenditure. It is just a deposit. So you don't have to just go any this thing. So show deposit in balance sheet. That's it. Because you have a right to recover. No. So it's an asset. Because you have deposited the money. After few years, you will recover that money back. So it's an asset for you because you have a right to collect some money out of it. So you show that deposit in balance sheet. Basically, it's a deposit given. That's all it is. It's not really an expenditure. It's a deposit. Understood? Okay, yeah. A factory shed was constructed at a cost of rupees 1 lakh. A sum of 5,000 had been incurred in construction of a temporary huts for storing building material. Last time you constructed the temporary hut so that the workers could stay. Here you are constructing the temporary hut so that you could store the material. They are asking this 5,000 rupees expenditure of temporary hut. Is it revenue or capital? You have spent this 5,000. You will not get it back. It is gone. Govinda. Just like our classes. You attended means your time is Govinda. Yeah. Whether you understand or not, time Govinda. Yes, no, like that. This 5,000 is gone. Alright. So it's an expense. So is this a revenue or capital expenditure? Can you tell me? By incurring this expenditure, you are able to construct an asset. So meaning to construct that asset or to use that asset, these expenditure are necessary. Hence, it is a capital expenditure. Same justification. These expenditure are incurred to bring the asset to usable condition. Hence, it is capital expenditure. That's all you will write. Yeah, same thing. If you just check primarily, more or less, now you got it. No? Yes. So that is one of the key criteria. Remember that. If you are incurring any expenditure to bring the asset to usable condition initially, then it is becomes a capital expenditure. I think that understandings right now everybody has got. No problem. Okay, awesome. Second question is also done for. Okay, good. We'll go for the third one now. Next question. Check. The Good Pictures Limited. That is one company. They have constructed or they construct a cinema house. To construct the cinema house, they have incurred some expenditure. For the year ended 31st March 2020. Underline this 31st March 2020, sir. For the year ending, first year ending 31st March 2020. We discussed yesterday, no? As per periodicity concept, we prepare financial statements for 1 year, 12 months. That year is April to March. That year generally starts from 1st April and it will end on 31st March. Here the year is ending on 31st March 2020. That means it will begin on 1st April 2019. So this is your 12 months ka period. For this 12 months ka period, you have to prepare the financial statements like balance sheet, P&L, etc., etc. That data they have given. So let's see this data once again. Second hand furniture worth 9,000. Underline the word second hand. The moment you read second hand, what should click? Any repairs, everything extra that you incur on second hand asset should be capitalized, meaning it is a capital expenditure. That word or that concept should come into your head. A second hand furniture worth 9,000 was purchased. Okay, fine. All right. Repainting of the furniture cost 1,000 rupees. You did some painting work on this. Okay. And the furniture was installed by the own workmen. Wages for this being 200 rupees. So you hired some laborers to do that installation. Because now furniture and all, if it's a big furniture, it will not come as a full-fledged one. It will come in part by part. You need to assemble the furnitures. To do the assembly, you hired some workers. For workers, you are paying 200 rupees. Now, totally you incurred 9,000 for furniture, 1,000 rupees for repainting, 200 rupees for wages. Can you tell me how much is your total capital expenditure? Or basically, what you should do for this 9,000? Now, we will go one by one. What is this 9,000, sir? This is a CE, as in capital expenditure, because furniture you will use it for more than 1 year. No benefit you will get for more than 1 year. So capital expenditure. How about repainting cost? Repainting also second hand machinery it is. So this is necessary to bring the furniture into usable condition. So this is also CE, as in capital expenditure only. The wages paid for installation. See, unless he assembles it, the worker assembles it, can the company use the furniture? You went to cinema hall, alright? The back portion is not at all there. Only that, the cushion portion is there. Back portion is not there. Will you go and watch the cinema in that hall? These days, if you don't have pushback seats only, we don't go. Correct? No. Yeah? If you don't have one back seat, back holder, will we go? Absolutely no. Yes. So these assembly is very much necessary. Unless these furniture are assembled, the company cannot use it. So all this expenditure are necessary to bring the asset to usable condition. Again, Jamila, don't worry about the amount, ma. So don't always base your answer based on the smallness of the amount in the examination here. Because we don't know really whether it is small or big here. Practically, yes, I agree with you, Jamila. You may transfer this off to P&L considering it is small. But here in examination, you don't know how big or small this is. Maybe for you, 200 rupees is small. Maybe for this company, 200 rupees may be big. We cannot take that call. So don't write your answer based on the big and small of the amount. Okay. That I just gave you for explanation purpose. That's it. Is it okay? Don't base your answer like that. Comfortable? Alright. Yeah, it's very relative. It keeps changing from scenario to scenario like that. Awesome. That means entire 10,200. 9,000 plus 1,000 plus 200. Entire 10,200 is your capital expenditure only in this case. That's what you need to just justify. Whether an expenditure is capital or revenue. That's all. Justification, what will you give? These expenditure are necessary to bring the asset to usable condition. Hence, it is capital. Only if they ask justification, write it. If they ask you to tell what treatment, then by treatment they mean whether will you treat it as a revenue or will you treat it as capital. Only if they ask that, then write only capital or revenue expenditure and move on. Don't bother about justification. If they ask justification, then write, otherwise not required. Okay, next. Expenses in connection with obtaining a license for running the cinema of 20,000. What is this license of 20,000, sir? You tell me this. What is this 20,000 now? Revenue expenditure or capital expenditure? Perfect. We already saw this. This is a capital expenditure. Great. During the course of the year, meaning during the year, cinema company was fined 1,000 rupees. They maybe did some violation. Now, due to Corona, you have a restriction. No. Yes. Only 50% should be the capacity. That much audience only should be visited. Maybe one cinema hall, they took in more number of people. So the government imposed some fine. There was a fine of 1,000 rupees. Can you tell me this fine is a revenue or capital expenditures? By incurring this fine, will the efficiency increase? Will the production capacity increase? Will you get the benefit for more than 1 year? Nothing. That means what? This is a revenue expenditure. Correct? No? So this is your revenue expenditure. We'll call it as RE. Okay? Capital expenditure CE, revenue expenditure RE. So this is RE, revenue expenditure. renewal fees of 2000 next year was also paid. Renewal fees, sir. Yes, license ka renewal fees. Normally first time like a license you purchase, after that you have to go on renewing it. Now you tell me, if you can renew it for 1 year. If you pay 2000 rupees, you can renew it for 1 year. That means you, by paying this 2000, you're going to get the benefit for how many years? More than 1 year or only up to 1 year? By incurring this expenditure, you're getting a benefit only of 1 year. And moreover, this keeps coming also. There's a recurring expenditure also. That justification also you can take. Hence, this is what? A revenue expenditure here. Perfect? Okay. Alright, but hang on. They said renewal fees of 2000 was paid. Check for which year? The keyword there is next year. Underline that. Sir, if you're preparing this year's accounts, if you're preparing accounts for this year, you will show which year ka expense? Only this year ka expenditures you will show in this year accounts. Yes, sir. Next year expense, will I show it in this year only? Yeah? Next 2 years later, I will incur one expenditure. Will I account it in this year only? No. This year accounts will include this year ka income, this year ka expense. But check, is this renewal fees of 1000 rupees, is it for the current year, this year, or next year? This is for the next year. So that means this is not an expenditure that you will transfer to P&L. You will treat this as a prepaid expenses. Getting it out? Fair enough. Because this is next year expenditure. No? This is revenue expenditure only. But you cannot transfer this revenue expenditure of 2000 to this year P&L. Why? Because this is the expenses for the next year. Okay. So next year expenditure, if you pay this year only, we call such things as a prepaid expenditures. Okay. In next year ka P&L when you prepare, no, that year you will transfer it. Okay. Fair enough. So hence this is a prepaid expenditure. Revenue only, but it is a prepaid expenditure. Did you understand this? Everyone okay? Awesome. Temporary huts were constructed. I think it's the same question. Yes? Sir, how do we present the answer? Presentation is given here only, buddy. If you want, you can just see. License fees is necessary. Hence, it should be capitalized. Okay? Renewal fees for the next year is a revenue expenditure. But it pertains to next year. Hence, it is a prepaid expenditure. Like this, if you write, that is good enough. Renewal fees is revenue expenditure only. But since it pertains to next year, you have to treat this as a prepaid expenditure. How prepaid expenditure and all will be shown? We will do P&L, full-fledged P&L, balance sheet we will solve. There I will tell you. For the time being, you need not break your head. The science student, I mean to say. Commerce guys would probably know this, but science graduates may have a little issue tying it up. That is okay, no issues. I understand, guys. For science, it is not easy, alright? But the problem here is, right? See, commerce graduates learn all these basics over 2 years. They have 11th standard, they have 12th standard. They will learn all this. They would have already learned this over 2 years duration. But somebody who enters a CA with a science background, they have to pick everything. The 2 years which commerce student learn, they have to pick everything in one class. That is a big, big task. I sympathize with you. But the thing is, you have to also understand that this has these sort of questions, these basics hardly get asked for 3 to 4 or maybe 2 marks from this topic. Maybe 2 marks can come in the examination. So my hands are also tied. I can't spend 15 hours to explain you this. Not that I want to, alright? But like if I spend 15 hours teaching this, then unnecessarily I'll be wasting some other's time. So like considering the larger interest in crowd, I can explain a little further, but I cannot deep dive. Fair enough? Are you getting it? Yes. As much as possible, I'll try to cover it, but you need to put some efforts also from your end, guys. Science background people who I'm talking about. I think there are a few of you are there. Yes. Yeah, as much as possible we will, but you also have to do some efforts there. Day-to-day revision, kindly do it, please. Okay. Temporary huts were constructed for 1200. They were necessary for construction of the cinema. They were demolished when the cinema was ready. Now we know answer for this already. What is this, sir? Temporary has car. This is your capital expenditure because these are necessary to bring the cinema into usable condition. Hence, so those are your justification for everything. Okay. Can I go for illustration number 4? Answer is given here only. Alright, detailed answer I've given it here only. Justification I've given you in small pointers over here. Don't mug up things. If you just check here, hardly 3-4 reasons only, we are justification only, we are reversing. Yes, something which is incurred to bring the asset to usable condition. Something which increases efficiency. something which gives you benefit for more than 1 year. These are the three justifications that generally comes. So keep writing the same justification. Don't have to mug up any of this. If you still want to mug it up, that's your call, but I wouldn't encourage so much of it. These three if you write, these sort of justification if you write, that is sufficient. Okay. State with reasons. How would you classify the following items of expenditure? Overhauling expenditure of 25,000 for an engine of a motor car to get better fuel efficiency. Overall is repair expenditure. You have done some repairs, but you have incurred that repairs to get a better fuel efficiency. That means this is what, sir? Perfect. It is a CE as in capital expenditure because it is obviously increasing the efficiency of the asset. That is the justification you will write. Hence, it is a capital expenditure. Okay. Inauguration expenditure of 25 lakh was incurred on the opening of a new manufacturing unit in an existing business. Let's say I constructed a mall, shopping mall. I invited Shah Rukh Khan to cut the ribbon. I told him, Macha, you come, cut the ribbon, you inaugurate. I will pay you 1 crore rupees. Okay, Shah Rukh Khan told, no, 1 crore and I won't come, I want 5 crores. I said, okay, I will give you 5 crores. Come and cut the ribbon. Alright, fair enough. So now, do you think this is a revenue expenditure or a capital expenditure? Or I'll ask you a simple question. Can you tell me, before you answer, I'll ask you one extra thing I'll give you. You answer me this. Can you remember last year who did the advertisement for Coca-Cola? For Coca-Cola, Pepsi, Asian Paints, which celebrity did advertisement? What was the advertisement? Do you remember? Okay, Coke. Does anybody remember? No, don't Google and tell. Don't. I'll check on YouTube. Hang on. Don't do all that. Alright. Do you remember that? I'm talking about majority of the people. Do you think majority of the people will remember Tony Kakkara? Alright. That may be in some other place, I think. Okay. Yes. Do you think people will remember these advertisement expenditure? These are all advertisement. Yes, no? When you do inaugurations and all, when you host a big function, these are just marketing expenditure that you're doing. Do you think by doing this inauguration, will you get the benefit for more than 1 year or less than 1 year, sir? That's the question I'm asking. Yeah, I think the topic is more interesting. They're saying Mahesh Babu, Ranveer Singh, yeah, all that. That's okay. That is nice. Come back to topic now. Yeah, by incurring this expenditure, will I get the benefit? Do you remember who did the advertisement? No, people's memory are flooded these days. Memory, it's a shelf memory. Last 1 month only, what was advertisement campaign? We don't. By incurring this advertisement expenditure, generally you don't get the benefit for more than 1 year. Okay, these are all revenue expenditures. The amount may be big, but by incurring this expenditure, practically if you just check, you will not get. See, if they're getting the benefit for more than 1 year, why do you think every year they have to do advertisement? If you just check, every 4 or 5 months, they bring in new celebrity, run a new advertisement campaign. Correct, no? If you just check, alright? Every company, almost 4 or 5 months, they run a new campaign. Or at least yearly once they run a new campaign. By incurring advertisement expenditure, if they feel they're going to get the benefit for more than 1 year, then they'll do it only once, no? Why do you think they will do it every year? Because they know that people's memory is a shelf. It's a short-lived. Because these days, okay, we are flooded with so much information that, so you will not remember. People don't remember, yesterday I wore the same shirt or not. Which color shirt I wore also, people don't remember these days. Because so much memory, like our WhatsApp will keep buzzing all the time. So much of information overdose that we hardly retain things. Maybe for 1 day, 2 day, 1 week, we will remember. Fair enough? So generally, the general rule is these inauguration expenditure and all, no, they don't give you the benefit for more than 1 year. Okay. Hence, it is treated as a revenue expenditure. Alright. Fair enough. Yeah. Somebody is saying, sir, inauguration is only one time. No. Yes, it is a one-time expenditure only. But by incurring this one-time expenditure, you get the benefit for more than 1 year or less than 1 year. You generally get the benefit for less than 1 year. Okay. See, simple funda. If you are getting the benefit for more than 1 year, treat it as capital expenditure. See, simple. What the funda is. Okay. Some of you maybe can help you with this. You bought a camera. I think, let's say, I'll give you another justification for this. Maybe this might clear some of the other doubts you have. I purchased a camera by paying, let's say, 30,000 rupees. I can use this camera for 3 years. See, this is also an expenditure. Agreed? Me purchasing the camera is also an expenditure. Now, every expenditure, every income should go to P&L. Simple funda. If you are incurring any expenditure, if you are incurring any income, it should go to P&L. Can I transfer entire 30,000 to first year P&L? Entire 30,000, can I transfer to first year P&L? Would it be rational? You tell me, sir. If I transfer this entire 30,000 to first year P&L only, would it be correct? No, it will be wrong. Why? Sir, I'm using this camera for 3 years. No? If I'm using the camera for 3 years, that means I'm going to get the benefit for 3 years. And my matching concept also says what? Your revenue and expenses should be matched. By using the camera, if you are getting the benefit for 3 years, then this 30,000 has to be transferred to 3 years P&L. So hence, it will not be treated as a revenue expenditure. It will be treated as capital expenditure. Capital expenditure also will come into P&L. But the only question is, revenue expenditure will be transferred to P&L straight away. First year P&L, whichever year you incur the expenditure, that year only you will put it off in P&L. But if you are incurring capital expenditure, whole you will transfer. Meaning, first year I will transfer 10,000 of this as a depreciation, if you remember. On fixed asset you used to calculate depreciation. That is nothing but this. This 30,000 you are allocating to 3 years P&L. That's all is depreciation. Do you get this? So by capital expenditure means first year I will transfer 10, second year I will transfer 10, third year 10. This is the funda. Are we okay with this? Is this little better? Now, I think Kaiser, your question. All right. Now check, sir. I've incurred this advertisement inauguration expenditure. Fine. Now, should I transfer this 25 lakh to 1 year P&L or should I transfer it to 5 years P&L or 3 years P&L or 10 years P&L? Generally, by incurring this inauguration expenditure, you're going to get the benefit only for 1 year, no? If you are getting the benefit only for 1 year, that means you need to transfer this entire amount to that year P&L only. Hence, it is a revenue expenditure. On that line also, if you want, you can think. Is this better? Is this okay? Is the justification okay with you? Yeah. Every expenditure will go to P&L. Only the question is whether it will go to 1 year P&L or will it go for more than 1 year P&L is the question. That's all it is. This we call it as amortization. Amortization means spreading across. Spreading the expenditure in more than 1 year. That we call it as amortization. Okay. What if sales increases after inauguration? Yes, sales if you by doing inauguration expenditure, if your sales increases, that is a benefit. But will your sales increase for more than 1 year? No, your sales will increase. Generally, you will get the benefit only for less than 1 year. Yes, that's the reason this should be treated as revenue expenditure and transferred to P&L that year itself. Amortization is spreading across. So don't worry about amortization for the time being, Pratul. It's okay. Fine. Amortization is simply spreading the expenditure. Instead of transferring the expenditure to 1 year P&L, you put it in 3 years P&L. Why 3 years? Because you can use this asset for 3 years. That spreading of that expenditure or the distributing of that expenditure, if you call it as amortization. Yeah, you can treat it as deferred revenue expenditure. That is okay. Yeah. Okay, no worries. Yeah, actually, there is no concept of deferred revenue expenditures anymore. India does not recognize that, but it's okay. Since you mentioned, it's okay. At this level, it is fine. Accept it. Vasudev Macha, super da. Done. Okay, compensation of 2.5 crores is paid to workers who opted for voluntary retirement. Somebody told, give me money. Okay, I will retire from my work. Somebody who has worked 15 years or 20 years in your organization. There are many workers like that. Alright. So you told them, I will give you 2.5 crores. You can go. It's fine. You have given enough service to us. Alright. It's okay. Now this 2.5 crores. You tell me, sir. Now think on these lines. Okay. This is a better criteria. Tell me, should I transfer it to more than 1 year P&L or I should transfer it to only first year or that year P&L? I should transfer to that year P&L only. Why? See, once he retires, will I get any more benefit? He is retiring, so I am giving some money. Once I pay this 2.5 crores, he says Tata and he leaves. Am I getting any extra benefit here? In fact, no benefit. He is gone. He told Tata, Macha, I will enjoy my retirement life. That means, am I getting any benefit beyond 1 year? No. That means this is a revenue expenditure. Like this. Got it? Think on these lines also. If you have any confusion, think about this. Okay. Should I transfer it to 1 year P&L or more than 1 year P&L? If I'm getting benefit for more than 1 year, then capital expenditure. So I will spread across. Okay. If I'm getting the benefit for less than 1 year, it becomes a revenue. Like that also you can think about it and justify it. Okay, so revenue expenditure. I think this is a little better now. Can I go for the next one? No. Okay. Classify the following expenditure as revenue expenditure and receipts as capital revenue. Till now we were doing capital expenditure. There could be some receipt also. Capital receipt or a revenue receipt. If you are incurring it, if you are paying it, then it is an expenditure. If you are getting it, then it is a receipt. Just like capital expenditure, revenue expenditure, you also have capital receipt, revenue receipt. Somebody is saying, sir, every year there will be some workers who opt for VRS. Correct. There could be. Doesn't matter. Doesn't matter. But it's a different workers. No. You're not going to get any benefit out of this. No. Company is not getting any different extra benefit. Yes. So no benefit. So that's the reason straight away to P&L. Shashi Raj. Okay. Okay. 10,000 rupees was spent as a traveling expenditure of the director on the trip abroad to purchase a capital asset. Capital asset means some machinery, etc., etc. Okay. One director, he went to Japan. Okay, flight mein. He went to Japan. He told, I will bring a machinery from Japan. Japan is known for nice machinery. I will go there and get a machinery. Okay. For this director, no, you paid a traveling ticket of 10,000 rupees. Now you tell me whether this is you have spent this. So it can't be a receipt. It has to be an expenditure because money is going out of company's hands. Money is not coming in. If it is coming in, it's a receipt. If it is going out, it's an expenditure. So this is an expenditure. But is it revenue or is it capital? It's a capital expenditure. Why? Sir, unless this director goes abroad, can you buy this asset? That means to bring this asset into usable condition. Usable condition means it should reach your factory and you should start using them. To bring that asset into usable condition, meaning to bring that asset to your factory, this expenditure is necessary. Okay. Hence, this is a capital expenditure. Did you get this? So same justification. To bring the asset into usable condition, these are necessary. Hence, it is a capital expenditure. Like that. Awesome. Many of you have got this right. That's nice. The amount received means expenditure or receipt. Recipta, expense. Receipt, correct? No, receipt or okay. From trade receivables. Trade receivables means debtors. You have sold the goods and you have recovered the money. You have sold the goods and you have recovered the money. Like I am giving you service. Teaching is a service, right? I'm giving you one service. You are paying me the money. So is it a revenue receipt or a capital receipt? By giving coaching, by giving fees, will I give you the coaching for 10 years? By giving fees, will I give you the class access for 10 years or just maybe for 6 to 8 months? Till examination, we will support you, correct? No? Yeah, even beyond that also we want to support, but generally that's how it works, correct, right? Yes. So that means what? All this benefits is less than for 1 year. So you will treat this as a revenue receipt. Okay, comfortable? Because it is on sale of goods, no sir. Goods you will keep selling. It's recurring also. So it's a revenue receipt. Awesome. The amount spent on demolition of building to construct a bigger building on the same site. Old building is there. You took a bulldozer and did damar. In place of that, you are constructing a new building. Now this demolition charges, you're paid. So it's an expenditure. Revenue or capital? Revenue or capital, sir? So unless you demolish old building, can you bring in new building? Can you construct a new building without demolishing old? Not possible. That means to bring the asset into usable condition, these expenditure are necessary. So again, it is what? Capital expenditure. Done. Awesome. Insurance claim received on account of machinery damaged by fire. Sir, machinery purchased, is it a revenue expenditure or a capital expenditure? If you purchase a machinery, it's a revenue or capital? Machinery purchased is a capital expenditure because it gives you benefit for more than 1 year. That machinery is destroyed now due to short circuit, earthquake, fire, whatever. It is destroyed. Fortunately, you have taken an insurance policy on this machinery. Insurance company told, no problem. I will give you the claims. This claim is related to what, sir? You are getting this claim related to machinery. Yes or no? Yes. Correct. Machinery, where will you show, sir? Machinery, where will you show? In P&L or balance sheet? This capital expenditure, you will show in P&L or you will show in balance sheet? You will show in balance sheet. Yes, no? Correct. But now the machinery is destroyed. Can you still show the asset in balance sheet or you need to cancel it? This machinery is destroyed. Can you still show that asset in balance sheet? Not possible. That means this is a capital receipt. Because you need to cancel a balance sheet item, no? Because if it is revenue receipt, you will show in P&L. Yes? Like, if you pass the entry, see, entries, those of you know, right? I've received money, so bank account debit. Let's say I received 1 lakh. Can I write bank account debit to P&L account? 1 lakh rupees. Because if it is a revenue receipt, I have to pass this entry. Bank account debit to insurance claim, you can write insurance claim to P&L. Instead of 2 entries, I've made one small entry. Bank account debit. If you treat it as a revenue receipt, it should go to P&L. Yes. So this entry I should pass. Am I right in passing this entry? This will be wrong. Why? Sir, you are showing that machinery in balance sheet of 1 lakh, or let's say the machinery value was also 1 lakh, let's assume. Can you still show that asset in balance sheet anymore? Till now you were showing it. Now it is destroyed. No. If it is destroyed, you need to cancel. You know, all the assets have debit balance. In accounts, we don't have plus minus. We have debit and credit. Something which has a debit, if you have to cancel it, what will you do? You will credit. Yes. So the entry should be bank account debit 1 lakh to machinery account 1 lakh. Fine enough. So this is the entry you need to pass. Because by passing this, you will be able to cancel the asset. So it is not a revenue receipt, but it is a capital receipt. Because revenue receipt means it should go to P&L. If you show this item in P&L, no, it will be wrong. Because you can't show this asset anymore. It is destroyed. So you need to cancel off this asset. That is the reason it is a capital receipt. Is it okay? Second one is actually like, amount received, So second one is not revenue expenditure. Second one is revenue receipt. Thank you. Thank you, Shreya. So second one is a revenue receipt. Correct. You received the money. It's not an expenditure. It's how do we know we should debit bank? Pratul, hang on. I know that you are a science background student. We will come to a topic known as journal entry. Okay. That time we will discuss. I will tell you the rule. What to debit, what to credit. I will tell you the rules there. Fine. No problem. For the time being, yes, you may not understand this. It is okay. Fine. There is a separate topic known as journal entry. There I will help you out a little bit. Fine now. For now, it's okay. Leave that. It's okay. Okay, so all the answers are anyway here. Sir, can they give questions of both receipts and expenditure combined? No. In this setup, no. Alright. They will not ask it, but journal entry can be given. We will see this. Okay. Fine now. In this setup, no. No, Dhanush. It's okay. In examination, they'll not ask. Don't worry. It's difficult to construct like that. It'll be a little confusing. That's the reason. No, it's okay. Leave that. It's fine. Done. Okay, next we will go for we have few more questions. Let's run through them as well. Kaiser, your question will be answered in 2 minutes. Hang on. Your question is there. Hang on. It'll come. ABC Limited wants to run a restaurant. They renovated some old cabins. Because of this renovation, some space was made free. The number of cabins was increased. Earlier, restaurant capacity was only 10 people or 10 cabins. Okay, 10 tables maybe. Now from 10, it has become 13 tables due to this renovation. Total expenditure of renovation is 20,000. Basically, they are again asking you whether it is capital or revenue. What is this now? It is obviously a capital expenditure. Yes, no? Because your revenue earning capacity has increased. Yes, no? Revenue earning capacity. Because earlier, you used to earn only from 10 tables. Number of customers who visited your restaurant was limited. Now more number of customers can visit your restaurant because more cabins are there, right? More tables are there. So your revenue earning capacity has increased. And by doing this also, do you think you will get the benefit only for 1 year? That way also you can think. By doing this renovation, they will get the benefit for 1 year or more than 1 year. By incurring this expenditure, they're going to get the benefit for more than 1 year. Okay, that justification also you can give. Hence, it is a capital expenditure. Either you can write revenue earning capacity has increased or benefit you will get it for more than 1 year. Hence, capital expenditure. That justification also can be given. Or both can be given if you want. Alright. New Delhi financing company sold certain goods on installment payment basis. Okay, they've sold some goods to somebody. 5 customers did not pay the installments. They had to pay the money, the guys who bought from us, they did not pay. To recover this outstanding installment, the firm spent 10,000 on account of legal expenditure. Our customer, we have sold some goods to our customer, he did not pay. So I filed a case against them, okay, and I'm trying to recover the money. For this, lawyer is charging some money of 10,000. You tell me revenue or capital, sir? You tell me revenue or capital? It's a revenue expenditure, yes, no? Because these are like, by incurring this expenditure, will I get the benefit for more than 1 year? Effect is less than 1 year, yes, no? Correct? So what if the case goes for more than 1 year? Case may go for 1 year or it may go for 10 years. If case goes for 10 years, all the 10 years you'll keep getting money from them. Huh? No, right? Yes, you only once they will pay off and done. That's it. So you're going to get the benefit for less than 1 year here. That is the reason. Got it? So it is a revenue expenditure. Manageable? Okay. Ballav of Delhi purchased a machinery from Shah and Co. So one guy has purchased a machinery from another person of Ahmedabad. Ballav and Co. spent 40,000 for a transportation of such machinery. See, let's say I'm in Bangalore. I purchased a machinery from Chennai. Some person from Chennai. That means I have to transport the goods from Chennai to Bangalore because my factory is there in Bangalore. Yes. Is this a revenue expenditure or capital expenditure, sir? This is obviously capital expenditure. Why? Sir, unless I incur transportation expenditure, can I use the asset? No. That means these expenditures are necessary to bring the asset to usable condition. Hence, it is a capital expenditure again. Okay, awesome. All right, money. Okay, this is a repetitive. Answer is anyway given there. Okay, some are like straightforward. Okay, entrance fees of 2,000 rupees received by Ram and Sham Social Club. So guys, I'm skipping the things that I'm skipping is homework. All right, these are repetitive ones. Hence, I'm skipping. Whatever is different, I'm just going to run through them. Okay. Entrance fees of 2,000 rupees received from Ram and Sham Social Club is what? Revenue receipt, capital receipt, or capital expenditures? See, if you want to join any club, like you have no Jayanagar Club, Cosmopolitan clubs, like this, you have many clubs. When you join a club, no, you have to pay a one-time fees if you remember. Yes, country club or whatever. Yes, you need to pay the fees and then join. There will be joining fees. Correct? Yes. That joining fees, sir. If you pay that joining fees and become a member, yes, like that's one time for like another company, right? One time joining fees they will take it initially. Yes, this could be debated. So our membership fees are also paid annually. See, if it is annual fees, you can treat it as a revenue receipt and put it to P&L. But our institute has assumed that this entrance fees they've given. Entrance fees means when you want to join a club, you need to pay some one-time settlement, one-time joining fees. Okay, so this is not a subscription model, Dhanush. Okay, this is more like a donation. Correct? Vasudev is saying it's a donation. Yes, the donation that you pay to college. To get into the college, you need to pay some donation, admission fees. They say that one. Okay, so there's admission fees. That is one time, but the company is getting it, so it is a revenue or it's capital. You have received it, so it is a capital receipt. Got it? Is that okay? Just one time. Every year if you are recovering, that also you will recover subscription fees. Every year if you are recovering, then it will be a revenue receipt. Since they've specifically told entrance fees, so you can think of this as a one-time receipt, one-time joining fees. Hence, this is treated as a capital receipt. Manageable? Okay. Subsidy of 40,000 received from the government for working capital. Sir, working capital means day-to-day expenses. Working capital means the day-to-day expenses. Alright. So you have received from subsidy from the government to run day-to-day expenses, sir. Now, the moment I say day-to-day expenses, that means what it is. What do you think this is? The subsidiary is, you have received a subsidy, meaning some extra money you have received from the government. Alright. Normally you must have heard, no, government gives like, farm subsidy, agricultural subsidy to farmers and all, they will give the subsidies. Subsidy is some money. Like now if you see Corona package they gave, no, correct? Due to lockdown, okay, these workers will get 2,000 rupees every week. Yes, those are some things that we call it a subsidy. There will be some terms and conditions. So we have met that terms and condition. Hence government is giving us 40,000 rupees as subsidy. But this is to maintain for working capital purpose. So it is day-to-day expenditure. To run day-to-day expenditures, if you are getting it. That day-to-day expenditure, will it last for more than 1 year, sir? Or is it for a short period of time? Generally, it's for a short period of time. Yes, no, correct? So it will be treated as a revenue receipt. Understood? Since it is for day-to-day receipt. Working capital purpose, like that. Fair enough. Had they not used this, they had told some other line. Alright. Subsidy was received from the government for opening a new plant. Like this, if I had told, then I would have treated that as a capital receipt. Getting the difference? I am opening a factory in a remote area. Himachal Pradesh mein, okay, I am opening a factory. So government told, okay, I will give you 10 lakh rupees because you are opening a factory. Then it will become a capital receipt. Because it is given to open a factory, yes or no, like that. But this is for day-to-day management, hence it is a revenue receipt. Getting the difference? Short period of time, correct. Alright, this we have already done. This is okay. Insurance claim received on machinery damaged is a revenue receipt as such. Okay, fair enough. Okay, this one, question number 6. Interest on investment received. 1 minute. Oh, okay. Answer is wrong, sir. This should be capital receipt. Stuck off. It's a capital receipt. It's a wrong. Typo. Make it as A. It should be capital receipt. Okay, yes. It's a typo. Make it as A. Capital receipt. That previous answer is wrong. Change in your book as capital receipt. Thank you. Okay, I think Kaiser or something. Your question, da. Interest on investment received from UTI. UTI is an investment. If you make an investment, yes, if you make a fixed deposit in any bank, like a State Bank of India, or if you buy any investment, on investment you're going to get some return. No? So on this investment you are getting interest. You're receiving it. So it is a receipt. Revenue or capital. Generally, the companies will pay in interest regularly, yes or no? So it's a recurring or non-recurring. This interest, it's a recurring item or a non-recurring item. If you make a fixed deposit, then every year bank will give you interest. Correct? Yes. That means this is a recurring item. So it's a revenue receipt. It keeps happening. Yes. Year on year. Well, like that. Okay. Should a subsidiary be repaid to the government? Okay. This question, Gulam, you have something known as Accounting Standard 12, Government Grants in your CA Inter. There you will learn entire thing about government grants. There are various nature of government grant. For the time being, I think whatever we have learned, that should be sufficient. Okay? Don't worry. Everything is there. Alright? Everything there is a standard. As I told you, there are so many things which you have not even thought of. That much is there. Everything you learn. Don't worry. But at this level, this much is sufficient. No point in wasting too much time on those things because it will not help you in examination. For knowledge sake, it's okay. Okay, you can ask me offline. Alright? Okay, amount received from IDBI, a bank, Industrial Development Bank of India. A medium term loan, sir. Underline the word medium term. Medium term means more than 1 year, but less than 5 years. 2 to 5 years ka loan or 1 to 5 years ka loan, we call it as medium term loan, generally. So you have taken a loan from a bank. Okay, so whether this is a it's a receipt. When you take a loan, you'll get some money, it's a revenue receipt or capital receipt, sir. It's obviously a capital receipt because you will repay the loan over 5 years. Because it's a medium term loan. Medium term loan means more than 1 year. Okay, that is the reason you'll treat this as a capital receipt. Done. Okay, revenue from the sale of products is reported as earnings in the period. When will you recognize the revenue? When will you book the sale? You will when will you pass the journal entry for sale? They're asking. You'll pass a journal entry for sale, whether cash sales or credit sale, when the sale is made. The moment you sell the goods. Delivery, cash collection and all is not the criteria. More about this you'll learn in Accounting Standard 9 in CA Inter, Ind AS 115 in your CA Final. AS 9 in CA Inter deals with revenue recognition. Ind AS 115 in your CA Final deals with revenue recognition. For the time being, just think this is sufficient. Okay. So sale, whenever the moment you make the sale, that time you can recognize the revenue. This is sufficient. Okay. If repair cost is 25,000, whitewash expenditure are 5,000. you have done some repairs by incurring 25,000. Whitewash, some painting you have done by incurring 5,000. Both these, read this question, these words carefully. Both these expenditure relate to presently used building. You are already using a building. Okay, you have already started using the building. Now we have done some repairs and whitewash. Can you tell me whether these two are revenue expenditure or capital expenditures? These two. These are revenue expenditure. Yes, this is not a new building. This is already an existing building. An existing building, if you're doing some repairs and painting and all, no, that is incurred for maintenance purpose. So these becomes your maintenance expenditure. Okay, to maintain the condition of the building, you do the painting and small repairs. So this is your maintenance expenditure. Hence, it is revenue expenditure. Like that. Cost of extending the building. Now, my building had only ground floor, first floor. Now, I constructed second floor also by incurring 2,50,000. I spent 2,50,000 and I incurred second floor. Now, you tell me this expenditure is revenue or capital? This 2,50,000. It's capital expenditure because obviously efficiency is increasing. Revenue earning capacity is increasing. Yes. And the benefit also you're going to get it for more than 1 year. Any justification you can give. Everything will hold good here. Yes. So hence it is a capital expenditure. Perfect. Cost of improvement of electrical wiring system. I revamped my whole electrical wiring system. I bought a sophisticated one. Like now you have no. Yes. What is that? Amazon car. Yeah. Like, so you can operate your phone, your TV using mobile phones. Now, yeah. Using Bluetooth. Yes. I forgot to switch off the fan or AC. No problem. Use your mobile and switch off. Alexa, correct? Those new technology you did, sir. Improvement you did in electrical wiring system. So what is this 90,000? If you've done these improvements, the word they use the improvements means obviously you're going to get some extra benefits. So it is treated as a capital expenditure. Manageable. Okay, now what is the question? The amount to be expensed. When they use the word expensed, what are they trying to say is, how much amount will you transfer to P&L? Instead of asking the revenue expenditure, another way to ask is, how much expenditure will you transfer to P&L? Or another way to ask the same question is, how much is the amount to be expensed? Amount to be expensed means amount to be transferred to this year P&L. Revenue expenditure only will go to P&L, no? So in this expenditure, in this case, what are the revenue expenditure? These two are revenue expenditure, yes. So 30,000 will be transferred to P&L. So and C is Chennai. That's how they got this. You can write the breakup. 25,000 plus 5,000. These two are revenue expenditure. Hence that should be transferred to P&L. That's all. Okay. Okay. True or false question is homework, guys. Majority of them are same. All right. So you can just run through them. Solution I've given it to you right now there. There itself. Okay. So let's do one thing. Let's take a break for about 20 minutes. Come back and take up the remaining, and we'll take up the next chapter. Okay. Thank you. Welcome back after the break, guys. Let's get started with the next topic, which is contingent assets and contingent liability. A very small topic. Only three things. There are three components. If you know the meaning of those three components, the chapter is over. That's all is this particular. There's actually not a chapter. There's a particular unit in a study material, but we are treating each unit as a separate chapter and we are working it out. Only three components you need to know. Contingent asset, contingent liability, provision. If you just know the meaning of these, then your chapter is done and some few questions we have towards that. So let's do a thing. Let's start with contingent liability. First, we will read what they're trying to say. Then we will try to decode that. Contingent liability means it's a possible obligation arising out of past event. The existence of it is confirmed by happening or non-happening of an uncertain event not within entity's control. This is the definition. Actually, this definition is given in Accounting Standard 29 and Ind AS 37. What is Accounting Standard? What is Ind AS? We will just cover after this particular topic. That is also there, the meaning. Okay, more about this you will study in CA Inter and CA Final. For now, just let's understand the meaning. So contingent liability means what I said. It's a possible obligation arising out of past event, but the happening or non-happening of this is confirmed by, or the existence of this is confirmed by happening or non-happening of an uncertain future event. And that future event is not within entity's control. Anything went or full bouncer. Anything went in or full dum-damara. Bouncer or got it? Full bouncer, sir. Okay, no problem. Let's try to decode this maybe with the help of small example. Actually, it's pretty easy, just a little sophisticated way they've presented. That's it. Okay. So you have to understand that accounting standards and all, no, or law. Okay. Right. So they won't use simple English and thing. Okay. Law has to be in a certain, like, it has to be put in a certain way. Okay. That is what you call it as law. Nobody should understand it when you read it first time. You have to read it 2-3 times to get it, like that. Okay. So what are they trying to say? Let's understand. Let's take a simple example and try to prove this. Okay. Or understand this. A Limited, B Limited. There are two companies, A Limited, B Limited. Now, A Limited, no sir, has filed a case against B Limited. A Limited has filed a case, a legal case against B Limited, saying, you have stolen my patent. I have a patent or a license. My patent you have stolen. Karke, A Limited has put a case against B Limited, demanding a compensation of, let's say, 1 crore rupees. A Limited is telling B Limited, you give me 1 crore rupees, I will withdraw the case. Otherwise, we'll fight it out. Okay, I will not leave you. Alright. Now, what do you think B Limited will tell? Tago macha 1 crore. He will give it off. Huh? B Limited will give off that 1 crore in nice suitcase and leave it off. Okay. If B Limited feels he is not guilty, he will, no, I have not stolen your patent, then what do you think B Limited will do? Common dialogue. We will see you in court. Correct? No, they will fight it out. Yes. They will fight it out in the court of law. Let us see whether this is a contingent liability. Let's try to decode the example. First, they're saying it's a possible contingent. There are few features of contingent liability. First feature is possible obligation. Sir, obligation means something which the company cannot escape from. Listen to this carefully. Understand this properly. I'll tell you a little extra. So that AS 29 and Ind AS 37 may again you have to read it. Little more in detail. But this base may you can take it up your next level. So it will help you. Okay. One is obligation. Obligation means which the company cannot escape from. Now, can you tell me, does B Limited have obligation here? Does B Limited have obligation here? Obligation means no escape. Can B Limited tell? A Limited has already filed a case. Case is going on in court. Can B Limited tell, I will not come to court? I will not come to court hearing. Can he tell that? Do whatever you want. I will not come to court hearing. Can you escape from the court proceedings, or you have to go ahead and attend that? You have to attend it, right? You cannot escape from it. Yes. So that means the first feature is satisfied. Currently, B Limited has an obligation, meaning they cannot escape from it. They have to go ahead with the court proceedings, and whatever court decides, they must honor it. That's the first feature. Did you understand this term, possible obligation? Now? Like this, we'll keep decoding each thing. First one, is it okay? Yes, everyone? That arises from past event, they are telling. So contingent liability should always arise from past event. For future, we don't record contingent liability. So it should be a past event. Check, sir. Is there any past event here? Why did A Limited file a case against B Limited? Why did A Limited file a case against B Limited? Because A Limited feels B Limited has stolen the patent. Yes, no? A Limited feels B Limited has done something wrong. That is the reason A Limited has filed the case. That means the stealing of a patent is a past event. Agreed? So that means first obligation. We'll write off here again. First is present obligation. Do we have present obligation in this case? Yes. So this is the CA tick mark. This is what you will do in audit. Whenever you go for auditing, no? This is the tick. You don't put this anymore. CA tick is this ulta. Okay, this is this. Okay. What is patent? Patent is something that belongs to you, Pratul rather. You found out corona vaccine. You did some research and you found out, you found out a medicine, a syrup or something that can cure the corona or the COVID. All right. What do you think? first thing you will do is register that. Okay, saying, because you found out that, right? Yes. So you will go ahead and register that patent. They will give you a certificate that this finding belongs to Mr. Pratul. They will give you a certificate. That we call it as patent. Okay. Meaning nobody should copy that from you because it is yours, no, your efforts, right? Nobody should replicate that. If somebody wants, they can come to you and they can buy it from you. But they should not tell that is my find. I mean, yours. So it's like a copyright basically. Perfect. Like a copyright. You can treat of it like this. Is it okay? Okay. Okay. Awesome. So this is present obligation. Second feature is what? Past event. Is there any past event here? Yes. A Limited feels B Limited has stolen the patent. That is the reason he's filed a case. That means there is past event also. Second feature is also getting satisfied. Third feature is whether you have obligation or not. Okay. That is confirmed. The existence of this liability is confirmed by happening or non-happening of an uncertain future event not within entity's control. That means they're talking about some future event now. Whether B Limited has to pay this money or not, is it dependent on a future event? Whether B Limited will pay this 1 crore to A Limited or not, is it dependent on future event? Yes. What is that future event? The future event here is the court verdict. Yes, no. If court says pay, then B Limited has to pay. If court says no need to pay, then B Limited will not pay. Yes. That means whether to pay this liability or not, that is dependent on a uncertain future event. Okay, the future, that is court verdict. Is this court verdict within B's hands? Can B influence the court verdict? Does B have any control over court verdict? No. So don't say, sir, we will bribe the judge and we will win and all. Don't say all that and all. Alright. We'll trust in the judicial system. Hope that the judicial system will work fine. So don't write bribe and all. So B Limited, does it have any control in the court verdict? No. Okay. That is what they mean by uncertain future event not within entity's control. Meaning not within B Limited wala control. If all the features are satisfied, then B Limited will recognize something known as contingent. They will not recognize, rather they will disclose something known as contingent liability. Now, is it little better? The meaning of that contingent liability. It is just a disclosure that you give in financial statement. You don't pass any journal entry for contingent liability. No entry. Just disclose. I know you must have done in your in your plus 1, plus 2 and all, you must have done notes to accounts. After balance sheet, P&L, you used to also put notes to accounts, remember? Those of you have done? Yes. Notes to accounts is nothing but some explanation. Okay, if you have not done, no problem. Okay, no issues. See, just by reading the balance sheet, if you want to do an exercise, go to check any company of your choice, Tata, Reliance, or whoever companies, public limited company. Go to their website, download something known as annual report. The annual report will have a lot of things. You check for balance sheet P&L. Okay, it will be there on some page. They'll give you an index. Go there and check. Alright, by looking at balance sheet, you tell me, did you understand anything? I'm pretty sure most of the things will be like our classes, bouncer only. Because just by reading the components in balance sheet P&L, not everybody will be able to understand it. You need to explain the details of that balance sheet. That is done in something known as notes to accounts. They will give further explanation. Like fixed asset has become 1 crore because so and so event happened. We purchased a fixed asset, or machinery got destroyed, or we sold a fixed asset. Like this, some extra, explanation they will give, explaining the components of P&L and balance sheet. That is what we call it as notes to accounts. Is this okay? Notes to accounts. Fine. Just an explanation of balance sheet and P&L. That's all it is. Okay. Now is it better? Fair enough. Okay. Once I'll repeat it just to be sure. Contingent liability means 4 features. 1, it should be a present obligation. Obligation means you cannot escape from it. Company cannot escape from it. They have to go through with it. No escape scenario. So there should be a present obligation. That obligation should arise due to past event. Because of the past event, some past event. And whether this liability, this 1 crore B Limited has to pay means it becomes a liability. Yes. This liability, alright, whether to pay or not, that is dependent on a future uncertain event. Okay, but this event is not within entity's control. Whether you need to pay or not, that is dependent on something else. And that something else is not within entity's control. If all these features are satisfied, then we disclose, not journalize. Okay, we only disclose in notes to accounts contingent liability. Now, is it fine? Now, sir, that means contingent liability is also a liability. Yes, contingent liability is also a liability. That means why don't we recognize it, sir? Or why don't we account it? Simple. See, contingent liability, yes, it is also a liability. But are you 100% sure you will pay this money? Is B Limited 100% sure they will pay this money? They are not. Yes or no? Correct? Fair enough. So, but in case B Limited has to pay, then disclosing that is better so that the investor will have this information. Fair enough. So, hence contingent liabilities are only disclosed. Okay. So, then when will we account it? There is a simple funda, sir. I have written present obligation here, no? If it is possible, if you want, you can also write it as possible. They have written possible only. Okay, we can write it as possible only here. Better. I'll write it as possible obligation. Now, what do we mean by the term possible? The term possible in accounts means less than 50% chance. Less than or equal to 50% chance. Meaning, if there is less than or equal to 50% chance that B Limited has to pay A Limited. So, how will we know that? Sir, this is a legal battle, right? Who is the best person that can guide B Limited in case of legal things? Lawyer? Yes. Lawyer told there is a 40% chance we will lose the case. Lawyer told B Limited there is a 40% chance that we will lose the case. Then we say there is a possible obligation because it is lesser than 50%. Less than or equal to 50%. If that chance is greater than 50%, then we use the term something known as probable. If it is probable, then you recognize a provision. That's all is the difference. So provision and contingent liability in a way go hand in hand. If there is more than 50% chance of the outflow happening, then you recognize a provision, meaning you pass journal entry for provision. If there is less than 50% chance, then you only disclose contingent liability. That's all. Did you understand this? Both provision and contingent liability. Is it okay, guys? Everything is liability only, but contingent liability, the chance of outflow is less. Hence, we don't account, we only disclose. Okay. For provision, since the chances of outflow is more than 50%, we call that as probable. Okay. Hence, we account it. That's the only distinction. If it is 100% certain, we directly book a liability. Like, you purchase the goods for 1 lakh rupees. How much you need to pay, sir? I purchase the goods. The value of the goods is 1 lakh. Okay. How much I need to pay my creditor? How much I need to pay for that goods? 1 lakh. If 1 lakh is the worth of the goods, I need to pay 1 lakh. Correct or no? Is there any ambiguity or any confusion regarding the amount? Oh, there is only 90% chance I have to pay. There is only 50% chance I have to pay. Is it like that? No. If I purchase the goods means I have already, my contract says clearly I need to pay 1 lakh rupees. Correct? So if you are 100% certain, which we call it as virtually certain, then we straight away book liability. Your creditors, your bills payable, your bank loan, etc., etc. Those are 100% certain. Hence, we directly book liability. Okay. If you are more than 50% certain, then you book provision. If it is 50% or lesser, you disclose contingent liability. That is a line of things for all the things. That's it. Is it fine for everyone? Okay. Repeat once more or okay? Clear both contingent liability and provision. Is it okay? Okay, then let's see. Let's test this table. This question is often asked in the examination. Difference between provision and contingent liability. Contingent liability, I'm denoting it as CL. I've written the short form here. Okay. So what are the differences? Can you tell me some of the differences? Let's see without looking at the, you can't see the screen now, unfortunately. Can you tell me the difference just now we saw between provision and contingent liability? At least one difference you can tell. Can you tell me? What is that one difference? Okay, I only tell you, tell me yes or no. Provision is recognized. Meaning provision you pass journal entry. For contingent liability is not recognized. Meaning you don't pass journal entry. It is only disclosed. Agreed? Yes? Correct. That is one difference. Okay, and you can write the meaning only as the first difference. Provision means It's a present obligation. Instead of present obligation, can I also write probable obligation? Would you be fine with this? Yes, if I write probable obligation, would you be fine? Because only if it is probable, then only there is more than 50% chance. That only we call it as provision, right? So provision means it's a probable obligation of an uncertain amount, which can be measured reliably using estimates. Even provision is an estimate only, but you can reliably estimate how much is going to be that outflow. Through a reasonable measure, you can ascertain how much is the value you need to pay. Okay, hence we disclose it as provision. Simple funda, if there is more than 50% chance of the outflow, recognize. They will not give you questions like that. They will use the word probable. The moment they use the word probable, you recognize provision. For possible, it's contingent liability. As simple as that. If you remember those two at this level, it's good enough. Okay, AS 29, you will discuss this again in detail. Alright, so much I kind of don't think we should go for. You need a little extra clarity, or this is fine? For knowledge sake, if you want something, I can spend a little time on provision. Otherwise, for your examination, what we discussed is good. That'll be fine? All good. Okay. Alright. If you want once, we will just check this. Present obligation, meaning present obligation of uncertain amount. Even provision, you are not 100% sure how much you're going to pay. Alright. When you're going to pay, you don't know. Okay. Alright. But how much you're going to pay, no, you can reliably measure. That is provision. Amount you're not 100% sure when it will come, how much it will come. That you're not sure. But you know that it will come and you can reasonably guess or estimate how much will be my outflow. Hence, we recognize provision. That's all is a funda. This is a definition. Actually, as per AS 29, this is not the definition. There is some other one. Let's leave it. It's fine. No problem. Okay, I don't have to teach that now. Not required at your level. First, write the meaning of provision. Second, write the meaning of contingent liability. That is one difference. Second one, provision meets the recognition criteria. It meets the recognition criteria, hence you recognize. But contingent liability fails the recognition criteria. Provision is shown in balance sheet, meaning it is recognized. It is recognized as a liability and shown in balance sheet. But contingent liability is only disclosed in notes to accounts. It is not recognized. Okay, there's one often a repetitive question from this particular topic. They ask it for 2 marks. So just I've given you a few pointers there. Try to remember that. Okay. Alright. So this is about provision and contingent liability. If you know contingent liability, equally you can also get contingent asset also. So what is contingent asset now? If you know this definition, you can modify and construct contingent asset also. What is it? Here it was possible obligation. For contingent asset, what do you think it will be? Obligation or asset? See, simple here. For B Limited, it is a contingent liability because there is outflow. Think from A Limited perspective, sir. A Limited has filed a case now. Yes, he will have to pay the money or get the money. For A Limited, is it inflow or is it outflow in this example? For A Limited, it's an inflow. Yes, no? Correct. He will get the money. Then you think about contingent asset. For A, it will be a contingent asset. For B, it will be a contingent liability. That's all it is. Fair enough. For those guy who has to pay it, it's a contingent liability. Somebody who has to receive it, it's a contingent asset. So same definition you can use. Instead of possible obligation, you will write possible asset. Instead of obligation, substitute with possible asset. Based on past event. The existence of this is confirmed by happening or non-happening of an uncertain future event not within entity's control. Just replace obligation with asset and write the same thing. That's what they've done here also. Check. It's a possible asset that arises from past event. The existence of this is confirmed by happening or non-happening of an uncertain future event not within entity's control. One, if you know, automatically you can construct the other one. Fair enough. Outflow means contingent liability. Inflow means contingent asset. Same thing. Got it? Now, contingent asset also is not recognized and it is not disclosed in financial statements. Generally, they say it is disclosed in the report of the approving authority, board of directors. Okay, this is only at your CA foundation level. Actually, we give it a notes to accounts only. Leave it, that's fine. For the sake of marks, we'll have to just go ahead with this. Contingent asset, they're saying, is not disclosed in financial statements, but it is disclosed or rather shown in the report of approving authority. Like in case of company, sir, suppose you buy 1 share of Reliance. You tomorrow on the stock market when it opens, you bought 1 share of Reliance. day after tomorrow, can you go to Reliance head office Bombay and tell, I will run the show going forward. I will take all the decision because I own one share. So I am the owner. I will take all the decisions of Reliance going forward. Can you tell that? You bought one share and you went to head office and told, I will manage everything from Reliance. You can, Mukesh Ambani, you can take retirement. Can you tell like that? It will not happen. Yes. Normally, the decision making in a company, who will take? If there's company, who will take the decision? There will be something known as board of directors. For short form, we can call it as BOD. Board of directors. They take the decision relating to the company. Whatever decisions it could be. Alright. Relating to business, they take it. So, board of directors generally give you something known as director's report. Generally, you will be able to see this in annual report if you just check. Director, they will give something known as board of directors report. There it is disclosed is what they are telling. Fine now. Not necessarily true, but for the sake of marks, we need to write it. Actually, it is given a disclosure in notes to financial statements only, but it's fine. No problem. We'll go ahead with this for the sake of marks. Next stage when you get to, we will correct all this. Whatever we, mistakes we done, we'll correct it in the next stage. CA inter level. Fine now. For now, we need to clear, no? Because if you write institute ka suggested answers, then only you will get marks. Only when you get marks, you can proceed to the next level and become a CA. So for the sake of marks also, some things, though it is wrong, we'll have to just go ahead and accept it. We can't, because I don't have overriding power over institute. Institute ka study material is the ultimate trump card. Something it says means you have to follow that. Whether right or wrong, unless institute corrects that, we have to still keep following that only. No chance for us. Okay, fine. Did you understand this? The meaning, is it okay? Because on this only there is MCQ question, true or false, nothing else. It's a simple funda. If you're okay, then I'll just move on to and solve some questions. Or let's have a quick recap. Is it okay? A contingent liability means it's some doubt. Examples and all are right. No problem. Not with the examples. I only told about this. Okay, shown in the report of approving authority. Alright. Is it okay? This actually is shown in financial statements only. This I told you, just remember this for the sake of this one examination. All other things are right. Okay, my examples, don't worry. What I've given is right only. Yeah. The one I mentioned above, sir. Or the one you mentioned where? Okay, I didn't read. Okay. Subsidiaries for long-term capital asset, can it be contingent asset, sir? Subsidiary for medium-term working, subsidy for long-term. Sir, if you have received the subsidiary, how can it be, sir? If you have received it, okay, it cannot be. Okay, if the government has told you, okay, I will give it, then it can be taken. Yeah. Yeah, alright, yes, it can be. If a government is not giving you the money, but they have given you a letter saying we will give it to you and stuff, you can treat it as contingent asset. Yes, acceptable. Done. Alright, coming back now. Contingent liability means what, sir? It's a possible obligation arising out of past event. Okay, but the existence of this liability is confirmed by what? By an uncertain future event. By happening or non-happening of an uncertain future event. But is that event within anybody's control? No, it is not within anybody's control. So these are the features of contingent liability. In contingent liability, you don't recognize, meaning you don't pass a journal entry for it. It'll only give a disclosure. You disclose this information in your notes to accounts just for better understanding of financial statements. Okay. What about provision? So provision is recognized because if it is less than 50% chance of the outflow, 50% or lesser chance of the outflow, then you disclose contingent liability. If the chance is more than 50%, we call it as probable obligation. For probable obligation, you recognize provision. Okay. If it is 100% certain, you book a liability. Provision is an estimated liability. You are estimating how much you have to pay and recognize that. Okay. So provision is recognized. Contingent liability is not recognized. That is another feature. How about contingent asset? Just modifying the feature here of contingent liability. Contingent liability, it was a possible obligation. Here it will be a possible asset arising again out of past event. The existence of this asset is confirmed by happening or non-happening of an uncertain future event. But that uncertain future event is not within anybody's control. Nobody has control over it. That's what it is. And contingent asset again is not recognized, nor it is disclosed in financial statements, but it is disclosed in the report of approving authority. Generally, in case of a company, the approving authority is board of directors. So in board of directors report, we give a disclosure. Okay. If it is a sole proprietor, Then approving authority is the proprietor itself, the owner. If it is partnership firm, the approving authority are the partners. Like that. That's all. Recognized means book, sir. Booking something. In accounts, you have to do some accounting, no, Pratul? Yes. Recognition means that. Doing something. In mathematics, you do some plus, minus, division, calculations, right? In accounts, we do debit, credit. If you're doing debit, credit, we call it as recognition. Okay? That's what is recognition means. Okay, awesome. Alright, so let's check the questions now to see how well you've understood. Contingent asset usually arises from unplanned, unexpected events that gives rise to what, sir? Because of contingent liability, there will be inflow or outflow of cash. Due to contingent asset, because of asset, there will be inflow or outflow, sir. On contingent asset, there will be an inflow. On contingent liability, there will be an outflow. So first one is inflow, second one is outflow. So which one is the right option? Alpha. A as in alpha is the right answer. Yes, because due to contingent asset, you have a possibility of inflow. Okay. Economic benefits means assets. The cash. Okay. Cash is an economic benefit that they're referring to. Possibility of inflow means possibility of you getting, the company getting cash. Why can't we mark C? So due to contingent asset, no, there will not be any outflow. That is the reason. Only on contingent liabilities, there will be outflow. On contingent asset, there will be inflow. So you can't mark this. Okay, you have to mark only this, alpha only. Manageable. Is that okay? Samastha, I think it was. Okay. Sir, if an inflow of economic benefits is probable, alright, so stop there only. Concentrate on this word probable. If the inflow of the economic benefits is probable, then contingent asset is disclosed. Yeah, they're talking about inflow of benefits. If it is probable, will you disclose contingent asset? Yes. Okay, and where do you disclose this contingent asset? That's what they're asking. In fact, they're not talking about all this. They're saying, where will you disclose? Sir, provision is for outflow. Okay, provision is for outflow. Check. Is there an outflow here or inflow? There is inflow here talking about. Okay, just check that word. Okay, both inflow, probable can be used anywhere. First, you need to check whether it is an inflow or outflow. If it is outflow, two possibilities. Provision, contingent liability. If it is inflow, then contingent asset. Okay. Check. Where do you disclose contingent asset? They're asking. Where do you disclose? Will you disclose in financial statements or notes to accounts? No, you will disclose it in the report of an approving authority, like a board of directors report. So which option has that? This option. So B as in Bengaluru is the right option, or beta is the right option there. Okay. In case of dash, either outflow of resources to settle the obligation is not probable, or the amount expected to settle the obligation cannot be measured with sufficient reliability. Sir, they're talking about outflow. Outflow means only two possibilities. What are those? Contingent liability or provision. Provision, can you measure? Can you measure provision reliably? Yes. That is the reason you are accounting it, right? Provision can be measured reliably. In fact, we wrote in the definition also, yes. Provision can be measured reliably. That is the reason we are recognizing it. But contingent liability, we cannot measure reliability. So what is the right option here? They've given outflow and they've given three things. Liability, provision, contingent liability. So C as in Chennai is the right answer. Okay. Next, present liability of an uncertain amount which can be measured reliably by using substantial degree of estimation. Which one can you measure reliably, sir? Contingent liability, provision, which one? They're talking about liability, so it has to be liability or provision or contingent liability. Which among these two? The provision can be measured reliably. Yes. So A as in alpha is the right answer here. Awesome. In financial statements, contingent liability. Do you recognize contingent liability? No. Do you adjust contingent liability? Nothing. You only contingent liability is not recognized, but it is only disclosed. Yes. You only disclose in notes to accounts. We don't. So recognize. So B as in Bengaluru, right option. Yes. So next, true or false question. A contingent liability need not be disclosed in financial statements. They're saying we need not show contingent liability in financial statements. True or false? Contingent liability has to be disclosed in financial statements. Yes, no, that's what we discussed. So this is false because we need to disclose it. That is one. Second, a provision fails to meet recognition criteria. Do you recognize provision fails or it meets recognition criteria? Provision meets recognition criteria. That's the reason we recognize it. No, we account it. So they are saying it fails. So that means the answer is false. It actually meets the recognition criteria. So that is also false. Third one, a claim that an enterprise is pursuing. This is the keyword. A claim that enterprise is pursuing means what, sir? Which entity they are talking about? In this example I gave you, which entity is pursuing the claim here? A Limited or B Limited? In this example, which entity is pursuing, meaning which entity has put the case is what they're asking. A Limited has put the case, yes. So A Limited is pursuing. That means for A Limited, is it inflow or outflow? For A Limited, if they are pursuing the case, is it inflow or outflow, sir? It is inflow. Okay? Okay, keep that understanding, right? And then read the further question. A Limited is pursuing a claim that an enterprise is pursuing through legal process where the outcome is uncertain. Is what? What do you call that is what they're asking. You call that as they're saying when the outcome is uncertain is a contingent liability. They're saying this is contingent liability. Is it contingent liability or is it contingent asset? Sir, company is pursuing the claim. They have filed the case against somebody. That means if they win, they will get money, no? Yes? So this is false. Which the company is pursuing, that we call it as contingent asset. So it's not contingent liability, it's a contingent asset. Repeat or okay? Repeat or okay? Okay, no? Yes, okay. When it is probable that a firm will need to pay off the obligation. When it is probable, they use the word probable, the firm will need to pay. Pay means inflow or outflow, sir? Pay means inflow or outflow? Outflow. And they're saying that outflow is probable. If outflow is probable, what you need to do? You need to recognize provision. They're saying check here. They're saying this gives rise to contingent liability. If it is probable obligation, does it give rise to contingent liability or it gives rise to provision? It gives rise to provision, but they're saying it's contingent liability. That means the statement they're making is false. Actually, it gives rise to provision. That's all. Okay, so with this particular unit is also done for. Thank you. Hello guys. Okay, we'll get started with the next topic, which is accounting policies. Okay, accounting policies and few other things I've just combined. So let's study them. We already discussed this, so we're just taking it up a little further. First, the meaning of the term accounting policies. As we discussed yesterday, accounting policy means, see, certain components of in your accounts, right? Yes, there are multiple ways to find out its value. Like we discussed yesterday, inventory can be valued either using first in, first out, FIFO method, or you can use weighted average method. This is what we discussed yesterday. Yes. Does it mean organization can follow both of them? Can organization follow both the methods? These are some methods to find out certain value of certain components. Okay, these are the acceptable methods. Can they follow both? No. Among these two, we have to select one. We have to choose one. That chosen one becomes an accounting policy. Okay, that's all as an accounting policy. It's basically to find out the value of certain components. No, you have various choices. Like you had various choices now. You could have joined any other academy, but you joined us. That's a choice you made. Correct? No, that is an accounting policy. Yeah, we could really that. Okay. So just find out certain components. Multiple choices are available, but among those choices, choose one and stick to it. That chosen one becomes accounting policies. So basically, accounting policies are the principles and methods of applying those principles adopted by the company to prepare financial statements. To prepare financial statements like P&L, balance sheet, etc., etc., a choice has to be made by the company to find out the components. That choice we call it as accounting policies. Is the meaning okay, sir? Okay. Basically, in multiple methods, you are making a choice. That's it. Like you had a choice, no? After 10th standard, I think you had a choice whether to go for science or you go for commerce. Majority of you obviously are here, so you have chosen commerce, I think. Yes. So that's like that. Even accounting companies also have a choice to find out certain components. Either they can go one way or another way. There are many choices like this. I will not discuss all with you. You will learn slowly all of them as you graduate further. There are many. Okay, somebody is saying, sir, we cannot change it forever. Hang on, ma. You are in the third step. You are like a tube light. Tuck, you asked. I'm like, no, you are like a bulb, but I'm like tube light. Jag, I come. Okay, you are 2-3 steps ahead of me. I'll come to that. Yeah, hang on. Your doubt will be answered. Okay, so there are various accounting policies that a company can follow. Like inventory can be valued using FIFO method or weighted average method. Next question is, sir, how do you select the method? On what grounds do you select which? How do you choose a particular method? Standard does not give you a concrete answer for that. All right, all this. What guidance is given is, okay, you are free to choose what you want. Okay, but select your accounting policies based on 3 things they are telling. Based on prudence. Prudence is nothing but conservatism. Yesterday we discussed conservatism, remember? Yeah, what is conservatism? What is conservatism? You guys revised, right? If you revised, you should be able to tell me. Somebody is saying PSM, sir. Okay, PSM, we'll write. Okay, PSM, done, Dhanush. But what is the meaning of conservatism? Conservatism means, what does conservatism concept say? Expect future losses and account it, but future gain you don't account. Yes, so that's another name is prudence. So based on that, you record is what they're saying. Next, substance over legal form. That I'll explain you. Third one is materiality. This also we discussed yesterday only. Material means you don't have to show all the components in your balance sheet, in your P&L as such, or separately. Right? Only show material items, meaning significant items. That is good enough. These two we have already discussed in yesterday's session only. Prudence and materiality. Yes, some negligible amounts not required to be shown. Like if you purchase 100 calculators, you need not show 100 calculators separately. You can club them and expense it off because it is immaterial. It's not that important for taking the decisions relating to the financial statements. Hence, substance over form. Okay. So let's spend maybe 5 minutes based on to understand this. What is the substance over form wala concept? Pay 2 minutes attention to this. See if you can get this. Sir, A Limited, no? He purchased a plant and machinery. So he is the owner. He purchased a plant and machinery. So he is the owner of that asset. A Limited. But he doesn't want to use this plant and machinery. He may purchase the machinery, but he is not interested in using it. Okay, if you're not interested in using something, what do? Don't say sell. Let's say he leased this plant and machinery to B Limited. A Limited told B Limited, I own this machinery, but if you B Limited told, I want it. I want to take it on badige lease. Okay, rent it out. Yes, you could say rent. So A Limited rented this plant and machinery to B Limited. Okay, for a period of 10 years. The rental agreement was a period of 10 years. Okay, let's say lease rental. See, if B Limited has taken it on rent, means some amount B Limited has to pay to A Limited, correct? As rental charges. Let's say lease rental is 1 lakh rupees every year. 1 lakh rupees per annum. Every 12 months for the whole year, 1 lakh rupees B Limited has to pay A Limited. Is this scenario okay for you so far? No confusion, right? Yes, okay. Sir, let us say the useful life of the asset. This plant and machinery is there, no? According to market trends, you can use this plant and machinery for 10 years. At best, you can use it for 10 years. After that, it will become outdated, worthless. Alright. Now, first question to you. Sir, who is the owner of the asset? First question to you, who is the owner of the asset? A Limited, correct? Because he purchased the asset. That means who should show? Asset means this plant and machinery means it's a capital expenditure, correct? No, because you're going to get the benefit for more than 1 year. Just now we discussed that and came. Yes, capital expenditure gives you benefit for more than 1 year. Hence, you show it where? In P&L or you show capital expenditure in balance sheet? You show capital expenditure in balance sheet. Yes. So far, okay? Correct? Okay. So ideally, since A Limited is the owner of the asset, what will your mind say? Sir, A Limited is the owner of the asset. That means A Limited should show this plant and machinery A Limited should show this plant and machinery as an asset in balance sheet. That's what your mind is telling. Agreed? Yes. For A Limited, it's an asset, so you have to show this in their balance sheet. Fine, no problem. But just think about one thing here. Like one rational element you bring in here. Sir, this machinery can be used for maximum term for how many years? For how many years can anybody use this machinery for? Maximum utilization of the machinery is for 10 years. Now you tell me, for all this 10 years, who will use the asset? For all the life of the machinery, for its entire life, who is going to use this machinery? B Limited. Correct? Because he has taken it on rent for 10 years. That means who will get all the benefits related to this asset? By using this asset, who will get all the benefits? B Limited. Now rationally you think A Limited should show the asset, B Limited should show this asset. Now you think rationally, logically, who should show that asset now? Asset means you should be able to get some benefit out of it. But here B Limited is using the asset and he is getting all the benefits. Yes or no? That means applying this, B Limited should be show this asset in his balance sheet, correct? No? This plant and machinery, B Limited should show as an asset in his balance sheet. Agreed? So far okay? Does this make sense? Did you guys get this? This concept we call it as substance over legal form. Meaning you just not have to just only look at the legality. Legality means on paper who's the owner. As per the records, who's the owner? As per the records, A Limited is the owner. But in reality, who is using the asset and getting the benefits? But in reality, who is using the assets and getting the benefit? B Limited. That is substance over legal form wala accounting. Okay. Legally, what it may be saying something, but you not only have to look at the legality, but you also have to look at the reality. Reality is more important than the legality. That is the substance over legal form ka concept. Did you get this? Okay. So this principle, why I took this example is, you'll study something known as Accounting Standard 19 leases. Ind AS 116 leases. This one in CA Inter, Ind AS 116 and CA Final. The entire component of this, right, this standard runs on substance over legal form wala accounting. Actually, I could have skipped this and told you next level, because this is at your level, this is not much important. Okay, but it is good to understand a little bit of basics. Manageable. Fair enough. So as per this concept, B Limited will show the asset. A Limited will not show the asset. Okay, this is substance over legal form ka accounting. A Limited may be the owner of the asset on paper, but in reality, B Limited is using and getting all the benefits. So the standard says let B Limited only show it as an asset. You will learn the accounting and all this in your CA Inter paper in AS 19. Okay. So, but did you get the meaning of the term substance over form? That much if you understand, that is okay. Substance over legal form means reality is more important than the legality. You can think of it like that. Okay, just don't go blindly do the accounting based only on what is there in the record. Also look at the substance or the reality of the transaction. Okay. Somebody is saying, I think, Pratul, sir, what happened? After 10 years, who will be the owner of the asset? Sir, after 10 years, asset only will not be there. No? It will become scrapped. Okay. See, when the asset is there, you will worry. Who should show? A Limited or B Limited? After 10 years, you will scrap the asset. No, it will become raddida. Yeah. Like in your house, if you remember, if you have a typewriter and all, no, what will you do with that? Is there any benefit? No benefit. Just scrap it off. So after 10 years, nobody will own it. It will be nullified. That's all it is. B Limited will show this as an asset now. Okay, how will A Limited record and all? Actually, like now that you'll learn in AS 19, actually A Limited should record this as a receivable. Okay. But don't worry about the accounting, not required at your stage. Fair enough. Basically, B Limited will, in a nutshell, if I have to tell, B Limited will show this as an asset, A meaning fixed asset, okay, and A Limited will show this as a receivable. Accounting entire thing, like not required. You have the whole standard, one whole year to go. There you'll aram se learn. What is the hurry? Okay, na fine. All right. But substance over legal form, that much have you got? No, that concept did you get it? That is the intention here of putting up this example. That much if you have got it, that's okay at this level. Got it. Okay. Any other doubts? Scrapped by who? Okay. Sir, legally A Limited is the owner, no? Yes. Scrapping also should be done by A Limited only. See, after 10 years, majority of the asset, no sir. You will put in Raddi only. Its value may be like, like what, 1 kg, 10 rupees. yeah, 100 rupees, like this you will get. You may not recover much. Okay, so don't have to worry about scrap value, sir. The value will be very limited. A Limited will get the scrap value if your question is that. Okay. A Limited will scrap it and he will get any scrap value or Raddi value. Done now. Anything else? Any more questions or tak munduku hogana? Artha concept paklama. Okay. Done. Sir, somebody asked the question. Sir, can we never change accounting policy? Nothing like that. See, accounting policy, you have to follow it consistently year after year. Otherwise, financial statements will become incomparable. But does not mean that you can never change it. They have given certain conditions. Okay, this condition is given in Accounting Standard 1 as well as in Accounting Standard 5. You'll learn again this in CA Inter. As I told you yesterday, just for your reference, I keep quoting AS and numbers and all. Don't have to worry. So nothing is going in and all this stuff. These are just for your extra reference. Maybe when you come to CA Inter level, you'll be able to correlate, sir, you told this. Okay, that's all it is. Just for that sake, I mention the numbers. That's it. Don't have to remember any of these numbers, not required. Got it? Just extra in shorts, I'm giving it to you for reference. That's all. Okay. So what it says is, you can change accounting policies under 3 circumstances. Under 3 circumstances, you can change accounting policies. 1, when it is required by law. 2, when it is required by accounting standards. 3, for better presentation. Under these 3 circumstances, you can shift from accounting policies. You can change accounting policies. Or what do I mean by that? Let us say one company is there. Let's say W Limited. They are using FIFO method. In 1 minute. Okay. A Limited, no? They are doing the inventory valuations. Or what is AS? AS is accounting standard, sir. That is the next topic only. Hang on. Alright, I'll come to that. Maybe you missed out yesterday. Alright, be regular to the class, sir. Okay, W Limited, inventory is there. To value the inventory, W Limited is following FIFO method. First in, first out method. That method they have chosen. Okay. Let us say Modi government, Narendra Modi ji government told, FIFO method is banned in India going forward. FIFO method is banned. Now you tell me, what should W Limited do? Can they still follow FIFO method? No. That means they need to move from FIFO method to another method, which is weighted average cost method. Correct? No. So this is the first requirement required by the law. If the law of the country says you cannot follow it, then if you are following it, then you have to move over to something else. So that is that. Fair enough. That's the first component. Right? Next, let us say accounting standard told. What is accounting standard? We'll study in the next thing. Accounting standard told FIFO method is banned. You cannot follow. Alright. Then what do? You again shift over from FIFO to weighted average cost method. That is the second justification. Or third justification is for better presentation. If management feels, listen to this, if management, the company ka management, if they feel by shifting from FIFO method to weighted average cost method, okay, it will lead to preparing financial statements in a much better way. If you change the method, if management feels that will lead to presentation of financial statements in a much better way, then you can change. Did you guys get this? Is it okay, all the 3? Fair enough? So basically, this is the leeway. Okay, first one is a requirement of law. Second one is a requirement of accounting standards. Third one is for better presentation. This is the judgment call. If management feels by shifting over, like it will lead to a better presentation, they can do it so. Okay, these are the 3 methods. Sir, if 2 companies follow different methods, how is comparison possible? So generally, see, line by line comparison you cannot follow, Jamila. There will be many components. Line by line, you cannot impose restriction of the company. Is it okay? That is difficult. Alright. So these are accounting policies, means it's a choice. So companies are free to follow it. That way you can't restrict on those lines. Fair enough? Yes. So line by line comparison, no 2 companies you can compare. You always do a comparison from a holistic point of view. Okay, the comparison means not saying, okay, this is 1 rupee here, that is 1.5 rupees. Not like that. Comparison is always done at an overview level. You can't just lay line by line item. That way, if you go, no, you can always say that managing director of that company is getting 1 crore. Why is this director getting 2 crore? Comparison means everything will be questioned then, correct? No. So that is not the intention. Comparison is always a holistic overview, overall comparison. Okay, like this you can't go. Sir, who decides accounting standards? Hang on, accounting standards I will tell you in the next topic. Okay, why not LIFO is what Pratul's question was. Sir, LIFO method is illogical, hence it is banned by accounting standard 2. AS2 deals with inventory valuation. LIFO method is specifically banned as per accounting standards. You cannot follow it in India. Okay, fair enough. So LIFO is last in, first out. LIFO means last in, first out. Now, FIFO means first in, first out. Since you are asked this question, maybe I'll spend 2 minutes and tell you. I am a tomato dealer. Tomato. Tomato. Yeah. Sir, I purchased 100 kgs of tomato on 1st April 2020. I buy and sell tomato, that is my business. On 1st April, I bought 100 kgs of tomato. On 10th April, I bought another 50 kgs of tomato. Now you tell me, this is lot number 1, this is lot number 2. Which lot ka tomato I would like to sell it first? Logically, you tell me, I'm a tomato dealer. Which lot ka tomato I would like to sell to the customer first? Lot 1 na, lot 2 na? First, I would like to empty which one? Lot 1 or lot 2? Obviously, lot 1. Yes or no? Correct? Yes. Can I say, no, first I will sell lot 2, then I will sell lot 1. Can I do that? That will be irrational. Correct or no? So, FIFO method says this, or rather, LIFO method says this. LIFO method says last in, first out. Which came last, sir? Among these two, which came last? Lot 1 came on 1st April, lot 2 came on 10th April. That means lot 2 is the latest lot. LIFO method says you sell that first. Do you think it's rational? Do you think that is rational? It will work out for everything? No. Hence, LIFO method will not make sense for majority of the things. So, hence it is specifically banned. Okay? Fair enough. Even if it is not perishable also, this doesn't make sense. Whether perishable or not, every dealer would like to sell the earlier purchased lot first, then the other one. So, hence this method is little illogical, hence it is banned, sir. Did I answer your question now, sir? Is that okay? Hence, AS2 has specifically banned the last in, first out, LIFO method. All this we will work it out, you don't have to worry. We have inventory valuation as a separate topic also. We are just getting started with the party, that's it. Basics only we are still discussing. Till the next 2-3 days, we will only be discussing basics. Then only we will touch upon the extra topics. Are we okay? Fair enough. So hence, this is the point. Okay, that's for another discussion. That is not before LIFO and let's not discuss. That is not the point here. Okay, but the point here, did you get it? It's not that once you choose a particular accounting policy, throughout you should follow. Not like that. Fair enough. As much as possible, try to maintain consistency. If you want to change accounting policy, on 3 grounds it is possible. 1, it is required by law of a country. Law could be anything. Okay, Companies Act or Income Tax Act or whatever. Alright, law. Second one, it is a requirement of accounting standards. If accounting standard says you have to move over, you have to compulsorily move. Third one, for better presentation of financial statements. If management feels by shifting to the accounting policies, that will lead to a better presentation or better preparation of financial statements, they can do it so. That's all is a funda. Yes, everyone is okay. About accounting policies, is things okay, sir? Yes, sir. Okay, sir. Let's see how much you understood. Let's take up a particular question. So, a change in accounting policy is justified to comply with accounting standards and law, to ensure appropriate presentation of financial statements, or all of the above, which is the right answer. When can you justify or when can you change an accounting policy? Law, accounting standard, better presentation. Any of the 3 is okay. That means option is all the above, right? Under any of the circumstances, you can justify. So, C as in Chennai is the right option. Everyone got this? Done. Next, accounting policy for inventories of Zeta Enterprise, I think it is, states the inventories are valued at lower of cost determined on weighted average basis or net realizable value. There is one company, they are valuing the inventory at cost or net realizable value, whichever is lower. They're finding the cost, they're finding out net realizable value, whichever is lower, they're valuing the closing stock at that particular value. Which accounting principle has the company adopted? Which concept says this? Cost or net realizable value, whichever is lower. Which concept? We discussed this already yesterday. Which concept tells this? Conservatism. Conservatism is also known as prudence. So B as in Bangalore is the right option here. It's the same as yesterday's session. Correct? No? We took the same example and I told you that. Okay. The areas where different accounting policies are adopted. For what and all, you can follow different accounting policies. Valuation of inventory you can follow because there are multiple methods, FIFO, weighted average, etc. So you can choose one. So you can have an accounting policy for inventory. Providing depreciation or C, both option. Answer is anyway given over there. So what do you think answer is? C as in Chennai, correct? Yes, Chennai. But actually this is wrong. Answer should be only B. But in your examination, let me listen to this very carefully. In your examination, you will select the option C, Chennai, if this question comes. Because the answer given here in study material. Answer in study material is wrong. That I'm 100% sure. Alright. In examination, you will select this only. Okay. But logically, this is very wrong. Because accounting standard 10 is there. Clearly mentions. And Ind AS 16 is also there in CA final. Which clearly says change in a depreciation method. Depreciation method, you must have studied, no? Straight line method, WDV method. They are not accounting policies. They are accounting estimates. We will study what is accounting estimates in a bit. These are not accounting policies. These are accounting estimates. Actually, the right answer should be only B. This is not an accounting policy. Okay? But our study material, somehow they have missed out. In IPCC, they have written it properly. If you just check CA Interca study material, clearly they have written depreciation method is not an accounting policy. It's an accounting estimate. But somehow they missed out to update it here. Alright. So for the sake of marks, I think we cannot overwrite. So we have to select this only. Did you get that? Will that be okay? In examination, you will select this only. Fair enough, huh? This I can't. Sorry guys. This is not a mistake from my end. This is written in your ICI study material and I don't have the overriding authority. Your questions will be marked based on study material answers. So if you select B, you might lose marks. That's the reason I'm just telling you. Okay, but actually right answer should be B as in Bengaluru. That we can't help it. Till the study material they change it, I have no authority, so I have to stick to that. I hope everyone is clear on this particular portion. Manageable, no? Okay, na Saru? Saru is like, I'm getting into the zone, sir. Finish soon. Yes, sir. Okay, sir. Slowly we are going into Buddha zone. Yeah, no. How much drilling you do, sir? Finish it soon. Correct. Okay. Selection of an inappropriate accounting policy. If you select inappropriate accounting policy, then what will happen is what they're asking. It will overstate the performance. It will understate the performance. What will happen, sir? If you select incorrect accounting policy, it may overstate or it may understate. You can improve the position or you can decrease the position. Anything could happen. So B as in Bengaluru is the right option there. Okay. Not only overstatement, it also lead to understatement. Overstatement means showing better. Okay. Like you get 20 marks, but you tell your friends I got 70 marks. That is overstatement. Alright. Understatement means you got 99. Alright. You're saying to all your friends I got only 90 macha. Okay. That is understatement. That's all it is. Okay. So using inappropriate accounting policies, either it could lead to overstatement or it could also lead to an understatement. Both are possible. Next, accounting policies refers to what? They refers to principle and method of applying the principles in preparing financial statements. So both are the right options here. Accounting policies both are principle, meaning their rules and how to apply the rules. Both accounting policies talks about. So C as in Chennai is the right option for this one. Okay. Alright, true or false question. There is a single list of accounting policies which are applicable to all enterprises. Is it true, or sir? There is one accounting policies which every company can follow. Is there like that? Or you still have many choices? Is there a single blanket thing which is applicable for every company, or every company is free to choose? They are free to choose. One company may go for weighted average method. Another company can go for inventory method. Like this, many choices are there. So this statement is false. There is no single accounting policies. There are multiple ones. Among them, you need to choose. Okay. All right. Next, selection of accounting policy does not impact financial performance and financial position of a business. No matter which you choose, it will not affect financial statement is what they are telling. Is it correct? Whatever accounting policies you follow, financial position will be same. It has no impact is what they are telling. Is that statement right? No. Based on your accounting policies, your financial statements will obviously have or get impacted. Because I told you yesterday, remember? If you follow weighted average method, you will get one value as inventory. If you follow FIFO method, you will get another value of inventory. So different methods will give you different answers. So it will affect financial position, meaning financial statement. So this statement again is wrong, meaning incorrect. It's false. A change in accounting policy should be made as and when the business likes to show a result as per their choice. If they want to show good result, they will follow one accounting policy. If they want to show bad result, they can follow one accounting policy. That is the statement they are making. Is it right? No. Based on that, you can't change. You can change accounting policy only under three circumstances. Law, accounting standard, better presentation. Based on management whims and fancies and all, you cannot do that. Okay. So that statement is again false. Choosing FIFO or weighted average method for inventory valuation is an accounting policy choice. Is it true or wrong? If you choose one among FIFO method, one or weighted average method, is it an accounting policy? Very much yes. So this statement is true. Selection of inappropriate accounting policy decision will overstate the performance of financial position every time. They're saying if you select inappropriate accounting policies, financial statements will be overstated every time. In every time it will be overstated. No, it could be overstated or it could be also understated. Anything could happen. So again, this statement is also false. It will not always be overstated. You can also understated, meaning you can show bad position also by selecting inappropriate accounting policies. Fair enough? Okay. So we have done all the questions relating to accounting policies. So we'll just take up a little extra questions relating to the other thing. Valuation process. Okay, valuation process or valuation principle. So what is this now? Okay, let me give you a small example. Sir, currency. Does it have a universal denomination? You don't look at the chart, just listen to what I'm saying. Currency, like Gandhi note, Indian rupees, Gandhi note. Does it have a universal denomination? Meaning, can I take Gandhi note to US? I have 500 rupees Gandhi note. Can I spend that 500 rupees Gandhi note in McDonald's of US? Can I go to shopping mall in US and spend that 500 rupees Gandhi note? Or can I bring dollars here and go to Bangalore ka Chickpet or national market and say, hey, take dollar macha? What will people say? Hey, you give, in India they will say, give Gandhi note down. In US they will say, give me dollars. Yes or no? This is what happens. So currency or money does not have universal denomination. Okay, one money you cannot use it everywhere in the universe there. Whichever country you are in, that country ka currency you need to operate in. So that's what they say mean by ruling currency. Okay, ruling currency is used for preparing financial statements. Like what are we talking about is, let us say, now let's take the same example here. Now I'm providing coaching to you, CA coaching. And you are giving me Gandhi notes, rupees, correct? No, I'm collecting fees in Indian rupees. Suppose I give ACCA coaching, which I do, couple of papers I handle in ACCA. That is a London-based course, European-based course, yes. Suppose I give ACCA coaching and I collect it in euros. I collect my fees in euros. Can I pass the journal entries or can I pass the accounting entries in pounds now or in euros now? Because I'm collecting the money in euro. Can I pass it? Can I prepare my balance sheet in euro? No. So that is what we are discussing here. Alright. So for preparing financial statements, you should use ruling country ka currency. Since I am in India, yes. So I have to prepare my financial statements in Indian rupees. So if I am doing any transaction in any currency other than Indian rupees, suppose I'm transacting in US dollars or euro, pounds or Japanese yen, whatever. From that currency, I need to convert it into Indian rupees and then do the accounting. So how do we convert? AS 11, Ind AS 21. Okay? Yes, that talks about it. Accounting Standard 11 will talk about it. You will learn it in CA Inter, not required. Is it okay? But did you get the meaning of this? Comfortable? Huh? So you always prepare financial statements in the country in which you are operating. That ruling country ka currency you use and you prepare your financial statements. So in India, basically you prepare financial statements in Indian rupees. Probably in USA, you prepare it in dollars. In European countries, you will prepare it in euro and so on and so forth. Fair enough, sir. Universal denomination means Pratul value. Value. Like we don't have, no, earlier, like, if you just, like gold is a universal, you can say, correct, no? Wherever you go, gold is same. Yes. But currency is not the same. Like, can I say 100 rupees is equal to $100, sir? Can I say 100 rupees is equal to $100? Is equal to 100 euros? Is equal to 100 yen? Is equal to 100 pounds? Can I equate like this? Is all the country ka currency same? No. That's what we mean by no, the money does not have universal denomination. Meaning each country ka currency is not same. Though we say world economy, we use that term. Now the world is one economy, we say. World may be one economy because you might be dealing with other people, other countries also. But currency are different. In India, we use Indian rupees only. In US, they use US dollars only. That's what we mean by denomination, sir. Is it okay? Comfortable? Huh? Fair enough? Denomination means valuing it. That's all. Cryptocurrency, there's a whole lot of things, sir. We'll have to see. They will come up with a guidance note for that. Right now, we don't have the accounting related to, you could say probably related to cryptocurrency. There are about something known as financial instruments. In CA Final, you will learn. Okay, there is a topic, a big ticket topic. Okay, that could be in a way applied for crypto. But we need to have still a little more clarity for that. Cryptocurrency and all. For right now, we have not got into it. Okay, we'll have to wait. There is some time for that. We will get it. Maybe by the time you come to CA Final level, it would have come and stuff. For the time being, it's still dilly-dallying. Let's wait up. Is that okay? Fair enough. So this you have got it now. Alright, that's what the point here is. You don't have one currency which can be used across the countries. Since many countries have different currencies, you prepare the financial statements in the country in which you are operating. If I'm operating in India, I'll prepare financial statements like P&L balance sheet in Indian rupees only. Done. That is the first thing. Second is valuation principles. Now, how about valuation principles? There are 4 valuation principles. One is historical cost. Another one is current cost. Third one, realizable value. Fourth one is present value. These are 4 valuation principles. Like, you show some assets and liability in balance sheet. Correct, no, sir? In balance sheet. Balance sheet is nothing but a statement which gives you financial position. How much you own versus how much you owe. How much assets you own versus how much liability you have. That's all balance sheet gives you. Correct? This assets and liabilities, how do you measure them? To show, or how do you find out the value of these assets and liability? For that, either you can apply historical cost. What do you mean by historical cost? Historical cost means or let's do a thing. Let's learn it with the help of number only. Better it will be. I'll show you a number. Hang on. We will learn this. This one question is there. We understand that with the help of thing. We discuss 4 valuation principles now. That is historical cost. Okay. Another one is current value, realizable value. Fine. And the last one is present value. These are the 4 things we discussed. So let's understand that with the help of numerical only. Maybe it will be better. Okay. This numerical question I've taken. Okay. In chapter number 7, I've taken multiple choice question number 2. That is there here. And if you're looking for it in the book, you can just look for it there. M. Mohan purchased a machinery for 10 lakh rupees. So he paid 10 lakh rupees. This is what we call it as historical cost. Meaning acquisition cost. Whatever price you pay to buy the asset. Whatever price you pay to purchase the asset. That price we call it as historical cost, or also known as acquisition cost, is the first terminology okay for you. Whatever price you pay. Suppose you buy the asset for purchase a plant and machinery for 5 lakh. Then 5 lakh is your historical cost. Also known as acquisition cost. Is that okay, sir? First component fine now. Can I go with the second one? Second one we discussed is what? Current cost. Current cost means, sir, can I use this asset throughout? I purchased this machinery. Can I use it throughout? For the next 30, 40, 50 years, I can go on using this machinery. Or at some point of time, I need to replace this asset. Can I use the asset forever and ever and ever, or I need to replace it at some point of time? I need to replace it. Yes or no? Correct? Because after some point of time, it will get outdated. You will also get bored, right? The phone. Yes. How often do you change your phone? 1 or 2 years you keep replacing. Yes, no? Yes. So it has become slow. Yeah, it has become out of fashion. We give whatever reasons and we change. Yes, correct. Like that only. Every asset also, no, at some point of time, it will become outdated. It will wear out. Maybe usage, it will get worn out, or due to technology, it may get worn out due to whatever reasons. At some point of time, you need to replace them. Current cost says, if you have to replace this asset, how much will it cost? That is nothing but current cost. Understood? Once again, I'll tell you, if you have to replace the asset, meaning if you have to buy a new machinery currently, okay, or if you have to replace it, how much will it cost now? That is your current cost. Check here. On 31st March 2019, similar machinery could be purchased for a 20 lakh rupees. If you want to replace this machinery with a similar machinery, how much will it cost? They're saying it is 20 lakh. So what is this 20 lakh now? It is the current cost. Current cost means to replace this with identical machinery, how much will it cost? That is your current cost. Is that number okay? Fair enough. Alright. Next is realizable value. That is the third valuation principle we talked about. Historical cost, current cost, realizable value. What realizable value says is, see, after some point of time, you may want to sell the asset also. Possible. Correct? So if you sell the asset, how much value can you get? How much will you realize out of it? Meaning, how much will you get by selling it? That is realizable value. They told you the problem clearly. Realizable value is 15 lakh. So 15 lakh is a realizable value. Is that okay? Fine. Last principle is present value. So what present value means is, check. Sir, here, I'll take a small example here maybe, or I'll come back to here only and write. I'm discussing present value here, okay? Sir, I purchased this camera, alright, to conduct my classes. I am estimating, I am thinking, I will use this camera for 3 years and I will get 30,000 rupees benefit. I will get 30,000 benefit at the end of year 3. After using it for 3 years, or I'll just say like, okay, I'll leave that. I'll just say I'll get 30,000 benefit. Okay. For 3 years put together, I'm going to get 30 years benefit. Okay. So far. Correct. Now, can I show this camera at 30,000 value, sir? Because camera is an asset, correct? No. All assets you show it in balance sheet because it's a capital expenditure. Remember we discussed. By spending the money, you're going to get benefit for more than 1 year. So it is a capital expenditure. So you have to show it in balance sheet. Fine. I spent maybe, let's say 10,000 rupees to purchase this camera. Leave that. I'm expecting that I will get 30,000 benefit. Can I show this camera at 30,000 rupees? Or is this 30,000? Okay, what is this 30,000? Is it the benefit? It is, is this a future benefit? Let me ask you a simple question. Is this 30,000 rupees a future value? Is this 30,000 rupees benefit? It's a present value, or it's a current value, or it's a future value, sir? It's a future value. Why? Because you're going to get the benefit now, or you're going to get the benefit for over a period of 3 years, sir. Over a period of 3 years, you're going to get 30,000 benefits. Yes. That means this is a future value. If you want to adopt, you can show the camera at present value. Present value simply means, so this 30,000 rupees is the benefit you're getting, but that is the future value. Find out the present value of that. Let's say that comes to 20,000. You can show the asset at 20,000. This you must have done it in your mathematics. Present value and future value calculation. Was it there in your mathematics? Okay. Yes. You have done, or some of you have not done. Simply if you want, I can give you an example here. So today you deposit. You have 20,000 rupees. Yeah, time value of money. Perfect. 20,000 rupees cash you have with you today. You took that money and you made a fixed deposit with State Bank of India. Today, now you have 20,000 with you. You took that money to State Bank of India and told them, I want to make a fixed deposit. They asked you for how many years? You told, okay, 1 year I want to invest. Fine. Is it okay? They told, okay, fine, we will do 1 year fixed deposit. I will give you interest of 10%. That means, can you tell me at the end of year 1, how much will be its value? How much will State Bank of India give you? You gave 20,000 to State Bank of India now and made a fixed deposit out of it. Alright, State Bank of India told, I will give you an interest of 10%. That means at the end of year 1, what will be its value? On this 20,000, State Bank of India will give you an interest of 10%. Yes, no? 20,000 ka 10% is how much? 2,000 rupees. That means at the end of year 1, the value will become 22,000. Clear? Is that okay? Fine. This 22,000 is the future value because it is the value at the end of year 1. But this 20,000 is the present value because it is today's worth. Today's value we call it as present value. After some point of time, if you're finding the value, that we call it as future value. This you must have done it in your maths, correct? No? To find out the present value, we simply take future value into 1 divided by 1 plus I whole power n. Or instead of I, maybe you used R. I don't know in mathematics what you used. Or maybe you would have written future value is equal to present value into 1 plus I whole power n. Maybe I or R, whatever they could have used. Yes, this is a simple funda. It's a reverse backward calculation, that's all. Okay, same calculation. This is a formula. Fair enough, formula we're not getting into it. We'll not be using it in accounts. This is more like mathematics for you. We'll use this in your CA Inter and CA Final, not now. Okay, this funda. But did you get the meaning of it? Calculation I'm not much interested in. Leave that. We'll see it later. Meaning, is it okay now? Today's value we call it as present value. Any other value other than that we call it as a future value. You can find out the future value at the end of year 1, year 2, year 3, anything like that. Okay. So here coming back to this illustration, they have told the present discounted value of future cash flows of the machinery is expected to generate normal course was calculated to be 12 lakh rupees. Can you tell me what is this 12 lakhs? The present discounted value of future cash flows that machinery was expected to generate in the normal course of business was calculated to be 12 lakh. They're saying, what do you mean by 12 lakh? What are they asking? What is that 12 lakh basically? 12 lakh is nothing but the present value, correct? No. Future value ka discounting they did and found out something known as the present value. They only calculated. Calculation, don't worry, they will not ask you at this point of time. CA Foundation, it's fine. Okay, in accounts paper, I mean mathematics, I don't know. You check with maths faculty how the questions come in. That I am not sure. I am not checked. Done now? Alright. Now we discussed few things. First, they are asking current cost. What is the current cost, sir, in this problem? Current cost is obviously, we already checked this question. Current cost means what? To replace identical machinery, how much will it cost? In this problem, clearly they told to replace the identical machinery, it will cost 20 lakh rupees. So 20 lakh rupees is the current cost. It is basically replacement cost of identical machinery or identical asset, you can think. Present value of the machinery, they themselves told. Present value of the machinery is 12 lakh rupees they have only given. Done. Historical cost of the machinery. What is historical cost of the machinery? Historical cost of the machinery means the price you paid to buy the asset. How much did you pay to buy the asset, sir? You paid 10 lakh. So 10 lakh is a historical cost. Realizable value. Realizable value means if you sell the asset, how much money will you get? By selling the asset, how much money they have told? They are saying realizable value they have only given us 15 lakh rupees. They have only given. So realizable value is 15 lakh. So that's what they asked. 4 valuation principles ka value they have asked here. So to measure, is this okay? This question, everybody? Is this a 4-marker? Sir, I don't think so. From one topic, they will ask a 4-marker question. In examination, maybe like, they will just cut it short. Everything is easy, sir. Yeah. In Inter also, see, at CA Foundation, like, is something you need to bother. Alright. At Inter stage, you will learn. If you put in efforts, everything is easy. Okay. It is just a hyped up thing that CA is very difficult. Are we not sitting in front of you? At once, we were also students only, Yes, 10 years ago, even I cleared 10 years back. Before 10 years, even I was a student only, right? Yes. Whatever you studied, even we put in the same effort, we learned it and we cleared it. It is just a case of little extra effort you need to put in case of CA because the syllabus is little voluminous. Okay, as long as you do that daily part, simply do this, sir. Match, that's what I followed as a student. Match the study pace with your teacher's pace. Meaning, if I do this topic today, you will go home and finish this topic today only. No putting it off to tomorrow and all. Whatever a particular teacher does in that particular day, revise that day itself. If you just follow this simple funda, it'll aram se you can clear CA final also easily. It's not really that tough as it is perceived. It's a simple discipline that you require. You need to bring it into studies. Okay, if you have this, all the levels are very, very straightforward. Okay, easily aram se you can score rank also. I myself am a rank holder. Okay, I can say this with confidence. Okay, if you want to get a rank in CA, it's a simple thing. Alright, they award, I think you must be aware, they award only 30 ranks or 50 ranks. That's all at an all India level. Alright, all India or whoever is writing, total level. Simple. Just once you need to prepare, 2 times you need to revise. If you are able to do this properly, conceptually, if you are clear, getting a rank is really not that difficult. Okay, fair enough. So just pay just at least if you're not aiming for a rank, at least just daily practice. So that clearance at the end of the examination, don't keep everything on the last day. Don't treat it like your BCom exams or your +1, +2 examination. CA examination is a professional course. It will have some weightage. Syllabus will be voluminous. So keep the daily preparation. So you can aram manage that. Okay. Alright, that we can take the counseling and all a little later maybe. Yeah, and that we'll not go into that for the time being because we already time up. Alright, so let's do a thing. Okay, let's take up this question. Let's see how well you have understood. Book value of a machinery is 10 lakh rupees. Sir, book value means what? Is it historical cost, current cost, realizable value or present value? What is this? This is HC as in historical cost. Okay. Okay. Market value as on 31st March 2019 is 11 lakh rupees. So what is this 11 lakh rupees, sir? They have given market value if sold. That means if you sell the asset, how much you're going to get. Not only we call it as realizable value, no? RV. If you sell the asset, present value is not selling. Realizable value deals with that. Yes, if you sell the asset, how much price you get, that is realizable value. Correct? So this is realizable value. So 11 lakh is realizable value. As on 31st March 2019, if company values the machinery at 11 lakh rupees, they bought it at 10 lakh rupees, but they're showing the asset at 11 lakh rupees. Which principle is being followed? You can follow any of the 4 principles to value your assets liability. Okay, you can follow historical cost, current cost, present value, realizable value. In fact, there are more standards which talks about which you should use it. But at this level, we'll see anything can be utilized as such. Let's run with that. Here they have shown the asset at 11 lakh rupees. So which valuation principle have they adopted? Historical cost, current cost, realizable value or present value? What is this 11 lakh? 11 lakh rupees is realizable value. That means they have adopted realizable value ka valuation principle and showed this particular component. That's all. What is face value? Okay, the value printed on the share certificate, we call it as face value. We'll be doing company accounts last chapter. There we will discuss that in detail. Shashiraj. Okay. Okay, so this is done. Next, accounting estimates. One small concept is there. Accounting estimates. Now, what do we mean by accounting estimates? Sir, accounting has advantages. At the same time, it has limitations also. Like, you must have calculated depreciation in your +1. Agreed? Those of you who have done. Yes. To calculate depreciation under straight line method, sir, what are the 3 things or what are the things you require, sir? To calculate depreciation under straight line method. Don't worry, others who have not done depreciation, no problem. It is there as a separate topic. Just for the guys who have done it, I'm giving a correlated example. That's it. What do you require? Under straight line method to calculate depreciation, 3 things we require. If you remember, original cost minus salvage value divided by useful life. Yes, no? Correct. These are the 3 things you require. Original cost, salvage value and useful life. Agreed, at least this much. Fine. Okay, let's take an example of useful life. Or others also, just keep it very simple. Let's say I purchased a plant and machinery, sir. I purchased a plant and machinery by paying 10 lakh rupees. I expect to use it for 10 years. Can I call this as an useful life? even the science background students, are you following this? I purchased the asset by paying 10 lakh rupees. Okay. I feel I'm going to use this asset for 10 years. That's my gut feel, or that's my rational thinking. So 10 years is the useful life. Okay. My question to you is, will the company be 100% sure? Or one moment, let me go back. Is this plant and machinery a revenue expenditure, capital expenditure? Let me ask you this first. Science background student, I want you to answer this. How many of you are there? Answer me this. This is the capital expenditure. Agreed? Yes. Capital expenditure means, will it go to 1 year P&L or will you transfer from year 1 to year 10? Will you put this 10 lakh in first year P&L or will you distribute among all the 10 years? If it is capital expenditure means, will you put it in year 1 or will you distribute? You will put it to all the 10 years. Yes, no? That only we call it as depreciation. Okay, you'll have to distribute. That only we call it as depreciation. Done? Okay, this is the meaning of the term depreciation. That's all it is. There are other things also which we'll discuss later. In simple terms, did you understand what it is? Fine now. Everybody okay? Even the non-science background, the non-commerce background students okay? Yes. Okay. My question to you is the company 100% sure about this 10 years? Are they 100% sure they will use the asset only for 10 years? Or it could be lesser or it could be higher also? Is this a sure shot number or is this just an estimated number? That 10 years, is it a 100% sure number or it's just a reasonable estimate? It's a reasonable estimate. Yes, no? Maybe they may use it for 12 years also, or maybe they may use it for 7 years also. Like before Corona, before COVID, most of the organizations were doing well. Correct? They thought they will do bumper business and all that stuff. Yes? They thought they will buy new assets. They will hire new employees. But once COVID came and lockdown was introduced, many businesses shut down permanently. Yes, you must be aware of this. They couldn't survive. Correct? 1 year and things, drastically the value fell. Many businesses were shut down. Correct or no? That's a reality. Correct? Before Corona, they might be thinking we'll buy new assets. We'll use it for 10 years, 5 years. But post-COVID, many things changed. Yes or no? So here in organization also, sir. So all these numbers, right? Every number in accounts is not 100% sure. Some you have to make a reasonable guess. That reasonable guess, we call it as an estimate. As an accounting estimate. Did we get the meaning of this term, accounting estimates? Every component in accounts, whose value you cannot find it out with 100% precision. Some you have to estimate. Reasonable guess you need to make. There's some methods, dictated how to find out that. That's for another day, leave that. That reasonable guess only we call it as accounting estimates. Fine. So basically accounting estimate is a judgment used in finding some of the components of financial statements. To find the value of some of the components in accounts, you have to use some judgments. We have to use some guesses. That only we call it as accounting estimates. That's all is a simple meaning. Fair enough? Okay. Accounting estimates is necessary because many items in financial statements, whose value you cannot find out with 100% precision, like useful life, residual value, these things and all, you cannot find out with 100% surety. You just have to make an intelligent guess. Okay, there are some steps for that. Okay, so that only, hence accounting estimates are necessary. Now you tell me, sir, should the accounting estimate be fixed or it can be flexible? See, accounting policy was rigid, it was fixed. They say you follow it consistently year on year. Like accounting policy, should estimate also be fixed or it can be flexible? It should be flexible, correct? No, logical, because it is an estimate. Estimate is based on a particular scenario. Yes. If scenario changes, you can revise the estimate also. That's what they're saying here. Accounting estimates are based on circumstance. When you're estimating it, you will see what is the scenario. Based on that, you will estimate. If that scenario changes, if that circumstance changes, or if you have any new development, new ideas or new information you got, means accounting estimates can be changed. So that way it is flexible. Residual value, somebody is asking, what is residual value? Residual value means at the end of the useful life, you will scrap the asset, no sir. Like 10th standard books, 10th grade books, you still have it with you or you put it into Raddi. You still have your 10th standard, 8th standard books, or you put it into Raddi? You put it into Raddi, no? Yes. Kabaddi, you put it, right? That Kabaddi value, we call it as salvage value. Okay. Generally, it will be on the lower side, but not necessarily. Yeah? Scrap value also could be higher also. Basically, simply, salvage value means at the end of asset ka useful life, when you sell it, right, what value will you get? It could be Raddi value or it could be big value, doesn't matter. At the end of the life, when you sell the asset, what money you going to get? Raddi dude. Okay, the chindi, scrap value, Pratul. Scrap makes sense to you, right? Yes, okay, yeah, that one. Okay, scrap value, we call it as salvage value. Okay, so that is that. So even residual value, you need to estimate it. That's all it is. Okay, this deals with your valuation principle and accounting policies. All the questions are relating to this only. Chapter number 6 ka, we've already done all the question. Chapter number 7 ka, I think I did all the questions. True or false question, you take it as homework, sir. These are very, very straightforward. Okay, so you take that as homework. Whatever valuation, we discussed valuation principle, right? Let's have a quick recap of valuation principle. What we discussed in valuation principle, or maybe we'll discuss the whole thing. Accounting policy. Accounting policy means what? It's a choice. Accounting, certain the values in accounts, there are multiple methods. You can't follow multiple methods. The company has to choose one method. Okay, a chosen method, we call it as accounting policies. Basically, there are rules used by the organization to prepare financial statements. Or maybe if you want, I can just show you the charts also for reference. Okay. Can you change accounting policies? Yes, under 3 circumstances. 1, requirement of law. 2, requirement of accounting standards. 3, requirement for better presentation. Okay. And how do you choose accounting policies? Based on prudence, that is conservatism, and based on your materiality, based on substance over legal form. You keep these 3 factors and then accordingly choose accounting policies. Next, we discuss valuation principles. Valuation principles means, see, the value of the financial statements. You have to show some components in financial statements, right? That means you have to show them at a particular value, correct? At what value should you show them? Or what value could you show them? That is your valuation principle. There are 4 accepted valuation principles. One is historical cost. That means, historical cost means how much ever price you pay to purchase the asset, show it at that value. That is historical cost or acquisition cost. Second one is current cost, meaning if you have to replace that identical asset, you have to replace one asset with a similar asset, how much will it cost? So that replacement cost, we call it as current cost. Third one, realizable value, meaning if you sell a particular asset, how much money will you get? That is your realizable value. Fourth one is present value. You see, by using a particular asset, you're going to get some benefit. But all the benefits you're going to get in future. Find out its today's value. Find out the today's value of future benefits. That today's value of future benefits, we call it as present value. So any of the 4 valuation principles you can adopt to show the components in financial statements. And we also learned that money as a currency does not have universal denomination, each country. So basically, you prepare financial statements in that country where you are operating. If you are operating in India, if you are registered in India, you prepare financial statements in Indian rupees. If you have registered in London, you prepare it in pounds, like that. Okay. Next, accounting estimates. Accounting estimates means they're basically judgments. See, accounting is not 100% precise. And of some components of accounting or some components of financial statements, you need to estimate. You cannot find out its value with 100% precision. That judgment the judgment, we call it as accounting estimate. Okay. So accounting estimates are generally required to find out residual value, useful life, etc. etc. Many things are there. We can stick to this for the time being. Okay. Accounting estimate is based on a circumstance. It's based on a particular scenario. So if that scenario changes, you can revise accounting estimates. So that way it is flexible. So we did some numerical problems. So we have some theory, straightforward theory questions, which you can work it out as your homework. All right. So chapter number 7, whatever I have done, couple of questions, remaining questions, you can take it off as homework, sir. Okay. Very, very straightforward. Nothing else is there. Done. So somebody is asking about charts. Sir, chart I already mentioned yesterday, sir. you can go to learn.arivupro.com and purchase these charts. We will directly deliver it to you. Okay. So that is possible. It's possible to deliver. Time being, it is not available. Hang on. We're just working out some process. It will take some time. We will let you know once it is available. Okay. We're just working on that. Fine. In the meantime, anyway, we have video access. You can check through that. And we will let you know once it is up and running. Done. What notes I have given is enough for theory, or do we need to cover? You don't have to cover anything else. What notes? Our material, if you do it, that is more than sufficient. Okay. Even chart is more than sufficient for theory. Enough. Be thorough with the charts. Enough. Few words if you are not able to understand. If you need explanation, you can refer to these additional things I've given it. Other than our material, no need to refer everything. I brought in everything, whatever is required. It's comprehensive enough. So that is sufficient. Alright guys, the last topic for today. Yeah. It is accounting standards and Ind AS. We kept on saying accounting standard and all. Some of you are wondering, what is this standard? He keeps telling this so much. Yes. So now we're just going to tell you what is accounting standards along with what is Ind AS. We'll spend a few minutes to understand this. Okay. First, what is accounting standards? Accounting standard is nothing but a written policy documents issued by the government. It's like a law, sir. Like you have company law, you have income tax law. Like this, you have many laws in the country, right? Accounting policies are also nothing but an accounting law issued by the government. How to do the accounting? Okay, the accounting standards, we'll talk about that. Fair enough. So for that, we have debit credit rules, no? See, debit credit rules and all, no? It is okay for basic accounting. Now things have become way too complex. Just with the debit and credit, you can't just go ahead and do the accounting now. It's not possible. Okay, you need extra information, or you need extra data here. So that extra guidance accounting standard gives. So it's a notified document issued by the government. You can think of it as central government. Okay, central government issues this. Done. Fair enough. So that is the meaning of accounting standards. It's basically accounting law. You can understand. Keep it as like that. Fine. Is the meaning okay with you now? Now, did you understand what is accounting standard at least first? We kept on using that. That is okay. So it's an accounting law. So why is this law required? Okay. See, accounting standard basically covers only 4 things. The intention of accounting standard was to give guidance only on 4 things. 1, recognition. 2, measurement. 3, presentation. 4, disclosure. It only talks about, every accounting standard talks only about these 4 areas. Maybe all the 4 or only one among the 4 or some 2 or anything like that. Every accounting standard will only touch upon these concepts. Accounting standards are basically laws. As I told you, there are more than 27 or 28 accounting standards currently. Alright. All the standards more or less just covers only these 4 aspects. Now, what was the necessary for accounting standards? Yes, you might be thinking, yes, why it is necessary? I'll give you a small example. Pay attention. Yeah. Sir, there is one company, let's say Reliance. They gave some employee stock options, which is quite popular these days, which we call it as ESOP. They gave some ESOP to their employees. They are very happy with few employees because employees are working very hard. Other than giving normal salary, they gave some share options, meaning one option they gave it to their employees, saying, if you want to buy, you can buy my company ka share at a discounted value. That's what we call it as ESOP, employee stock option. Did you understand the meaning of ESOP? Is it okay? Everyone give me a confirmation. Okay, can you tell me what journal entry, the commerce student, okay, can you tell me what journal entry should Reliance pass for this? They gave 100 ESOP to some of their employees. 100 stock options. It's an option. If employee wants, he will buy it. Or if he doesn't want, he will reject the option. Fair enough, employee doesn't have any obligation. It's not necessary he has to buy it. If he wants, he will buy it. Otherwise, he will reject it. Okay, let's say this option was given on 1st April 2021. Can you tell me on 1st April 2021 what journal entry Reliance Limited should pass? Is it simple enough now? Is this transaction very straightforward for you? Does it look like that? If I ask you, what is the journal entry for cash purchase? What will you tell? Fatafat you will say, purchase account debit to cash, sir. What is the journal entry for cash sales? So cash account debit to sales, sir. Fatafat, you will give it. Yes. I gave you this scenario. This is very common these days. Can you tell me this journal entry with 100% precision? No, you're thinking, right? You're not able to apply your normal rules and get this answer to this. Yes. That means some extra guidance was required to account to this. Yes. You need your existing rules were not sufficient. I'm not looking at journal entries. Yes. Understand why am I giving you this example? There was some extra guidance required to account these transactions. For these, accounting standards are formed. Okay, accounting is not simple these days. There are a lot of changes which is happening in accounts. Okay, so it's getting complex and complex and complex. So whatever existing rules you have, no, they are not sufficient. You need more rules, more guidance. So accounting standard basically gives you a guidance as to how to do the accounting so that everybody follows the same. Okay, that is the intention of accounting standard. Is this okay now? Fair enough? Did you get the meaning? Journal entry I'm not talking about, but don't worry. In CA Interme you will learn. ICAI has given a guidance note for this. Ind AS 102 you have a separate standard of Ind AS. CA final you will learn on share based payment. There you will learn about the entry for all this. I was not looking at journal entry from you. Leave this. Okay. But I gave you this example to prove you that there are certain complex areas also. With just debit and credit, you will not be able to solve that. Some guidance was really required. Okay, hence accounting standard was introduced. That was the intention of me giving you this example. Fine now. So everyone, I hope is clear now. Any doubts? Okay, that is okay. First, accounting standard basically first it covers with recognition. Recognition means should we account this transaction or should we not account this transaction? That's what first area accounting standard deals with. Should we account this or should we not account this? Fair enough. If you say you should account it, when should we account this? That is the first principle, recognition. Like if you want me to give you an example. All of you purchase the goods from Amazon, Flipkart and all. All of you. Yes, you place orders on Flipkart, Amazon, Big Basket and all. Correct no? Let's say on 10th May 2021, you purchase the goods from Amazon. That means can I say Amazon sold the goods to you? Let's say of worth 10,000 rupees. On 10th May, you purchased from Amazon. So Amazon sold the goods to you. Let's say it was a cash on delivery basis. You want to make the payment on a COD basis, cash on delivery. Meaning when you take the delivery, you will make the payment. Let's say you got the delivery, or let's make it interesting here. And let's modify the date slightly. Let's say on 31st March 2021, you purchased the goods. Let's say you received the delivery of the goods on 2nd April 2021. On 2nd April 2021, you receive the goods whose value is 20,000. Now, my question to you is, when for Amazon it's a sale, correct? No, for you it's a purchase, means for Amazon it's a sale. When should they pass the journal entry for sale? On 31st March or on 2nd April? Amazon should pass the journal entry for sale on 31st March or on 2nd April. Because you placed the order on 31st March, okay, but it was a COD basis and you paid for the delivery, or you got the delivery on 2nd April and you paid Amazon agent on 2nd April. Is it looking way too straightforward for you, or there is some thinking required here? Is it very straightforward or some thinking is required? This is some thinking required. Yes or no? Correct? Fair enough. So, like this, there's some guidance required. Accounting standard 9 gives you the guidance on this. What accounting standard 9 says is, if you are making cash on delivery sales, then recognize the revenue when you receive the cash. Till you receive the cash, don't book sales entry. Like this guidance, accounting standard 9, which deals with revenue recognition, tells. So that is the necessity for accounting standards. Got it? Like this. You have various case study. Its standards are just amazing to learn. Everything is case study like this. Okay? But anyway, you will learn it and maybe just when you come to the CA inter level. But I hope you're getting the meaning of it. Yes? So this is the first aspect of accounting standard. Recognition. Whether should we recognize it? If you say you should recognize it, when should you recognize it? Because if you say recognition on 31st March, between these two dates, there is a world of difference. Why? Sir, year ends on 31st March. So if you book the revenue on 31st March, it comes in the current year. If you book it on 2nd April, it goes to the next year. So it makes a world of difference in accounts. Those one day. For an outsider, it may not be saying, but 31st March, if the year ends, the books are closed. So it makes a whole lot of difference. So we require a proper guidance on this. Manageable. So that is the first aspect of accounting standard, covering the recognition. So recognition simply means, should we recognize it? If at all we should recognize it, when should we recognize it? That is the first aspect. Got it? Second aspect is measurement. Measurement means, okay, you have decided that you should recognize something. Next question is, okay, how much value should I recognize this for? That is automatically the next question. No? For what value should I pass the journal entry? That is the next headache. So that is the second headache which accounting standard gives you the guidance on. When how much value should you recognize that component? Each standard will talk about these things. Okay, let's not dive into individual standards. We will just go touch upon it, what it discussed. That's it. HPS, or what is HPS? I didn't understand. You need to tell the full form maybe. Hire purchase system, is it? HPS means? Okay, next is presentation. Presentation means, okay, you decided you have to recognize it. You also know what value to recognize. Next headache is, where should I show this component? Should I show it in balance sheet or should I show it in P&L? If you say I have to show it in balance sheet, where should I show in balance sheet? Under fixed asset or under current asset or a separate category? That is the third headache. That comes in presentation aspect. That is what presentation means. Okay, where will you show the component in financial statements? That is the third one. Last aspect is disclosure. Disclosure simply means, should you have to give any additional information about the components of financial statement? You accounted it, but what accounting you did may not make sense to too many people. You may have to give some explanation to that. That is your disclosure requirement. So accounting standard only talks about these four things: recognition, measurement, presentation, disclosure. Okay, like this you have various standards for each component. Fair enough? So did you get an overview? So these four it talks about for transaction and events. If you have some transaction and events, what you have to do for all this. That's all accounting standard ka coverage is. Manageable. Now I think you got a fair idea what is accounting standard, why it is required. Don't have to worry about these examples. Leave that. That we will learn it. It will come. Okay, but did you get the overview of why standard is required? Okay, awesome. Next, advantages. By having accounting standard, what is advantage? One main advantage is everybody will be able to follow a standard accounting principle, because there will be no confusion. Standard says you do this. Everybody will do that. So things are simple. So it avoids a little confusion, meaning standard accounting becomes quite simple. No messing up. Correct. Like that. Second is additional disclosure requirements. Now I give you a homework. Will you do homework? Maybe some of you will do homework. Some of you may not do the homework. Okay. Your parents tell you, if you don't do homework, no food for you. Okay. I will send you out. No food also for you. Then what you will do now? You will scold, you will still, now you will do homework. Yes or no? Yeah, we have no other choice. You have to do. Yes, no. That is accounting standard. If given a choice, somebody saying I'll eat outside, sir. Okay, how many days will you eat? Okay, good one. All right. See, if given a choice, if you tell the company, you give additional disclosure at your choice. Some companies will give it, some company may not give it. But if accounting standard says disclosure is a must, explanation is a must, then everybody has to give that explanation, so that it will help the users of financial statements. That is another advantage of accounting standards. So you'll be able to, investors will get some extra information to understand financial statements better. Not bitter, better. Done. Next, it will make the financial statements comparable. Since most of the organization will, every organization, since it's a law, then there is no choice. You have to follow it. Yes, no, correct. So since everybody is following that law, financial statements will become more and more comparable. So it's easy to compare financial statements this way. So these are some advantages. Any doubt in advantages, anybody? Any doubt in advantages, anybody? No? No, sir. Disadvantages. So what is the disadvantage? Even standards also have some limitations. Okay, one disadvantage is accounting standards, still you have multiple choices. Like you still have many accounting policies. Standard does not tell you you follow this only, you follow that only. So you still have to choose among the various accounting policies. You cannot escape from that. Accounting standard gives you more of a boundary. And wherever extra guidance is required, they clearly guide you. But even in some areas, you still have multiple choices. Organization only has to make that choice. So there is still some the choice which the company has to be sure about. So that they have to decide. So accounting standard does not remove all the ambiguities and stuff. Still, some efforts is required from the management angle also. That is one disadvantage. And two is accounting standard cannot override the statute. If there is another law of a country, okay, like company law, yes, accounting standard cannot override company. You must have heard there is Companies Act 2013 in India, which is company law, which is applicable for every company is registered in India, correct? You must have studied that in law. All of your law is not covered, I think. Yeah, it'll get covered, no problem. Fine. Accounting standard cannot override that law. Whatever that law says will prevail. Okay, so it has to perform within that law. So that is another disadvantages. Fair enough. So these are some advantages and disadvantages of the standards. Manageable. Now the next question is, sir, who will form this standard? It will be issued by the government, but who takes up the responsibility? Our institute, ICAI, Institute of Chartered Accountants of India. No, they are responsible to make a draft standard and give it to the government. Government will only publish it. The ownership of making that standard, for which area we should make the standard, what should be the contents of the standard, all that will be decided by ICAI, our institute, Institute of Chartered Accountants of India. So how the standard setting process works is, or how the standards are formed. ICAI, our institute, will form something known as ASB, or they have formed something known as Accounting Standards Board, ASB. So what this ASB does is, they'll form a study group. Like you have your study friends, no? Correct? You like to do some group studies with your friends? Yes. Like this, ASB has formed some study circle. It has certain members. It has appointed certain members and formed a study group. What that study group does is, their job is to think for what and all areas we should draft accounting standards. Where and all there is confusion in accounting, they will think on those lines. For those areas, they will come up with a standard. So they will draft a draft accounting standard. They will make a demo accounting standards. A draft standard they will give. Once the draft is ready, they will circulate this draft to other institutes. Like they will give it to ICI members. They will give it to central government, RBI, Stock Securities Exchange Board of India, other accounting bodies also. Like this, they will distribute to other bodies saying, see, this is the standard I have formed. Do you have any comment? If you have any comment, please give me. We can debate over it and accept it. Like this, they will distribute those draft standards. If they get any comments, they will revise the standards accordingly. If there is no comments received, or if everything is finalized, they will give the finalized standard to ICI. Finally, ICAI will give it to the government and government will publish it. So basically, for corporate entities, if you are a company, then central government will issue the standards. But if you have non-corporate entities like sole proprietor, partnership firm, these are non-corporate entities, right? For non-corporate entities, ICAI issues the accounting standard. For corporate entities, government issues accounting standard. For non-corporate, ICAI issues accounting standards. This is your standard setting process. Not that important, just I brought it in the chart, that's it, for your understanding purpose. They may ask you small forms like what is ASB? Okay, so like these they will ask the questions on. They may not ask you whole standard setting process and all, but it's good to know. Alright. So any doubt in these things, anyone? Any doubt in any of these aspects that we have touched upon? Is it going in now? I'm trying my best to simplify. Hope it is actually helpful for you and you are able to understand. I know I'm giving some extra information, but I felt it is required to understand it a little better. Okay, no? Okay, awesome. So now you got a fair idea as to what is an accounting standard. Now, along with accounting standard, I also write one more, if you remember. Every time I write AS9, I write also one more, something known as Ind AS. So what is additional disclosure requirement? Additional disclosure requirement is explanation, sir. You have done an accounting, okay? Alright? Like, company did an accounting for this ESOP. Normally, what the entry they'll pass is simply I will write here. Okay, you tell me, sir. Vishal, you have asked the question, or Ume Kuslam, am I saying that right? Okay. You tell me, I'll pass one journal entry here. This is actually the journal entry for this. Okay, you tell me whether you understood this. This is the entry. Let's say I write 1 lakh. Did you understand this entry? You tell me. I think you are a commerce student, I think. Yes. This is the entry for ESOP I've written. Did you get anything out of this? Did you understand this entry? No, what this means is, this is share-based payment, SBP, share-based payment, account debit. Actually, it should be share-based payment reserve, SBPR. This is the entry for this entry. You'll learn this in Ind AS 102 in CA final. Actually, this is the entry for this. Okay. So now if I show this entry, so this one reserve, it will come in balance sheet. This one expense, it will come in P&L. If you see this expense and if you see this reserve in balance sheet, can you make any sense out of this? Will it make any sense out of you? Sense? No, right? So now what the standard is saying is, you tell the investor, what is this 1 lakh? How did you find out this 1 lakh? Then in the company will say, this 1 lakh is an expense relating to share-based payment. I have given some shares to my employees, hence this is 1 lakh expense. This is one, they will buy the shares in future, hence I have created this reserve. Like this, they will give further explanations. By using this further explanation, you will be able to understand this better. That is disclosure. Yes, you can call that as a narration. For journal entry, you write narration, right? Yeah, you can think of it like that. It is not narration, but yes, it is like narration. Explaining the things, that's all it is. Further explanation. Now I'm trying to explain this, no? Yeah, this concept you're asking, I'm giving you extra information and trying to explain. So that is what company also does. By giving extra information, they'll try to explain the financial statements so that users will understand it better. That's all. Is it better, Ume? Okay, now, have I answered your question? Can I move forward? Yes, sir. Go on, sir. All right. Okay. Oh, awesome. Next is Ind AS. If you remember, always I write accounting standard, and along with that, Baju mein I write one more, which is Ind AS. Simple. What is Ind AS? See, accounting standards are issued by correct? ICI takes a deal, right? That is a local gap. Accounting standard was formed in India. Like an Indian body, ICI has taken the lead and formed it. Ind AS is international standards. That's the difference between AS and Ind AS. AS is local, Indian made. Ind AS is foreign made. That's all is the difference between AS and Ind AS. Okay. Now, why Ind AS is required? Now you are in India. Let's say there is one company in India, sir. They want money. Should they raise the money only in India, or they can raise the money from outside also? Now there's one company, X Limited. They are in India. Should they raise the money compulsorily in India, or they can also raise it in outside India also? Now world has become one economy. A person sitting in India can invest in a company in Kenya or US or anywhere. Yes, no? Correct? Now transactions are becoming complex and complex and complex. Yes, correct? So like if person in one, earlier what? US citizen used to deal with US country ka things only. Indian citizen used to buy shares of Indian companies only. But now gone are those days. Somebody in India is investing in some company in Europe. Somebody in Europe is buying some Japanese company ka shares. Like this, there is a cross-border transaction happening. Correct? Yes. Now, if a Japanese investor, let's say a Japanese investor wants to invest in X Limited, which is there in India. If X Limited presents the financial statement as per accounting standard, will it make sense to this Japanese guy? If this X Limited, which is there in India, if they prepare financial statements by complying with accounting standards, do you think it will help this Japanese guy? No, because in Japan, they will have Japanese standards. In India, we have accounting standards. In Japanese, they'll have Japanese law. Correct? No. That means there could be difference between these two. Yes. Now, what Japanese has to do? He has to take this financial statement, convert it into Japanese law ka financial statement, then check whether should he invest or not. Yes, that's the only way for him. Correct? Do you think this is easy job? Taking Indian company ka financial statement, redoing that in Japanese country ka financial statement, reconverting it and then analyzing it. Is it easy job? Absolutely not. It becomes a lot of cumbersome. Hence they thought it's very easy if all the countries have one standards. Yes or no? Anyway, all the countries are transacting with each other. So if all the countries follow one gap or one standard, if they follow, it will be easy for everybody. With that intention, IFRS, International Financial Reporting Standards, was formed. IFRS. Okay, well, that is nothing but international standards was formed. Now, what did India do is, they did not cut and paste IFRS. They took IFRS, they made some changes wherever necessary, because India is a dynamic country, right? We have different culture, we have different practice. Everything of foreign will not work for us. Even pizza also, correct? No, the Domino's pizza you get in US versus Domino's pizza you get in India are different. Like Domino's pizza, here you get tandoori paneer, ye makhani, wo makhani, and all 101 makhanis you get here. Because without spice, no, we don't eat at all. We reject it right now. And if you eat US pizza, you will stop eating probably like, the pizzas only, because their flavor is different. Yes, our spice levels are different. So modification is required based on country. Yes. So same has happened with India also. So what India has done is, they've taken IFRS. Wherever required, they've brought in the Indian masalas. They've made some changes. After changing, they formed something known as Ind AS. So Ind AS is nothing but Indian version of IFRS. So India has not cut and pasted the IFRS. We have converged to IFRS. We have not adopted IFRS as it is. We have made some changes. Hence we use the term, this is very important. There's a lot of MCQ question that comes around this. India has converged IFRS into IFRS, meaning we have taken it and made some changes. Like, I have taken all this contents from study material and I have made the charts like these. Wherever necessary, I have made the cut and paste. So I have not adopted our institute ka material. I have converged into institute ka material. Taken it, reduced wherever is necessary, added wherever is necessary, and made the notes like that. Did you understand these terms? Okay, now, fair enough. This is all is about India's. So is it India who has converged? No, all other countries also are adopting, sir. There are many countries now who have converged into IFRS. Okay, many countries are going into IFRS line of things. Yes, fair enough. So I think you got the meaning of Ind AS. Ind AS is nothing but Indian version of IFRS. So India has not adopted. India has converged. This line is very important. There is a lot of MCQ questions around this. Fair enough. So who issues Ind AS? Ind AS are issued by central government only. Same like AS. Ind AS also is issued by central government. By taking whose assistance? With the help of ASB, Accounting Standard Board. Accounting Standard Board has helped the central government in forming Ind AS. Along with ASB, one more committee has helped it. That is NACAS, National Advisory Committee on Accounting Standards. There is one more body. These two bodies, ASB and NACAS, have come together and they have helped the government in forming Ind AS. So Ind AS is nothing but Indian version of IFRS. That's all. If you remember these three, that is sufficient. Got it? So Ind AS is similar to IFRS where in most aspects, but wherever required, certain changes we have made. That changes we call it as carve in, carve outs. CA final mein you will learn this. Okay? Whatever changes we have made, we call it as carve in and carve outs. Sir, every company has to prepare financial statements on both AS and Ind AS. No, sir. There is a certain limitations. They have given certain limits. If the turnover, if the net worth of the company is more than 500 crores, like this, there are certain limitations. If you are a listed company or if you are in the process of listing, then you need to follow Ind AS. Other companies will follow AS. Okay, there is a limitations. There is a certain parameters. They have set it. You need not know this. You'll learn it next level. Fine. There are certain parameters. If you meet the parameters, follow Ind AS. If you don't meet that parameters, follow AS. Like that. Fine. So IFRS and Ind AS are necessary. Why is it necessary? Because money is being raised through international investors these days. Okay, and they want financial statements to be comparable so that they can take investment decisions. So this is the reason why Ind AS was necessary. Okay, so this is this particular topic. All the questions, chapter number 8 is accounting standards. All the questions is very straightforward. All theory oriented questions. Okay, just run through them and ask me if you have any doubts later on. Fine. I'll just check once. One moment, hang on. Maybe IFRS quickly will run through. The government in consultation with ICI decided to adopt IFRS issued by IASB. You need to tell whether it is true or false. Has India adopted IFRS or has India converged to IFRS? India has not adopted, means taking it as it is. We have not taken as it is. We have taken it and made some changes. Hence the term is not adoption. It is we have converged to IFRS. So hence this statement is false. Okay, I'm discussing your Ind AS wala question, accounting standard wala question. You can do it as homework. There are many beneficiaries of converge with IFRS like economy, investors, industry, etc. Yes, by Going into Ind AS, there are a lot of benefits, absolutely. So this is true. There was no need to converge to global standards. Global standard is nothing but IFRS, okay, or Ind AS. There was no need to converge, or absolute need was there. There was an absolute necessity. That's the reason we did so much headache. It took a lot of years. This is more than 5 years ka effort. 5 to 7 years effort was there before the standard was introduced. No, so much work went in there. Okay, well, let's not go there. Leave it. It's fine. Some other day we'll stick to that. International Financial Reporting Standards (IFRS) are considered as rule-based standards. Sir, IFRS is not rule-based. They are principle-based. Meaning, rule means you have to follow it. No exceptions. US has something known as US GAAP. Like in India, we have Ind AS, right? US has something known as US GAAP. That is rule based, meaning you have to follow it. Ind AS is not rule based, it is principle based, meaning if you feel, suppose Ind AS says go left, you're thinking, no, I want to go right. You can go right, but you have to justify why are you going right. Like that. Fair enough? Principle means you can deviate. But why are you deviating? You need to justify. Only then you can follow it. That is principle-based approach. Rule-based means if rule says go left, you have to go left. There is no other option for you. But that is rule-based standard. IFRS or Ind AS is not rule-based. They are principle-based, meaning you have a choice. If standard says something and if you don't agree with the standard and if you want to do something else, you have a liberty to do so. But you need to justify why are you doing that. Okay, that is the meaning of the term principle based. Oh, can I move forward? Government of India has taken IASB support to develop Ind AS. Government has taken IASB support or they've taken ASB support. IASB is International Accounting Standard Board. But we have taken whose support? We have taken Accounting Standard Board set up by ICAI. So this is wrong. This is not IASB. This is ASB. Sir, is accounting standard rule based? Yes, you can call it as rule based. Yes. IASC stands for what? IASC stands for International Accounting Standard Council. Wrong. IASC stands for International Accounting Standard Committee. Okay. Fair enough. So these are some questions that was given in your study material about Ind AS. We have done that also. So I think for today, this is sufficient. Tomorrow onwards, we will start with the other topics. All right. Yes, thank you for your patience. You've been wonderful. We stretched a little bit today. So thank you. We'll do that. Will Academy conduct revision exams? Yes, sir. We'll conduct the revision or test series on the app. All right. After every chapter, we'll be posting the questions on the app. You can check that. All right, guys. So then we can catch up tomorrow. Same time. Tata. Take care. Sayonara. Bye-bye. So yes, so we are starting with the next topic, that is journal entry is the next topic or today's topic that we're going to look at. Okay, this is one of the first step in the accounting. Whatever you do in accounting, right? You start with a journal. Journal means recording. Okay, so after you record then only you can do other activities. This is the very first step we have to do in particular accounting as such. Okay, let's have a little background. So this journal entry system, right? It works on something known as double entry system mode. Journal entry is done on a system known as double entry system. Short form, we can call it as DES, double entry system. That means like in mathematics, like you use what? You take the help of numbers and you do plus, minus, etc., etc. Yes or no? Correct? Here in accounting, right? We take the help of something known as account. Instead of numbers, we take the help of something known as account. All right. That account will either be debited or credited. We take the help of at least 2 accounts. If you want to do some accounting, there must be at least 2 accounts. Then only you can go ahead and do some accounting for it. Okay. One of the account will be debited. Another different account will be credited. So this is how accounting works. This we call it as double entry system, meaning one accounting getting debited, another accounting getting credited. All right. So we call it as double entry system, as simple as that. Instead of plus, minus, multiplication and all like you have it in mathematics, in accounts we have debit and credit. So accounting runs on this debit and credit wala mode. Okay, that we call it as double entry system. Okay, so basically one aspect will be debit, another one will be credit. This particular system was developed, is actually 500 years old. It was developed by Lucy Pacioli. He's fondly known as father of accounting. Why am I telling you all this? They may ask you some true or false question, possible. Hence, I'm just giving you some basic data over here. Okay. Now, what are the advantages? What are the advantages of following double entry system? One is the same, advantages of accounting itself. What are the advantages of accounting? One, you can know the result of a business, whether you made a profit or you made a loss. So you can know the results. Two, you can know the financial position, how much assets the company owns versus how much liability they need to pay, how much they own versus how much they owe, we call it. Okay, so we call it as financial position, which normally balance sheet reflects. So you will be able to prepare a statement which reflects financial position with the help of this double entry system. So that is another advantage. The accounting work will be efficient. Okay, because you have a rule, right? Everyone follows this particular rule only. So the accounting work will be efficient and it will be standardized. Okay, so everyone will just follow the same thing so that it will be comparable also. These are some advantages, more or less the same advantages of accounting which we learned in chapter number 1, unit number 1. Yes? Any confusion in this, guys? Especially science background student. I'm explaining a little further. I know commerce students know all this stuff. You have learned it over 2 years duration in your +1 and +2, 11th and 12th. Yes? Specifically targeting. I think there are a few science background students. So guys, are you able to understand this? Simple funda. Accounting is done with the help of an account. One account will be debited, another will be credited. That's how this particular system works. That's all. Okay? Fine, no? Alright. Next. Now, I said one account should be debited, another one should be credited, right? Now, how will you decide which account should be debited, which should be credited? Like this also, there must be some rules. Yes. Otherwise, everybody will do their own thing. Yes. I like this account, so I will debit. I don't like that account, I will credit. Like this, people will do their own things. Yes. Correct. That's the reason there are some rules of this debit and credit. Basically, to apply this rule, before you apply that rule, no, there are 3 types of accounts, sir. There are 3 types of accounts. Personal accounts, real accounts, nominal accounts. The account, as I told you, right? For accounting, we require accounts. There are 3 types of accounts. Personal, real, nominal. The first step you have to do in accounting is, you have to identify whether that account is a personal account, or is it a real account, or is it a nominal account. That is the first step you need to do. Now, how to identify whether an account is personal, real, or nominal? They have given additional clarification. Personal account means it could be either natural person account, like I'm Sandesh, right? So Sandesh account if you're creating, that is a natural personal account. Like I'm able to see Pratul. So Pratul's account if you are creating, that is a natural personal account. Okay, I'm able to see Kezar over there. Kezar account if I create, that is a natural person account. Like you and me, if you create living human beings account, that we call it as natural person account. Okay. Next one is artificial personal account. Artificial personal account means X Limited, Y Limited, Infosys Limited, Reliance Limited, like these artificial companies. They are not living human beings, but you have registered that by a law, you have brought that company. Yes, the business basically. Yes, the business we call it as artificial personal account. Every business for that matter. That becomes your artificial personal account. Got it? Next, third one is representative personal account. Name itself is saying representative. That means it is representing somebody. It is representing somebody like capital. Capital is an example of representative personal account. Like I started a business by investing 1 lakh rupees. I started a particular business by investing 1 lakh rupees. We have already went through business entity concept. What did we discuss in business entity concept? Business is separate, owner is separate. Yes. And you always do the accounting from business perspective, not from the owner's perspective. Correct? Now, if I introduce a capital of 1 lakh rupees, I started a particular business, and if I introduce a capital of 1 lakh rupees, for me personally, it is an investment. I gave you the same example and we discussed, yes, 2 days before only. For me, it is an investment. But for business, what is it, sir? But for business, what? If business is shut down, then business has to pay me back 1 lakh rupees, yes or no? If I close down the business, whatever money is there in the business, I will take it back. Correct? No, I will not leave it as it is. No. If I open a company now and if I invest 1 lakh rupees, after few months, if it is not running well and if I shut down that business, suppose business has some money, will I keep it as it is? Will I donate it off? No, I will take back all that money. Yes, no. That means business is liable to pay me this money. That only, hence we call that as capital. If any money is introduced by the owner into the business, that we call it as capital. Okay, fair enough. So that capital is representing a owner. Hence it is a representative capital account. If a particular account is representing some person, okay, then we call that as a representative personal account. Comfortable everyone, especially the science guys? Okay, so that's how the first thing. In personal accounts, it could be either natural person, artificial person, or representative personal account. Natural person means you and I, persons like you and I are known as natural personal accounts. The companies, the business, X Limited, Reliance, etc., then we call it as artificial personal account. If it is representing, if a particular account is representing some person, then it becomes a representative personal account. Example of that is your capital, drawings, outstanding expense, prepaid expense, etc. We'll see that also in a bit. Okay, so this is how you identify. So now I'll give you an example. All right, X Limited. You tell me what is the nature of this account. They tell you in the problem X Limited. What is this? Is it a personal account, real account, nominal account? They gave you in the problem because the first step in accounts is to identify what, sir? The type of account. Yes, X Limited is a artificial personal account. Yes, no, everybody? Okay, so this is a personal account. Awesome. Everybody is able to identify that. That is great. If it is a personal account, then for personal account, we have some rules. This we call it as golden rules of accounting. What that rule is, debit the receiver, credit the giver. That's it. If it is personal account, whichever person is giving, debit him. If a person is taking or if he is giving, then credit. Debit the receiver, credit the giver. This is the rule of personal accounts. That's how you will apply. That's how you will get to know whether we should debit it or we should credit it. First, identify which account is it. For each account, there is a rule and apply that rule. For personal account, the rule is debit the receiver, credit the giver. Don't worry, we have today's session, we'll be only looking at journal entries. Okay, if any of you are having problems. Specifically, I think commerce students, I'm fairly comfortable, you know it. Maybe just a little bit of fine tuning may be required because 2 years you have done this. I'm sure this is fine with you. Alright, but some of the other guys also may have a little difficulty. So we'll just help them out here. Okay. Next is real accounts. Real accounts. Okay, now next is the real account. Real accounts means all the assets of a particular business. All the assets of a particular business excluding debtors. Debtors means I have sold the goods to you. Let's say I'm able to see Vidyashri over here. I sold the goods to Vidyashri today. Vidyashri told me I will pay you after 2 months. I'm a pen dealer. I sold this pen to Vidyashri, okay, worth 10,000 rupees. She told me I will pay after 2 months. Correct? Then Vidyashri, I will call it as a debtor. Debtor means somebody whom I have to receive the money from. I have to receive the money from that person. We call it as a debtor. So Vidyashri in this case becomes my debtor. Are we okay? Now you tell me, is Vidyashri a real account or is it personal account, sir? Is Vidyashri a real account or personal account? It's a personal account because it's a natural person. Yes, no? That is the reason we have written over here. All the assets of a business are real accounts except debtors. Even debtors also is your asset only because you have to recover the money from you. No? Asset means something from the component from which you get some benefit. Okay. From debtors, I am going to receive money. That means I am getting benefit. So it is an asset only. But since it is a natural person, we don't apply a real account. We don't treat it as a real account. We treat it as a personal accounts. Okay. Hence I've written like this. All the assets of a business are real accounts except debtors. Manageable. Got it? How debtor is asset? Sir, if you have Pratul, if you have 100 rupees cash with you, is it asset? If you have 100 rupees cash with you, is it an asset? Yes, it's an asset because you can use it for whatever purpose. From debtors, what will I collect, sir? I give you an example of Vidyashri. From debtors, what will I collect after 2 months? I'm going to collect cash only, no? Yes, money only. That means since I'm going to collect the money from them. It becomes a debtor in that way. Manageable, huh? Now is it okay, sir? Fine. Alright, so all the assets of a business are real accounts. So like furniture, cash, building, okay, whatever you have, all those we treat it as a real account. If it is a real account, we have a real account ka rule. For real account, the golden rule is debit what comes in. If asset is coming in, we will debit it. If asset is going out, we credit it. So golden rule is debit what comes in, credit what goes out. That's all is this golden rule for real accounts. You have to remember all this. Fair enough. Based on this only, you'll be able to journalize. Okay. Science students, or especially science background students, today's session is very important for you because and that's the reason I'm giving you, though these are easy topics, actually I can finish it soon enough, but I don't want to take a chance. Fine. So I'm doing it as detailed as possible, as much time I can afford, I'm giving it to you there. All right. Journal is a very basic. If you're having problems in journal, you will not understand because after journal only you'll prepare ledger, trial balance, P&L balance sheet. So if you get this wrong, okay, then like an accounting is subject that you might be a little scared of. But journal entry, if you get it right, whether your science background, commerce background, doesn't really matter. All you have to know at this level is proper journal entry. From CA Inter and all, if your journal is clear, then everything will be clear. Rest everything we can take care. So it really doesn't matter. You have to be from commerce background. Only thing you should be absolutely certain of is the journal entry. Okay. That if you are absolutely fine. Okay. Then things are okay. So kindly go home and practice this more and more today. Okay. I will do as much as possible in the class, but your funda is today is just go home and work it out so that you get a complete understanding over this. Okay. Fine. Awesome. All right. Okay. Next, nominal accounts. Nominal accounts is the third category of account. Nominal account means all the expense, loss, income, gains. If you have any expense, loss, income, gains, no, that we call it as nominal accounts. Like I am paying salary to somebody. Salary for me is an expense, no, correct? That expense we call it as a nominal account. So salary account is a nominal account. I pay electricity bill. Electricity bill is an expense for me because and it's a revenue expense. When I say expense here, I mean to say revenue expense. Guys, remember that. Okay, meaning these expense which comes in P&L. I'm talking about that. Okay, so if you have electricity paid, salary paid, okay, all these expenses, right? We call it as nominal accounts. Even income and gain also we call it as nominal accounts. Like if you are receiving some interest, if you are receiving some commission, any income if you're getting, that also we classify it as nominal accounts. And nominal account ka rule is debit all expenses and losses. If you have any expense and losses, debit it. If you have incomes and gain, you credit it. That's all. Simple enough. Are we okay? So expense and income is a transaction. Okay, these two are transaction. Remember the first day we discussed the transaction and event. Transaction means an activity. Like electricity bill paid is an activity. Commission received is an activity. But gains and losses are events. That is the effect of the transaction we discussed in day one. Yes. So all of them are considered as nominal accounts. Just in case you're wondering, so is expense and loss same? Fair enough. Expense is a transaction. Loss is an event. Similarly, income is a transaction. Gain is an event. Not that you have to really know it, but just saying it. Fair enough. Any confusion? Anyone in till here or all okay? All okay now? Okay, awesome. So again, we'll have a quick recap on the rules. What is the rules? First thing you have to do is find out what, sir? Find out which type of account it is. The account could be either a personal account, or it could be a real account, or it could be a nominal account. How do you identify it's a personal account? You just check. If it is a natural person, like a breathing person, okay, a living person, then it becomes a personal account. That we call it as natural personal account. If it is a company like X Limited, Y Limited, Reliance, Tata, etc., artificial person it is. That becomes your artificial personal account. If an account is representing somebody like a capital, outstanding expense, etc., okay, that we call it as a representative personal account. Okay, this is how to identify whether it is a like a personal account or not. And if it is personal account, okay, simple rule is what is the golden rule? Debit the receiver, credit the giver. Okay, first identify whether it's a personal account. If it is, simply apply the golden rule. Debit the receiver, credit the giver. Okay, that is the personal account. Next is real accounts. Real accounts. Real accounts means all the assets of a business. We call it as real accounts. But except debtor, because debtor is a person, right? So it's a personal account. All the assets other than debtors, we call it as real accounts, like cash, furniture, building, etc., etc. And real account ka golden rule is debit what comes in, credit what goes out. That's all. Okay. Third one is nominal account. All the income and expenses, income, gain, expense, losses, all this we call it as a nominal accounts. Nominal account ka rule is debit all expenses and losses, credit all incomes and gains. That's it. Okay. All right. Fine. So what to do when there is a combination of different accounts? It will come, sir. Hang on. If there is a combination, they will not just give you personal. There will be one personal account, one real account, one real account, one nominal account. Like this, it will keep coming in. Hang on. Okay, that we will see. I'll give you the case studies. Creditors. Creditors are what type of accounts? Creditors, you only tell me. Creditors is a person, no? It's representing a person. Yes. So it is personal account. Debtor, creditors are all personal accounts. Fine now. So far okay. Awesome. So let's see maybe. Okay, I'll maybe just go through this portion first and then we will take up a small case study to get it a little better. Okay. Dev, I think you asked me to explain again. I will try to cover up this time as one exception in your case study. Okay now. But come on time. Alright. Yeah. Alright. Journal. That is the next thing. Journal. Journal means recording. Simple. It's the book of original entry, meaning that is where firstly you record things. A journal is a book of original entry where all the transactions are recorded in chronological order, meaning date wise. If you do 10 transactions today, whatever 10 transactions, buying of the goods, selling of the goods, paying electricity bill, paying salary, whatever, it doesn't matter. If you have done 10 transactions today, all the 10 will be accounted in journal date wise. Like if you do 10 transactions today, if you do 5 transactions tomorrow, then in journal, first this will be recorded. In journal. Journal is basically a book. Okay. So first this 10 transactions will be recorded. Then these 5 transactions will be recorded. So date wise, you will record the transaction. So that's what we mean by chronological order. Date wise. Fair enough? That's all. Okay. It is also known as subsidiary books. Subsidiary books, I'll tell you what is it in a bit. Fair enough? This is the format of a journal. How journal entry should be recorded. So this is date, particulars, ledger folio, debit amount, credit amount. These are the 5 columns we maintain in the journal. Date, particulars, LF as in ledger folio. Folio in accounts means page number, not polio. Folio, F. Folio in accounts means page number. Okay. Debit amount, credit amount, meaning which account is getting debited, you will mention here. Which account is getting credited, you will mention here. Fair enough? So far, okay? Fair enough? This is just the simple format of a journal as such. So what is this ledger folio? Is simple. Earlier, no, they used to do manual accounting. Like they used to write everything, all the accounts in books. They used to maintain books. One notebook, big notebook used to come. I don't know whether you have seen it or not. Okay. Big ones used to come. All right. There they used to write everything. Now it's all computerized. Nobody uses books. Now nobody does manual. Earlier they had to write. For journal, they used to maintain one book. For ledger, they used to maintain one book like this. If somebody wanted to verify from the journal, if everything is put into ledger, no, they had to find all the page numbers. It was difficult. Hence, what they thought of is, in journal, we will give ledger ka reference. Like if you have passed journal entry number 1, you will tell this journal entry number 1 can be seen in page number 5 of ledger. That is referencing, that's all it is. So that easily you can find out. So that's what we mean by ledger folio here. This column has become redundant in today's environment because we don't do manual accounts. We do everything in the computerized format now, but still they've kept the format, so we will just maintain it. But I hope you got the meaning of it. In journal, you are giving a reference as to where can you find it in ledger. Similarly, in ledger, you will give a reference to journal. In journal, you will have ledger folio. In ledger, you will have journal folio. Is it okay? Are we okay with this so far? Yes. Then why do we use the format, sir? For the sake of marks, sir. Nobody does this format also, in fact. Okay. Whatever you have done in +1, +2, no? Fair enough. Nobody passes the entry like that anymore. Everything in ERP is done through an Excel. You believe it or not, entries are passed in the actually practically with an Excel format. Okay. They have that Excel coding has been done. Just click of a button, you update the numbers in Excel, the entry will be uploaded into Oracle, SAP, whatever it is. Okay. But we are still following the age-old this thing only for the sake of marks. Nobody follows this anymore. Not this format at least. The entry, things have radically changed. You will get to know when you come to articleship. You have to do internship for 3 years. I'm sure you must have been aware of it, right? There you will get to know. But forget the practicality of things. First we have to pass, then only we can get ahead. So we'll learn what is required from the examination perspective now. Practicality anyway you will get to know later. Fair enough, huh? Sir, how will we be able to work on computers after qualifying? Sir, you have internship for 3 years. Fair enough. CA, after inter, you have to work for 3 years in CA firm. There you will learn what and all CA does. Don't worry about that. That you will learn it any which way. Done? Okay, so let's do one thing. Let's apply what we learned in one of the problems first maybe. Okay, let's maybe start with question number 3 itself. 1 and 2 is different it's a different kind of a problem. We'll take it later. Let's see this. Pass journal entries for the transaction of MS. MS means Messrs. The business is denoted by something known as M bar S. We call this as Messrs Sahil and Co. The business name is denoted by M bar S. Okay. Messrs Sahil and Co. For the month of March 2020. For the month of March, you need to pass the journal entries. That's it. Okay. Only 1 month they're asking you to journalize based on double entry system. Awesome. Transactions for the month of March are as follows. All the figures are in 1,000 rupees. If they write like this, that means what, sir? They've given here number 4,000. Actually, this is not 4,000. This is what? 4,000. That means it is 40 lakh rupees. Instead of writing 40 lakh rupees, they've written 4,000. And here they're telling all the numbers are in thousands. You also present like that only in examination. Like this, if it is given in examination, solution also you present like this only. Comfortable, everyone? 40 lakh, understood, no? This is actually 40 lakh. 40 lakh they're representing in 1,000. So 40 lakh divided by 1,000 if you do, you're going to get 4,000. That's what they've written here. That's all. No doubt, right? Okay. First, Sahil, the owner, introduced capital through bank account. Sahil has brought in the money to start a business. Fair enough. So he brought in the money through bank account. Okay. So can you tell me what are the two components? First thing you need to do in a particular scenario is identify the two accounts. Okay. See, you are passing the journal entry in the books of Sahil. So because Sahil is the owner, right? In owner's books, owner account will not come. In owner's books, if I am an owner of a business, in my book, Sandesh account will not come. Okay. Instead of that, what did I bring into the business, sir? What did I introduce into the business? Money. That is capital. Yes. The money brought in by the owner, we call it as capital. Yes. So the first account here is a capital. Are we okay? So you need to identify two accounts. First account is capital account. Another account. What did the owner bring in? He brought some money, but he brought the money through cash or he brought it through a bank. He gave the cash to the business or he put it in a bank account. Bank. That means the two accounts that has to be used for this transactions are capital account and bank account. Non-commerce student, or for that matter even commerce student. If anyone having any confusion in this. First journal entry, I'll explain you a little bit in depth. First 1 or 2, then we can just maybe take it up from there. I want everyone to understand this as much as possible. Especially science background guys. Is it okay? Science guys also. Are you able to identify two components? In owner's books, owner will not come. Instead of owner, we will say capital account. That's the reason I said capital account is a personal account. Because it is representing a person. Okay. Hence it is a representative personal account. Fine enough. Why we don't show owner's account is simple. If you imagine like Reliance, there could be 10 lakh shareholders, sir. 10 lakh people have invested money in Reliance. Does it mean 10 lakh account the Reliance accountant will open up? Do you think it's feasible? 10 lakh accounts, is it possible to open? Yes. So instead of that, they just open one account, capital account, for convenience sake. Manageable. So if owner is bringing any money, that instead of that owner account, we write it as capital account. That is the logic of that. Manageable, more of a convenience driven. That's all this is. Comfortable? Okay, if these two accounts are clear. Now, next thing, you have identified two accounts. Next step is to find whether these accounts are personal account, real account, nominal account. You tell me, capital account is what? Personal account, real account, nominal account. What is it? Capital account. You don't have to tell natural, artificial and all that stuff. Just tell me personal, real or nominal. That is good enough. Capital account is a personal account. Perfect. Bank account is what, sir? SBI, ICICI, HDFC. All these are what? Bank account also is what? A company only, no? That means this is also what? Personal account only. Correct, no? Comfortable, everyone? Both are personal accounts here. So that means you have to apply personal account ka rule here. What is personal account ka rule? Debit the receiver, credit the giver. That is the rule of personal account. Debit the receiver, credit the giver. Now, first maybe we'll just have it over here in this format. I'll do it off here only. Solution is given for you. Okay, I'll just write it still. Journal entries in the books of, we'll give this as the heading. Journal entries in the books of Messrs. Messrs means the name of the business. Okay, that business is denoted by Messrs. Messrs Sahil and Co. This is the heading we will give. Okay, if you want, you can write for the month of also. That also they have given. No? Generally, sometimes they won't give the month. So month data we can leave. But here they have given for the month of March 2020. This is the heading. Okay. I showed you already journal ka format. What is that? Format is date, particulars. In journal, you will give LF as in ledger folio, ledger ka reference, and then debit amount, meaning which account you're going to debit, and then credit amount, which account you're going to credit. That you're going to write here. That's all. These are the five, format of a journal. Ledger folio column will be blank because they would have not given to you in the question. This is just for the sake of showpiece. That's all this is. Okay, now. All right. First journal entry. Did you know when he introduced this? The date have they given a March 1st, March 20th, anything like that they have given? They have not given. So that means we can leave the date column blank, or you can write it as 1st March 2020. For every transaction, we can write March 2020, or you can just write March 2020 only. Because they have not given the exact date, no? If they have given the exact date, use it. Otherwise, leave it. Fine now? You can write one also, it doesn't matter. You can write 31st March also. Choice is yours. Anything is okay. Alright, or you can leave the date column blank, or you can write just one also. That's fine. If they don't give you, you're free to write anything. That is okay. Now, two things now. Two personal accounts are there, sir. Debit, the personal account ka rule is debit the receiver. Who is receiving the money here? Money is coming into where is the money coming in? Bank. That means bank is receiving the money. Correct? Bank is receiving the money. That means bank should be debited. Okay, because debit the receiver, bank is receiving it, so debit it. Credit the giver, who is giving it? Sahil. But instead of Sahil, what do we write? Instead of Sahil, what do we write? Capital account. Okay, because he is giving, no, Sahil is giving he's the giver. So instead of Sahil account, we write capital account. This is the journal entry. Normally, what do we do is, bank account, we'll write debit. We leave about few lines space. Okay, and then write to capital account. Like this, how we present the journal entries. DR stands for debit. Bank account, DR if you write, that is nothing but debit. To capital account. This is how we present all our journal entries. Manageable? Okay. How much capital was introduced? How much capital is introduced? 4,000 rupees. And again, you can write here, all the amounts are in, they only told in the problem, all the amounts are in thousands. Yes. So the amount is how much given in the problem? 4,000. So in the debit column, ledger folio, you can leave it blank. Which is getting debited? Bank. That means in the bank column, you'll write 4,000. Which is getting credited? Capital. So under the credit column, you'll write 4,000. Like this. Okay. Yeah, you don't have to leave a line. Okay. You can write it in the next line itself to capital account. That is fine. Leave some space, that's all. Okay. 3 letter space you leave and then start. Okay. I can understand. For the first time when a science student is doing this, it takes a little time to get it. I totally understand that. No problem. Fine. But more or less, have you got it? This is the format, sir. Yes, awesome. So you also, every journal entry, you also have to give something known as narration. Narration means explaining what is this entry all about. What happened here? It's the capital which the owner has brought in, right? So you will just write. You can write the narration in your own words. Narration will always start with the word being. For every narration, you start with the word being. Thereafter, write it in your own words. Here, what is happening? What is this transaction? Capital introduced, right? So you can just write here being capital introduced. Okay, that's all. Or you can also give further also. Being capital introduced by Sahil through check. That also you can write. Or if you can keep it short form also, that is okay. This is the first journal entry, sir. Is it okay, or anyone having any sort of confusion? Yes, sir. I think somebody asked me to explain again. I think it was Dev Jain or something. Okay, are you able to follow, sir? The late joining guy. Are you able to get it? Should we have to draw a line after narration? Not required in examination. I am drawing it so that you will know the difference. It should not feel like I'm passing all the journal entry together. Just as a distinction, I'm doing this. This is not required. Drawing a line and all. It's not required. Drawing a line and all is not required. I am doing it here so that you know that next I am passing the next journal entry, so that it doesn't lead confusion for you. Especially science guys, you should not copy everything in one go there. That's the reason I am drawing a line, just for your clarity purpose. This line is not required in examination. You can write like that also, Chandu. Being capital was introduced. Anything is okay. Narration is your vocabulary, man. You can write whatever. Start with the words being and then write whatever. It is fine. Okay. Yes, amount in 1,000 you should mention, because it is mentioned in the problem there, right? Clearly you should mention. After narration, yes, you leave a line. Correct. After narration, leave a line, because you are writing the next journal entry. People should understand it, right? Yes. So leave a line and then do it. And college, they would have told you anything. Don't worry about the college. All this is okay. Guys, don't worry about the college. These are not the things that will come in your examination. These are way too basics. They will not give these sort of things in CA examination. Okay. Some of you have told science backgrounds. I am just explaining it as detailed as possible. Okay. This straight away they'll cut it off. Fair enough. This they will not ask. I can guarantee you on this. These simples and all will not come. Okay. But just we are starting with the basics. That's all. Just to be in sync. Done now. Alright. Second scenario. Cash withdrawn from the Citibank, rupees 200. Now what are the two components? Two accounts you need to identify. Cash is withdrawn. That means the first component is cash account, because cash is coming in. No? Yes. So cash is one account. From where did you withdraw the cash? From Citibank. So can I call it as just bank account? You can just write bank account, or you can write Citibank account. Anything is fine. That means these are the two accounts that is getting affected through this particular transaction. Cash account, bank account. Now, okay, you identify the accounts. Now you need to tell whether these are real accounts, personal accounts, nominal accounts. What are these? Cash account is what, sir? What is cash? Cash is an asset. All the assets are real accounts. That means cash is a real account. Perfect. Bank we have already identified. Bank is a personal account. That means for cash, it being a real account, you should apply real account ka rule. What is real account ka golden rule? Debit what comes in, credit what goes out. Here cash is coming into the business or cash is going out of the business. You withdrew the cash from the bank and you bought it to office. So cash is coming into the office or cash is going out of the office? Cash is coming in. Yes. That means what? Real account rule says debit what comes in. So cash is coming in. So cash should be debited. So I'll write this here. Like this means it's the same, or you can write the same this thing here. March 2020 only. So you'll write here cash account DR, meaning debit. Fair enough? Cash account debit. Then leave a few lines and write 2. 3 or 4 you can leave like this and then write 2 here. Okay. Now what is the second one? Second component is bank. Bank is a personal account. What is personal account ka rule? Debit the receiver, credit the giver. Here bank is receiving the money or is it giving the money? Bank is receiving the money or bank is giving the money? Bank is giving the money. Yes, that means bank is the giver. That means personal account rules is credit the giver. That means you will credit Citibank account, you can write, or you can just write bank account. It is fine. Okay. The amount is 200. So you'll write under the, you're debiting cash for 200. So you'll write that here and you're crediting 200 of bank account. Yes, this thinking process will take time, Pratul. But unfortunately, as I told you over here, all this has literally zero weightage in examination. Okay. As I told you yesterday also, these things commerce student learn over 2 years in +1, +2. In fact, +1, probably in college, they would have, their teachers would have taught this only for almost 1 month. So that's the reason they'll get it faster. It will definitely take time, but don't worry, science guys. I personally know my own teacher who was from science background. Okay. And I know my senior also was a science background. Cleared. Foundation, he took 2 attempts. Okay, 2 or 3 attempts, because all this learning the rules, it takes some time for him. Inter and final, he cleared in first attempt. Because science students will understand this or approach this logically. But what happens with the commerce background students, some of them, they would have solved so many transactions that they will start mugging it up. Okay, they will not understand the rule, right? Nobody applies the rules when passing the journal entry. Directly they'll say, capital introduced means bank account debit to capital. They would have done so much that it gets registered in their mind. So they may stop applying the logic of things. Fair enough. So only at this level, all right, you may be a little backward, the science guys, but you'll soon catch up on this. So don't worry about it. That's the reason I told, go home and practice this. Okay, as much as possible. I'm not putting down the commerce students here. I'm just saying, yeah, all right, just for comparison. That generally happens. Okay, narration. For transaction, you should give a narration, being explanation of this transaction. So explanation will be, you can just write being cash withdrawn. Being cash withdrawn. Or you can write being cash withdrawn from Citibank. You can write like that also. Done? Okay, that is your second transaction, sir. Everything is given here. If you want, you can copy or you can leave it as it is. The choice is yours. Okay, third transaction. Loan of 500 rupees was taken from Mr. Y. Now, what are the 2 components? You took a loan from Mr. Y. That means the 2 accounts are what, sir? One is, you took a loan means you're getting some money. You took some loan means you got some money. Yes, normally money you will receive it through banking channel only, not generally through a cash. Hence, I'm assuming that Y gave the money in the form, he put the money into your bank account. Hence, I'm going to call it as bank account. Is it okay? Fair enough. He may give you cash also, possible. Fair enough. But I'm assuming that this money or this loan you took, he deposited that money into your bank account. Hence, I'm taking it as bank. Fair enough. All right. This is one transaction. Whom did you take this loan from? You took this loan from Mr. Y. Yes. So I will write Y's loan account. Y's loan account. Comfortable? Because I have to repay Y, no? I have to repay Y. Yes, these are the 2 accounts that are getting affected here. If you write cash, it is not wrong. It is fine. It is an assumption. You can write cash also. No problem. Okay. But I'm just going to stick to bank here. Fine now. Okay, with the 2 components. Now you need to check. Bank account. What is the nature of bank account? Bank is a personal account. Y's account is what, sir? Y is a personal account, real account, nominal account. What is it? Y is also a personal account only, correct? That means you have to apply personal account ka rule. Debit the receiver, credit the giver. Debit the receiver, credit the giver. Who is receiving the money? Or where is the money coming into? Money is coming into your bank account. That means bank is receiving or bank is giving away. Bank is receiving. Yes, no. That means the journal entry will be same date I will write, March 2020. Bank account debit. Fine. Who gave you this? Y gave. Yes, no. Personal account rules say credit the giver. So you'll write here to Y's account or to Y's loan account. How much loan was that? Loan was 500. So you'll just write 500 here. Ledger folio column, you can leave it blank. Okay. Narration column, you'll just write the starting words is being There afterwards, your choice. You can write whatever to explain it. In your own words, you can write. No, don't mug up all these stuff, okay? Just start with the words being. So you can just write here being loan taken accounted. Being loan taken, or you can stop at loan taken, or you can write being loan taken accounted. Something like that also you can present. That's your next, this journal entry is also over. Fine? Okay. Next, salary paid salary paid for the month of March. Yes, if you take cash account here, it becomes a real account. Perfect. Then you'll have to apply real account ka rule. If you take cash, then the journal entry will be instead of debiting bank, you will debit cash. Because the real account rule says debit what comes in. Here anyway cash is going to come in. So instead of debiting bank, you will debit cash. The entry will change. Correct. Agreed. You can make that assumption. No problem. Yeah, that is okay, sir. I think, I don't know what assumption study material has made. No, okay, they made it through bank only. Okay. Generally, all this transaction will be routed through bank. Hence, I am making it. That's all. Fine now. Okay. Salary for the month of March 2020 is rupees 300. And 100 is still, salary paid for the month of March is 300. And 100 is still payable for the month of March. That means, can you tell me what is the total salary, sir? Salary of 300 rupees has been paid, they are telling. 100 rupees is still payable. That we call it as outstanding. That means the salary is how much? 300 paid plus 100 is still payable. That means the total salary is 400. Yes or no? Okay. You paid. If you assume that if it is paid through cash, then you can use cash. If you assume that the salary is paid through banking channel, then you can put it a bank account. I'm going to stick to maybe bank account. Okay. Fair enough. So I'm assuming that the bank salary is paid through bank, not through cash. But if you assume cash also, no problem there. Okay. So that is another account. But how much salary did you pay, sir? Total salary may be 400. Did you pay entire 400 salary, or how much did you pay? You paid only 300 out of this 400. Yes, no, because that's what they're telling here. Salary paid is 300. That is here, 300. Okay. 100 is still outstanding, no? 100 is still payable. That means you are liable to pay somebody. The employees, yes. There could be thousands of employees. Can you create thousands of employees account? Do you think it makes sense to create 1,000 employees account and keep routing it? No. That's the reason we create something known as outstanding salary account. Because this 100 is payable to employees, yes. That means you should ideally open employees account. But a company will have thousands and 10,000s of employees. It will become way too cumbersome. Hence, instead of opening each employee's account, we group all it and then call it as outstanding salary account. So this outstanding salary account represents employees. It represents the salary payable to employees. Hence, we call this as personal account. Getting this meaning of this outstanding salary is representing employees. Employees are persons. Hence, this outstanding salary is a personal account. Manageable. Okay. Everybody, now for this, now here, sir, you told only debit credit. No. If it involves only two accounts, we call that as a simple journal entry. If you are debiting one account, you're crediting another account. Only two if you are touching means, then we call it as a simple journal entry. If there are more than two accounts in a single transaction, we call that journal entry as a compound journal entry. If you're using more than two accounts, could be 3, 4, or 5, whatever, all right? That we call it as a compound journal entry. Here we're going to see how compound journal entry is getting passed here. Manageable? Okay. First, these are the three accounts. Now you have to tell me, salary is what, sir? What is the nature of salary account? Real, personal, nominal. What is salary? Salary for a business is an expense. Salary is an expense. Yes. So expense are what, sir? All the expenses are nominal account. Yes, no. So salary is a nominal account because it is expense. It's a revenue expense. Understood, everyone? Okay, bank we already discussed. Bank is a personal account. So there are two personal accounts, one nominal account ka rule we need to apply. So first nominal account ka rule. What does nominal account rule say? Debit all expenses and losses. Here salary is an expense. So expense should be debited. So we'll write the same date. Salary should be debited because it's an expense and nominal account rule say debit all expenses. So salary account debit how much? 400. Okay. Awesome. Next, bank account, sir. Bank is a personal account. Personal account ka rule is debit the receiver, credit the giver. Here bank is receiving the money or is it paying the money? Bank 300 rupees, 300. Bank is receiving or it is paying? It is paying. That means it's giving. It is giving. Bank is the giver over here. So now personal account rule says debit the receiver, credit the giver. Bank is giving here. So hence bank account should be credited. So to bank account. How much? How much did the bank pay? 300. Yes or no? Journal entry. Debit credit should always match. Okay. That is a double entry system. This side debit can't be 400, credit can't be 300. Journal entry should always be matching. Meaning if you debit 4,000, you should credit another account for 4,000. That's how accounting works. This debit credit should always be the same number. It should tally. It should agree. Here is it agreeing? Debit is 400, credit is 300. Is it agreeing? No, because one more component should come. For how much? One more component should come for 100. What is that 100? That 100 is outstanding salary, meaning salary is still payable, no? Outstanding salary is representing the employees. Hence, it is a personal account I told. What is personal account ka rule? Debit the receiver, credit the giver. Employees have already given their service. Yes. So, we're talking about that. Hence, we will write here to outstanding salary account. These are adjustment accounts. Okay. To outstanding salary account. Like this. This is your this. Since you have used more than 2 accounts, we call this as a compound journal entries. These, if you use only one account, if you use only 2 accounts, we call that as a simple journal entries. If you're using more than 2 accounts, we call it as a compound entry. That's it. That's all it is. Manageable. Comfortable, everyone? Okay. Fair enough. Or if you want it as another rule, okay, all the assets will have a debit balance. If you want some more rule, like some of them will get confused in the outstanding also. You can have another rule also. Okay, simple one. All the assets will have a debit balance. Okay, fair enough, because real account rule says debit what comes in, no? Yes, all the assets will have debit balance. All the liabilities will have a credit balance. Now you tell me, is this outstanding salary an asset for a business or is it a liability for a business? This outstanding salary, is it an asset for a business or is it liability for a business? It's a liability. Liability, you will credit. Like that also, if you want, you can remember. That's another way to remember it as well. Comfortable? Okay. So you will give the narration as being salary paid and outstanding salary accounted. Being salary paid and outstanding salary accounted. You can write in your own words, anything. It's not necessary you have to write the same thing. Choice is yours, basically. Yes, everyone okay now? Can we use short form in narration, sir? That is fine, sir. This short forms O bar S and all is accepted short forms. You can use. This O bar S stands for outstanding. These are acceptable ones. You can use that, sir. As much as possible, don't use short forms. Okay, but some acceptable ones you can use, like account. A bar C stands for account. That is acceptable short forms. O bar S is for outstanding. That is acceptable one. So you can use them. Okay, coming to the last transactions in this particular scenario. Furniture purchased 500. Furniture purchased 500. Now you tell me the 2 components, sir. You purchased a furniture. First component I will only tell, which is furniture. Okay. Second component is what? If you purchase furniture, somebody will give it to you at free of cost or you have to pay for it. You have to pay for it. Yes. Either you could pay through cash or you could pay through check. I'm assuming that you made the payment through check, through bank. Hence, I'm using bank account. If you want, you can assume that the payment has been made through cash also. Better assumption is bank always. Okay. So, that means now you tell me, sir. Furniture. Furniture is what? Furniture is an asset. So, all assets we call it as what? They are all assets of a business are real accounts. Yes. So, this furniture is a real account. Bank we already discussed is a personal account. So, for furniture, you need to apply real account ka rule. What is real account ka golden rule? Debit what comes in. Here, furniture is coming into the business or furniture is going out of the business. Business has purchased the furniture. So, furniture is coming in. So debit what comes in. Furniture is coming in, so we need to debit that. March 2020 mein furniture account debit. Okay, to what, sir? The bank account. Here bank is receiving the money or bank is giving away the money? Bank is giving away. That means personal account rules is debit the receiver, credit the giver. Bank is giving away, so hence you write to bank account. And what is the amount there? 500. Okay, amount column, ledger folio column, nothing. Debit column you write 500, credit column again you write 500. So in the narration you'll write just as being furniture purchased. Being furniture purchased. That's all. Sir, you can't write. Somebody is saying, can I use purchase account, sir? No. You can't use purchase account. When if you write purchase account, no. Normally purchase, sales and all are only used for goods. The things that you're dealing with. Things that you're buying and selling. Like if I'm a pen dealer, I will buy the pens and I will sell the pens. Yes, no? If I purchase the pen, then I will write purchases account. When you write purchases in accounts, right, in the subject, all right, what it means is goods. When you use the word purchase account, it is used for goods. Is this guy dealing in furniture? Is he a furniture dealer? Have they told over here in the problem? This guy is a furniture dealer. Have they told? No. If only they tell he's a furniture dealer, then you can use purchases account. Otherwise, these are assets. So if you purchased furniture, use furniture. If you purchased building, use building account. If you purchased machinery, use machinery account, like this. Okay. Sir, will prepaid come under assets? Yes, sir. Prepaid expenses will come under assets. Correct. Okay. But this, everyone is okay with this? No problem. So first scenario is done from my end. Are you also done from your end? Yeah, some of them are feeling, sir, it is slow, sir. It's okay. You have to help your science buddies also, no? Yeah. So kindly bear with it so that everyone will go in same pace. Yes. So we're just helping out a little bit there. Okay. Will we if you don't write narration, will we lose marks? Absolutely. For every journal entry, narration is a must. If you don't write it, 100% you lose marks. No doubt at all. Okay. You have to. Done. Okay, awesome. So let's do one more question maybe to get our understanding better. Journalize the following transaction. Okay. Following figures are given in, this time in 100. Last time it was given in thousands. Here they've given in hundreds. Okay. Maybe this time we'll see. We'll identify the accounts and then we will look through in a solution to match up. Fine enough. Solution is anyway I've given it over here. Okay. But we'll identify the accounts. That way it will be probably a little faster. Done. 1st December 2020, Ajit started a business with a capital of 4 lakh. Can you tell me the two accounts for this particular transaction? He started a business with a capital of 4 lakh rupees. So what are the two accounts here that will get used? Whatever money the owner has brought in, we call it as capital. Yes, instead of owner's account, we write it as capital account. Perfect. Done. And how is generally capital introduced? Capital, in fact, is mandatorily should be introduced through bank only. It can't be introduced through cash. There is a restriction, section restriction. Okay, you learn it in your company law. Fair enough. So hence, bank capital and bank accounts are the two components here. Yes, everybody have got that right. That is great. Capital is what, sir? Personal, real or nominal? What is it? Capital is a personal account because it is representing the owner. Bank account is also a personal account. Yes, because all this SBI and all these are personal accounts, artificial personal accounts. Yes. So you have to apply personal account ka rule. Debit the receiver, credit the giver. Now here bank is receiving the money or giving away the money. Owner put the money into bank account. So bank is receiving the money or paying the money. The bank is receiving the money. Yes. So personal account rules is debit the receiver. So bank account will be debited. Are you able to understand this? They've written debit separately in the separate column. You can just write like this only, sir. You can write it in a format that I showed you. You can just write bank account debit. Clear? Is it okay if I just check through here, sir? Comfortable, everyone? Everyone is okay if I just look through this? Yes. Science background students, okay, no? You have got a fair idea in the last problem. So can we work it out like this? So even commerce students don't start yawning too much. So that they'll also are there. Yes. Okay, awesome. Okay, bank account. They've written the nature of account also. It is a personal account, which we already identified. Remaining thing is capital account. Yes, capital is also personal account. The rule is debit the receiver, credit the giver. The owner is giving away the capital. So owner account is getting credited here. Instead of owner account, we use capital account. So you can write like this. Okay, they have also given nature of account. It is not required in exam unless they ask for it. Here in this problem, they've asked you the nature of each account also. That is the reason they made a separate column. Okay, before ledger folio, they made a nature of account as a separate column. If they don't ask, cut off this column, not necessary. Only if they ask, you do it, otherwise not required. Serial number also not necessary, sir. If you generally it is given as such. Generally it is given. If they want, you can just mention. Fine. Entries, no, at least you want to know how many entries you have passed. So write 1, 2, 3, or date should ideally suffice. That is your choice. I will not bother there. Sir, will they ask what? These sort of things. In the last 5 attempts, they have not touched all this. Okay, these sort of things they have not done. One question has come from journal. I will show you what that question is. Fine. Fair enough. That had one little adjustment. That's the reason they've asked that. They will not ask this. There's something known as rectification of errors topic. Okay. There also you need to pass journal entry. Okay. That generally comes in examination. But if you don't know journal entry properly, you'll not be able to solve things further. Hence, we are doing it in a little more detail. Okay. These sort of simple things will not come. Ideally, but I might be wrong over here also. In the last 4 or 5 attempts, it has not come. Okay, fine, fair enough. Anything, whichever approach, sir. Modern approach, traditional approach, it is okay. Don't worry much about modern approach. 5 heads of income, all that not required, sir. If you feel comfortable with 5 heads of income, you use it. Absolutely fine. Your call. But I will stick to this. This is easier. Okay, for me. All right. Okay, done. So this is okay for everyone. The amount column 4 lakh, 4 lakh. They've written all the amounts are in hundreds also. This also has been mentioned. Done. So bank account debit to capital account is your journal entry, and they've given a narration over here. Being commencement of business. Instead of that, we can write being capital introduced. Don't worry about narration. Narration can be written anything in your own words, but just start with the words being. Thereafterwards, your English vocabulary. Okay, next. December 3rd. Journal is what, sir? Passing the entries in chronological order, meaning date wise. So first you will pass an entry for December 1st. Next you will pass an entry for December 3rd. Like this, date wise you have to pass. He, the owner, on December 3rd, he, the owner, that is Ajit, he withdrew cash for the business from the bank for rupees 2,000. He has withdrawn the cash from bank account. Alright, so what are the two components that are getting affected here? What are the two components? He's withdrawn the money from bank. That means the two components or two accounts are cash account and bank account, because he's withdrawn the money, no? So cash and bank account. Yes. Fair enough. Correct. So now cash is what, sir? Cash is an asset. That means it is a real account. Yes, all assets of a business are real accounts. Bank is a personal account. So you need to apply the rules of real and personal account. So what is the rule of real account? Debit what comes in, credit what goes out. Here cash is coming in now. We withdraw the money from bank. So cash is coming in. So cash account should be debited. You can just write like this also. They've written debit in separate column. Not necessary. You can just write cash account debit. Okay. How much cash we withdrew? 2,000. So that you'll write in the amount column 2,000. Got it? You withdrew from bank. So bank is giving. Personal bank is a personal account. Personal account ka rule is debit the receiver, credit the giver. Here bank is giving away. So you will credit bank account 2,000. And this is the narration, being cash withdrawn from bank. That's all. Finally, somebody said drawings. Shreya, it is not drawings. Did they mention over here he's withdrawn the cash from business for personal purpose? Have they used the word there for personal purpose? They have not used it. Okay, only if they tell cash is withdrawn for personal purpose, then drawings will come. Otherwise, drawings will not come. That's a good point you have made, but I hope I've answered your question there. Okay, can I move forward? Okay, awesome. Yes, no issues. Anybody know? Everybody is on the same page. Commerce, science, everybody. Here, nature of account is mentioned. Is it important? Sir, in this question, they have asked nature of account. That's the reason. I told no Chandu. Only if they ask, mention. Otherwise, not required. In this question, they have asked. Check, I'm showing you here. State the nature of each account. They've asked. That's the reason they've made a separate column as nature account. Otherwise, cut off this column, not necessary. Cash is a real account, bank is a personal account. They've written here. Okay, awesome. Third one. The owner, he purchased the goods, making the payment through bank for 15,000 rupees. He's not purchasing asset. He's not purchasing furniture and all that. He's saying they purchased goods. If you purchase goods, then we don't write goods account. Okay, we don't write goods account. We write it as purchases account. Because goods you will also sell, no? Correct? So, goods, it will become a little weird. Hence, if you are purchasing the goods, we will write purchases account. If you are selling the goods, we will write sales account. Like this. Only for goods. And clearly, you have mentioned goods. Goods means something which you buy and sell as part of your business. Like for a pen dealer, he will buy pen and he will sell pen. Okay. So when he purchases the pen, he will use purchase account. When he sells the pen, he will use sales account. Like that. Done now? Fine. So he purchased the goods, making a payment through bank for 15,000. That means what are the two accounts here? What are the two accounts getting triggered here? One is purchases account. Another one, he made the payment through bank. That means another account is bank account. Okay. Now goods are what, sir? Now goods are what? Goods are assets. Yes. So asset means it becomes what, sir? Real account. Correct. Okay. There are two schools of thoughts here. Purchase also you will show it. You have to show it in P&L account also. No? Some of you have done commerce student. You have to show purchases in your trading profit and loss account also. Yes. So purchase, some books will tell it is nominal account also. Some books will say purchases is nominal account also. Yes. Our study material is saying it's a real account. We'll stick to that. There are two approaches here. Purchases, some will treat it as a real account. Some will treat it as a nominal account. Either way, you treat it as whatever, journal entry will go through as same. But I will stick to whatever is mentioned in the study material. So I will go for that. Okay. No problem. Fine. Comfortable? Yes, Pratul, did I answer? You can treat it as nominal account. Absolutely no problem. Fine. But you purchase the goods also, no? Yes. So it's considered as a real account also. There is a little conflict, but we are sticking to this because our material uses that. Yes, it's an expense. I agree with you also. You can apply nominal account rule also. Okay, coming back here. So purchase is a real account because it is goods. Bank account is a personal account. Yes. So you have to apply this rule. Real ka rule is what, sir? Debit what comes in. Here goods is coming in or goods is going out? Goods are coming in. So purchases account should be debited. How much is the value of that purchases? The value of the purchases is 15,000. The nature of this purchases is real account. You made the payment through bank. That means bank is a personal account. Rule is debit the receiver, credit the giver. Bank is giving away the money. So hence you're crediting bank account 15,000. That is your journal entry. And this is your narration. Being purchase of goods accounted, they've written. Is that fine? Okay, awesome. Next, he sold the goods for 16,000 and he received the payment through bank. Okay, see, for when you sell the goods, we don't write goods account. For purchase, you write purchase account. When you sell the goods, you use sales account. That means one account is what, sir? Sales account. When you sell the goods, and here they're saying we sold the goods and we received the payment through bank. That means what is the other account that is getting affected here? One is sales account. Another one is bank account. Perfect. Sales. Yes. Sales also you can treat it as sales. Again, some treat it as a revenue account. Some treat it as real account. Either way you can treat it. As I told you, same drama. You can treat sales as a real account or you can treat it as nominal account. Both are acceptable. But our study material is using real. We'll stick to that. Manageable. Sales is real account. Bank is a personal account. So we have to apply that ka funda here. So real account. Debit what comes in, credit what goes out. Here goods are going. You sold the goods, no? That means goods you have to give away. Goods are going out. That means you will credit sales because goods are going out, no? Correct? Because you sold the goods, you got money. How much money did you receive? 16,000. That somebody whom you sold the goods for, that somebody, no? He put the money into your bank account. He told you, give me goods, I will put the money into your bank account. Now you would tell me bank is receiving the money or paying the money here. When you sell the goods, bank money is coming into your bank account. Yes, no? That means bank is receiving. Personal account ka golden rule is debit the receiver. Bank is receiving it, so you will debit bank account. Fine. For 16,000, 16,000. Nature of account they mentioned here only. Okay, now guys. Okay, alright. Next. What is the next one? He purchased a furniture and paid by check. Is furniture a goods? Have they told over here he is a furniture dealer, sir? Anywhere in the problem have they told he is a furniture dealer? No. Okay. If they just tell furniture, then for a furniture dealer, furniture is goods. Have they mentioned he is a furniture dealer? No. That means what? This furniture is not a goods. It becomes your capital asset. It becomes your asset. Yes? Fair enough? Comfortable? Okay, the two components that are getting triggered here is what? Since you purchased furniture, furniture is first component, and you paid by check. Check means with the help of bank. That means the bank is the second component. Furniture is an asset. All assets are real accounts. Bank account is a personal account. So that means the entry will be what, sir? You purchased the furniture. So furniture is coming in. Yes. So debit what comes in is a golden rule of real account, right? Here furniture is coming in. So you will debit furniture for 2,500. You gave away the payment with the help of bank. So bank is giving away the money. Bank is a personal account. The rule was debit the receiver, credit the giver. Bank is giving, hence you will credit the bank for 2,500. That is the entry. This is the narration. Being furniture purchased and paid by check they have written. As I told you, you can write it in your own words. No problem there. That's the entry for that particular component. Easy peasy. Okay. Next one then. December 12th. Next transaction happened. He sold the goods to Arvind for 2,400. He sold the goods to Arvind for 2,400. Can you tell me the two accounts here? In fact, by the way, here have they mentioned Arvind paid by cash, Arvind paid by check, anything? Have they told anything about payment? They just told we have sold goods to Arvind. That's all, right? Yes, that's all they have told. If they just tell this, then it is a credit sale. Credit sale means you will sell the goods today, but you will recover the money maybe after 1 month, 2 months, etc. etc. You will give some time for the person to pay you. That we call it as a credit sale. There are two types of sales. Same two types of purchase also. Credit sale, cash sale. Credit purchase, cash purchase. Cash purchase means you make immediate payment. Cash sales means immediately you will receive the money. Credit purchase means you purchase the goods today, you will pay for it later. Maybe after 1 week, 10 days, 15 days, depending on the agreement that you have with the other guy. Okay. Similarly, credit sales means you will sell the goods today, but you will receive the money later, whatever the agreement says. Are we okay? Have they told here money has been received? No. If they don't tell money is received, then we always assume that it is a credit sale. Manageable? Yes. If it is a cash sale, clearly they'll mention. Cash sale, that does not mean you have to receive the money through cash only. Cash sale simply means you are receiving the money immediately. You can receive that payment through cash, you can receive that payment through check, doesn't matter. But payment should have come immediately. For that we call it as cash purchase or cash sales. Okay now? Yes, did guys understand this meaning? Okay, here it is a credit sale. That much clarity has come for everybody? Yes, no? Okay, that means what are the two components here, sir? What are the two components? We have sold the goods. When you sell the goods, one component is sales, correct? When you purchase the goods, you use purchase account. When you sell the goods, you use sales account. Whom did you sell it for? Arvind. Did Arvind pay you the money already? No. That means you have to recover the money from Arvind, no? So that means the next account you will use is Arvind account. Because Arvind has not yet paid you. You have to receive the money from him. That means, can I say Arvind is a debtor? Can I say Arvind is a debtor? Because you have to recover the money. From whom we have to recover the money only, we call it as a debtor. To whom we need to pay the money, we call it as a creditor. We have sold goods to Arvind. That means we have to recover money from him. So he is our debtor. Done? Manageable? Okay, can you tell me the, what sort of these accounts? Sales is a real account, so apply that rule. Okay. Arvind account is what, sir? Real, personal or nominal account? What is the nature of Arvind account? Arvind is representing a person, so it is a personal account. So apply the rules of these. Real account ka rule says debit what comes in, credit what goes out. Here goods are going out, so you will credit sales account. Fine. For 2,400. You sold the goods to Arvind. So okay, Arvind is a person, so it's a personal account. Personal account ka rule is debit the receiver, credit the giver. Here you sold the goods to Arvind means Arvind is receiving the goods or he's giving away the goods. Arvind is receiving the goods or he's or he's giving away the goods. He's receiving the goods. Yes. So Arvind is receiver. So you'll write Arvind account debit. Or you can apply another funda also. Arvind is our assets because we have to recover money from him. Asset means you should always debit. That way also you can apply if you're getting a little confused there. Okay, with the rules application, you can also follow this. Okay, Arvind account should be debited because it's an asset for us, meaning we have to recover the money from Arvind. Hence, Arvind account debited to sales account. So, Arvind is a personal account. Done. Okay, next. He purchased the goods from Amrit for 10,000 rupees. This time we have purchased the goods. They clearly mention it's a goods purchased from Amrit. Have they told anything about payment made? Have they told anything? We made the payment by cash. We made the payment by check. Nothing they mentioned. That means you tell me whether this is a cash purchase or is it a credit purchase. This particular transaction, is it cash purchase or credit purchase? If they don't talk about the money, we always take it as a credit purchase. Done? Fine. So this is the credit purchase. Now we have to identify the same two components. What are the two components here? You purchase the goods. That means one component is purchases. Okay. Fair enough. Did you make the payment for it? Did you pay for it already? No. Because they have not mentioned anything. That means you have to pay somebody. Whom you have to pay this money to? You have to pay this to Amrit. That means another account that you will use is Amrit account. These are the two accounts that you need to use. Manageable. Purchase. You purchase the goods. Goods are assets. So it is a real account. Amrit is a person. So it's a personal account. So these are the nature of account. Simple funda is real account ka funda is debit what comes in. You purchased it here. So goods is coming in. So purchase account should be debited for 10,000. It's a real account. Yes. Whom did you purchase it from? Amrit. So Amrit, you purchased it means Amrit is receiving or he's giving. Because personal account ka rule is debit the receiver, credit the giver. Amrit is receiving the goods or is giving away the goods. He is giving away. So you will credit Amrit for this amount. Or if you want it other way around. We have purchased the goods from Amrit. That means we are liable to pay him. This 10,000 rupees I have to pay him. If not today, maybe tomorrow or after 1 week. But I still have to pay him in future. Yes or no? That means can I say this is a liability? Can I say this is a liability? All assets if you are debiting, all liabilities you will credit. That way also you can remember. Manageable. Okay. That is another approach for your easy understanding if you are getting lost in the rules. Rules should identify, you should be able to get it through rules. Just in case you're getting confused, you can also bring in this one more point to bring in a little more clarity. That's it. Okay. Narration is this. Being purchase of the goods from Amrit. That's all. Okay. Next. He returned the goods. He means the owner. He returned the goods to Amrit. First we purchased the goods from Amrit. Okay. Goods we purchased worth 10,000. Maybe some goods were defective. So we returned it. The value of the goods returned is 500 rupees. Okay. So what are the two components? Can you tell me here? You are returning the goods. That means what are the two components, sir? When you purchase the goods, you wrote purchases and Amrit. When you are returning the goods, two components are what? What are the two components? One is, instead of just writing purchase, no, here we write purchase return account. If the purchased goods, if you are returning, then we use something known as purchase return account. So that it will be easier to identify why we are debiting or crediting. So we'll write purchase return account. Whom did we return these goods to? Amrit. So you'll write Amrit account. That's all. Basically, ulta of purchase. When you purchased, what entry you passed? Purchases account debit to Amrit. When you return the goods, ulta entry. So it will be Amrit account debited. You return the goods only worth 500. Instead of crediting purchases, you'll write purchase return account. That's all. To have a little clarity. That's it. Okay. So that the readers will understand it that these are returned of the purchased goods. So if you return, if you get sales return, then instead of sales, we will use sales return like that. Basically, ulta of the previous entry. That's it. Whatever entry you passed for purchases, no, ulta you do. That's it. That is your purchase return wala entry. That's all. Simple. Fair enough? Same accounts are same any which way. Amrit is a person, real account is, this is a real account. If you want it by rules also, you can receive it. Amrit is a person. Okay, when you return the goods, Amrit is receiving the goods. Personal account rules is debit the receiver. Since you are returning the purchase goods, Amrit is receiving the goods, hence you can debit his accounts. Goods here are going out of your business because you are returning the goods. And it's a real account. Real account ka rule is debit what comes in, credit what goes out. Here goods are going out. Hence we credited purchase return account. Through rules also you can ascertain that. Or simplest way is pass ulta entry of the previous one. That's it. Okay. Any doubts? Anybody till here? Yes. Awesome. Next, December 16th. He received from Arvind 2,300 in full settlement. If you remember, we had sold the goods to Arvind. How much did we sell the goods to Arvind for? 2,400. When we sold the goods, I had told you it's a credit sale. Correct? No? Meaning, we will sell the goods now. We will receive the money later. We sold the goods on 6th December and we are receiving the money from Arvind guy on 9th December. 3 days later. Fine. So 3 days later, we have received money from Arvind for 2,300. This is important. Sir, what is the sale value of the goods I sold, sir? I sold him the goods worth 2,400. That means ideally I should have received how much from him? 2,400. But I received 2,300 in full settlement, they are telling. That means what does this mean? He's telling 2,300, you take, that's it. Yours and mine transactions are done for. That means what is this, sir? Instead of paying 2,400, he has paid 2,300. That means how much less did he pay? 100 rupees. Indirectly, they're telling 100 rupees, you give me discount. Discount is what they're saying. That means there are 3 components here. Can you tell me those 3 components? There are 3 components here. What are those? One, you receive the money from Arvind, right? So that means generally you'll receive the money through bank account. So bank account is one component. Okay. Second component is you receive the money from Arvind, is it? Arvind is a second component. And you gave some discount. So discount is a third component. Okay. Fair enough. Now that means this is a simple journal entry or is it a compound journal entry? Is it a simple journal entry or a compound journal entry? We are not using 2 accounts here. We are using more than 2. If you are using more than 2 accounts, we call it as a compound journal entry. That's all it is. Done? Okay. Bank is a personal account. Arvind is also personal account. Discount. Discount is if you give any discount to somebody, it's an expense. Yes, no? It's an expense. Correct? That means expenses are what, sir? Nominal accounts. That means you need to apply these rules there. Okay. Personal account ka rule is debit the receiver. You have received the money from Arvind into your bank account. So bank is receiving it. So you will write bank account debit 2,300. Okay. Fair enough. Discount. Discount is a nominal account. It's an expense. What does nominal account rule say? Debit all expenses. Here discount is an expense or a loss for us. So you will debit discount to the extent of 100. Okay. Last is the person is the Arvind. Arvind is a personal account. Personal account ka rule is debit the receiver, credit the giver. Arvind is giving away the money here. So Arvind account should be credited for 2,400. Like that. So this is the journal entry for this. Narration will be being cash received from Arvind and discount given. Okay. Or you can write the same thing. Whatever is the transaction, no? Same thing you can write it in narration also. Just add the words being. That's it. Alright. That is absolutely fine. Can we think that he's paid advance? No. You can't think of it as he's paid advance because we already sold the goods to him. Duh. We have sold the goods on 6th and we are receiving the money on 9th. Advance means what, sir? First I should receive the money, then I should sell. That is not happening here. So that assumption is wrong, Jagat. Done. December 18th. He withdrew the goods. Listen to this carefully. He withdrew the goods for personal use. Personal use. Now business has some goods. That goods should be sold to somebody because that's your business, no? You buy the goods, you sell the goods. That is your business. But here what did the owner do is he withdrew the goods, meaning he took off the goods from the business. He took away the goods from business for his personal purpose. Not for business purpose. For his personal purpose. Maybe he wanted to use the goods for himself. Okay? For his personal purpose. If the owner has withdrawn any money or anything, any goods for his personal purpose, then we call that as drawings. meaning drawing from the business, drawing out the things from the business. You can draw cash or you can draw goods. Generally, these are the two forms of drawings. Drawing means something, taking something from the business. Owner taking away something from the business for his personal purpose. In this case, he is drawing away the goods. Got it? That means what are the two components here, sir? Component is drawings. Who is drawing it? Owner. That means, can I say drawings is a personal account? Because it is representing a person. Yes. So drawings is a personal account. What did the owner draw? He draw goods. Correct. So that we will reduce it from the purchases. So why we reduce from purchase? So you purchase the goods. Correct. The owner took off those goods. Now can you sell that goods anymore? Let's say we purchased 100 units of a particular goods. 10 units the owner took for his personal purpose, which we call it as drawings. Now how many units can this business sell? Let's say this is Messrs X. Okay, this is the business. How many units can this business sell now? They purchased 100 units. 10 units owner withdrew off for his personal purpose. How much can the business sell? Only 90. Yes or no? Hence, drawings, we reduce it from the purchased goods. Because though you purchased 100, entire 100 you cannot sell now. You can only sell at best 90. Correct? Hence, the drawings, we reduce it from purchases. Hence, since the drawings is the form of goods here, we reduce it from purchases. Manageable? Hence, the two components are drawings and purchases. Drawings is a personal account, purchases is a real account. So you need to apply that rule. Okay. So the journal entry will be, okay, simple funda. If you are having confusion in both the entries, like one trick in accounts is, so you don't have to get both of the things right. If you get one right, if you know which to credit, automatically you know what to credit also or what to debit also, because debit and credit is always equal in accounts. So especially science guys I'm talking about. If you are finding it confusing to identify both the components, identify the one that you feel is easy for you. Like drawings maybe is tough for you, but purchases is easy, Yes, purchases is a real account that you know. Real account ka rule is debit what comes in, credit what goes out. Here goods is coming into the business or going out of the business. Goods is going out, correct? That means you have to credit purchases only. Yes, 1,000 rupees. That means automatically drawing should be debited. Fine. So that way also you can figure it out. It's not necessary both the things you need to figure it out. One, if you figure it out, automatically the other one is a balancing figure for you, because both has to be same. That is another shortcut method also that you can use if you want. Fair enough. Don't write drawings to stock accounts, sir. Prashant, that would be wrong because the business may not have stock. Like I purchased 100 units. Okay. I sold 100 units. Can you tell me how much is my stock? Prashant, since your question. I purchased 100 units. I sold 100 units. How much is my stock, sir? 0. Yes or no? It's not mandatory that the business should have a stock, right? Hence, we don't use stock. You always use purchases account only. Did I answer your question, Prashant? Is that okay? Okay, fine, fair enough. Drawings is a loss. Yes, Shreya, you can think of drawings as a loss, but it is not revenue loss. It is capital loss. Hence, it will not come in P&L account. Hence, you will reduce the drawings. If you remember, if your teachers in first PUC must have told you, 11th standard, drawings you should always reduce from capital account. Okay, na? Fair enough. This is not a revenue loss. You can think of it as a capital loss. That is acceptable. Yes, awesome. So drawing, that's the reason we reduce drawings from capital account. Because simple funda now. If you want a further explanation for that. How much did the owner bring in the money to start the business, sir? Think of it. How much did the owner bring in the money to start the business? 4 lakh rupees. Business is liable to pay 4 lakh rupees to the owner. Agreed? Because owner brought in 4 lakh rupees. Business is liable to pay 4 lakh rupees to the owner. But now, will the business pay 4 lakh rupees? No. What will business tell? See, boss, I had to pay you 4 lakh. But in that, 1,000 rupees goods you already took. That means I will not pay you 4 lakh now. I will pay you 4 lakh minus 1,000. Hence, I will pay you only 3,99,000. Yes, that means your capital will not be 4 lakh now. Capital will be 3,99,000 because 1,000 is already withdrawn by the owner. That's the reason we say drawing should always be reduced from capital. Okay, that is the component or logic behind that. Got it? Sir, we get interest on drawings and all. Sir, interest on drawings and all, we'll take it in partnership firm. For the now, I think I'll like to get into that, sir. Wait, hang on. That I'll take it up later when we get to partnership firm. Fine now? Don't write goods account, sir. Always write purchases account itself. Because you will purchase the goods and you will sell the goods, no? See, when you purchase goods, you will debit. When you sell goods, you will credit. It will lead to confusion. So, in accounts, the rule is, when you purchase the goods, you will use purchases account. When you sell the goods, you will use sales account, like this, for clarity. Because you need to know how much you purchased and how much you sold, you know. For both the things, if you just use one common account, it will create confusion. Hence, there are two separate accounts. For purchases, purchases account. For sales, sales account. Two separate ones. So, don't use one common account. Logically, you may be right. Presentation-wise, it will create a problem. Hence, that is not suggested. Okay, any other doubts? No? Okay, awesome. Okay. Next, he withdrew cash from business for personal use. This time around, he has again withdrawn for personal use only. But what has he withdrawn for personal use? He's withdrawn cash for personal purpose. Previously, he withdrew goods. This time, he has withdrawn cash. That means, what is the component, sir? Now, you should be able to tell me. The moment a personal use comes in, what is the first component? First component is drawings, which is a personal account. Did he withdraw goods here? Did he withdraw goods or what did he withdraw? He withdrew cash. That means cash is a second component. Drawings is a personal account. Cash is a real account. So that ka funda you need to apply. Okay. Now cash, simple one, we can figure it out. Cash is coming into the business or cash is going out of the business. Owner took the cash away. So that means cash is going out. That means the cash account should be credited because cash is going out. Yes. That means automatically drawings should be debited. One if you figure out automatically, other one is balancing figure. Okay, like that. Or another one if you wanted, drawings is a personal account. The rule is debit the receiver. Owner is receiving the money here, hence you debit drawings account. That way also you can apply, whichever you are comfortable. Done. This is the narration. Being cash withdrawn for personal purpose. You can write like that. Okay, next. He paid telephone charges of 110. You tell me, telephone charges, is it revenue expenditure, capital expenditure? Let me ask you this question. Yesterday only we discussed this. Telephone charges, revenue expenditure, capital expenditure. Revenue, because you have to pay this monthly. It keeps recurring and you don't get benefit beyond 1 year also. Correct? So it's a revenue expenditure. Yes? That means, what are the two accounts here, sir? For journal entry, we need two accounts. What are the two accounts here? You paid telephone charges. That is expense. That means the telephone charges is one account. Okay, this is an expense. All expenses are what accounts? All expenses are nominal accounts. They said it is paid. You can assume it is paid through check or it is assumed through cash. Your call. I'll assume it as it is paid through check only. So I will use bank account. Fine. Bank is again a personal account. So these two rules ka funda you need to apply. Nominal account ka rule says what? Debit all expenses and losses. Telephone charges is an expense. So that means telephone expense I should debit. It's a nominal account. I paid it through bank, I've assumed. So bank account, bank is giving away the money. So bank is a personal account. Credit the giver. So I've applied that and got this. This is the thing. You can take it as cash account, sir. Dhanush, I'm not denying with that. You can take it as cash. But I'm just telling you for your reference, in Income Tax Act, there is a restriction. If you remember, in India, there's a huge digital movement. Yes. To curb the cash transaction, because cash leads to a lot of black money. It is unaccounted for. Hence, majority of the payments in a business will be done through bank only. Fair enough. Hence, it's always better to assume the payments are made through bank if they don't tell. Even if you assume it as cash, it is not wrong. Alright. But bank is a better assumption. Hence, I'm making that assumption. That's all. Done? Okay. Awesome then. Alright. He paid Amrit, the owner, he paid Amrit or the business paid Amrit in full settlement 9450. Why did we pay? And we paid on December 13th. Amrit looks like something which we have heard before, no? On December 7th, if you just check, we had purchased the goods from Amrit for 10,000 rupees. That means 10,000 rupees I should pay Amrit. No, hang on. The very next day, I had returned some goods to Amrit of 500. That means how much is the business liable to pay Amrit? First, we purchased goods worth 10,000. Then we returned goods worth 500. That means what is our obligation to pay Amrit? 9,500. Because in 10,000 by 500, we have already returned, That means we need to pay 9,500 to Amrit. How much did we pay, sir? Instead of paying 9,500, we paid 9,450. Okay, let's identify. Here there are three things. So let's identify the three things. One, you are paying Amrit. So we'll assume that we are making the payment through banking channel. So bank account is one. Bank is a personal account. Okay. Whom did you pay it to? You paid it to Amrit. So Amrit is another account. Amrit account. Amrit is also a personal account. But did you pay him full money? No, you had to pay 9,500, but you paid only 9,450. Meaning we are paying less. Meaning we got some 50 rupees a discount. Instead of paying 9,500, we paid 9,450. That means we got some discount. We can write this as, instead of writing discount, you can write a discount received account. In previously, instead of writing discount, no, you could have written discount allowed account. Discount allowed is an expense because we are giving it. Discount received, is it an expense or is it an income, sir? Instead of paying 9,500, if I pay only 9,450, is it an expense for me or is it an income? It's an income for me, yes. But still it is a nominal account only, correct? It's an income, but all incomes are, all expense, loss, income, gains are nominal account. So you need to apply this ka funda. Clear? Same like this. This in previous scenario, it was discount allowed. Here it is discount received. That's all. Okay. Now this one easily we can figure that out. Discount received is an income. And nominal account rules say debit all expense losses, credit all incomes and gains. So discount should be credited. Actually, they've written the entry in the next page also. I'll complete the entry here only. Next page may they've written discount. Okay. To discount 50. So first we can figure out discount. This is easy because discount is a nominal account. So one part of it we have already figured it out. Discount should be credited. Next is bank account. We are paying the Amrit person or are we receiving the money? Are we paying or are we receiving? We are paying. That means bank is receiving the money or bank is paying the money? Bank is paying. Personal account ka rule says debit the receiver, credit the giver. Bank is giving away. So that means you will write to bank account 9450. Correct? You paid it off to Amrit. So Amrit account should be debited for 9,500. Because we had to pay Amrit 9,500. Okay, that is the reason. And we paid it to Amrit. Personal account rule says debit the receiver. This money Amrit is receiving it. Hence we are debiting his account. So that is your journal entry. This discount portion they have written it in the next page. Okay, which I've just bought it here for your reference. That's it. You can write discount received account. So better write discount received account. Instead of just discount, write discount received account. They are writing only discount in a study material. Maybe it's acceptable. I suggest you write discount received account. Fair enough. For discount allowed, you write discount allowed account. So that you will also have a clarity what it is. So that you will not get confused later on, especially the science guys. Once we debited, once we are crediting, why? They may lead to some confusion. Hence, better have a clarity. This is a discount received. Previous case it was discount allowed. That's the reason. Okay. Okay, we are in the last two legs. We'll complete all this. Paid for stationery 200, rent 5,000, salary to staff 2,000. You paid stationery, rent, salary. All these three are what, sir? All these three are what? Can I say all these are expenses? Revenue expense, can I say? Meaning all these are nominal accounts. Yes, fine. And you're paying them. That means I'm assuming that you're making the payment through banking channel. So bank, I'll use bank account. So personal account. Either you can pass a separate 3 journal entry. Like stationery paid 1 journal entry you can pass. Rent paid 1 journal entry you can pass. Salary paid 1 journal entry you can pass. Or you can combine everything and pass 1 compound entry. I think we can stick to compound entry here. Because what is the journal entry for expense? Nominal account rule says all the expense should be debited. Yes. So there are 3 expenses here. So debit all the 3 expenses one by one. That's what they've done here. Stationery account expense debit, rent account debit, salary account debit. The amount they have debited. You made the payment through banking channel. Bank is giving away the money. Bank is a personal account. Credit the giver. Bank is giving away here. Hence you credited the bank. You credit the bank by the total amount. 200 plus 5,000 plus 2,000. If you add all this, you're going to get 7,200. That's what they've credited bank for. Narration may you just say being expenses paid. That is sufficient. Keep the narration crisp. Don't have to illustrate 2 lines, 3 lines and all. Write a few words. As short words which make sense as possible. Okay. Any doubt in the last but one scenario or the one we just now did, or okay? All good, huh? Okay, next. Goods distributed by the way of free samples. We gave away some goods as free samples. Why will somebody give the goods as free samples, sir? Why will somebody give away the goods? Why will any business give away for free? Can I say it's a sort of an advertisement? Yes. It's basically advertisement. Yes. I want to advertise my product. That's the reason I'm giving it for free. Correct? So that means, can I say this is an expense, or can I say this is a nominal account? I'm basically advertising my business. Instead of showing the advertisement in television, I'm doing a different form of advertisement by giving some free samples for somebody and telling it, if you want, use it now. I'll not take the money for this. Later on, if you want more goods, come to me and buy. Like that. Okay, I'm doing advertisement in the form of, like, not in the form of television ads, but in the form of giving away goods. That's it. But still, it's an expense for me. Correct? No, it's a loss for me basically. So it's a nominal account. Okay. Am I paying for this advertisement in cash? Now, if you post an ad in television or in a newspaper, you have to pay it in cash or check. Am I paying this money in cash or check? No. What did I give away in fact? I gave away goods. That means these goods are worth 2,000. Can I sell these goods to somebody anymore? Can I sell these 2,000 goods to somebody anymore? No, I can't. That means just like drawings. When goods was taken away as drawings, you reduced it from purchases, no? Here also you use purchases only. Fair enough? So the two components are advertisement and purchases. Advertisement is nominal account. Purchases is real account. Okay? Nominal account ka rules is debit all expenses. So advertisement account you will debit. Purchases account you will credit. That's it. One, if you figure it out, other things are pretty straightforward. That's it. Okay? So there's a good question in a way, especially the science guys. Okay? So go through it again and again till you understand it. This is the homework for you today specifically. And not only for science student, whichever commerce student is having any difficulty. Please journal entry, sort it out logically. Don't mug it up. Okay? Because whenever you have confusions later on in the advanced stage, right? It's always good to have that trail. Okay, how to pass entry? Entries, it's a simple process. Identify two accounts. Okay? Then see, these two accounts comes into which bucket? It'll fall only under three buckets. Real, personal, nominal. Once you identify the accounts and once you categorize them, last step is to just apply the golden rules of those three accounts. So it's a very, very logical process. So don't mug it up. I know that these entries you have passed many a time, so automatically it is registered. Okay, fair enough. So if you treat purchase as nominal account, if you treat purchase goods you are giving away, no sir. See, like again, as I said over here, no, right? Same thing you need to just check sometimes. You can't debit there. Logic also will, logically also it should make sense. You can't debit just two entries and leave it off. Okay, fair enough. I got your point, what you're trying to make, but that doesn't work out here. Fair enough. All okay? It has to match. Debit and credit has to match. See, simple logic why we credit this also, right, is you can't sell those purchased goods anymore. Your purchased goods ka value is reducing. Hence, we have to reduce purchases by. Okay, that way it works out. All right. Okay, awesome. Even if you give away goods as charity, also same entry, sir. Advertisement expense account debit to purchase, or you can write charity account debit to purchase also. Either way, it doesn't matter. That is also in the form of advertisement only. Okay. Goods sent on return basis. Dhanush, that is a separate topic. Goods sold on a return basis is a separate topic we have. Okay, there I will cover it in full detail. Okay, it's a whole topic. Let's take it up later. Okay, let's not worry about that now. Fair enough. So let's do one thing. Let's take a break for about 20 minutes and then come back and take up the remaining questions. Done? Welcome back after the break, guys. What we're doing? Journal entries. So let's continue with the journals. Let's get our practice a little better with solving maybe some more journal entries. Next, question number 6. Transactions of Ramesh for April are given below. You need to journalize. Question number 6. Ramesh started the business with rupees 10 lakh. That means now let's see. What are the two components here, sir? Ramesh has started the business means he has introduced the money into the business. Will we use Ramesh account or will we use capital account? Ramesh is the owner. Will we use owner's account or will we use capital? We'll use capital. Yes. The money will be generally introduced through what? The banking channel. So that means the two components are capital and bank. Capital is also personal account. Bank is also personal account. So applying personal account ka rule, it is debit the receiver, credit the giver. Bank is receiving the money, so bank account will be debited for 10 lakh rupees. Okay. Owner is giving it. So instead of owner's account, we'll write capital account 10 lakh rupees. So being capital introduced, so that will be the straightforward journal entry. The date is, journal entry you pass it chronologically. So you'll write here, date is first date column, you write April. Here ledger folio column is irrelevant. As I told you, in journal may you give ledger reference, in ledger may you give journal reference. That was important, but when we're doing the accounts manually, now this has become redundant. So you just write the column and leave it blank. Okay, so yes, all of us are able to understand this a lot better now, a lot faster, especially the science background guys. Yes, is it okay? Yes, awesome. All right, that's the first one then. Yes, they're saying, sir, instead of capital, can we write Ramesh's capital? Yes, sir, you can write Ramesh's capital account. Absolutely fine, no problem. You can just write capital or Ramesh's capital account. Fine, fair enough. But the problem arises when 3 guys introduce capital. When 10 guys introduce capital, you'll not be able to get it. Hence, we just write it as capital. But your choice. Here you can write it. No problem there. Alright, next. April 3rd May, next transaction happened. What is the next transaction? Bought goods for check. That means you have purchased the goods. Immediately, you made the payment via check. You tell me whether this is a cash purchase or a credit purchase. Whether this is a cash purchase or credit purchase. Cash purchase does not mean you are paying via cash. Cash purchase simply means you made the payment immediately. Did you make the payment immediately? Yes. How you make the payment? By cash, by check? Irrelevant. Since you made the payment immediately here, this is a cash purchase. Yes. So what are the two components here, sir? When you purchase the goods, two components are, you don't write goods, you will write purchase account. Yes. Yes, purchase is a good, so we'll treat this as a real account, assets basically. So a real account, purchase is a real account. You paid the money via check. That means you use bank. So bank is a personal account. So these are the two accounts that are getting affected. Real account rules is debit what comes in, credit what goes out. Here goods are coming in. So purchases account will be debited. Bank is a personal account and bank is giving away the money. So bank is the giver. So you will credit bank account. So purchases to bank is the entry. This is the narration. As simple as that. Fair enough. April 5th May. Drew cash from the bank. Careful. Did they say over here for personal purpose? Drawing the cash from bank means basically drawing the cash from bank means you took the money from bank, but have they told it is for personal purpose? No, they have not mentioned personal purpose. That means you have drawn the cash from the bank for your office purpose, for business purpose only. That means what are the two components here? What are the two components here? You're drawing cash from bank. The two components are cash and bank. Cash is an asset. All assets are real accounts. Bank is a personal account. So simple rule is, real account ka rule is debit what comes in. Here money is withdrawn from the bank. So cash is coming into the business. So cash account should be debited. Okay. For 10,000 rupees. Bank is a personal account. Bank is giving away the money. So credit the giver. So to bank account 10,000. Narration is being cash withdrawn from bank. That's all. Okay. Date column. Don't forget the dates. Dates and narration. These two things don't forget. If they don't give the date column, it is fine. Have a date column. Leave it blank. It is fine. But if they have mentioned the date, compulsorily write the dates. Otherwise you will lose marks. Dates, narration are something which generally students forget. Josh mein. Okay. Because they know all these are simple enough. No? In simple things, right? Formats and stuff are very important. Because these are very, very straightforward. Every minute details they look for if they're giving these sort of simple transaction in examination. So be very specific on those things. Otherwise you will lose marks for sure. Okay. Alright, fourth one. Sold the goods to Krishna. Goods on credit. That means what are they trying to say? Goods on credit means you have sold the goods to Krishna. Is Krishna paying us right now or is delaying the payment? On credit basis means he will not pay the money right now. He will pay it later. Maybe after 1 week, after 3 days, after 3 months. Doesn't matter. That's as per the agreement. So he is delaying the payment. That means can you tell me what are the two components here? You have sold the goods. That means Instead of goods, you'll say sales. Fine. Sales is again a real account. Yes. You did not receive the money, but you sold it to whom? You sold it to Krishna. That means Krishna becomes your debtor. Yes. So that means this is a person. So personal account. Yes. These are the two components, sales and Krishna. So the journal entry will be Krishna is a personal account. The rule is debit the receiver. You have sold the goods to Krishna. So that means Krishna is receiving the goods. Personal account rule says debit the receiver. So the journal entry will be Krishna account debit 1,50,000. To what, sir? Sales. Sales is a real account. So debit what comes in, credit what goes out. Here goods are going out. So you credit sale to the extent of 1,50,000. And this is your narration. This is your date that they have given there. Simple. 4 transactions are done. Awesome. Any doubts so far? No doubts? Okay. Brought from Sham goods on credit. So this time we have purchased the goods on a credit basis. That means we will buy the goods now. We will pay for it later. That means what are the 2 transactions here? You bought the goods. That means first account is purchases account, which is a real account. You did not make the payment. That means you have an obligation to pay somebody later. Whom do you have the obligation to pay to? We have an obligation to pay Sham. Yes, so that means the Sham is another account. Sham is a personal account. So purchase is real, Sham is personal. Applying the rules. Real account ka rule. Debit what comes in. Yes, here goods are coming in. So the journal entry will be purchases account debit to Sham account. Because Sham is giving, no? Personal account rule says credit the giver. Sham is giving us the goods. Hence we are crediting him for 2,25,000. Narration and dates. That's it. Okay, awesome. Next. Received from Krishna 1,45,000 and the same day allowed him discount of 5,000. Check, sir. We sold goods to Krishna worth how much? We sold goods to Krishna worth 1,50,000. That means how much we should have received from him? 1,50,000. But did he pay 1,50,000 or he paid just 145? He just paid us 145. That means we gave him some discount. We told, no problem. 5,000 discount le le bhai. Hum de raha tujhe. Okay? So 5,000 is a discount. This is discount what? Is it discount received for us or is it discount allowed for us? This 5,000 is the discount allowed. Correct? No, we have allowed that discount to him. That means this is an expense for us. Correct? No? Because instead of receiving 1,50,000, I am just receiving 145. 5,000 rupees is a loss for me. No? Yes? So it's an expense there. Comfortable? Okay? That means we have done those already in the last scenario. 3 transactions are happening here. One is discount allowed, which is nominal account. Another one is you've received the money. So that means we'll assume that the money is received through banking channel. So bank account is the second one. Okay, bank is a personal account. And you received this money from Krishna. So Krishna account is the third one. Again, personal account. 2 personal account, 1 nominal account. Nominal is very easy. Nominal account ka golden rule is debit all expenses. This is a debit all expense and loss. This is an expense or a loss for me. So we're going to debit this. So discount allowed account debit 5,000. Okay. Now bank account. Personal account rule is debit the receiver. Since somebody is giving us the money will come into our bank account. So bank will receive the money. So bank account debit 1,45,000. Balancing figure is Krishna 1,50,000. If you figure out 2 components, other one is obviously a balancing figure. Okay. This is what entry, sir? Simple journal entry or compound entry? This is a compound journal entry because we are using more than 2 accounts. If you just use 2 accounts, 1 debit, 1 credit, it is simple journal entry. If more than 2 account comes, 3, 4, 5, 6 like this, then it becomes a compound journal entry. That's all. Okay, here we have done a compound entry. That's it. Okay. Next, paid Sham. Why are we paying Sham? Did we buy any goods from Sham? Yes, we had bought goods from Sham on a credit basis. We had bought goods from Sham for 2,25,000. That means we have to pay him 2,25,000. But check how much did we pay Sham? Paid Sham cash 2,15,000. Instead of paying 225, we are paying him only 2,15,000. That means 10,000 rupees is the discount allowed or discount received. Discount allowed or discount received? It should be discount received. Correct, no? So why have they written discount allowed? For me, it is discount received. For Sham, it is discount allowed, no? Transaction always you need to look at from both the perspective. From my perspective, it is discount received. But from Sham perspective, it is discount allowed. So don't be misled by that term. You should always pass the entry from business perspective, meaning the Ramesh perspective. From perspective of, or from the viewpoint of Ramesh, okay, all right, we have received the discount. Hence, for us, it is discount received. Books may say anything, doesn't matter. Comfortable, huh? Sham only they're saying, no? Is it okay? All right. So what are the three components here again? We paid Sham. So the three components are, first is we paid Sham. So Sham is one account. So he's a personal account. We got some discount because we paid him less. So discount received. That is nominal account. We paid it through cash here they're telling. Actually, it should have been through check. Maybe it's a typo. Yeah, here they've used bank only. Actually, it's a typo. Write it as bank. Paid Sham by check, you write. Okay. Or if it is cash also, it is fine. If you're paid by cash, use cash. Actually, in the journal entry, they've used bank. So it must be a typo. Okay. Make this as paid by check. It's okay. That means bank account is a third journal entry, which is personal account. These are the three things. Okay. Nominal account is the easiest. Debit all expense loss, credit all incomes and gains. This is a discount received. That means this is income for me. That means I need to credit this discount received, which is 10,000. That much discount I got. Okay. Now bank account. I paid the Sham. No, that means money is going out of my bank. Bank is receiving or bank is paying? Bank is paying. That means debit the receiver, credit the giver. Bank is giving away. So to bank account, 2,15,000. We paid Sham. So Sham is a personal account. He is receiving it. So that I'm debiting the receiver, 2,25,000. Okay, like that. Comfortable? So that is your Sham ka. Sham ka Shami. Yes. All right. Next, cash sales for the month. This month we made a cash sales of 8 lakh rupees. We sold the goods and we received the cash. So what are the two components? We sold the goods. That means the sales is one component. We received the cash they are telling. So that means cash is another component. Sales is a real account. Okay. A real account. Cash is again a real account. Rule is debit what comes in, credit what goes out. What is coming in here? We have sold the goods for cash. That means what is coming in? Cash is coming in. So cash account debit to sales account. Actually, this should have been again check, I think. But okay, no problem. Since they specifically told cash, I'll use the cash here. Instead of bank, I will write cash account only. Fine. One of the thing is typo here. Either solution this is not my thing, okay? This is study material ka question I picked up, okay? One of the things is wrong here. Either in the question they should have wrote, alright, cash sales for the month received by check. At least that they should have written. Money is received through check. They would have written like that. Or in the solution, they would have written cash account debit. So I'm just modifying the solution here. Fine. Instead of bank account, I'm writing cash account. Cash account debit to sales account 8 lakh. Hope you got the funda there. I know it's a typo in the question which I'm correcting. Done, no? Alright, last one. Paid rent, paid salary. If I'm paying these two, what are these two, sir? Both are my expenses, no? Correct? That means all are my nominal accounts. Either you can pass a separate entry for rent paid, separate entry for salary paid. Two separate entries you can pass, or you can combine them and pass one compound entry. Can we do a compound journal entry? Because both are expense. Nominal account rule says debit all expenses. So I will debit rent, I will debit salary. They're assuming that the payment has been made through bank, which generally will be the case. So to bank account, 1,50,000. 50,000 for rent, 1 lakh for salary. So the total payment is 1,50,000. Narration and dates. That's all. Okay. At the end, you can also give the total of all the journal entries you have passed there. And fair enough. If you're doing it for the whole month, this generally is done. I think we can stick to maybe 8th question. All right. Pass journal entries in the books of Gamma Bro. Employees had taken inventory worth 1 lakh rupees. Employees have taken inventory. Inventory means goods. Employees have taken goods, meaning inventory worth 1 lakh rupees. The cost of the goods is 75,000. on the eve of Deepavali, and the same was deducted from their salary of the subsequent month. Nice strategy, no? Right? We told the employees, no cash. Employee told, no problem. Give me your goods. Yes, Katham transaction. Okay, this is how they are doing the transaction. Instead of paying salary in cash, we paid salary in goods. That's all. Can you tell me the two components that are getting triggered over here? One, you paid salary to employees. So first component is salary because it's an expense. That means it's a nominal account. Yeah. Did you give cash? Apne cash pay kiya ki what did you give? What did you give to the employees? You gave away goods. That means, can you sell those goods now? Can the business sell those goods? They purchase those goods. Some of those purchased goods are taken away by the employees. So is it possible for the company to sell it? Not possible. That means what is the next account you should use, sir? Same like drawings. When the proprietor takes away goods for his personal purpose, you use, no? Yes, purchases. Here purchase also. You write it as purchases only. That means purchase is again real account. That means what will be the journal entry for this? Salary is a nominal account. Nominal account rule, debit all expenses. So salary will be debited here. Okay, salary account debit 75,000 to purchases account 75,000. One, if you figure it out automatically, other one you can. Now I think this must be okay for you. Feeling I think a lot better. Yes. Okay, buddy. Chaliye. Why 75? Oh, okay. Actually, that is a good question. Gulam Saab. Yeah, good question. Thank you, dude. Worth of the inventory is 1 lakh. Cost price is 75,000. Simple funda, sir. At what price you would have purchased these goods? At what price you would have purchased these goods? At 75,000. Can I say that? Because you will always purchase it at cost price, right? Whatever price you pay, that is a cost price. That means, can I say 75,000 is the purchase value? Yes. Or can I call it as a purchase cost? Yes. This 75,000 you purchase these goods for, you will sell it for 1 lakh rupees. Okay, this is the worth or the purchase cost of the goods is 75, but like you will sell it for 1 lakh. But these goods you are reducing it from purchase, no? Purchase value is how much? 75,000. That means you will credit by 75,000 only. Fair enough. Inventory, the stock is always shown at cost price as per accounting standard 2. You'll learn it in your next stage. Okay. Cost or a net realizable value, whichever is lower. Okay. But generally will be on the NRV, net realizable value will be on the higher side. So inventory in most cases will be valued at cost. That's the reason we always use cost price, irrespective of what they take it for. Got it? Because you are reducing this from purchase, no? So you should reduce only purchase value. That's the reason. Okay, Gulam Saab is saying, I got it, Sirji. Move on. Okay, anybody else having any other doubts? No, move on. No? Awesome. Move on or move out? Looks like it's a move out scenario, no? Sir, get lost, sir. Enough today. He's not listening only. He's what he's scolding, I think, deep down. Okay, no problem. I'm a little stubborn that way. Okay, yeah, thick skin fellow I am. Okay, wages for erection of a machinery 18,000 rupees. You purchased a machinery. If you purchased a machinery, if it's a huge machinery, you need to install it also, no? Like these days, even television requires an installation. Yes, no, you need to wall mount it. Yes, even AquaGuard, simple things only require installation, correct? If it's a huge machinery, then it would require certain installation. So you took the help of some guys, okay? They helped you in installation. And you paid those guys the wages, the money of 18,000 rupees. They're asking you the journal entry for this. My first question to you is this wages RE as in revenue expenditure or is it CE as in capital expenditure? This wages paid for erection means installation, installing the machinery. Is it a revenue expenditure, capital expenditure, sir? It's absolutely capital expenditure because unless you install the machinery, will the machinery reach usable condition? No. Yesterday's session we discussed so many examples. Yes, any expenditure incurred to bring the asset into usable condition is a capital expenditure. Yes. So like the wages that you paid to get the machinery into usable condition, this is a capital expenditure. So hence, what are the two components here then? The two components that is getting triggered here is your paid wages. So one component is bank account. Is this a revenue expenditure? No, it's a capital expenditure, meaning it will be shown in balance sheet. Okay, you paid this wages for what? For installing machinery. So it should be added to the cost of machinery, because machinery is a capital expenditure, no? So you will add this wages cost to the cost of the machinery. Okay, meaning this one, if you can't write wages. If you write wages, it will be treated as a revenue expense. If you just write wages, it will be treated as revenue expense and it should be transferred to P&L. Will this expenditure go to P&L or will it be capitalized? It will be capitalized. Hence, wages or bank account and machinery account. These are the two components or two accounts which we'll be using here. Bank is a personal account, machinery is a real account. Okay. Personal account का rules is credit the giver. Bank में से money जा रहा है आपका, तो obviously you will credit cash. Here they've assumed that they've paid in cash. So either you will credit cash or you can credit a bank. It depends on how you made the payment. Here they've assumed that the payment is made by cash. If you assume the payment is made by bank, instead of writing to cash account, you will write to bank account. That is fine. Alright. Obviously, the other one will be debited. Machinery account will be debited as such. Got it? Simple enough. Here, dates they have not given. Hence, see, they have given the date column. They mentioned date column, but they left it blank because dates are not given. But narration is a must. Okay. Being wages paid for installing a machinery. Like that, you can write and leave it off. Same thing what is given in the question, that only you can copy it off as narration, but include the words being. It always starts with being. There's a convention, that's it. Okay. All right. Can I move forward? Yes. Income tax liability of a proprietor. See, proprietor has to pay. Proprietor means owner. If owner is making some profits, on that profit he has to pay tax to the government, because anybody who makes profit, government will take some portion of that profit as tax. Correct? So here, income tax liability of which person? Of the proprietor. Guys, proprietor is the owner. And okay, keep that in mind. Income tax liability of proprietor was 1,17,000, was paid out of petty cash. Petty cash means like to make small expenditure, no? We maintain something known as petty cash. That I will discuss. It's there as a separate topic. I'll discuss with that with you. Okay, fair enough. All right. Is this a business tax, sir? Is this a business tax or owner ka personal tax? Is this the business ka tax or owner ka personal tax? It is owner's ka personal tax. That means, can I say this is drawings? Can I say this is drawings? Because if that means, it's simply like telling owner has drawn 1,17,000 cash out of the business. Can I tell like that? He can use it for whatever purpose. That is his choice. He pays personal income tax out of it. He donates it. Okay, he woodifies it. Whatever he does it, that is his headache. But he has taken money out of the business for his personal thing. That personal thing, if you are taking any money, we call it as drawings. Yes, drawings is one account. It's a personal account. What did he draw off? Draw from the money. Did he take the goods or did he take away cash? He has taken petty cash, right? Generally, petty cash, we maintain it separately. So we'll write it as petty cash. Petty cash account are different. We maintain both the accounts. Here they're saying petty cash. Hence, I'll use petty cash account. I will tell you how it is maintained and all when I get to maybe tomorrow or day after tomorrow's topic. It is there, okay? But this is also an asset only. Cash means it's an asset, sir. Whether you have 1 crore cash or 1 rupee cash, it's an asset. Value may say it doesn't really happen. It doesn't matter. 1 rupee cash if you also, it is an asset. 1 crore cash also if you have, it is an asset. Okay? So these are assets only. So what's the entry here? Real account ka rule is what? Debit what comes in, credit what goes out. Here petty cash is coming in. Cash is coming in or cash is going out? It's going out. That means petty cash should be credited. Where it is that? Petty cash should be credited for 1,17,000. And you will debit drawings. That's all it is. Okay? Because the proprietor is receiving it. No? So debit the receiver. Proprietor is receiving this money. So drawings account, we are debiting there. That's it. Okay? Alright. Purchase. Business tax, the entry is separate, sir. If it is business tax, you will write income tax account debit to bank account. If it is business tax, we'll see that. Maybe it will come in one of the topics. Okay, we'll see that. Fair enough. Entry, since you're asking, I'm telling you, it is income tax account debit to bank account you will write. The entry in that case. It is not drawings if you're paying business tax. Fine now. We'll see in the next topic, in the future topics, it may come. There we'll take it up. Okay, okay, sir. Can I move on? Okay. Purchase of goods from Naveen of the list price 2 lakh rupees. He allowed a 10% trade discount. 5,000 cash discount was also allowed for quick payment. Okay. The list price. List price means MRP. You know, normally when you buy the goods, it will have some tag, MRP value. They're saying MRP value is 2 lakh rupees. We got some trade discount. Trade discount means bulk discount. Like let's say, I purchased one shirt. I want to purchase one shirt. I went to a mall. I went to a store. Okay, I asked I need one shirt. What is the price? He told 1,500 rupees for one shirt. I told I will buy 20 shirts. I will buy 20 shirts. What do you think I'll ask from him? For one shirt, he told 1,500. I told I'll buy 20 shirts. Now, what do you think my next dialogue will be with him? Hey, for one shirt, 1,500. I'm buying 20. Please give me some discount, no? Correct? This is what we ask for. We are big in bargaining. Correct? No? Yes. So even if we buy one also, we'll bargain. If you're buying 20, though, we will not leave only. We will eat his head off. Yeah. Yes. Correct. So we'll ask him some discount. So at the time of purchasing and selling the goods, if you are getting any discount, it is referred to as trade discount. I'll repeat that. At the time of either purchasing the goods or at the time of selling the goods, if you are getting or if you're giving some discount, that we call it as a trade discount. For simplicity, you can think of it as a bulk discount. You're purchasing in large quantities and you're getting some discount. Like that you can say. You can write one word also in your books. For trade discount, no journal entry is passed. No journal entry is required. This is directly reduced, or this is reduced. This is reduced from the purchase or sales value. This is reduced from purchase / sales value. Write this in your notebook. For trade discount, no journal entry is required. This is directly reduced from either purchases or from sales. If you're purchasing the goods, you'll reduce trade discount from purchases. If you are selling the goods, you'll reduce trade discount from sales. Both the scenario may it can arise. Hence, I've written purchase / sales value. You can write here, journal entry is required. JE stands for journal entry. Journal entry is required only for cash discount. Journal entry is required only for cash discount. See, why we do this is, okay, simple funda, sir. List price, MRP price is 2 lakh. The vendor told 10% trade discount. That means, do you think I will pay him 2 lakh rupees? Or for what value will you think he will bill me for? See, if I'm buying the goods, I will take the bill from him. Okay. What is the final value that will come in my invoice? What will come in the value? Will it be for 2 lakh rupees he'll bill me for? No, he will say 2 lakh rupees minus 10% discount. 10% of 2 lakh is 20,000. So 20,000 he will reduce and it will become 1,80,000. Yes or no? Correct. That means based on the invoice only you account purchases and sales. Correct? No? By looking at invoice, sales invoice, purchase invoice only, you will pass the journal entry. If sales invoice only is made for 1,80,000 or if purchase invoice only is available for 1,80,000, why do you want to pass an entry for 2 lakh and pass a separate entry for 10,000? Not even required. No, both are happening at the same time here. Correct? Hence, directly they told no need to pass journal entry for this. Directly pass the amount journal entry for 1,80,000. Hence, we say no journal entry is required for trade discount. Pass journal entry only for cash discount. Because cash discount, generally you get it at a later stage. Generally, you buy it and then you get it. That's the reason we pass an entry for cash discount and no journal entry for trade discount. Clear? Once more. Invoice. What is invoice, sir? Invoice, simple things. Have you gone shopping, Pratul? Have you gone for shopping? Have you bought something recently? Yes. Okay. When you buy something, you'll ask for a bill, correct? No? When you buy whatever, you'll ask for a bill. Yes? That is known as invoice. That's all. That is known as invoice. Okay? The bill is known as invoice. That's it. If when you sell the goods, if you issue the bill, it is called sales invoice. When you purchase the goods, when you get the bill, we call it as purchase invoice. That's it. Fancy name. No problem. Done. Okay, can I move forward then? Awesome. Okay, here I think we are still in this one, no? Okay, that means the funda is what here? Should I have to pass anything for trade discount? Not required. That means my journal entry, I will only pass it for how much? 1,80,000. Done. Okay. 1,80,000 was the value, but I got some cash discount also for 5,000. That means there are three things three things over here that you can tell me. Three components here. One, I purchased the goods. So purchases is one value. Purchase is a personal account. I got some cash discount. That means can I say I discount received? Because I purchased the goods and I'm paying lesser value. That means I'm paying lesser value means it's a discount received. That it is an income for me. So nominal account. And I purchased this goods. Why I paid off cash immediately, I think they told, no? Yeah? Fair enough. So you can write here, last thing is cash or check maybe you can utilize. If you assume that the payment is made by cash, use cash account. If you are assuming the payment is made by check, use check account. So this is again personal account. If you're using bank, it becomes a personal account. So accordingly the rule. Nominal account, the easiest. Debit all expense, credit all incomes. This is an income, so I will credit a discount received. That's what they've done here, credit discount received. Okay, they've assumed that the payment is made through cash. If you assume it as cash, what it will be? Cash is a real account. Debit what comes in, credit what goes out. Here cash is going out because you're paying. Hence they've credited cash. If you assume bank account, then you'll write instead of cash account, you'll write it to bank account. Doesn't matter what you assume, it is fine. Okay. So you're paying 1,75,000. Purchases, because when you purchase the goods will come in. Purchase is a real account. Goods is coming in. So purchase account will be debited for 1,20,000. So that's your journal entry for the last scenario. So this problem is also done for. Need a minute or can I go for the next one? Tamudus. Can we go? Can we go ahead? Not home. You are already anyway at home only. You can write that assumption or it is fine. Same say, sir, somebody asking, sir, should I write an assumption that I've assumed it is a banking payment, it is a cash payment? Ideally, it is okay. Generally, in examination, they'll be very clear. They will precisely tell it. If you want to write, you can write it. No problem. If you write it, see, if you're writing extra, it is good only. Nobody will deduct marks. Fine. In these sort of things, ideally, according to me, even if you don't write, they will not deduct marks. Fair enough. This is pretty basic. These things are. If you still want to go ahead and write, absolutely okay. Fine now. Awesome. Okay. Then can I move forward? Okay. Next question number 12. Explain trade discount. Here I don't told no. Simple. Trade discount means at the time of purchase if you get any discount. Here I purchased the goods and I got 10% discount. Correct. What is my purchase value? 2 lakh rupees. I bargained with the shopkeeper. He finally gave in and he told, okay, 10% discount for you. That means how much should I pay that shopkeeper now? Should I have to pay him 2 lakh? No, I have to pay him only 1,80,000 because 10% is discount. No. Yes. That means I will record the purchases only for 1,80,000. I will not show the purchase for 2 lakh. Meaning for this 10%, since this is TD as in trade discount, no journal entry is required. That's all I told. That's it. For this portion, no entry is required. Because both are happening at the same time, right? So it doesn't make sense to account this, and this. Instead of that, directly record 1,80,000. Trade discount is directly reduced from the purchase or sales value. No entry is required. How it got reduced from purchase? We reduced, no? We purchased the goods here, no? We purchased the goods. Purchase value is 2 lakh. But will I pay 2 lakh now to the vendor or I'll pay 1,80,000 only? Now how much will I pay the vendor? 2 lakh or 1,80,000? 1,80,000. Yes, no? That's what I've written. That's what I meant by it is reduced from purchase. Instead of showing purchase at 2 lakh rupees, I've shown it at 1,80,000. That's what I mean by it is reduced from purchases. Okay? So if you want, you can write here 2 lakh minus 20,000. That's how we got this 1 lakh 20,000. Okay, awesome. All right, question number 12. Okay, this is the question that has come. I've seen this question in one of the RTPs and probably one of the previous year paper. I'm not sure. Okay, but in RTP I've seen this. So you can mark this question as maybe important from this. Okay, because it is there. This may come in. All right, let us see. All other things are very straightforward. It may not. Okay, let's go through. Past journal entry in each of the following cases. A running business was purchased by Mohan. He's not starting a new business, guys. Mohan is smart. Okay, he's saying, I will not start the business from the scratch, from the beginning. Somebody is already doing some business. He told, I will give you money, sell your business to me. That's what we mean by running business. Okay, like ArivuPro Academy now. It's already operating. Somebody comes to us and tell, I will give you 1 lakh rupees. Okay, give your academy to me. Like that. Okay, the running business, the operating business only somebody has purchased. Okay, so that somebody is Mohan. Mohan purchased this with the following assets and liability. So if you buy any business, correct? Now that business belongs to you, no? Correct? The business will have some assets. The business will have some liabilities. Agreed? Like ArivuPro Academy, if you talk about, our assets are the camera, mic, laptops, etc. etc. Our liabilities could be, we may have to pay some money to the teachers. We may have to pay some money to the landlord. We may have taken some bank loan. Those are some liabilities. Yes. So when you buy our academy, for instance, you will get academica assets also. You will get academica liabilities also. Both you will get. That is what has happened here. Mohan has purchased the business, and that particular business had a few assets and it had a few liabilities. That business had a cash of 2,000. You have to tell me what is it's an asset or a liability here. Cash, you tell me. Is it an A or a L? A means asset, L means liability. Is it A or L? A, perfect. Land. Land is again an asset. Furniture, perfect. Again an asset, A. Stock, inventory, goods we can sell. That means there's also an asset, correct? No? Fair enough. Because we can sell the goods and get the money, no? So any component which you can use to get the money, all right, is an asset. So stock is also an asset. Stock means the goods with you. How about creditors? Creditors is what? Asset or liability? Creditors is a liability because we have to pay the money to them, no? Correct? Creditors means we have purchased the goods, but you have not yet paid them the money. We will pay them in future. Hence, this is a liability. Business is liable to pay. Bank overdraft means bank loan. We have taken a short-term loan from the bank for a small period. That means this is also a liability. Awesome. Okay, sir. Sir, if they had told Mohan started the business with 1 lakh rupees, what journal entry would have passed? Can you tell me? Leave that scenario for the time being. If they had simply told Mohan started the business with 1 lakh rupees, what journal entry would have told? Now directly, can you tell me the journal entry? Entry would be bank account debit to capital account. Yes or no? Correct. This is the journal entry would have passed. We have already done 4 journal entries now. This came in every problem. Now I'll not go with nominal, personal and all. Directly I'll tell the entry. Okay, no? Everyone is able to figure that out now? No issues there, I think. Yes. Correct. Okay, now check, sir. Check. He started the business. Did he start the business just with one asset, sir? Just with the bank he started the business, sir? Or he started the business with many assets, sir? Did he start the business only with one assets or many assets here? He started the business with many other assets also. Yes or no? Correct. That means you will not debit just the bank. Along with bank, you will debit other assets also which came in. Because all these are assets. All are real accounts. Correct. All the assets of a business are real account. What does the real account rule say? Debit what comes in. He said he took over the business with these assets. That means all these assets are coming into the business now. Correct. So when they come in, you have to debit all things. So instead of writing just a bank account debit to capital, you will debit all the assets one by one by one. So you started with cash. So cash account debit 2,000. Land account debit 4,000. Furniture account debit 1,000. Stock account debit 2,000. So all the assets we debited because that's what came in. Or simple rule is, I told all assets will have debit balance. Hence we have debited all these things. Liabilities will have credit balance. Yes, correct. Now check, do you have any liabilities here? Yes, when you started the business, you have a couple of liabilities also. What are those couple of liabilities? Creditors and bank overdraft. So assets, if you are debiting, liabilities you will credit. So to creditors 1000, to bank overdraft 2000. Did you understand? Balancing figure you treat it as owner's capital account. That's all is the entry. This is a compound journal entries because we are using more than 2 accounts. Okay, this is the important adjustment here, which is different. That's it. Okay, fair enough. All the assets are coming in, so you're going to debit all the assets. All the liabilities are also coming in. Liabilities will have a credit balance, so you credited all of them. Balancing figure is nothing but those Mohan ka like a capital. Fair enough, huh? They're saying, sir, should we write it in format? See, this is study material ka solution only. They're presented like this. But whenever you're solving journal entries in the examination, always use this format only. Date, particulars, ledger folio, debit, credit, or debit amount, credit amount, or just debit credit. Always write it in this format, please. Okay. Some problem institute does it, sometimes they don't do it. My suggestion, personal call to you, is always write it in this format. Easy. Okay. Fair enough. What if liabilities are more than assets? That will not happen, sir. That will not happen. Why will you take over such business? Why will you take over? Okay, I'll give you an example. Let's take your scenario only. Okay, fair enough. Let's say my business has a liability of 100 rupees, but it has assets only worth 20 rupees. Will you buy my business? Will you buy my business? No, right? Ideally, no. Yes. Fair enough. So, like, generally that scenario is very rare. Even if that scenario happens, go ahead and do the same thing. That's all. Fair enough. In that case, generally what happens is owner will bring in more money. Okay, that way it will be. But very rare scenario, but owner has to bring in more money in that case, which they will give you. Don't worry about that, Dave. Okay. They would have given you in the question. He also brought in extra money like that. This scenario is rare, but though. Okay. Not an ideal one. Fair enough, huh? आगे बढ़े. Yes sir, no sir, what sir? Okay, all right. Next. So like if Mukesh Ambani acquires Anil Ambani's, sir, you are in CA foundation level. All right. What scenario you're talking about? No, we call it as amalgamation. It is there in Accounting Standard 14. Okay. Ind AS 103 business combination. Okay, these are complex scenarios. I don't think so. This is the level to discuss with you with this. Even I can tell. Okay, but I really doubt whether you will be able to understand that. Okay, there is a whole lot of things you need to look at that. Fair enough. Okay, for that business combination chapter in my CA final, I spent close to 20 hours just to cover that. Just to do that one topic, almost like 20 hours, 25 hours I will take. That much content is there. Even in IPCC, when we do amalgamation, I spend close to 20 hours for that. Okay, 20 hours ka content I can tell now. You will definitely not listen and get it. Maybe this is not the right stage for that. What you are saying is it'll come. Okay, but I don't want to discuss that with you for the time being. Alright, it'll come next stage. You finish this stage and come to CA Inter full detail. Maybe we will discuss that. Done. Okay, we will put that on hold for the time being. Yeah, yes. Okay. Fair enough. Awesome, sir. Good question though. Yeah, you're thinking that's nice. I appreciate that. But yes, I will restrict myself in answering that. That's it. Okay. Okay. I'll move on then. Goods distributed by the way of free samples, 1000 rupees. This is, I think we know the journal entry for this. Goods distributed by the way of free samples is advertisement account debit to purchases. Now without real personal directly, can we write the entries? Advertisement account debit to purchases account. Yes. I think we have done this. This is the third time this is coming in. Okay. Rahim became insolvent and could pay only 50 paisa in a rupee. Amount due from him was 600 rupees. There was one person named Rahim. From him, we had to collect 600 rupees. He became insolvent, meaning pauper, bankrupt. Okay, pauper. Alright. Fair enough. And they are telling he could pay only 50 paisa in a rupee. Meaning, if he has to pay 1 rupee means, if he has 1 rupee liability means, the maximum he can pay is 0.5 rupees. For every 1 rupee worth of liability, he can only settle 0.5 rupees. Meaning 50% is bad debts. Go in the Tirupati toss. Okay, that's what they're telling to say. Only 50% of the amount you will be able to recover from him. Instead of telling like that, they're saying 50 paisa in a rupee. Meaning if you have to collect 1 rupee from him, entire 1 rupee you will not be able to collect. You will be able to collect only 50 paisa, which is nothing but 1 rupee ka 50% is 50 paisa, no? That's what they mean by that. Okay. But should we have to collect 1 rupee from Rahim, how much should we collect? We have to collect from Rahim 600 rupees. Okay. If you have to collect 1 rupee from Rahim, he'll be only able to pay 0.5. If you have to collect 600 rupees from Rahim, how much will we be able to collect from him? How do you calculate X here? In mathematics, you must have done, no? 600 into 0.5 divided by 1, which is 300. Okay. Meaning Rahim is able to pay only 300 to us. We have to collect 600, but he's able to pay only 300. Balance 300 is Tirupati Hundi. Goinda. Okay, na? That Goinda scenario, no, we call it as bad debts. Debtor becoming bad or debtor becoming bankrupt. That scenario we call it as bad debts. Debt means debtor. We have to collect some money. That debt has gone bad. Okay, meaning we will not be able to recover. That irrecoverable portion we call it as bad debts. That means bad debt is how much here? In 600, if you are able to collect only 300, that means the other 300 is bad debts. No? Correct now? Fair enough. So we'll be able to collect only 300 from him. So for this, the journal entry is, he'll be able to pay 300. That means 3 components. Either you can write cash or you can write bank. Let's maybe try with cash this time. Okay, cash is a real account. Then bad debts is another component. I'm identifying the 3 components in this transaction. You tell me, sir, bad debts is an expense, loss, income. What is this? Is this a expense or it's a gain or a loss for me? It's a loss for me. Yes. I mean, can I write this as a nominal account? There's a loss for me. Correct. Okay. And I have to recover this money from whom? Rahim. So Rahim is another account. Rahim is a personal account. So these are the 3 accounts that are getting affected here. That means again you have to do a compound journal entry here. So nominal account is easiest. Debit all expenses and losses. Bad debts is an expense, so we'll debit that. Bad debts account debit 300. Cash. Cash is an asset. All assets are real accounts. The rule is debit what comes in. We are recovering 300 rupees from Rahim. So cash is coming in. So cash will be debited to the extent of 300. Balancing figure is Rahim. Rahim will credit to the extent of 600 rupees. So that is the journal entry. Narration, you can write the same thing. Being money recovered or being final proceeds received from Rahim accounted. Like that only you can write. That's it. Any doubts in this? Insolvent also is same. Insolvent also same thing. Bankrupt only. That's another way to say it. That's it. Insolvency, bankruptcy, everything is same. Final proceeds means that is the final money you will receive from him. Beyond that, you cannot recover anything. Final settlement. Final proceeds means final settlement. Beyond that, even 1 rupee you cannot recover. Like that. That's what we mean by final proceeds. Any other questions? Okay, so let's do one thing. We will take up a small concept. There are a couple of questions I see it's relating to that concept. Let's take a small concept. Along with journal, we have one more. I'll do that because next sort of questions is combination. That concept and that is extra is coming in. Okay. So there is one accounting equation, sir. This is in fact the first thing probably you would have learnt in accounts before debit and credit. Maybe this is the first thing that they would have taught you in your 11th standard or PUC, I think, I'm assuming. One accounting equation is there. What is that accounting equation is? We'll be able to understand it a little better now. That's the reason I'm just taking it a little later. What that equation is? Like maths, you have equations, no? Simultaneous equation, this, that and all. Here also in accounting also one equation is there. A simple one here. Asset is equal to equity plus liabilities. Or you can write it as capital plus liabilities. Asset is equal to capital plus liabilities. At every point of time or at any point of time, if you take total assets, no, and if you take total capital and total liabilities, it will always match. Meaning, if capital is, I'll write this as like this, A is equal to C plus L. That's what they must have told you, right? Short form mein. A for assets, C for capital, L for liabilities. If capital is 100 rupees, liability is 100 rupees, at any point of time, asset will always be 200 rupees. This will work out at every point of time. Now, any point of time you just check, this will always work out. This is the equation. A is equal to C plus L. Asset is equal to capital plus liability. Or you can call it as equity plus liability. Equity we have not yet gone to company account. So I will strike off equity. I will stick to this for the time being. Okay. Capital plus liability. When I go to do company accounts, you will probably understand what I mean by equity there. For the time being, let's put that on hold. Is this equation okay for you? Did that go into your mind? Asset is equal to capital plus liability. Okay, no? So how, sir? Why it will work out like this? See, accounts is always done on a double entry system. Yes, that's what we discussed. We passed journal entry also. One account if you debit by 100 rupees. Another account you have to credit by which amount? 100 rupees only. Because that is a system for accounting. Debit and credit. If debit is 500, credit also will be 500. That's how it works. Let's take a simple example. There is guy, one person, Mr. X. He started the business with 100 rupees, with let's say 1000 rupees as capital. He started one business by introducing 1000 rupees as capital through banking channel. Can you tell me the journal entry for this? Or let's say he introduced via cash only for simplicity. Okay, or he introduced capital via cash, let's say. Simplicity purpose. Can you tell me the journal entry for this? Or can you tell me the two components same? Mr. X started the business with 1000 rupees cash. That means the two components are cash and capital. Yes, no? Because he introduced cash into the business. So cash and capital are two business. We'll not write Mr. X because journal entries you will prepare in Mr. X only. Okay, in the books of X only. In the books of X, X account will not come. Instead of X account, you will write capital account like that. Done? So cash will be 100 and capital also will be 100. Cash is a real account, capital is a personal account. So entry for this will be what? Real account rules say debit what comes in. So cash is coming into the business. So the journal entry will be cash account debit to capital account. Yes. Cash account debit to capital account. How much? 1000. Yes, there's a journal entry. No confusion right there. Apply this equation, sir. Let's see. What does that equation say? A is equal to C plus L. A is equal to C plus L. Meaning asset is equal to capital plus liability. That's what that equation says. Here, look at this transaction. Do you have any asset? By looking at this transaction, do you have any asset? Yes, one asset is there. What is that? Cash. Cash is an asset, sir. Okay, in asset column, I will write cash. Do you have capital here? Yes, you have capital. Do you have other than this capital? Do you have any other liability like creditors, bank loan, etc., etc.? Other than capital, does the business have any other liability? Just by looking at this transaction, any other liability is there? No, that means can I write L is equal to 0? Yes. Do you agree with me on this? Yes. Cash is how much, sir? 1000. Capital is how much, sir? 1000. Liability is 0. Isn't the equation matching? Isn't the equation matching? At every point of time, this equation will 100% work out. You check it at any point of time because that is the basis of accounting. Okay. Without this, it will not work out. Okay. So hence this equation. I just took this example to prove you this will work out in every point of time. That's it. Or maybe I can also discuss this also. Okay. Sir, assets. There are various types of assets. Assets are broadly classified into fixed assets and current assets. We will do this in little more detail when we get to balance sheet approach. Okay. Assets are of two types. Fixed asset, current asset. Fixed asset means those assets which you use for more than 1 year. There are other criteria also for this. Actually, there are 4 criteria to be honest as per Companies Act 2013. But I will not go into so much details because maybe at this point of time it is not required. Simple stuff I'll keep it. Okay. If you are using any particular asset for more than 12 months, it is a fixed asset. If you are using any asset for less than 12 months, it is a current asset. That's all. There are other parameters also, which I will discuss with you at next level, not now. For now, we'll stick to this. This is one of the parameters. Other than that, there are more. So let's forget about the other one. Did you understand this? Assets can be broadly classified into 2, fixed assets and current assets. Fixed assets means those assets which you will use in your business for more than 12 months. Current assets means something which you use it for less than 12 months only. Like, to give you an example, fixed asset. You purchased a land, sir. You purchase a land or your business purchased a machinery. Or I'll take this example only. To conduct class, I purchased a camera. I purchased a laptop. Okay, how many years do you think I will use this for? This laptop, camera and all, no? How many years do you think I'll use it for? At least 3-4 years, possible, no? That's the general life. Yes. That means, is it a fixed asset or is it a current asset? This camera, this laptop and all, it becomes a fixed asset because I'm using it for more than 12 months. Got it? Sir, I have a debtors of 10,000 rupees. You'll be able to appreciate this better now. Debtors means I have sold the goods to somebody and he is yet to pay me. He is yet to pay me. Like, I think we give you installment, no? Correct? We give you an option to pay the fees in installment. Yes. Yes. Do you think to my debtors, I will give more than 12 months credit? How much period do you think I will give? How much time do you think I will give my debtors and all? How much time do you think I will give my debtors and all? You think logically only. You are doing a business. You sold goods to somebody. How much maximum time you will give that to somebody and tell him to pay by that amount? Maybe 2 months, 3 months at the max. Yes. That means now you tell me, is debtor a current asset or a non-current asset? Meaning current asset or fixed asset? Generally, debtors are considered to be current assets because you will recover the money from your debtors within 12 months. Generally, nobody will give you a credit period and all for more than 12 months. You'll collect off the money maybe within 1 month, 2 months or 3 months. Okay, fair enough. So hence, debtor is a common example for current assets. Even cash. Suppose you have a cash in the business, cash for 1,000 rupees. Normally, companies will keep using this cash for some purpose or the other. No? They'll buy some stationery, they'll pay salary, electricity bill. It keeps getting utilized within a period of 1 year. So hence, cash is also another example for current assets. Okay. Current assets means something which you will recover, okay, which will get converted into cash or something which will be used or stay in the business for less than 12 months. That's all it is. Now, creditor is not an asset. Creditor is a liability. Asset means something which the business owns. Business owns. They should have it. That they have it. Creditor is a liability. So creditor is not a current asset. It is a current liability. Fair enough. Sir, what if we give in installment if it is more than 1 year? Sir, if it is more than 1 year, if you're giving more than 1 year to your debtors, no, then it will not be considered as a current asset. It will be considered as a non-current assets. Classification will change. Okay. You look at all this in the next level, not now. It can, if you're giving more than 12 months ka credit period, then you cannot classify it as a current asset. You will classify it as a non-current asset. You will not classify it as a fixed asset. There is something known as non-current assets. Fixed asset is one of the non-current assets. So under that you will show. Fine. Since you asked, I'm telling it, not required for your syllabus. Okay, awesome. Okay, so why did I say this? Because there is another equation. See, asset is equal to capital plus liability, no? So instead of writing assets, I can easily write fixed assets, which I'll call it as FA. I've already written here. I'm just writing that again. Instead of just assets, can I write fixed asset plus current assets? Instead of assets, can I write fixed asset plus current assets? Yes, because assets are of two types. That's what I explained you right now, right? Okay, is equal to what, sir? Capital plus liability. Liabilities are also of two types. Long-term liability plus short-term liability. Short-term liability, we call it as current liability. Just like current assets, right? Somebody told creditors, right? Creditor is an example of short-term liabilities. The short-term liability, we call it as current liability, CL. That's what I've written here. Does this equation make sense to you? We may have to use this in the next problem. That's the reason I'm just discussing with you this. That's all. Is this equation, what I've written in the box, is okay for everyone? Can I rewrite this equation? Fixed asset plus current assets. From current liability, I'll push it to this side. What it will become? Minus current liability, because mathematically, if you're pushing the thing from LHS to RHS or RHS to LHS, it'll change signs. Yes, no? Plus will become minus. That means this will become minus current liability. So it will be capital plus long-term liability. Okay, now fine. Basically, using this equation, if anything is missing, suppose they gave you fixed asset, they gave you current assets, they gave you current liability, they did not give you capital, they gave you long-term liabilities. Can you find out capital in this case? They gave you these three, they gave you this. Can you find out capital? Yes. So basically, using this equation, if anything is missing, you can find out that missing figure. That's all it is. Hence, I'm rewriting the equation here. Not a big deal. Okay. This is mentioned in our study material. Hence, I'm writing this. Okay. Fair enough. So there are about a couple of problems using this equation. Can we just try out that problems to see how well we have understood? Can we give it a go? Okay, 1 minute, hang on. I think it's question number 1 only first. Yeah, I think let's try with question number 1 only. Excuse me. Develop the accounting equation. We know the accounting equation. A is equal to C plus L. That is the accounting equation that they're talking about. You need to develop the equation from the following information available at the beginning of the accounting period. I told you accounting period will start from 1st April and it will end on 31st March of the next year. If it starts on 1st April 2019, then it will end on 31st March 2020. If it starts on 1st April 2021, it will end on 31st March 2022. Like this, it will go on. April to March is the accounting year we follow. Okay. They have not given the exact year, so leave that portion. So using this data, you need to construct accounting equation they are telling. Okay. So simple thing. They've given you various components. All we have to do is identify whether it is an asset, identify whether it is a capital or whether it is a liability. That's all we need to do. Capital they have given. This can't get straightforward than that. This is capital only. Yes, this is C. Perfect. I don't have to do anything for this. Loan. Is it an asset or liability? Asset means something which we own. Liability means something which we have to pay to somebody. Loan I have to repay to somebody. That means it's an obligation on my head. Correct? So can I call this as a liability? Loan is a liability. Perfect. Awesome. Trade payable. Trade payable means creditors. Creditors we call it as a trade payable. Creditor is an asset or it's a liability. We have to pay the creditor. If you have to receive something from somebody, it becomes an asset. If you have to pay someone some money, that becomes a liability. So this is a liability. Okay, fine. Then they have given fixed asset. Fixed asset means that land, building and all. But simply it's an asset. Correct? Now can I just call it as, I'll only express it in ACL. That's all. So this is an A as an asset. Inventory, goods. Goods, you can sell and get some benefit out of it. That means again it is an asset. Trade receivable is your debtor. You have sold goods to somebody, but the somebody is yet to pay you. That means this is an, what is this? Again an asset. Perfect. Cash and bank. This is also an asset. Yes. If you have money at bank, you may apply personal account ka rule. But if you have money at bank, can you use it for any purpose, sir? I have 10,000 rupees in my savings bank account in, let's say, State Bank of India. Can I use it for any purpose? Can I use it for any purpose? Possible. Or bank will put some restriction. Yes. If I want, like I'll use it for shopping, I will donate it. Yes. That means I have a control over it. Yes. That means that is also your asset. But for bank, while passing journal entry, we use personal account ka rule because bank is a person. But money, if you have some money in the bank, that is also your asset only. Don't get confused there and all. Okay, no? Comfortable? So this is also an asset only. So we need to construct an equation out of this is what they're saying. That means we simply need to do what, sir? Asset is equal to capital plus liability. We need to construct this and see whether it matches. That's what they're asking. I've given you the solution over there. For sample format, I'll write the answer here only. Or let's, one moment, hang on. I'll write it here better. Question number 1 ka solution. So accounting equation is A is equal to C plus L. What are the assets you have, sir? What are the assets you have? We'll write that as at the beginning of the period. Because they've asked us to construct the equation at the beginning of the period. No, I don't know why they asked it, because it is nonsense. Because they only gave everything. Asset is there, capital is there, liability is there. There is nothing missing. That means if you do A is equal to C plus L, that equation will 100% match. No point in putting that. Okay, but still they've asked, okay, just for there, man ki tasalli ke liye, I think we can do it. Okay. So the beginning of the period, we'll put it up. A is equal to C plus L. What are the assets you have it at the beginning of the period, sir? What are the assets you have it at the beginning? What are the assets? We have fixed assets. Instead of assets, I'll list out the assets one by one. Fixed assets plus. Assets means total assets. Now I'm totaling all the assets. Fixed asset is one asset. Inventory is another asset. And then I have trade receivable, one asset. Cash and bank, another asset. These are my total assets. This should be equal to capital and it should be equal to your liabilities. You have only one liabilities or you have multiple? You have a loan and you have trade payables. That means can I write, instead of liability, can I write loan plus trade payables? Because these are my liabilities. Okay. Basically, these should match. Check if it is matching. Fixed asset is 12,800. Inventory is 22,600. Trade receivable is 17,500. Cash and bank balance is 15,300. Capital at the beginning of the period is 51,000 they have told. Okay. Loan amount they have given is 11,500 and that one is 5,700. 11,500 and 5,700. Do the total of this, both the sides, how much are you getting? Both the side it is getting 68,200. Yes, 68,200 is equal to 68,200. This was actually pointless. If something was missing, then it would have made sense. But anyway, they asked us to construct, so we constructed. Manageable. This we can write it as part A of the question. Okay, they have done it over here also, in fact, in your solution. Okay, 68,200 is equal to 68,200. So that is done for. Okay, that's all is not the question. They have given extra table. Let's read through the next also. At the end of the accounting period, first they gave assets, liability, capital at the beginning of the period, meaning on 1st April. They gave a data. Next, they are saying at the end of the accounting period. When will it end, sir? Accounting year will begin on 1st April. It will end on 31st March. On 31st March, they have given data. But check here, one thing is missing. What is that? Capital is a question mark. Capital is a question mark. That means you have to use the equation and probably get capital. Can I say this as a closing capital? Can I call this as an opening capital? Initially, when you started the business, capital was 51,000. Now at the end of the period, can I call this as a closing capital? This is opening, this is closing. Can I write it like that? So opening capital they gave. Closing capital is question mark. Sir, how it will be, sir? If opening capital is 51, closing also should be 51 only. No, wrong. It can't be like that. Why? Sir, simple. You started a business with 1 lakh rupees cash. So that becomes your opening capital. Suppose business earned a profit of 10,000 rupees. You started a business. That business gave you a profit of 10,000 rupees. You tell me, sir, profit belongs to whom? Profit belongs to whom? The owner, correct? Profit belongs to the owner because owner started the business means profit belongs to the owners. Yes, that means now the business has to pay how much to the owner? Initially, owner brought 1 lakh into the business. So the business had to pay 1 lakh rupees. Now at the end of the period, end of the first year, company made a profit of 10,000. That means how much owner will expect at the end of first year, sir? Will the owner accept 1 lakh rupees back or what will he tell? Hey, give me profit also. That means he will expect 1,10,000. Yes or no? That becomes your closing capital. So opening balance of capital need not be same as closing capital. It might change. Because if you make some profit, if you make some loss, if you bring in more money, or if you make some drawings, because of these parameters, opening capital and closing capital can change. Okay. So don't directly write closing capital is 51,000. So we need to calculate. It is not straightforward. I've just proved it to you here with this number. Done? No? No confusion. So that's what we need to calculate here. Okay. Closing capital is question mark. We'll find that out. Loan balance they've given. At the end of the period, loan balance is 11,500. Opening was also 11,500. Closing is also 11,500. Fine. Trade payables has become 5,800. So from 5,700 it became 5,800. That means what? See, this is the whole year transaction. No? Maybe you would have purchased more goods from the creditors or you would have paid them some money. Many transactions would have happened, right? So balance need not be same. That is okay. Fixed asset is 12,720. Inventory is this. Okay, they've given trade receivables and cash balance they've given. Okay, so let's do one thing. At the end of the period, let's construct this equation again. At the end of the period, accounting equation is same, A is equal to C plus L. Do you know all the assets ka value at the end of the period? Do you know all the assets ka value at the end of the period? Yes. Do you know all the liabilities ka value at the end of the period? Yes. That means asset ka value at the end of the period you know. Liabilities ka value at the end of the period you know. That means can't you get capital at the end of the period using the equation? Yes, that becomes very straightforward. Yes. So that's what we have to do here. That's it. So what are the assets? One by one we'll list out. Asset is fixed asset. So directly can I write Fixed asset is 12,720. Instead of writing fixed assets, can I directly write the numbers? Everyone is following that? 12,720 is fixed assets. Next is inventory, 22,900. That's all, or we have few more? No, we have trade receivables, 17,500. And we have a cash and bank balance of 15,600. So these are all your assets. Capital, we don't know. We'll keep it as it is. C. Liabilities. There are a couple of liabilities. Loan is 11,500. And other one was 5,800. What was that? Trade payable was 5,800. These are your liabilities. That means if you do the total this side. Anyone has a total for me here? 12,720 plus 22,900 plus 17,500 plus 15,600, which is 68,720 this side. Capital, we don't know. These two, our total is 11,500 plus 5,800, which will be 17,300. Therefore, can I write C as in capital is equal to, can I write 68,720 minus 17,300? Which is how much, sir? Closing capital is equal to, or you can write it capital at the end of the period. Capital at the end of the period is 51,420. That is your closing capital. Everyone is okay with this? That they did not give, we found it out. Awesome. Let's see what are they asking now. What is the requirement? Reset the equation, they said. Okay, I did reset the equation. They're asking you to find out profit, sir. They're asking you to find out profit. How can we find profit? How can we find out profit? Can you tell me? How can you find out profit? I'm just showing you. One number, if you just compare two numbers here, no, you're going to get profit. Which are the two numbers I'm talking about here? The one I'm circled, no? In that, if you compare two numbers, you'll get it. Check here. How much was the opening balance of capital? Opening balance of capital was 51,000. At the end of the period, capital has become 51,420. Opening capital was 51,000. Closing has become 51,420. Capital has increased. Why? Capital has increased. Why? Because company has made some, or this business has made some profit during the current year. Manageable. So that is what they're asking. So profit is equal to, can I write profit is equal to capital at the end of the period? There are more things to consider here, not just opening capital and closing capital. You have to consider drawings and other things also. But here other things are not there. So straightforward we can write. So profit is equal to capital at the end of the period minus capital at the beginning of the period. Capital at the end of the period was 51,420. Capital at the beginning was 51,000. That means the profit that you made in the current year is, or you can write profit for current year. Current year means 12 months. We prepare the accounts every year for 12 months, no? Yeah, as per periodicity concept we discussed. Yes. So profit is 420. That's what they asked. That's it. Only drawings is concerned here, no sir? Yes, drawings also should be concerned here. Also like additional capital introduced. If owner has bought in more funds, that should also be considered in the equation. Okay, it's not there, so I'm leaving it out in this particular problem. That will come maybe for the next, not now. Okay, maybe later. They're asking you to prepare balance sheet also. See, balance sheet is simple. Okay, it just shows assets. It's just see, you have the equation A is equal to C plus L. Balance sheet runs on this equation only. You will show all the assets on one side, capital and liabilities on the other side. That's all is balance sheet. It's a statement which shows financial position, meaning asset and liability ka position it will show. That we call it as B bar S. That is the acceptable short form, which we call it as balance sheet. Okay, that we can directly go through it here. Balance sheet. We normally write it as this is the format of balance sheet. Liabilities amount, assets amount. All the liabilities you put it on the left hand side, all the assets you put it on the right hand side. You don't have to. Some of you must have done company account ka balance sheet in your second PUC, yeah, 12th standard, as per Companies Act 2013. You don't have to follow that format here. Okay, present it like this only. That is sufficient. Only for companies you need to prepare as per Companies Act. Okay, companies ka balance sheet or preparation of financial statement is not there in CA Foundation syllabus. It is there in CA Inter. Okay. So at your level, you will prepare balance sheet in this format only. Okay, liabilities amount, assets amount. That is good enough. Okay. Now we already know all the assets now. All the assets just now we listed out here. 12,720, 22,900, 17,500, 15,600. All the assets you list out one by one here. Total is 68,720. First thing you could write is capital. How are you going to show capital is, show the opening balance of capital. How much was opening balance of capital? At the beginning of the period, how much was capital? 51,000. If you make the profit, what will happen to capital balance? Just now we discussed. If you make any profit, capital balance will be same or it will increase. If you make profit, capital balance will be same or it will increase. It will increase, yes or no? So how you show in balance sheet is, take the opening balance of capital. To that you add profit. How much is the profit you made in the current year? 420. So suppose we made a loss, instead of adding, subtract. That's all. Okay. So that means the closing capital is 51,420. Like this. Done. Okay. So this is your capital balance. Loan, this is your capital. Liabilities are two liabilities, which is 11,500 and 5,800. That also they brought it down here. 11,500, 5,800. This is your loan and this is your trade payables. If you do that, you're going to get balances on both the things. Okay. Done. Okay, this problem is done for then. That's what they asked. There are a couple of more. Let's just check that out. Maybe we'll do second question. Second question. Mr. David has provided the following details related to his financials. Find out the missing figures. You just have to find out the missing figures here. That's it. They have given profits carved during the year, which is nothing but profit made for the current year. Current year, in last problem, we found out profit. Here, they have only given the profit. Profit for the current year is 5,000 rupees given. Assets at the beginning of the year is A, meaning this is missing. You need to find out this number. Liabilities at the beginning of the period is 12,000. That they have only given. Assets at the end of the period, you don't know, missing. Liabilities at the end of the year is missing. Closing capital is 35,000 given. Total liabilities including capital at the end of the year is 50,000. So these are some data they have given. Using the data, you need to find out three missing figures. Assets at the beginning of the period, assets at the end of the period, liabilities at the end of the period. That's all you need to do. Somebody is saying, sir, opening capital is 30,000. Perfect. See, one by one we can go on figuring it out. Like here. How do you get closing capital? Or can I write like this? Closing capital is equal to opening capital plus profit. If you make profit, you will add. If you make loss, you will write minus. Yes, no? Can I write this equation like this? From the opening capital, if you add a profit, you're going to get closing capital. That's what we did the previous one. Okay. Do you know closing capital? Yes. Closing capital is 35,000. They have given. Opening capital, do you know? No? We don't know. We'll keep it as it is. But profit, do you know? Yes. Profit is 5,000 rupees. That means this plus 5,000. Therefore, your opening capital is how much, sir? Therefore, your opening capital will be 35,000 minus 5,000, which will be 30,000. Can we write it directly? Please don't write it directly, sir. Show one working. How you found out this 30,000? Even invigilator should know whether you worked it out or you copied from somebody. Yeah, alright. It's better to show a working note. You don't have to put a fancy working note. Put a small working note, 1 or 2 lines. That is good enough. Okay. Directly don't write opening capital is 30,000. At least write like this. Opening capital is 35,000 minus 5,000. This way also if you write it is okay. Because this is closing capital. From this I have deducted profit and I've got opening capital. That way also short form you can present. That is acceptable. Directly don't write opening capital is 30. Show some working. How you got it? Okay. So first portion I think they asked opening capital. They didn't ask opening capital. Huh? Okay. They did not ask opening capital. Still I did. No problem. Actually, what did we require? We require assets at the beginning of the period. Okay. That means I will give the heading as like this. Can I write assets at the beginning of the period? Or do we have liability at the beginning of the period they've given? Okay, awesome. Assets at the beginning is equal to capital at the beginning plus liabilities at beginning. Can I structure the equation like this? Can I write it like this, sir? Because A is equal to C plus L, no? If you take opening balance of the assets, meaning assets at the beginning, and if you take capital at the beginning and add liability at the beginning, all that should work. Yes. You just now found out capital at the beginning, which is 30,000. Liability at the beginning, they only given. Check. Liabilities at the beginning of the year is 12,000. They only given. That means automatically asset at the beginning, they are not given. We can easily find out. So that means therefore assets at the beginning will be how much? Therefore assets at the beginning is equal to 42,000. So one missing figure we got it, which is assets at the beginning we have found out. Done. Any problem? Any repetitions or okay? Yes, sir. At this point of time, we are going into Buddha zone. Whether we understand or not, full mauna we will be. Namba pesa matto, correcta? We only listen if possible. Yeah. Okay. All right. So assets at the beginning we have got it, and next liability. Oh, 1 minute. Assets at the end of the period also straight away I can write. Yes. In fact, assets at the end of the period straight away I can write. Can I straight away write this as 50,000? Can I write assets at the end of the period straight away as 50,000? Yes. Why? Sir, simple. A is equal to C plus L, no? If you want asset at the end of the period, you should take capital at the end of the period and you should take liability at the end of the period. Check this line, what they say. Total liabilities including capital at the end of the year. That means what is this? C plus L only, no? They have taken capital, they have added liability both at the end of the period. That added number is 50,000. That means these two ka addition at the end of the period is 50. That means asset at the end of the period also has to be 50 only, no? This is in fact straight away given. Agreed, huh? Did you understand what I said, or you want me to repeat that once? Any repetitions, anyone, or okay? Yes, got it, huh? Yeah, understood. Awesome. That means straight away I'll write here assets at the end of the period. Assets at the end of the period is equal to capital at the end of the period. I'll write it as full form only. Capital at the end of the period plus liabilities at the end of the period. Okay, these two addition they only done in the problem, and they have told these two addition is 50,000. Therefore, this is 50,000. Okay, awesome. So this is also done for. Total assets at the end is also 50,000. Now they are asking liabilities at the end of the period. Okay. Sir, they told you this plus this, capital at the end of the period and liabilities at the end of the period. These two, if you add, you're going to get 50,000 is what they are saying. Now maybe I just finish off this also. Here I'll write the same thing. Assets at the end of the period is equal to 50,000. Okay. So capital at the end of the period plus liabilities at the end of the period. If you add capital at the end or at the end of the period plus liabilities at the end of the period, these two if you add, clearly they told in the problem, these two addition is 50,000. Okay, just they have only given, I don't have to do anything. Do you know capital at the end of the period? Do you know capital at the end of the period? Yes, they have only given in the question. Check. Capital at the end of the period, which is nothing but closing capital, which is 35,000. This you know, it is 35,000. Liabilities at the end of the period, you don't know. You can write liabilities at the end of the period, or you can just write closing liabilities. Okay, if you don't want to write so much, no, you can just write it as closing liabilities. Like this. That may be like, little time consuming. So we can write it like this. We don't know that. But these two addition is 50. Therefore, closing liability is how much, sir? Therefore, closing liability is equal to 50,000 minus 35,000, which will be 15,000. That is the final answer. So we found out that missing figure also. That's all they asked in this particular case. Yeah, awesome. Nice. Thanks. Anybody copying any portion or move forward? Anyway, it's given the same thing is given here also. If you still want to copy, I'll just wait up. आज के लिए बस okay. One more question is there like this. Maybe वो कर लेते हैं पहले. ठीक है? Then we can wind up. Others are telling us साग गुरु ಎಷ್ಟು ಕಚ್ತ್ಯಾ. Eid no special no. We should do more no. On special occasions you should extend the class. More you should do. More josh. Full josh mein. Biryani and all we must have had no. Then we should have full josh. Correct no. Okay. Which is that question pa? Okay. Ninth one. Or ninth one, if I give it, okay, you may not do it as homework. Okay, can you give that some as homework? I was about to say that. He's saying, okay, 2 minutes we'll do off this. It's okay. We know the equation, sir. A is equal to C plus L. Asset is 15 lakh. You have to just find out the missing figure. They've given 4 cases. That's all. Asset is equal to 15 lakh. Liability is 2,15,000. Can you find out capital? Asset is 15 lakh. Liability is 2.5 lakh. How much will be capital? Capital will be assets minus liability. So 15 lakh minus 12.5 lakh, minus 2.5 lakh, which will be 12,50,000. Is it okay? Based on the equation, I've given you the answer here. Straightforward ones. Yes, for 2 minutes, we will do this off. Done. Next, asset is question mark. But you know capital and you know liabilities. Asset is what? Capital plus liability. So these two you add, how much it will be? 1,50,000 plus 75 is 2,25,000. So asset has to be 2,25,000. Straightforward. Okay. Asset is 14,50,000. Liability is question mark. Capital is 13,75,000. That means how do you find out liability? Assets minus capital. 14,50,000 minus 13,75,000, which will be 75,000. That is that number. Just basing that equation, we are solving it. Straightforward one. Okay. Asset is equal to 57 lakh. Be careful here. Asset is equal to 57 lakh. Liability is not plus 2,80,000. It is minus 2,80,000. How much is capital? For this, maybe we'll construct an equation. A is equal to C plus L. Asset is equal to 57,50,000. Capital we don't know. Question mark. Liability no is not plus. It is minus. That means this should be what? This should be minus 2,80,000. Yes. Okay. Getting it? I should show formula. Which formula I should show, ma? Muskan, I didn't get it. Which formula you mean? 1 minute, 1 minute, Shreya, I'll come back to you. 1 minute. Somebody said show formula. Which formula? I didn't get that. I think Muskan it was. Yeah, what is that? I didn't get that. I'll maybe. What you wrote before, sir? What did I write before? This only I wrote before, no? What else I wrote? This is all I've written. Check. That's all I've written. Nothing else I've written. Okay, anyways, I'll just take maybe others. 50,000 extra I wrote. Where I wrote 50,000 extra? That big one. What big one, Oh, okay. Here, okay. Okay. I mean, I made a typo here. Okay, it's not 57,50,000. It is 57 lakh. Done. Okay, thanks. That's what you're trying to say. Yeah. Okay, then it is fine. Okay, typo. My bad. Time up. No, even I also reach Buddha zone. Only you reach. I also do. Okay. Yeah, 57 lakh. My Buddha zone. Okay. Yeah, all right. Liability is 2,80,000. So that means liability is not a positive number. It is negative. So work out now. Therefore, capital will be what? 57 lakh plus 2,80,000. That means this will be 59,80,000. That's all. Okay. That is the answer. Manageable. Somebody asked, sir, what does this mean? All right. When the liability can get negative, okay, possible that you give an advance to creditors. Very rare that a liability will be shown as a negative number. Very, very rare. Okay. I'm just telling you one possible scenario. Okay. You gave a huge advance to creditors. You wanted to buy goods. Okay. a big machine, you've got a huge order. You want to place a huge order. Creditor told, give me advance. So if you give an advance, possible, because what is the journal entry you will pass? If you give some money to creditors, what is the journal entry you will pass, sir? If you give some money to creditors, what is the journal entry you will pass? Debit the receiver. Creditor is receiving. So that means you will write creditor's account debit. Yes or no? Correct? If you pay him through check, that means you will credit bank account. No? Let's say you gave creditor an advance of 2,80,000. Okay with this journal entry, everybody? Fine. He told, if you want me to supply you the goods, first give me the advance, then I will supply. Normally this happens. Like, let's say you approach an airline manufacturer. You tell, I want to buy an aircraft. That aircraft cost 300 crore rupees, let's assume. You went to their showroom, their office, and told, I want this aircraft. 300 rupees. Fine. You told I will pay after, after 7 months. Fine. Because that aircraft, to construct that aircraft, let's say it takes 7 months. You told I will pay after 7 months. Just based on your words, they will start manufacturing that. Just based on your words, do you think they'll start manufacturing? What if you later back away? What if you later write, hey, no, that day I was I was not in good mood. Or that day I was just in good mood, I came and I just placed the order. Now I don't want. Oofy it is. Yes. If these sort of things, if you do, it will be a problem for them. Yes, no. Whenever there is a big order placed, there is a possibility that that supplier may take some advance from you. Okay, fair enough. So in that case, normally creditor is a liability. Liability, I told, will have a credit balance. But in this case, there is a possible that you may have a creditor as a debit balance. That probably is a scenario they've given here. Pretty rare to have the whole liability as a negative number, but just giving you one small scenario. Okay. Now, creditor won't become a debtor, sir. Just because creditor has debit balance, no? Okay, it won't be shown as a debtor over there. You'll still show it under balance sheet as a negative balance only. That's what they've done here. Yes, awesome. So the scenario, they got it as 2,80,000. Possible. One possible scenario. Boss, he's saying. Okay. Okay, let's listen to them. No problem. Okay, I think we can wind up for today. The remaining questions, we will take it up in the tomorrow's session. All right. Thank you for your patience, guys. Enjoy whatever time is left. Okay. Take care. See you. Bye-bye. Good evening, guys. Welcome back. I think we were doing journal entries in the yesterday's session. Some majority of the portion we have covered. A little portion is pending. So we'll be covering that in the today's session. Before we get started, let's have a quick recap of what we have done in the yesterday's session. Basically, journal is what? Journal is basically recording the transactions. So that is the very first step in accounting. To record something, we take the help of a particular thing known as account. Like in mathematics, you do with numbers. Here in accounting, you do recording in terms of account. Okay. So recording is done on a double entry system mode, meaning you take the help of at least two accounts. One account and a different account. One account will be debited, another one will be credited. That's how accounting works. For every debit, there will be an equivalent credit. Meaning debit and credit will always match in a journal entry. Fair enough? Alright. So before we get to journalizing, first we need to find out what are the two accounts or what are the accounts that are getting affected due to transaction. That is your first step. Identify the accounts. Then find out whether that particular account is a real account, personal account, or a nominal account. Then apply the golden rules of that respective. Like if you want to call an account as a personal account, then it should be what? Like personal account means like living persons like you and me. Or it could be X Limited, Y Limited, Infosys Limited, Wipro Limited, etc. Like companies like this. Or it could be an artificial or meaning representative personal account like capital account, drawings account, outstanding expense account, prepaid expense account, etc. Yes. And personal account ka golden rule is debit the receiver, credit the giver. Second, we looked at real accounts. All the assets of a business, we call it as a real account. All the assets like land, building, cash, etc. And the golden rule of real accounts is debit what comes in, credit what goes out. So if the asset is coming in, we debit it. If that asset is going out, we credit it. That way. Last is nominal accounts. Nominal accounts are related to expense, loss, incomes and gains. These things we call it as nominal account, and nominal account ka rule is debit all expenses and losses. If you have incomes and gains, then credit them. That's the simple funda. Okay. And along with this, we also saw a basic accounting equation. Asset is equal to capital plus liability. We worked out a few problems applying this equation. Basically, we use this equation to find out anything that is missing. Yes. So these are the things we covered in yesterday's session. So let's get started with today's session. Okay. Based on accounting equation, there was one more problem. We should have done that yesterday. All right. Okay, no problem. Let's get that done first. Then we will move on to the remaining things. Accounting equation A is equal to C plus L. Question number 11 relates to that. So let's get that done first. Okay, awesome. Following information is provided by Mr. Gopi pertaining to the year ended 31st March 2019. As we discussed yesterday, accounting year generally begins on 1st April and it will end on 31st March. The accounting period is for 12 months only. Okay. And generally 1st April to 31st March of next year is the generally accepted accounting years. In most of the cases, this will be the case. Okay. Here the year is ending on 31st March 2019. That means the year will begin on 1st April 2018 and it is ending on 31st March 2019. Like that it is ending. For this period, they have given some data. Okay. Awesome. So find out the unknown. Some missing figures are there. We need to find out that. Machinery, accounts payable. Accounts payable means creditors. Okay, accounts payable means creditors and bills payable put together. For simplicity, we'll just call it as creditors. It's okay. Total liabilities including capital. Do you remember this particular adjustment came in the yesterday's problem also? Total liabilities including capital. That means what this is? Can I write this as C plus L? Capital plus all the liabilities put together, it is 14,15,000. That means they have given C plus L, can I say? We know the equation. What is that? A is equal to C plus L. Yes or no? Total assets is equal to capital plus liability. Capital is something which the business has to pay to the owner. Liability is something which the business has to pay to the outsider. Owner, this is insider's liability, that is capital. L is outsider's liability. Owner's liability from business point of view, we call it as capital. Outsider's liability, we treat it as liability. That's a categorization for liability we have made. Okay. That means here, can I tell total asset is also 14,15,000? Can I tell total assets is also 14,15,000? Because A is equal to C plus L. What they have given is nothing but C plus L. That means total assets also which is 14,15,000. Okay, awesome. Cash is A, meaning this is missing. We need to find out. Bank balance they have given. Okay. Trade receivables, meaning debtors is missing. We need to find out. Loan is missing. We need to find out. Closing capital is missing. We need to find out. Opening capital they have given. With opening capital, can you find out closing capital? Yesterday we did one such question like this. With opening capital, can you find out closing capital? Yes. How does that work? Take the opening capital. If you have made the profit during the year, add it. If you have made loss during the year, reduce it. Yes, that's what we did in yesterday's session. Okay. But here we have a couple of other adjustments also which we need to consider. I'll tell you this. So they've given opening capital. And mind you, this year we have not made a profit. We have made a loss. Profit means add. Yesterday's problem there was profit. We added. But here it's a case of a loss. Loss means what we should do, sir? Loss means we should deduct. Yes, no? Okay. Capital introduced during the year. Opening capital means maybe last year or maybe 2-3 years before or whenever. Okay. Previously, the owner had brought in 10 lakh rupees. Okay. Just one time, if you invest in the business, that is sufficient. Like I'm into coaching center now. Just one time I invest the money into my business. That is sufficient. With one time investment, can I run the business for 20 years, 30 years? Is it possible? with just one-time investment, can I run the business forever? Or do I require my investment regularly? If I want to expand my business, I will require more money. That means I need more money, means we call it as additional capital. So in here, we also have an additional capital introduced during the year for 1 lakh. The owner in the current year, he had already bought 10 lakh previously. Now, additionally 1 lakh he has bought in the current year. This is an extra fitting which was not there in the previous problem, which comes here. That's all. Okay. This also we need to consider and then find out closing capital. Okay. All right. During the year, sales was 15,55,000. The total sales you made was 15,55,000. That means you must, if you have made the sales, means you should recover the money. Correct. If you make cash sales, then you will recover the money right away. If you make credit sales, then you will recover the money little later, maybe 1 week later, 1 month later, 2 months later, whatever based on the agreement. Here total sales is 14,55,000, of which 15 lakh have been received. How much money totally we need to receive, sir? We have sold 15,55,000. That means we need to receive 15,55,000. In this, how much we have already received? In this 15,55,000, 15 lakh I have already received. That means how much is still pending? How much is still pending? Can I say 55,000 is still pending? Yes. From whom should I collect this 55,000? Whom do I sell the goods to? I sell the goods to my debtors. Yes or no? Correct. That means debtors balance is 55,000. Do you remember they asked the debtors balance here? That is straightforward, which is 55,000. That's the first working. Got it, guys? Everyone? Any confusion, anyone? No. Okay, awesome. All right, that means I'll solve the question here only. Question number 11. Okay, first thing, I'll find out my debtors or trade receivables. They're using trade receivables, so we'll use the same name. Can I directly write? Trade receivables is equal to total sales minus amount received. Okay, or I'll not write total sales. Can I write total credit sales? Would that be okay with you? Yes. Totally, I've sold goods worth 15,55,000. In that 15 lakh rupees, I've already received. That means the pending amount is only 55,000. So the trade receivable balance is 55,000 rupees. Its solution I've printed here. Okay. If you want, you can copy. Otherwise, the choice is yours. I will not interfere there. Done now? That is your call. Done. This is the first thing. So we found out one missing figure. Let's find out the capital. Think they've asked closing capital. No? Previously, what we used to write? Closing capital is nothing but opening capital plus profit. But if you make a loss, you will reduce. This is what we have written in the previous thing. Opening capital plus profit minus loss. But here, not only these two numbers, one more extra component I need to consider. What is that? Additional capital. So if there is any additional capital introduced, we need to add that. Additional capital introduced. So this is your full-fledged equation. And if you want another things, if there is any drawings, deduct this. So this becomes your full-fledged equation. Done? So if there is any drawings, reduce it. In this problem, drawings is not there, but I was constructing an equation. Hence, I have given it to you. Manageable. Now, why do I need to add additional capital? Anyone can tell me? Why do I need to add additional capital? It's simple, right? Opening capital was 10 lakh. Previously, he had invested how much money into the business? 10 lakh. This year, how much more the owner invested? 1 lakh more. That means how much obligation does the business have to repay the owner? How much the business has to give it to the owner now? Not just 10 lakh. The business has to pay 10 lakh and it has to also pay 1 lakh rupees. Totally 11 lakh rupees has to be paid by the business to the owner. Yes or no? Correct? That is the reason I've added additional capital introduced. Okay, not necessarily it will come in every scenario. In the previous problem, it was not there. So I had ignored this. In here, it is there. That's the reason I'm reducing it. Okay. Fair enough. Sir, drawing, somebody is saying drawings is for personal or business use. The moment you hear the term drawings, it is always for personal purpose, buddy. Okay. The meaning of the drawings is drawing something out of the business for personal purpose. Drawings is always personal purpose. Okay. Alright, so using this, we can find out closing capital. How much is opening capital? Opening capital is 10 lakh. Did you make profit during the year? No. Current year we made a loss. So profit is not there. So we'll write 0. If it was profit was there, I would have added. But current year I've made a loss. Hence I will subtract. How much loss made during the year? 35,000. So minus loss of 35,000. Additional capital, how much did the owner introduced? 1 lakh. Okay. Yes. Don't write L's and K's and all in examination. Write the full value. Okay. For class purpose, just to save a little time, I may use L, K and all. You will write full value in examination. No short forms. Okay. Class work, fine. Exam, no. Do we have any drawings in the problem? Given in the problem anywhere drawings? Not given. That means drawings, if it is not given, we'll take it as 0. So closing capital will be how much here? Can I say it as 10,65,000? 10,65,000 is closing capital. Okay. So that is what they asked. So this also we found out. Closing capital we found out. Trade receivable we found out. Next, loan is something which they are asking. Let's try to find out the loan here maybe. Okay. They have given total liabilities, no? Total liabilities including capital. Like this, there is a line in the problem. Yes, no? Total liabilities including capital. There's nothing but what? Capital plus liabilities put together. Yes, no? These two put together, the value they have mentioned in the problem. How much is that? These two put together, they have only given in the problem as 14,15,000. Okay. Capital. See, all this value is as on 31st March they have told. 31st March means opening, sir, or is it closing? 1st April ka balance. First day ka balance we call it as opening. Last day ka balance we call it as closing. First April ka balance we call it as opening. 31st March, that is last day of the year ka business, we call it as closing. Now tell me, all these balances that they have given in this particular table, is it opening data or closing data? All this balance is as on 31st March. That means all this as on closing. Yes or no? Fine. So that means I can also write here closing capital plus closing liabilities. Can I write like this? Instead of just like this, because there might be some opening drama also, no? Yes. So I'll write total liabilities including capital is nothing but closing capital plus closing liabilities. Done. Closing liabilities we already found out. 10,65,000. Closing liabilities. Liability means other than the owner, business should repay whom and all. Other than the owner, business should repay whom and all. Check. We have taken creditors. Creditors the business has to repay, no? So it's a liability. That means, can I tell loan consists of or closing liability consists of trade payables. Check, is there any other outside liability? The business has taken some loan also. That means there are two outside liabilities. One is loans, another one is accounts payable. Accounts payable ka value they have given, okay, plus loans. Is it okay if I structure the equation like this? Is it making sense for everyone? Yes, no? Closing liability. There are two liabilities. I've added them. If you add these two, you're going to get the total closing liabilities. So this is 14,15,000. This is a 10,65,000. Trade payable, they've only given in the problem. How much is a trade payable or accounts payable given in the problem? 1 lakh. Sometimes they call it as a trade payable. Sometimes it is also referred to as accounts payable. You can use any of the name. It is fine. All right. So now I don't want anybody to tell again, sir, what is the difference between the two? I'm just modifying that. Okay. Loan we don't know. We need to find out. Okay. Therefore, loan value will be how much, sir? Solve this equation. How much you're going to get? Solve this equation. How much you're going to get? 14 lakh 15,000 minus 10 lakh 65,000 minus 1 lakh. If you solve it, my calculator is showing 2 lakh 50,000. Perfect. 2 lakh 50,000 is the answer. Awesome. Most of you have got that right. Great. Yeah, I know all these are simple for you. For your standard, this is like dandruff. You'll shrug it off like this. Correct now? Sir, this and all we have done in 11th standard only, sir. We'll close our eyes and we will do it. Yeah. But still, as my teacher, I have told you first today, I made a commitment. Everything I will cover in the class with as much detail as the time affords. Okay. So I will do it clearly. So you don't have to get bogged down. Okay. First week, okay, it will be basics only. Then there are many things that you will learn. Done? Sir, will they specify whether drawings is out of profit or capital? Yes, sir. They will specify. Okay. Not here. That adjustment what you're asking is not relevant here. For partnership firm, maybe your question is relevant. I'll take it up there. Done? Okay. Awesome. Then I will just move on. Okay. Now, copy this in your notes. Okay. What I'm typing. I showed you one way to pass the journal entries, correct? What is one way? Identify the accounts, categorize that accounts, whether it is real, personal, nominal account, then apply the golden rule. This is what I taught you yesterday. And all our journal entry yesterday, we did like this only. Yes. Okay, I wanted you to be absolutely clear on that. Hence, I worked out like this. I will show you another method, a little simplified method now, okay, to pass the same journal entry. Either you can follow golden rule approach or this approach. Okay. Let's try to learn this as well. Okay. Broadly, the accounts are classified into 5 things. Broadly, the accounts are classified under 5 headers. One is assets. One is liabilities. Leave some space here. Okay. Fair enough. I will just give you the table or maybe give you the heading only so that it'll be easy for you to copy. So you need to make particulars and then general balance we will write. That is the second column ka heading. So you need to make 4 columns, guys, in your notebooks. When increased or when value increases. You can write when value increases. That is the third one. And then you can write when value decreases. Okay. Like these columns you can make 4 columns. Assets, liabilities. Generally accounts are classified into 5 headers. Assets, liabilities, capital. That is what we wrote it as accounting equation. A is equal to C plus L. Yes. And also expense or loss, income or gains, or you can call it as a revenue also. It is fine. Done. Drawings, I'll put it under capital only, sir. I will not do that there. Okay, I'll not have a separate heading for that. You can have drawings, it is fine. I'll just think of it as capital only. Yes. Okay. So what I'm doing is, generally accounts will be put under, any account that you see will fall under this category. Either that account will be an asset, or it will be a liability, or it will be a capital, or it will be an expense, or it will be an income. All the accounts generally will fall into this particular category. Okay. And generally all the assets, listen to this carefully, those of you who are listening for doing it for the first time, generally all the assets will have debit balance. I'm giving you a general balance. Okay. Not that assets cannot be credit, but generally all the assets will have a debit balance. Generally all the liabilities will have credit balance. Capital will always have a credit balance. Okay. Expense generally will have debit balance. Income and gain will have a credit balance. These are the general balances that I have given. In most scenarios, you will see these accounts will have these sort of balances. Till here, okay now? Till here, okay? Especially the science background guys I'm talking about here. Okay, right? Now, why do we say generally assets have debit balance? Simple example we'll take. Cash. Is cash an asset? Is cash an asset? Is cash an asset? Yes. Suppose the business received 100 rupees cash. The business received 100 rupees cash. Okay, let's say capital introduced this way. Capital introduced in cash. We'll make that a scenario and then discuss. It'll be better maybe. Capital introduced in cash 1 lakh rupees. Capital introduced in cash 1 lakh rupees. Generally what we used to do, we used to identify 2 accounts. That's the first thing. So here 2 accounts are cash account, capital account. Correct? Okay. Cash account is a real account and capital account is a personal account because it's representing a person. Done? Okay. Then we used to apply these golden rules of real personal account. What is the golden rule of personal account? Or applying these golden rules, what is the entry you used to pass? Here cash is coming into the business. As per real account rule, debit what comes in. So you used to write cash account debit. Yes or no? Cash account debit 1 lakh rupees. And capital is a personal account. Personal account ka rule was debit the receiver, credit the giver. Owner is giving the money, hence you used to write to capital account 1 lakh rupees. This is the journal entry you used to pass under the golden rule method. Yes, fine. Now same thing you can pass under a little simplistic way also. Simple funda. Okay. Now cash you are debiting. Yes or no? Correct. As per golden rule you will debit cash. Sir, if you debit some account, what balance it will have? Can you tell me this? If you debit something, then that account will have what balance? If you debit something, that account will have a debit balance. If you credit something, that account will have what balance? Credit balance. Yes or no? So that's the reason I've written here. Generally, assets will have a debit balance. Because whenever asset comes into the business, as per real account rule, we debit it. Okay? That's the reason all the assets generally will have a debit balance. Is this clear why I wrote general balance as debit for asset? Everyone? Yes? Okay. Alright. So it's a simple rule here in this funda. What the rule is? Okay. All the assets have debit balance? Yes. Now if more cash comes into the business, then asset is increasing. Yes or no? I've not completed. Hang on. Yeah. Here 1 lakh is introduced into the business. That means more cash is coming into the business. Yes or no? Correct. Cash is an assets. Assets have debit balance. Yes. If more cash is coming into the business, all right, when the value increases, right, you just debit it again. Okay. If more cash or more asset is coming into the business, okay, if cash is coming in, you will debit it. If cash is going out, the value reduces, then you will credit it. Okay. When the assets come in, meaning when the asset value increases, you debit. When the asset value reduces, you credit. Like this also you can pass a journal entry. Like here, the asset is coming in, the cash is coming in. So the asset ka value is increasing. Asset has debit balance. In mathematics, we do plus minus. Yes. But in accounts, we don't have plus minus. We have debit credit. Okay. Now, due to this transaction, asset is increasing. Asset has debit balance. If you want to increase something which has debit balance, the simple rule what you do is, again you debit. Because in accounts, there is no plus minus. Something which has debit balance, if you want to increase it, again you debit. If something which has debit balance, if you want to reduce, you credit. That's all it is. Done now? So how do we know whether it will increase or not? Sir, here cash is coming into the business, no? Here cash is coming into the business, no sir? Correct? If more cash if you are getting means, asset is increasing, no sir? Correct? Correct, no Pratul? If more cash is coming into the business, asset is increasing. Correct or no? Yes? That is the rule here. Okay? Assets have debit balance. Yes? So if more cash comes into the business, you have to increase that. So since asset has debit balance, okay, to increase, the only way to do that increase in accounts is again debit it. So when the asset increases, you debit. When the asset reduces, you credit. That's all is the funda. You can do like this also. That is your call. Either you can do it like yesterday or like this, whichever way you are comfortable. Dana, this maybe like, it will save you a little it will save you some time. Hence I'm explaining. Okay. So you could have thought like this yesterday only, no? Sometimes they will also ask you what is the type of account in examination. Okay. Sometimes they will give you capital account and they'll tell you what is the type of account and all. So you may get a little confused. Hence, I wanted you to be absolutely clear in yesterday's method. That's the reason I'm giving you the shortcut method now. So knowing both is absolute plus. Applying is your choice, sir. Which one is better? You decide, sir. Whatever is working out for you, you decide. That's all it is. Done? Now, if you know this rule, you should be able to fill out this for me. Liability has a credit balance. Liability has credit balance. If business ka liability increases, what will you do? Liability generally have credit balance. If liability ka value increases, what will you do? Something which has credit balance, if you have to increase it in accounts, the only thing that you do is what? Again, credit. So when the value increases, you credit. When liability ka value reduces, you debit. That's all. That way, its value will reduce. Getting it up? Fair enough? Like, for this, the example will be loan taken. You took a bank loan. What is the journal entry? You took a bank loan. Or, you took a bank loan. What is the journal entry? Because money will be put into your bank account. So, bank account debit to bank loan account you will write. Or you will write to loan account. This is the journal entry you will pass. Yes. Because bank will not give you cash. They will put the money into your account. Hence, instead of debiting cash, I am debiting bank account. And now money will come into your bank account. Bank is a personal account. Yes. Money is coming in. So, I have debited it. Yes. Credit the giver. Bank loan is the giver. So, we have credited this. Manageable. Correct. We will credit this. Instead of applying the rule, you can just apply simple this funda. Bank loan is a liability. If you take a loan, business ka liability will increases. Liability has credit balance. So if you have to increase a liability, you just credit that. So simple funda, you can just directly credit. Manageable. If you repay the loan, then liability will reduce. Liability generally has credit balance. To reduce it, we debit. That's all. Like that. Okay, clear? Can I move forward to the next one? Yes, okay. Capital generally has a credit balance. Something which has credit balance. Okay, when its value increases, what will you do, sir? If additional capital is introduced into the business. In the previous problem, we saw. Existing capital was 1 lakh rupees. Owner brought in 1 lakh more into the business. That means capital value is increasing or capital ka balance is increasing. Then what do? Capital generally has a credit balance. Something which has credit balance, if you have to increase it in accounts, then what do we do? Again, credit it. That's the only way to increase in accounts because you don't have plus minus. Everything in accounts is done through debit and credit. Something which has credit, if you have to increase it, again you will credit. Something which has credit, if its balance is reducing it, then you debit it. Like that. Done? Awesome. Expense and loss will have debit balance. Why will have expense and loss have debit balance? Nominal account ka rule is what, sir? What is nominal account ka rule? Debit all expenses and losses. Yes, no? Debit all expense and loss is the rule. So if you are debiting expenses and losses, that means obviously expenses and loss will have what balance? Debit balance only. Yes. That's the reason generally expenses and loss will have debit balance. Now something which has debit, if its account balance has to be increased. If some account whose balance is debit, if you have to increase that account balance, what do? You debit again. So if you have to increase this account ka balance, you debit it. If you have to decrease this account balance, or when the value reduces, you credit it. That's all is a funda. Done. Okay, incomes and gains. Incomes and gains generally will have credit balance. Why? Because nominal account ka rule is debit all expenses and losses, credit all incomes and gains. Since you're crediting incomes and gains, income and gains generally will have a credit balance. Okay, fine. So something which has credit balance, if you have to increase that account balance, what do? If you have to increase that account balance, again you credit. If you have to reduce that account balance, you debit. So this is another rule also you can apply. Fine now. The choice is yours. What you want to apply is totally your call, sir. If you feel no, this method is confusing for me, you don't have to apply this at all. Okay, just a thing. All right. Or if that method is confusing for you, all right, then you can also validate your answers or you can sort out your confusion by thinking about this, by thinking on these lines. Okay, I say no both, and however comfortable you do it. That's your choice. Now, anything more, or can we proceed further, sir? Okay, now. Okay. This method we call it as modern method. The previous method, no, we call it as a traditional. If you apply the golden rules and all, no, this we call it as traditional method. Applying the golden rules, debit the receiver, credit the giver. If you're passing like that, we call it as a traditional method. This is the modern method, they call it. Whichever you want, you can follow. They will not ask you solve it by modern method, traditional method and all. They will just say pass journal entries. How you pass is your understanding, your capabilities and stuff. Okay, nobody will test you on those lines. Okay, clear. Awesome then. Okay, so let's get to the next questions then. Question number, I think till question number 4 we have done. Sir, in which order journal will be prepared? Journal will be prepared, which method you are asking? Whichever method, sir. Journal is done. Journal entry is what, sir? You apply modern method wala rule or you apply traditional method, doesn't really matter. Journal has to be passed date-wise. That's all it is. Which method you apply? Totally. There is nothing, no funda. In fact, like most of us have passed journal entry, so many journal entries that we don't even think on these lines. The moment somebody says, what is the journal entry for purchase? Fatafat we will say, purchase to cash, credit purchase, purchase to creditors. Because that entries have registered into our mind so much that I'm sure 9 out of 10 guys wouldn't have thought, don't think on these lists. Have you? Yes, directly fatafat you will tell. Yes, correct. Because after doing so many journal entries, that will automatically get registered. But when you have to explain somebody, after becoming CA, somebody tells you, hey, why do we do this? Yeah, if somebody asks you, what will you tell? Hey, that is like that only. Will you tell and move on? No, you have to explain them. No, so that's the reason you need to know. That's how you pass. This is how we got to that stage. So it's good to know the basics. Don't forget the basics, where you came from. That's what they say, no? After reaching the top, don't forget where you came from. Always remember your past. Yeah, like that. Okay. About order. Yeah. All right. Show the next question. We'll get to it then. Show the classification of the following account as per traditional approach. Traditional approach means that real, personal, nominal wala. And accounting equation approach. Accounting equation is A is equal to C plus L. That's all it is. Done? Okay, awesome. So let's see. They've given you various components. You need to tell as per traditional approach whether it is real, personal or nominal account. And as per accounting equation approach, what is it? First, we will do one thing. We will ignore the accounting equation approach. We will solve the traditional approach first. Now the building, you tell me, sir. I will not, don't look at your books. Okay. Check only the screen and tell me. Building. Building is what? Building is what, sir? Building is an asset. All assets are real accounts. Perfect. Next, purchases. Purchases are also goods. All goods are real account. It could also be treated as nominal account, because I told you yesterday there is a small debate over there. Purchase can either be taken as a nominal account or real account. But in your examination, you write real account only because our study material is using this. Fine. Okay. That is one. Sales. Sales again what, sir? Sale is relating to goods. So it is a real account again. It could be treated as nominal also. But that is fine. Fine. Bank fixed deposit. Bank fixed deposit. What it is, sir? Bank is what, sir? It's an artificial person. All artificial persons are that SBI, State Bank of India, RBI, all these are what? Artificial persons. So it will be personal accounts. Correct? Done. Sir, if you write nominal account, will mark get reduced? Ideally, I say, sir, your solution in the examination should be as per the study material. Okay? Because all the markings will be done based on study material. So as much as possible, come follow with the study material. Okay, fair enough. That's my opinion. Okay, rent. Rent all what, sir? Rent is an expense. All expenses are nominal accounts. Rent outstanding. Rent outstanding means you have to pay the rent to your landlord. Okay, the guy who is owning it. You have not yet paid. That means what is this? You have to pay rent to somebody. That means it is representing him. Yes or no? So these are representative personal accounts, meaning personal accounts. You don't have to write natural personal account, artificial, representative and all. Just write personal, that is good enough. But if you want it further, this is a representative personal account. Done? Okay. So how do we know whether it is rent paid or received? Sir, if it is rent received, clearly they will give you one in the problem. And it really doesn't matter whether it is rent paid or rent received. Because if it is rent paid, it's an expense. Yes. If it is rent received, it's an income. Both are nominal accounts. Fine. General convention is if they just give rent, we take it as rent paid. If it is income, clearly they will mention rent received. Like that you can identify, sir. Chris, okay? Awesome. Cash. Cash is an asset. All assets are real accounts. Perfect. Adjusted purchase. How do you get adjusted purchases? Opening stock plus purchases minus closing stock. We will know more about this maybe later topics. For the time being, you can write this in your notebook. Opening stock plus purchases minus closing stock. Adjusted purchase, they've treated it as nominal account. You can also call this as a real account because it is dealing with goods only. But for the sake of marks, we will still put it in. We will follow what the study material is doing. Done now? Fine. We will see this later maybe. But how to get adjusted purchase is this if you want. For the time being, write that down. We will not go further now. So much. For the time being, it's not required. We'll cover it later maybe. Done? Okay. Closing inventory. Closing inventory means the stock. You bought those goods, but you have not yet sold them. It is there with you. Right? I told you, right? If you buy 100 units of a product and if you sell 70 units of that product, 100 units you purchased during the year, 70 units you have sold. How much is remaining with you? In 100, 70 sold. That means remaining is only 30, no? That remaining units only we call it as closing stock or closing inventory. Closing stock or closing inventory. This is also goods only, no? Yes. This goods means asset only. That means closing stock are also real accounts. Fine. Okay. Investment. If you make any investment, it's an asset for you. Correct? So all the investments are real accounts. Okay. Awesome. Trade receivables. Trade receivables means your debtors. Debtors means you have to collect the money from some person. So it is representing a person. Okay, it could be artificial person or whatever. But still all these are what? Debtors, creditors, etc. are your personal accounts. Perfect. Sales tax payable. Sales tax payable. Whom you should pay the tax to? The government. That means this liability is representing government. Even government is a person only in accounts. That means what is the sales tax payable? It is also a personal account, but it is a representative personal account. Okay, fair enough. Sales tax payable. Done. Sir, why sales tax payable will be personal? It is expense. No, it is not expense, ma. Sales tax payable is not expense, Dhanush. How? Sir, I am giving you coaching over here. That means we collect GST. In India, we collect goods and service tax. Yes, along with the fees, we collect the GST. Agreed? All of you must have paid. Let's say I collected 100 rupees GST from you. This 100 rupees GST, is it my income? Is this 100 rupees GST ArivuPro ka income? Or I have to pay this to somebody now? This 100 rupees is not my income. I have to collect it from you and pay it to the government. Yes or no? So on one hand, I will collect. On another hand, I will pay. So this is not my expense or income. Okay. This is just my liability. If I have collected 100 rupees, then I have to pay this 100 rupees to the government. So it is not an income or expense. When you collect it, it is not your income. When you pay it, it is not your expense. Getting it up? Fair enough? So this is a liability. Manageable. So hence it is representing a person. So personal account. Dhanush it is. Yes. He's saying okay. Awesome then. Discount allowed. I've given some discount to somebody. So it's my expense. So nominal account. Bad debts. Bad debt means I've sold the goods to somebody. That somebody did not pay me. He put me Tirupati toss. Full goinda he did. Okay. He told I will pay. Later on, no, he did not pay. That means it's a bad debt. It's goinda for me. That means it's a loss. All loss are nominal accounts. Yes. Awesome. Capital account. Capital account is representing a person. So personal account. Drawings means Again, it's drawn by a person, so representing owner. All these are owners, right? So personal account only. Fair enough. All right. Interest receivable. Interest receivable, we have to receive it from a person, from an entity or a person. So it is a representative personal account. All outstanding expense, accrued income, all these are representative personal accounts. Okay. So rent received in advance. I've received some rent from advance from somebody. Okay. So that means that is also a personal account. It's because it's representing a person there. Done. Prepaid salary. Meaning prepaid salary means next month ka salary or next year ka salary I've already paid in advance. That means all this is also personal accounts. Bad debts recovered. Okay. Bad debts recovered. Bad debts recovered is what, sir? It's an income. Yes, so that means it's a nominal account. Meaning last year or last month I thought somebody will not pay me. So I thought it was a loss. Suddenly he grew a conscience. He paid me the money. That means it becomes my income now. So it is a nominal account. Okay. Fine, sir. Depreciation. Depreciation is an expense. Those of you who don't know what is depreciation, there is a separate topic known as depreciation. We'll take that up there. For the time being, know it as an expense. That is good enough. Okay. Personal income tax. Personal income tax belongs to the owner. That we call it as a personal account itself. Manageable. Okay. All right. So let's see under accounting equation approach how the same thing works. Accounting equation means A is equal to C plus L. They will give you various components. You have to tell whether it is asset, capital or liability. One extra category is sales for there. I know. Yes, it is a representative personal account. It is written it as personal only. Yes, personal income tax. Discount received is which, sir? Discount received is nominal account. Discount received is nominal account. Okay. All right. Now, if you're using accounting equation approach, okay, then you need to tell what is it, whether it is an asset, capital or liability. That's all you need to figure it out here. There is also a separate category known as revenue. Okay, these are the 4 categories you put it under. Let's see. Buildings. Building are what? Building is what? Asset, liability or capital? It's an asset. So perfect. Asset. Purchases. Purchases. You purchase the goods. So goods is an asset for you because you can sell it and get some benefit. So purchases is an asset. Sales. Sale is also an asset, but there is a separate category called revenue for it. So we put it under that. Okay. So it is fine. You can put it under revenue here. Simple as that. Done. Bank fixed deposit. If you invest some money into the bank fixed deposit, is it that is also an asset only, no? Correct? Because whenever you want, you can withdraw it and use it for whatever purpose you want. That means that is also your asset only. Correct? Yes? Fine. No? Okay, awesome. Rent outstanding. Rent outstanding means you have to pay somebody some money. If the business has to pay some money to somebody, that only we call it as liability. Correct? No? If the business has to pay the money to owner, it is capital. If the business has to pay the money to someone else other than the owner, we call it as a liability. So that means this is a rent outstanding is a liability. Manageable. Okay. Rent we missed out. Rent is what? Rent is an asset, liability or capital. What is it? Rent is an asset. They have written expense over here. Yes. You can write expense or you can write it as a temporary capital. That is another way to present this also. They have written it in the going forward way. Here they missed out. You can write it as a capital only, sir. Rent, you can write it as capital. Sir, how, sir? Simple, sir. We already learnt it now. What we learnt, sir? Rent is an expense. Can you tell me if expense increases, what will happen to your profit? If expense increases, what will happen to your profit? Profit will be same or profit will reduce? If expense increases, what will happen to your profit? Profit will reduce. Can I say like that? Yes. If profit reduces, profit only, what do you do, sir? Profit only will be added to capital, no? Correct? Profit will be ultimately added to capital. Yes. So if profit reduces, that means it has an impact on capital. Yes or no? Correct? That's the reason we say all the expense, we can call it as a temporary capital also. All income also we'll say temporary capital also. Fine. This is a study material assumption. Some books will directly write income expense also. Instead of giving temporary capital and all, no, they directly write income expense. They don't do so much drama at all. Okay. Yeah, but our study material is doing drama, so we also have to do so much drama. Okay. These sort of questions could be asked in the examination. Huh? Could be. There are high chances. Basic journal entries, they may not ask. Very rare. Yes. Purchase can be treated as expense also. Yes. That is acceptable. Yes, as I told you, purchase is both nominal account and real account. But for the sake of marks, we'll stick with our study material approach. Done? Thinking wise, it is right. I'm not debating on that. Yeah? Yes, it is. Agreed. Okay, cash. Cash is an asset. So that there is no issues. Yes. Adjusted purchase. It's an expense. Instead of writing expense, you can also write TC. TC meaning temporary capital. Okay. Fair enough, because this impacts your capital. That is the reason. So you can just write it as a temporary capital in bracket expense. Like this you can present. This one also you can present like this only. Done. Closing stock. Closing stock is an asset because you can sell it and get some money out of it. So closing stock is a goods. So it's an asset. Investment. Investment is obviously an asset. No doubt there. Trade receivables. Trade receivable means you have to recover the money from your debtors. You have to recover the money from somebody. That means that somebody will pay you some money means you will get some benefit. No? So that means this is also your asset only. Correct? Sales tax payable. Sales tax payable means the business has to pay this to the government. So that means this is a liability. Perfect. Discount allowed and bad debts. Discount allowed, bad debts. Both are expense. Either you can write expense or our study material writes temporary capital in bracket they will write expense. Present like this only, I would say better. Done now. Actually, so much drama was not required. You could have just written expense income. That would have been easier, but it's okay. So can't help it now. Yeah. Capital. Capital, there is a separate category known as capital. So there it goes. Drawings. Drawings is what, sir? Due to drawings, capital will reduce. That means this is also temporary capital only. Okay. Fine. Alright. Interest receivable. Interest receivable means you have to receive some money from somebody in the form of interest. So that means this is an asset. Correct? Because you will recover this money from somebody later on. So it is your asset. Prepaid salary. Okay, actually there's one more before that. Rent received in advance. You have received some rent in advance. Let's say you took a building on rent for 1 year. Entire 1 year ka rent, or actually like let's say you own a building. Let's take the other way around. You own a building. You let out this building. You don't need this building, so you let it out to somebody. You gave it on rent. Okay, and you told rent is 1 lakh rupees per annum. Meaning for the whole year, rent is 1 lakh rupees. Okay. And the person told, okay, take 1 lakh rupees now only. Monthly, I don't want to pay. I'm a very busy man. I'll forget it. Take 1 lakh rupees now only. Actually, he has to pay this 1 lakh rupees over 12 months. Correct? No? Generally, we pay rent and all monthly. Yes. But this person is so rich. He's selling, hey, take it much. It's okay. Yeah. Take entire 1 lakh now only. Yeah. I trust you. So he also told, okay, give, it's fine. Okay. Fine, but the agreement is for 12 months. Now you tell me, if the agreement gets cancelled after 4 months, due to any reason, if agreement gets cancelled after 4 months, what should we do? Can I keep entire 1 lakh rupees or should I have to refund something? Can I keep entire 1 lakh rupees or should I have to refund something to him? I have to refund. That means I am liable to pay him. Correct to know? That is the reason we say rent received in advance is a liability. Got it up? Because if agreement gets cancelled, then the owner is liable to repay the amount. Hence, it is categorized as a liability. Any doubts or okay? Anything that you have received in advance is a liability. Rent received in advance, commission received in advance, anything is a liability. That way. Prepaid salary. Prepaid salary. Same funda. I told my employee, alright? I called my employee to my cabin and tell, I am very happy with your performance. Along with April, take May month salary also. 2 months salary I am giving you now only. Maja madi. Okay. Enjoy karo. Ash karo ji. Okay. So 2 months. Actually, he worked only in the month of April. Along with April month, I gave him May month salary also. 2 months salary I gave. Done. Employee did not come in the month of May. He took one big vacation, sir. You gave him 2 months salary. He became so kush that he took a bike and went off to Ladakh. 1 month full he's roaming in bike. Okay. Yeah, he's doing that full ash. Masti he's doing. Okay. Now what will I tell that employee? I'll call him, hey dude, come back. Okay, I think I did a mistake. Yeah, I did a mistake by paying you extra salary. Come now. What will I do? If he quits in the month of May, he does not come, and if he quits the employment, what will I tell him? Boss, you worked only in the month of April. May month May you did not work. Okay, you were doing your own thing. Alright, I'll not ask you that. But I've already paid you May month ka salary. So what will the business tell? Give me my money back. Give me the refund. Yes or no? Correct? Yes, I'll take the money back. Hence, a prepaid salary, we call it as an asset. Because we have a right to collect the money from him. And if something goes bad, then we have a right to collect the money. So it's called as an asset. Fine. Done, sir. Okay, awesome. Bad debts recovered. Bad debts recovered is what, sir? It's an income. Income affects what, sir? Income increases your profit. Due to income, your profit increases. If your profit increases, your capital also will increase. Hence, all the income we'll call it as temporary capital. Awesome. Done. Depreciation is an expense. That is also temporary capital. Personal income taxes or drawings. That is also temporary capital. That's all done. You can write revenue, no problem. But generally, revenue is only for sales. That's it. Done. Done. Actually, there is a meaning for revenue. Okay, everything is not a revenue actually. There is a meaning as per AS 9. Accounting Standard 9 gives you the definition of revenue. If I tell, I'm not sure whether you will get it. If you want, I can give it a go. It's the gross inflow of resources. Okay, received when you sell the goods or when you grant a service, or what you earn due to IDR, interest, dividend, royalty. As per Accounting Standard 9. I'm simplifying it for you. Alright. So this we call it as revenue. You have to apply AS 9 ka principle there. It's a gross inflow of money, inflow of resources. Don't worry about that and all, sir. Don't worry. I just told extra information. That's all. Don't ask me doubt in that now. Yeah, we will not spend time on that. Yeah. So generally revenue is denoted for sales. Just keep it like that for now. Okay. We'll explain you in detail when you come for CA Inter. Done. That is not required for the time being. Sales we call it as revenue. All other things we treat it as income. Done. Keep it like that. That's sufficient for now. Too much if I tell no, then like an unnecessary it will be. Okay. Yeah. Okay. Done. Okay. There is one more question like this. Somebody was telling yesterday, sir, I felt very bad you did not give me homework. Okay. Why to disappoint that somebody? Question number 7 you take today as homework. Then an answer is anywhere given there. You don't have to do anything much. Yes. Go through and solve. Just like the way we have done now. No? Work out this problem as a homework. That is for today. Then what is pending? We'll take up the pending questions now. True and false is pending. You want to do true and false, huh? You want to do true and false, huh? No. Okay, maybe we'll take up the 10th question and then we will see maybe true, false. Okay. Show the effect of increase, decrease. Meaning if it is increase, they are asking you to write plus. If it is decrease, they are asking you to write minus. If there is no change, they are asking you to write 0. In what? On the assets of the following. So simply they are telling, they'll give you various transactions. You need to tell whether asset has increased or asset has decreased or there is no change in the asset. If there is increase in asset, they're asking you to denote that by plus. If there is a decrease in asset, they're asking you to denote that scenario by minus. If there is no change in asset, they're asking you to write that as 0. That's all. This is the representation they're asking you to do. That's all. Done now. Alright, let's take up the scenario. Purchased office furniture, payment to be made next month. You purchase the furniture. Payment you will make it next month. Okay, you tell me, sir, what happened here? Furniture came into the business. That means asset is same or asset is increasing. Asset is increasing. That means I should write what here? Plus. Because they asked us clearly. If asset increases, write plus. Done? Okay, let's see how well you got this scenario. Suppose I purchased the furniture for 1 lakh rupees and I paid cash immediately. Suppose I purchased the furniture for 1 lakh rupees and I paid cash immediately. Then what I would have written? Then I would have written 0. Why? Because I purchased furniture. So that is my asset. So my asset increased. But I paid cash. Cash is also my asset. That asset reduced. Yes or no? That means one asset increased, another asset reduced. That means effectively what is the change in the asset? Total asset is same. So in that case I would have written 0. Manageable. But here they told payment you will make it next month. You have not yet paid. That means cash is still the same. Cash or bank balance is still the same. So only furniture as an asset is increasing. Hence I wrote it as plus. Got the scenario? Done no? Okay, awesome then. Next, collected cash for repair services. Collected cash. Somebody is saying capital remains unchanged. No, sir. Yes, capital remains unchanged. But they are not asking that. They are only asking whether asset. You only need to think asset increased or asset reduced or asset no change. That's all. Other things, liability, capital, you need not worry, Sham. Done? Yeah, just wanted to know. Yes, that is one. Okay. But you can also debate over it. On furniture, you will calculate depreciation, Noda. Yes. So depreciation is an expense. Due to expense, profit reduces. If profit reduces, capital also reduces. Yeah. Immediately when you buy it, capital is unchanged. But at the end of the year, capital will reduce because of this transaction. If you want to analyze that way, that is a holistic view. But immediately no change in capital. If you want, you can think of it like that. I don't know that much analysis you wanted me to tell, but I've just told. If it is full toss also, no problem. Not the requirement. Okay. Awesome. Collected cash for repair services. So you have collected cash. So what happens to your cash balance? What happens to your cash balance? Cash balance will increase. Cash is an asset. So asset is increasing. So you have to write plus. Done. Awesome. Goods sold on credit. Goods sold on credit. Can you tell me what is the journal entry for this? Goods sold on credit. First tell me the journal entry. Let's see. Somebody saying plus, somebody saying minus and all. Goods sold on credit. What is the journal entry? What is the journal entry for goods sold on credit, sir? We already did this scenario. Now you should tell me fadafat. Debtors account debit. Yes. Debtors account debit to sales account. Because these are the two components. Because it's a credit sales. Now I think I don't have to go into all this funda. I can directly write. I think everybody has come to that stage now. Yeah. So that directly we can write the entries. Okay, awesome. So debtors to sale is your entry. Let's say the value is 1 lakh rupees. That means, is debtor your asset, sir? Is debtor business ka asset? Yes. That means due to this transaction, one asset is increasing. Is my reference right? Due to this transaction, one asset is increasing. Done. But sales means it is goods only, no? Sales means it is goods only. Correct? Yes. That means goods is also an asset for you. That goods reduced. Goods reduced. Yes. Goods is also asset, but that reduced. But hang on. Let's say I purchased this goods for 80,000. Because whenever I sell, I'll make profit, no sir? Yes, whenever I sell, if I buy the goods at 80,000, generally I will sell it at a price higher than 80,000. Yes, these are assumed numbers I've taken, okay? Let's say I purchased the goods for 80,000. I sold this goods for 1 lakh rupees. That means by this particular transaction, I made a profit of 20,000. I made something extra. That extra is 20,000. Agreed? Agreed? Yes. Sir, we discussed already, or maybe we'll write it like this. That may be better for you. Debtor is an asset. Debtor is an asset. It increased by 1 lakh because of this particular transaction. This is one impact. Another impact is inventory. Do I have that goods with me now or goods went out? Goods went out. That means goods is an asset for me, no? That goods went out of my business means, that means my asset is reducing. Correct? Correct. So that means, can I say stock is reducing? Can I simply write it as stock is reducing? Yes. Somebody saying, sir, it is 0. No, hang on. Don't be in hurry. Stock is reducing. Can I tell like that? Yes. But we already studied. I already told you on my first day or second day. Sir, stock will always be valued at what price I told? Stock will always be valued at the purchase cost. Yes or no? Stock will always be valued at purchase cost. I told you one extra sentence also. As per accounting standard 2, inventory is valued at cost or net realizable value, whichever is lower. This is as per conservatism concept. This question also came previously. Do you remember that? Stock is always shown at the cost price. Yes. That means the stock got reduced only by 80,000 in my example. Because cost price of the goods is only 80. Now you tell me what is the net effect of this transaction. What is the net effect of this transaction? One asset increased by 1 lakh. Another asset reduced by 80,000. That means net effect, can I say there is an increase in the asset for 20,000? Correct? So that is your answer. There's a good scenario, in fact. There's a good adjustment this is. Okay? Fair enough, huh? So this is the net impact. Don't be in a hurry, buddy. Alright. I hope now you got it. Or anyone requires any further explanation to this, or deal is closed. Deal is done or done, or still we have to do some kulcha simsim. How 80? Sir, 80 I have assumed, Pratul. 1 lakh and 80,000. These are assumed numbers. Just to explain. Chalte hai kya? ठीक है. Okay. They're telling, sir, polama, paklama, artha problema. Sales could be done at loss also, sir. Yes, sales could be done at loss also. But generally, you would do sales at what, sir? Generally, when you sell the goods, you make profit. Yes or no? So this is a general. I'm not debating it. If you are selling the goods at a loss, there could be. But generally, you make it at profit. So whenever they give you this scenario, all right, so you will always take the answer as plus. Fine, because some profit will come in. That's the reason. Done? Like that. And this is a general answer. But I am not debating with you. Dhruv, yours is a good point. Okay, but I'm not debating. But here, we assume that normal transactions will be made at profit. Hence, this is the answer we're going to give it. Is that okay? Dhruv Goyal. So what if sales is more than 1 lakh? Doesn't really matter, sir. If sales is more than, if it is 2 lakh, then asset will increase by 1,20,000. Instead of 20,000, it will become 1,20,000. That's all. But either way, asset keeps increasing. They only asked what will happen to the asset. It will increase, decrease, or no change. So I've just assumed some numbers and I've explained you. That's it. You can take any number. It doesn't really matter. Sir, any other hidden idea scenarios? We will see. Yeah, we will see. We are anyway doing all the problems now. If it is hidden treasure, we will definitely coach ke nikalenge usse. ठीक है? Okay. Yeah, don't worry about that. Now idi wala. Yak tension tagotira. Withdrawal of cash by the owner for personal use. So cash is withdrawn, sir. Cash is withdrawn. That means what is happening to your cash balance? Cash balance is reducing. That means cash is an asset, so it is reducing. So this is minus. This is straightforward. Okay, December. Oh, no, you said decrease. Oh, okay. Okay, DEC. I thought December. All right. I forgot. Suddenly I got a doubt that what is it? Suddenly still December and all. Okay. Hired an employee as a sales manager of the North Wing. I have some North Wing, North Division. I hired some employee. What happened, sir? I hired him. Is this a monetary transaction? Huh? I've just hired him. I've not paid him anything. He has not given me anything. That means what, sir? Zero this is. No change. Asset will not change. This is just what? A non-monetary transaction. This is yes, no? We don't even record these things in accounts. Because only monetary we record. Awesome you are. Next, returned the goods worth 50,000. Returned the goods worth 50,000. Tell me this scenario. Okay, I'll just give you an explanation also. Here, F, look at it and tell me. Return the goods means goods went out, no, sir. Goods is an asset. Asset is reducing, going out. So, that means this minus. Fine, huh? Alright, stock reduces. Perfect. Okay. Awesome. Okay, now clear everyone? This is minus. Done, no? Goods is going out of the business. Hence minus. Sir, but cash will come in, no? No. That's not how it works. First, you will purchase the goods on credit, sir. You will purchase. Normally, if they just tell in the problem, your first PUC teachers must have told you this, no? First 11th standard ka. If they just mention purchase, we always take it as credit purchase. Yes, no? So, you have purchased goods on credit. Now, some of these goods you are returning. So cash will not come in. Creditor's balance will reduce. That's all it is. Like let's say I purchased the goods on credit for 1 lakh. I returned goods, let's say worth 10,000. Let's say there is a defective. Now you tell me how much will I pay the creditor? I purchased the goods from on credit basis from my creditor for 1 lakh rupees. Okay. Some goods were defective. So I returned goods worth 10,000. Now will I pay 1 lakh to my creditor, sir? Now I will only pay 90,000. That means due to this transaction, liability will reduce. Cash will not come in. Got it? Huh? Fine. Good so far? Because unless they tell cash, you don't assume cash. Cash transactions are never assumed in accounts. Okay? Fair enough. If they just tell purchases, take it always as credit purchase. Now, not that that assumption is wrong. This is the conventional one. A general assumption which we take it. Okay? If they just tell sales, we always take it as credit sales. Like that. Hope it's okay for you now. So goods is going out, so it is minus. Cash is not coming in. If the goods which we sold has been returned, then it will be plus or no, it will not be plus, you could say. Yeah, it could actually, like say, debtors will reduce, goods will come in. There will be no change effectively there, in a way, if you think about it. Okay, fair enough. One of our debtor agreed to pay the dues to Mr. C, who is a creditor of a company, with the same amount due to him. Okay, this you can probably keep it as a little bit of a highlight. How highlight or hidden adjustment somebody was telling. Now you can take links. Let us say the business name is X Limited. I have sold the goods to A Limited. I have sold the goods on credit to A Limited. Let's say for 1 lakh rupees. Done. Let's say I have also purchased the goods on credit from C Limited. Same value, 1 lakh rupees. Done. X Limited. This is the company we're talking about. Okay. This company has sold goods to somebody worth 1 lakh. That means we have to recover 1 lakh rupees from A Limited. That means can I say A Limited is an asset? Can I say A Limited is an asset? Because X Limited has to recover 1 lakh from A Limited. So it's an asset. Done. A Limited has also purchased some goods from C Limited. The value of the goods purchased is 1 lakh rupees. Assumption. That means can I say C Limited is a liability? Because the business, that is X Limited, has to pay the money to C Limited. Yes, X Limited has to pay this 1 lakh rupees to C Limited. So it's an outsider liability, hence we are treating it as liability. Done. Now what happened here is, we thought, alright, X Limited guys, why to collect 1 lakh rupees from A Limited and why to pay the same 1 lakh rupees to C Limited? Why do double transaction? Chuma headache, no? Alright. So X Limited, we told A Limited, hey dude, instead of paying me 1 lakh rupees, you directly pay C Limited 1 lakh rupees. Okay. X Limited told the A Limited, instead of paying me 1 lakh rupees, you directly pay 1 lakh rupees to C Limited because I have to pay him. Some jugaad we did like this, some adjustment we did. That is what they have given here. Did you understand this scenario first? Did you understand this scenario first? Everyone? Yes. Okay, that means once more. Sure. This is okay. No? Overall one purchase sales is okay for you, right? Overall purchase sale is okay for you, no? This explanation. Okay. Only the jugaad portion you have to tell me. That adjustment portion I have to tell you once more. Correct? Okay. Listen. Now X Limited has sold goods to A Limited. That means X Limited has to collect 1 lakh rupees from A Limited. X Limited has also purchased the goods, different transaction, from a different party, C Limited. But the value happens to be identical, which is 1 lakh rupees. That means X Limited has to collect 1 lakh rupees. X Limited has to pay 1 lakh rupees. We have to collect from A 1 lakh rupees. We have to pay C 1 lakh rupees. So we thought instead of doing this collection and paying, anyway amount is same. So we instructed A Limited directly. Okay. We told A Limited, instead of paying me, that is X Limited, you directly pay to my creditor, that is C Limited. Instead of paying me, that is X Limited, you directly pay my creditor, which is C Limited. That is the transaction. Is it clear now, Shreya? Fine now. That's the scenario. The impact can we go ahead now? Yes. Now, if A Limited pays C Limited Can X Limited again tell, hey, give me 1 lakh more? Yeah, will X Limited again tell A Limited, hey, give me 1 lakh more? Will they tell? You can tell, but will he give? You can tell, but will he give? He will say, oh, Gollo, yes, I've already paid, again I will pay. Porke, yes or no? Correct? He'll not pay. Yes, agreed? That means what will happen to this asset, sir? If this transaction happens, what will happen to your asset? Debtors balance. Debtors balance will reduce because we cannot collect this 1 lakh from A Limited anymore. He's already paid. So that means asset will reduce. Agreed? Okay. Liability. What will happen to this liability? Will we pay again C Limited 1 lakh rupees? Will X Limited again pay C Limited 1 lakh rupees? No. What will we tell? Hey, namduke settlement done. Yes, no? Correct? That means liability also will reduce because of this transaction. One asset will reduce, one liability will reduce. But they asked us, what is the impact on asset alone? What is the impact that is getting on the asset alone? Asset is getting reduced. That means the answer should be minus. Good scenario. If you want, you can just copy this scenario just to explain it or to understand it better. Maybe now you would have got it. Maybe after 2-3 days, you might forget it. So you can just copy this scenario. If at all, or if you have already done it, that is great. I can move on. All right, awesome. Next, entered into an agreement with Mehta and Co. Just entered into an agreement, okay, with Mehta and Co. to purchase all the raw material from their company. We have not purchased the goods. We just signed a contract saying I will buy it from you next year onwards. That means what is this, sir? Is there anything happening here, or is this a non-monetary transaction? Non-monetary. So the impact is 0. So they've given the answer over here and given the impact also. I mean, what the reason also. Done. Okay. Non-monetary. Yes, you can just give. You don't have to mug up all this, guys. You can write it in your own words. Fine. Whatever you feel comfortable. Still, if you want to write these only, your choice. Who's holding you back? Nobody. I will definitely not restrict. Okay. So which homework I do? Then which one? Maybe some fatafat mein MCQ questions we'll do. That is the only thing pending, no? True or false and MCQ. That's it. Okay. Ikkada chudandi. Andhra janalu. True or false questions. In accounting equation approach, equity plus long-term liabilities is equal to fixed asset, current asset minus current liabilities. Is it true? Is it false? Sir, I wrote this specific equation yesterday. Yes or no? It is absolutely true. I wrote it in my chart also when I explained. If you just check the video, you will be able to see this, correct? Liabilities are of two types. Long-term and short-term. Short-term only we call it as current liabilities. That current liabilities, they have pushed it to the other side. Hence, it becomes minus. So, I showed you this presentation, this very own presentation. Okay, so it is a true. Alright. Okay, next. In traditional approach, debtor becomes receiver. Sir, will we receive the money from debtor? Debtor will receive the money or he'll give the money? Debtor will give the money, right? So, it is a false. Yeah, he has to give the money. So, that means this is a false statement. Done. Rule of nominal account states all expenses and losses are recorded on the credit side. Credit side means you will credit is what they are saying. As per nominal account rule, will you credit expense and losses or will you debit expense and loss? You will debit expenses and loss. That means this is a false statement. Wrong. Okay. So guys, true or false questions are very important from chapter number 1 and chapter number 2. Okay. I'm not expecting big format questions to come from chapter number 1, chapter number 2, to be very honest with you. Okay. Fair enough. So till now, whatever we have done, right? Most of it, I am thinking they will ask true or false questions out of this question. So these are quite important. So don't ignore, hey, it is Chumanta. Alright. This is important. Journal proper is also known as subsidiary books. Yes, it is. I wrote this in my chart also. Journal is also known as subsidiary book. So this is a true statement. What is subsidiary book? We will see it in tomorrow's session. Capital account has debit balance. Capital account has debit balances, sir. We wrote that in today's session only. Assets generally have debit balance. Liabilities generally have credit balance. Capital generally has credit balance. Nominal accounts or expense losses will have debit balance. Income gains will have credit balance. So obviously capital has a credit balance. This is false. Okay. Purchase account is a nominal account. See, here they are showing true colors. Previously, institute used to always write personal is purchases is real account, real account, real account. Yes, check what have they written here. Purchase is nominal account, they've written true. That means what did I say? Purchase and sales can be treated as both real and nominal account. Done. So here they're telling that. Yeah, they've given the justification. So because there's a small interpretational here. What should we write in examination? Okay. Both the things they are mentioning, if they mention both are acceptable, you can write it like that only. Fine. Choice is yours. Fine. Ideally, again, this is little dicey area, what to write. Because one place they are saying real, one place they are saying nominal. Which to choose as? Okay, that will become a problem, yes or no? Correct? Make it as a true statement only. If it comes as a true statement, you should write it as true. Welcome to ICI world. Some bouncers will be thrown at you like this. And you can expect in CA examinations, alright? But don't worry, these sort of things they generally don't give, okay? Adjustments, they'll make it tricky, but ambiguous question, generally they will not give. If at all institute gives any ambiguous question, no, they will award you marks. Straight away will be given to you. Okay, if there is any mistake in questions, if there is any errors, any incorrect values, they will give you marks. That you don't have to worry. Fine? So you can stick to the same thing. You can write both maybe here. Because even I'm not clear there what they're valuing it at. Write both. Any of the two. And write both, Write any of the two. Any of the two should be fine. Done. All personal and real accounts are recorded in profit and loss account. True. All personal and real accounts are recorded in P&L account. No. P&L account considers only what, sir? Revenue expense. We read this chapter also, no? Revenue expenditure, capital expenditure. Revenue expenditures are shown in P&L. Capital expenditures are shown in balance sheet. So in P&L, you only consider nominal accounts. Okay, like expense income. Because comparing expense with income only you get profit, no sir. By comparing revenue expense with revenue incomes, only you get profit. Yes. So only nominal accounts comes in P&L account. Real and personal accounts gets shown in balance sheet. Fair enough. So this is a wrong statement. Okay. Asset side of balance sheet contains all assets and contains all personal account and nominal account. Then full ujbidi. Underline this like crazy. Underline this nominal account like crazy. Page hardo bidbek. Why? Sir, will balance sheet have nominal accounts? Huh? This statement is false because nominal accounts gets shown where? Nominal accounts gets shown in profit and loss account. By comparing income with expense only, you get profits. So nominal accounts will not come in balance sheet. In balance sheet, only real and personal accounts come. Okay. So asset side of balance sheet only consider personal and real accounts because nominal accounts gets transferred to profit and loss account. That is the reason. Done. Confusion. Move forward. Forward. Okay. Capital is a personal account. Absolutely yes. It is representing owner. Yes, it is a personal account. True. Satyavachana. Journal is also known as book of original entry. Absolutely. Because that is the thing where firstly you record everything. First entry you make it in journal only. So 100% true. Correct. Now the last set of question. Multiple choice question. One homework already I gave today. No? So maybe we'll finish off this today. Now we'll do it in the class only. Rent paid to the landlord is credited to which account? Rent paid to the landlord. First, can you tell me the journal entry for this rent paid to landlord? Now, we'll use a simple approach. Those of you said which one. So here what, sir? Rent you are paying. That means rent is an expense. Expense is increasing, no? Expense has debit balance. To increase the expense, what do? Again, debit it. So the journal entry will be rent account debit. Others who are getting the second approach, the modern approach. Rent is an expense. Expense is increasing. So if you have something which has debit balance, if you have to increase it, again debit. Done? Okay. Rent paid to the landlord. You have paid rent. That means you might have paid the rent through cash or you would have paid through check. If you paid through cash, yes, cash is an asset. If you paid cash, cash is an asset. Asset is reducing here or is it increasing here? If you give cash to somebody, cash balance will increase or it will reduce. It will reduce. That means cash is an asset. Assets generally have debit balance. But because of this transaction, cash is reducing. So something which has debit balance, how do you reduce it? By crediting it. So the journal entry is rent account debit to cash account. Got this approach, everyone? Science background guys especially. The modern approach. If you want, you can apply the this one also, the traditional approach also. So I'm showing you a few entries with modern approach also, just to say. Fine. So that means they're asking you which account will you credit? Which account is getting credited here? You will be crediting cash account. Hence, that is the answer. Which is better? Everything is okay, sir. There is no which is right or wrong here. There are two methods, that's all. Which one you will want, you can stick to it. It's your convenience. There is nothing like, this is better, that is better. Yeah, everything is same only. All roads lead to Rome, they say, like that. Every approach will give you the same answer. Okay. If you feel one approach is giving you some confusion, then apply using other approach. That you may be able to sort out the confusion if you know two things, like that. Okay. But if you feel, no, second one is confusing me, then forget it. Follow only the first one. Whichever you want. Absolutely your call. Majamadi, your call. In case of debt becoming bad, the amount should be credited to. Can you tell me the journal entry for this? Debt is becoming bad. That means I've sold goods to somebody. That's what we call it as debt. Now that somebody is not paying me. So that debt has become bad. So that means it's a loss for me. Correct? It's a loss for me. Loss has what balance, sir? Loss has debit balance. Because of this transaction, my loss balance is increasing. Loss has debit balance generally. Because of this transaction, loss is increasing. That means I will debit that loss. The name of that loss is bad debts. So the journal entry will be bad debts account debit. Fair enough? Okay. Whom am I suffering this bad debts from? Who is not paying this money from me? Debtors, correct? No. Let's say debtor had to pay me 1 lakh rupees. Debtor had to pay me 1 lakh rupees because I had sold the goods worth 1 lakh to him. He put me one topi. He told, sorry, can't pay you. No money. He told no money. That means you tell me, initially I thought I will recover 1 lakh money from my debtor. My debtor is my asset. Yes, because I'm recovering money from him. Due to this transaction, my asset is increasing or is it reducing? Will I recover this 1 lakh from him? No. That means my asset is reducing. Yes, no. Assets generally have what balance? Debit balance. Something which has debit balance, if you have to reduce it, what do you do? Credit it. So the journal entry will be bad debts account debit to trade receivables account, or you can write it to debtors account. Debtors is also known as a trade receivables. So this is the journal entry. Manageable. So they're asking what will you credit it to? Which account will you credit? You will credit trade receivable account or debtors account. That is the fundamental. Okay. Next. A Limited has 35,000 account receivable from Mohan. We have to receive 35,000 from Mohan. On Jan 20th, Mohan makes a partial payment of 21,000 to A Limited. We have to receive 35,000 from Mohan. That means, can I say Mohan is my asset? Can I say Mohan is my asset? Because I have to recover money from him worth 35,000. Yes. On Jan 20th, Mohan makes a partial payment of 21,000. Okay, he told take 21,000 for now. Balance I will pay you later. The journal entry made to record this transaction is what? If you receive money from your debtors, what is the journal entry you will pass, sir? Collections from debtors, they are telling basically. What is the journal entry? You are collecting the money. That means money will either come into he will either pay through cash or he will pay through bank. He will either give you cash or put the money into your bank account. Either way, both are your asset only, no? Whether you have cash in hand or you have cash at bank, both are your assets. That means because of this transaction, what happens, sir? That asset balance will be same or it will increase. That asset balance will increase. Okay, assets have debit balance. Again, if you have to increase it, again we will debit. So the journal entry will be cash or bank account debit. Generally, the payment will be made through bank. Hence, we will write bank account debit. Okay. How much payment he did? 21,000. Got it? Now, Mohan was my debtor, sir. Mohan was my asset. I had to receive 35,000 from him. After this transaction, still can I recover 35,000 from him? After this transaction, meaning after paying 21,000, can I still, after he paying 21,000, can I still recover 35,000 from him? What will he tell? Hey, I already paid 21,000 to you. Yes, correct. No? That means because of this transaction, what is happening to my Mohan as an asset? Mohan ka asset balance will reduce. Asset has debit balance. To reduce it, you will credit. So that means you will write it to Mohan account 21,000. This is your journal entry. This is your modern approach ka journal entry. Following it up? Or you can apply your golden rule. Both are bank is a personal account. Mohan is also personal account. You are receiving the money into your bank. So debit the receiver. Bank is receiving it. So you will debit. Mohan is the giver. So hence you will credit the giver. That way also you can apply. Whatever your call. Done? Okay, that means they're asking you the transaction. Transaction will be, you will credit cash received. No, cash received you will not credit. Cash received you will debit. So this can't be the right option. Debit to cash account, 14,000. Will you debit cash by 14,000? No, you will debit cash by 21,000. So that means this option is also wrong. What is the last remaining option? A credit to accounts receivable, meaning credit to debtors of 21,000. Yes, you will credit Mohan, meaning accounts receivable by 21,000. You can write either Mohan or you can write accounts receivable. Generally, we write Mohan account only because we will have multiple debtors. No? Yes, so we just don't write debtors. We will write the name of that debtor. So this is the right amount. B for Bengaluru is the right answer. Done. What is the entry for interest receivable from Mohan? Okay, if you have to receive some interest from Mohan, the journal entry will be Mohan account debit to interest receivable account. If that is the journal entry. Suppose Mohan is not paying on time. So I told Mohan, since you are delaying the payment, you need to pay me some extra interest. If that is the case, this is the journal entry. This is not asked in this scenario. You asked one doubt was there. So I've just written this journal entry. Okay. This is the journal entry for Mohan. For that scenario that you asked. Manageable. Okay. Which financial liability represents accounting equation? Financial liability statement means balance sheet P&L. There are a few more. Let's not go there for the time being. For your level, you can think of it as balance sheet P&L. Which statement is done with the help of this accounting equation? Which statement is done with the help of this accounting equation? Balance sheet, right? We did one balance sheet also, small balance sheet yesterday, right? In balance sheet, you show all the assets on one side, capital and liability on other side. That balance sheet should tally. Both the things should be equal. So balance sheet forms this equation. Done? Okay, so which account is pick the odd one out. Office furniture. Is it a fixed asset or a current asset, sir? We discussed this yesterday. Is office furniture a fixed asset or is it current asset? It's a fixed asset. Why? Because it is used for more than 1 year. It is used for more than 1 year. Hence, it is a fixed asset. We'll call it as FA. Freehold land and building. Freehold land and building means unencumbered land and building. Because I've not given this land and building to anybody. I've not pledged this. That's what we call it as freehold. Freehold means unpledged. Normally, when you take bank loan and all, right? They will ask you for some surety or something to pledge. This building ka documents, land ka documents, you will give it to bank and take a loan. Okay. Freehold property means it is not pledged with anybody. The title deed is with the business only. This land is not given a surety to anybody. That's why we call it as freehold. Okay. This is also fixed asset. Correct? No? Because we use it for more than one period. Inventory, sir. Inventory, is it a fixed asset or is it current asset? Inventory is a current asset because inventory and all will pile up. Yeah. Tomato dealer, he will store tomato for 1 year and he will tell, this is antique tomato, please buy. Yeah, will we do like that? Or he will try to sell it as early as possible. He would like to sell it as early as possible. Yes. So stocks are generally classified to be current assets. Done? Okay. Bad debts recovered, the journal entry. If bad debts written off or debts written off as bad, if recovered subsequently, are credited to. You thought it is bad debts initially. Later on, he gave you the money. So what is the journal entry for that? So the journal entry for that is he's giving you cash. So cash balance is increasing. Cash is an asset. If you have to increase it, again you will debit because it has debit balance, right? So cash account debit for bad debts recovered, the journal entry is cash account debit to bad debts recovered account. Because bad debt recovered is your income, no? Income has credit balance, generally. this transaction is giving you more income. Hence again credit it. Because income has credit balance. If income is increasing, then again credit it. So the journal entry will be cash account debit to bad debts recovered account. So they're asking, so what will you will debit to P&L? No. You will credit to trade receivables? Wrong. You will credit to bad debts recovered account. So that is alpha. A as in alpha is the right option. Is it okay? Fine. Bad debts is, it will not be debtors, sir. Bad debts you will treat it as a loss. Yes or no? Gulam Saab. Bad debts is a loss, correct? Then bad debts recovered is your income, no? If bad debts, if you're treating it as a loss, bad debts recovered should be income, right? Fine. Yes. And debtors, if you credit, no? Debtors you already cancelled in your books. If you write debtors here again, no? Debtors will come in with credit balance. Alright. So bad debts, debtors will not be credited. Bad debts recovered will be credited. In simple logic, bad debts is a loss. Bad debts recovered is an income. So write it like that if it's any confusion. Done. Okay. In double entry system of bookkeeping, every business transaction affects what, sir? Affects always two accounts or at least two accounts. At least two accounts. If you want to pass any journal entry, at least two accounts is required. You can use more than two accounts also. Yes. But at least two accounts are required. Sale of goods to Ram for cash should be debited to. What is the journal entry for cash sale? You sold goods to Ram and Ram paid cash immediately. That's what they're saying. So the journal entry will be, you received cash. That means cash balance will increase. Cash is an asset. Asset has debit balance. If the balance has to be increased, again you will debit. So the journal entry will be cash account debit. You sold the goods, no? So goods is going out, so you will credit sales. So the journal entry is cash account debit to sales account. So you will debit to which account? You will debit it to cash account. So that is your entry. Journal entry for bills dishonored. Sir, bill of exchange is a separate topic. Next it will come. There we'll take it up in detail. Bills dishonored, bills endorsed, everything we'll take it up. Later. Not now maybe. It will come. Another 3-4 days maybe it will come. Or maybe it will come for sure. Done. We'll take it there. So I think all the questions, let me have a quick look through. Yes, I think I've done all the questions now. Yeah, looks to be everything is covered. No? 7th, I gave it as homework. Done. I think, okay, with this journal topic, we have completed. Let's take a break for about 20 minutes. Come back and start with the next topic. Thank you. Hello guys, welcome back after the break. So we'll get started with the next topic, ledgers. After journal, the next step is ledger. Okay, so what is this ledger? Why is it required? Sir, journal entry, you pass it day wise. Right? No, date wise you arrange chronological order. Now I ask you, let's say for the month of July 2021. For this 1 month, let's say 1 month has passed. July month has passed. Let's assume I am asking you. You're my accountant of a business. Okay, I'm able to say Vishal. Let's say Vishal is the accountant of my business. I ask Vishal, right, how much cash I spent for July? How much cash I received in the month of July? Can Vishal look at the journal and get that amount in like 1 second or in 10 seconds? Can Vishal look at the journal entries and tell me that quickly? Forget about 10 seconds, 5 seconds. Can he answer me that question quickly? No, because journal will have all the entries. No, he has to take a calculator, see where and all he debited cash, where and all he credited cash. Like this, you have to do some plus minus, plus minus, plus minus. If there are 1,000 cash transactions, he has to add all the thousands or subtract them and then tell me the answer. Yes or no? It's a huge process. Correct? This will not work out. Correct? It will not serve the purpose. Yes? Hence they thought we need to have one more, or the next step in accounting is we should do something known as ledgers. Ledger is simply, sir. Okay, now we want cash information, you're saying, no? Alright. We prepare. Anyway, accounting is done with the help of account. Cash account, capital account, building account, furniture account, debtors account. These are the things we use to pass journal entries. Correct? Ledger is nothing but, okay, the summary of that account, meaning what and all your transactions you did through cash, you will put it under a particular column or under a particular bucket. Whatever transaction you did through cash, you will put it in one bucket. That bucket is what we refer to as ledger. So meaning, if you want to know how much cash you spent, how much cash is remaining with you, you can simply come to the ledger account. Ledger will provide you the data. Okay. So this is a simplified version. That's all. Fair enough. Entry is already done. Now we are just fine tuning that so that it will help out for our further process. That is your ledger funda. Is it okay? It's just grouping of accounts. Fair enough. That's what we mean by classifying. First step was recording, which is journal. Second step is classifying, which is ledger. Whatever accounts is targeting or is done through one account, no, you put all that data under one header or one bucket. That bucket we call it as fancy name ledger. Did everybody understand the meaning of the term ledger? Fair enough. Journal, ledger is done with the help of ledger only. Without doing journal, we don't do ledgers. First step is the journal. Once the journal entry is ready, okay, we just take what and all is the transaction we have done through one account. All the data will collate it into a particular column or particular bucket. That bucket is known as ledger. From journal only we'll do ledger. The process of transferring the entries from the journal into ledger, we call it as posting. The procedure or the process of transferring the entry from the journal and putting it into ledger, that process we call it as posting. Passing journal entry we call it as journalizing. Doing ledgers we call it as posting. And somebody will say post the entries. Post the entries means they are telling you to put the things in the respective ledger accounts. That's what it means. This is accounting terminology used for this. That's all. Okay. Journal is also known as principal books of accounts. Journal was known as primary book of account. Ledger is known as principal book of account. Done. So it's basically a book which contains all the sets of account. For every account, you need to open like this. If you have 10 accounts, for 10 accounts, you need to just put up this fancy format and get its balance. That's all it is. Okay, I'll tell you, those of you who are doing it for the first time, I'll tell you how the ledger looks like and all that stuff. Fine now. Excuse me. Then this is the ledger ka format. Journal had some format, no? Like this. Ledger also has a format. That is date particulars, journal folio amount. Same columns will be replicated on the other side also. Date particulars, journal folio amount. Journal had debit credit, no? Even ledger will have a debit. It will have a credit. These four columns are debit side of the ledger account. These four columns are credit side of ledger account. Fair enough. So this is the format of a ledger. And I told you when I had done journal. In journal, you give ledger reference. In ledger, you give journal reference. Because earlier accounting was done through manually. Okay. So through books, right? So it was very difficult to find them if you had not referenced them. So in journal, they used to give ledger page number reference. In ledger, they used to give journal page number reference so that easily you will be able to trace out. But this columns, that ledger folio, journal folio and all, no, has become redundant these days because everything is computerized. Okay. Yes. Do we do this practically? Yes, we do it practically, but not like the way we do it here. We do everything in system. We don't have to do this. You pass the journal entry system, it automatically throw up the ledger for you. We don't have to do anything specifically for ledger these days. Everything is done by the system, computer itself. The software does it for us. Okay. Journal entry we need to pass. If you pass journal entry these days, no, ledger, trial balance, balance sheet, P&L, cash flow statement, everything system only will throw it off you. Now, you just have to check. So these days accounting is like these sort of things what we are learning. No, it has become very simplified. Now, so that means why chartered accountant is required? Chartered accountant is required because of analysis. Okay, there are complications, lot of complications is there. These are all simple petty things. For this and all, you don't even require. Okay, BCom graduate can easily take care of all this. Fine. Okay, but like you require chartered accountants because you're pursuing this degree because there are other lot of complications in accounts. How a particular item should be recorded. Not for journal entry, ledger and all that. That preparation, anybody, in fact, system only will do. No person is required here. Okay. But for the analysis you require, you will learn at what that analysis I'm talking about as you get further. Okay. Fair enough. So leave that. It's okay. Done. So practicality, we'll keep it for another day. But whatever I'm saying, is it going in? That's okay, no? Yes. So, okay. Then I'll just have a couple of more pointers. Then we will apply this, what we are just learning, in one particular problem. One big problem we'll take and we'll do all the ledger accounts to sort out like how it looks like. No bouncers. Okay. Okay. At the end of each month or year, all ledger accounts are balanced. See, we told you what, when you're passing journal entry, debit should be equal to credit. Yes, no? If you are debiting a particular account for 100 rupees, then you should credit another account for 100 rupees only. Yes, debit should be equal to credit. In ledger also, no, debit column should be equal to credit column total. Total of amount of the debit column should be equal to total amount of the credit column. Okay, fair enough. If it is not, okay, we need to do some balancing of this ledger. Suppose this side is 100, that side is only 80. If there is shortage, we need to do some balancing. Okay. So if, like, that's what I've explained you here. If credit side total is more than that account, then that account has credit balance, and words to balance carried down is written on the debit side. I'll just read through this. We'll have to do it in our problems only. Just once I'm reading it. That's it for your reference. I'll read it once again. If credit side total is more, then we say that account has a credit balance. And the words to balance carried down is written on the debit side to make the total on both the sides equal. Ledger also, total debit should be equal to total credit. If credit side total is more, suppose I make this as 150. This side is only 100, no? Yes. If this side total, credit side is more than the debit side total, then we say this particular account, whatever ledger that you're doing for that account, that we say has a credit balance. To balance it, there is a shortage here, no, 50. We write it here as a to balance carried down, like this. You'll write it and close this ledger. This is what I will be doing it in the next problem, the very next problem. Fine. Nominal accounts are not balanced, meaning to balance carried down and all this. No, you will not do for nominal accounts because they are transferred to P&L account. Okay, it's transferred to P&L account. So what about inverse? Don't worry here, inverse also will be taken. If it is inverse, meaning if debit side total is more than the credit, then we say that ledger has a debit balance. Then we will write 50 on the opposite side. Just doing the problem, don't worry. All that will come. Debit also will come, credit also will come. Whatever you are saying, everything will be covered in the next problem. Fine. Okay, nominal accounts are not balanced because they are transferred off to P&L account. Because we don't have to balance these nominal accounts because we don't show that in balance sheet. We have to transfer to nominal accounts to P&L because we want to know profit or loss. Hence, balancing of nominal accounts is not required. And only a little bit has gone in. Okay, especially for the new guys. Let's do one thing. Let's take up one problem to get our understanding a little better. We'll take up illustration number 2 first. Illustration number 1 is small, it's okay. 2 will take up. Prepare ledger accounts on the basis of following transaction in the books of a particular trader. Some guy is there. In that Gaika books, you need to prepare the ledger accounts. Whatever ledger is necessary, they're asking you to prepare that. Debit balance, check here, debit balance as on 1st January 2022 they have given. Okay. So that means here the year is starting on 1st January 2020. Generally, the year will start on 1st April. It will end on 31st March. Sometimes they will give you debit balance as on 1st January. Maybe, okay, this particular company is following calendar year. Actually, in India right now, you should follow April to March only. But don't question the question. Don't write, hey, this is wrong. Right? If they say they are following calendar year, just go with the flow. Nana, fair enough? So here is beginning on January means it will end on 31st December 2020. Like this. 12 months. 12 months we call it as one accounting year. Generally that is 1st April to 31st March of next year. But in this case, it is calendar year that they are following. So year is beginning on 1st January. It is ending on 31st December. You could take it. Okay. Or you could assume that this is only for January month also. Either ways it is okay. Fine. Proceed. Yes, debit balance. So they have given various accounts ka debit balance. Cash in hand. We already discussed, no sir. Normally assets will have what balance? Before coming to this topic, journal only may we discussed. Normally assets have debit balances. So that is what they have given. Cash is an asset. It is having a debit balance of 8,000. That means what? 8,000 is cash is available with this trader. That much cash he has it with him on 1st January. 8,000 cash he has. He has on 1st January he has a cash at bank. In bank account he has a cash of 25,000. Again, this is also an asset, so debit balance. Inventory, stock, that's also an asset. Stock he has worth 20,000. Building he has worth 10,000. All are assets, so they are having a debit balance. Trade receivable, Vijay. He has sold goods to two persons, Vijay and Madhu. From Vijay he has to recover 2,000. From Madhu again he has to recover 2,000. So you are a debtor basically. Two debtors we have, Madhu and Vijay. Both are having debit balances. These are all your assets they give, assets information they give. Next, they have given credit balance. There are some accounts which have a credit balance on the same date, 1st January. Okay. Trade payable, meaning your creditors. Creditors is your liability. Liability will have what balance? Liabilities will have credit balance. That's the reason they have given you credit balance here on top. So one liability is towards Anand. The business has to pay Anand 5,000 rupees. Anandanige kodabeku 5,000. Capital is 55,000. So business, the owner has invested about 55,000 into this business. So this is Anand is an outsider. Capital account is the owner's liability. So these are the things they've given. Following further transactions were made on 1st January. Hang on 1 second or else. Alright, let's maybe first capture this information first. Then I will go further because these problems will be a little lengthy. If I put everything in one go, maybe some of you who are doing it for the first time may not understand. I'll solve this question. It's not necessary for you to solve. I've given every ledger account here. You can just check and put a tick mark. That is okay. Or choice is yours. Copying means you can copy. Done? I'll solve it but. So illustration number 2. Question number 2 ka we're putting it up. First they gave which account, sir? Cash account. So I'll prepare cash account ka ledger. So first I'll give the heading as ledger accounts in the books of the trader. Ledger accounts in the books of a trader. They were not given the name of the trader. If they had given the name, I would have written the name. Ledger accounts in the books of the trader. Okay, first ledger. What is the first account? Ledger is nothing but account ka. Account ka information we are putting in a fancy format. That's it. Whatever accounts they have given, each account will have a ledger. First account they gave is what? Cash in hand. So let's make a cash in hand ka ledger. Or we can simply call it as cash account also. Cash in hand is nothing but cash account. That account, no, we make it in T format. T. T for Tom. T format. So that will be the format will be. For one, I will write the full format. For others, you can just go with the thing. Format is date, particulars, journal folio, amount. You have to write the same format in examination. Okay. Here in class purpose, if you are writing, if you don't want to write the full format, it is okay. But in your examination, you have to write the same format. Date, particulars, journal folio. Journal folio is a show off. Dikhawa it is. That's it. Nothing will come here. So we'll have a short column for that. Okay. This is on the debit side. We call this as DR. DR means debit. Similarly, ledger will also have same four columns on the credit side also. Same here. We will write date, particulars, journal folio, amount. Then we will write here credit. This is the credit side of a ledger. This is your debit side. This is your credit side. Journal had a particular format. No, this is ledger ka format. That's all. Done. Just a format you need to remember. That's it. Nothing it is. Okay. Like this, I need to make various other ledgers also. Okay. This is first is the cash account. Next is which account? Cash at bank account they have given. That means we need to make bank ka ledger. In the same format, we need to make bank ka ledger also. Done. So I've shown you the format for one, or maybe one more. We will follow the same thing. Date, particulars, journal folio, amount. This is your debit side. Same, replicate the same columns on the other side also. It will be date, particulars, journal folio, amount. Done. Do we need to put the lines on the corners of a format? What corners now? Lines and all your choice now. Whatever drawing your lines and all. That is your choice. Okay. That's okay. Yeah. Alright, next is inventory. So inventory account we will make. So inventory I've just draw it like this. I've shown you the format here. No? So I'll just put up a T format here. That is good enough. Alright. So I will not write the words again here. You've got the idea as to how it should be presented, right? Same thing, it should be presented for inventory. Next should be for building. So that means we will have another ledger for, we need to write building account. For each thing, write account, okay? So building, same format. Date, particulars, journal folio, amount. Like this. This is the T format that we are talking about. Done? Okay. So these are the 4 ledgers I drew for this one. So what else I have, sir? What else I have? Building over. Next I have trade receivables, meaning debtors. I have 2 types of debtors, Vijay and Madhu. So I will make up Vijay account, and then I will write Madhu account. Vijay account, Madhu account. I'm not writing date, particulars and all that stuff. Straight away I'm making the format. I showed you for 2, right? Yes, and I've given you the solution also. Yeah. So these are your ledgers they've given first. Next, they have given on Anand account and capital account. So let's make Anand account. And then capital account. So how to do an examination? Leave around 5-6 lines for each ledger and go on doing the other one. These sort of questions, highly doubtful they will come in examination. They may ask 1 or 2 ledgers at the maximum. Okay. These are basics, guys. Ledger account can be asked for other topics also. In other topics, we'll see big topics. Same ledgers will come there. That they will ask. These sort of simple ledger accounts and all, highly doubtful that they'll ask in examination. Okay. But if it comes, you should have a big smile in your face. Such easy they asked often. Okay. So this we have. How do we know how many lines we should leave? That is a guess. That is just a guess. So normally leave about 6 to 8 lines and keep on doing the next ledger format. Or one way to do is finish one ledger and then only start the next ledger. That is time consuming process. The easy process is first drop all the ledger ka format. Okay. Then keep putting it. Fair enough. Some 6 to 8 lines if you leave, it's just a guess, that's all it is. Because it depends on transaction. If they give you only 2 transactions, 2 lines are sufficient. If they give you 10 transactions, then 10 lines or 12 lines is required. Like that, it depends. So in book solution, they are giving ledger folio. I've written, no, that is a mistake, sir. It's a printing mistake. In solution, they typed ledger folio. Oh, no. This is not ledger folio. Make it as journal folio. This is not mistake from my end. Okay. This is a typo. This is a typo from study material. Just correct that. It's a journal folio. In ledger, you will have journal reference. In journal, you have a ledger reference. Correct that. Wherever they have given ledger folio, strike it off and write journal folio. It is not LF. It should be JF. Okay, no problem. Thank you. Thank you for pointing that out. Okay, awesome. So let's see how it works. First, these 2 things we will capture first. Okay, pay attention. The guys who are doing it for the first time. Others, I know that you know this. Yeah, I'm fine. But you still have to bear with me. There are a few guys who still are doing it for the first time. So we have to be supportive of them also. So that after next week, when we get to the big topics, everybody is on the same page and it'll help us out that way. Okay, next. First, they have given us cash in hand, sir. On 1st January, they have given a cash balance of 8,000. Normally, first day ka balance. First day ka balance, we call it as opening balance. First day ka balance, we call it as opening balance. Okay, it could be opening day of the year or opening month. Normally, what happens earlier, they used to close the ledger each month. Normally, fine enough. So suppose January is 1st Jan to 31st Jan, no? Correct? What happens is January month how accounts is done is month on month also they do up the ledgers. Okay. So 1st January to 31st January is January month ka transaction, right? Fine. Again, when they draw the ledgers on 1st January month ka balance, they will push it to 1st February. So 31st January ka balance, we call it as closing balance. This closing balance of 31st Jan becomes opening balance of the next month. Like this, it works. It's just a carry forward thing. Like you write, no? Yes, it's just carrying over the numbers. So 1st January ka balance becomes opening balance, that like that. Okay, and you close it on 28th February. So 28th February ka balance is closing. Okay, month is closed. Next, when you start next month, 1st March, this closing balance will become opening balance. Like this, it keeps on going. Fair enough. I'll show you how it works. Fair enough. This they've only given here. Check. 1st January ka balance they've given 8,000. No? 1st January ka balance is 8,000. Now cash is an asset. Assets have debit balance, correct? So opening balance on the assets, what you'll write is come to the debit side and you will write to balance brought down. We write B bar D. B bar D means brought down, meaning you are bringing that balance from the last year to the current year. Last year, no, we had some cash in the business for 8,000. Last year closed on 31st December only. Now we are opening the accounts again on 1st January. Okay. Last year, now you tell me, Pratul, you are asking, no? 31st January 2019. 31st January 2019. See, this date is 1st January 2020. This is the first day of the year. I'm just going one day back. One day back is what, sir? 31st December 2019. Agreed, huh? Yes. Okay with this so far? Give me a yes. Okay. Suppose the business had 8,000 rupees cash on 31st December 2019. Will they say, accounts ended for this year. 8,000 rupees we will donate it off or we'll tear off the Gandhi notes. They will throw off the Gandhi notes, sir. Yeah, just because accounting year ended, they will throw off this notes, sir. How much ever cash they have, they will pani mein baha denge kya? Yeah, do we do like that? Do we do that, Pratul? You are asking these questions, I'm specifically asking. No, what do we do? Accounting year may end. Does it mean all the balance we will throw it off like that? No. This 8,000 will be utilized in the next year, correct? This 8,000 the business will utilize for next year transaction. Yes or no? That we call it as opening balance. From the last year, we are carrying it to the current year. That is the meaning of this term. Understood? Now is it fine? Is it okay? Assets have debit balance. Hence, you will write on the debit side to balance brought down. Under the date column, you will write 1st January 2020. Fair enough. So this you will write it as 8,000. Journal folio column, you can leave it as blank. This is 8,000 rupees. Yeah, they will get affected into 2020. Correct. You will use this 8,000 for 2020 transaction. Correct. It will get affected in the year 2020. Correct. And I'm doing 2020 accounts only, no? Hence, I have to show this 8,000 also. Like this. I'm carrying this over the next year. Is it fine? Okay. Cash at bank. Cash at bank is 25,000. Now, previous year, I had a 25,000 rupees in bank. The year ended. Does it mean 25,000 bank I will throw it off? No. I will utilize that in the next year. Last year, I closed the accounts, no? This year again I have to bring it down. So again this is an asset. So you come to bank account and you'll write on the same date 1st January 2020. You'll write to balance B bar D. Balance B bar D stands for brought down. It is this money has been brought from the last year. Journal folio column nothing. Balance brought down column is a 25,000. Yeah, you can write brought forward also. B bar F is also okay. B bar D or B bar F. It's fine. Acceptable. This is previous years, correct. This 8,000, 25,000 is previous years only, correct. But previous year ka account ended, no. Just because accounts ended, does it mean you will give off this to somebody? No, right? Previous year ka, see, accounting we do it only for 12 months. So we close the books. But that does not mean all the assets we will sell, pay everyone. No. Every year, 12 months ka we close the accounts. Again, next year we open like this. Okay, it's like shutter. You open the business, no trader, what do you do, sir? At morning 6 o'clock, he'll open the shutter. Evening 9 o'clock, he'll close the shutter. Again next morning, he'll open the shutter, no? Accounts is like that only. You draw it for 1 year. At the end of the year, close everything. Next year, start new accounts. Like your standard, that's all. Yeah, after CA Foundation, you'll go to CA Inter, no? CA Foundation ka account is done. Next, you'll go for CA Inter. Like that, that's all it is. Yes, balance sheet will be affected for previous year. Yes, balance sheet will be affected. Correct. Last year you drop a balance sheet. Hang on to the balance sheet. Don't worry about the balances and all for the time being. Learn only about this one, ledger. You're doing it for the first time, no? Don't get your thinking too ahead. The numbers, is it making sense? You give me a confirmation, that is sufficient. Balance sheet, anyway, we'll take it later. Fair enough, our numbers are fine, no? Awesome. Inventory. Inventory is also an asset. Last year you had some goods which you had not sold. Last year those goods were worth 20,000. What will I do this year? This year I will try to sell them. Yes, no? So that is my asset. That asset I am bringing it from the last year. So you will come to this inventory account. Same, the date column you will write 1st January 2020. You will write to balance brought down. But the inventory value here is how much? Inventory value is 20,000. So you will write it as to balance brought down 20,000. Okay. This is your debit side. This is your credit side. Okay. Next, we have building. Building has a balance of 10,000. All assets have debit balance, right? So come to building account, debit side. On 1st January 2020, you'll write a to balance brought down. The building value is 10,000. So you will write 10,000 here in the building. That's all. Same funda for every account. Then we have trade receivable. Vijay is one debtor, Madhu is another debtor. So we'll collect the money. Last year we still have to collect 2,000 from him, 2,000 from him. We'll try to collect it in the current year. Okay. So we'll come to Vijay's account. On 1st January debit side, 1st January 2020, we will write a to balance brought down 2,000. In Madhu's account, again on 1st January 2020, to balance brought down 2,000. So this is my few information I've placed it here. Anything else they gave? Yes, they also gave credit balance. So these are all the asset balance we brought forward from the last year. Like this business will have some liabilities also. No? Maybe last year they did not settle. Just because you didn't settle last year, can we tell, no, accounting year over, I will not pay you the money? No. You have to settle them, yes? So we will settle it in the current year. Hence, those balances, we are bringing it from the last year, we are bringing it to the current year. So in Anand account, you will write the balance as 5,000 and this is 55,000. Now you tell me, in Anand, which side should I write that value? Should I write to balance brought down? Anand is a creditor. Creditor is a liability. Liability will have what balances? Liability will have what balances? Credit balance. Yes, no. That means I will come to the credit side on 1st January 2020 and I will write by balance brought down. By balance. This side we call it as a to and that side we call it as by. That is just a journal interpretation. That's all it is. To and by. Okay. By balance brought down. Anand ka value is 5,000. Okay. Liability ka opening. Liability will have credit balances. So I have written by balance brought down. Okay. Similarly in capital account. Capital also is a liability only. Owner's liability basically. Yes. Business has to pay to the owner. We have this liability towards the owner. Hence on 1st January 2020, we will write by balance brought down. The amount is 55,000. This is the value. So all the debit balances and the credit balances from the last month or last year, we have brought up. They have not given whether it is last month or last year. I'm assuming it is last year and doing it. Really doesn't matter. Amount will be the same. Till here, all okay for everyone? So it's just bringing the opening balance and closing balance into the ledgers. That's all. Manageable? Okay, awesome. Great. Now we'll go for the transactions. Following transaction happened for January month. January month they have given some transaction. First, January 1st May, the very first day of Jan, we purchased the goods worth 5,000 rupees. Payable at a later date for cash less 20%. Trade discount and 5% cash discount. I think we solved this in yesterday's session only, correct? We purchased the goods. The value of the goods is 5,000. Since maybe we bargained with him and we got a trade discount of 20%. You tell me, for trade discount, do we pass journal entry? We discussed this yesterday completely. For trade discount, do we pass journal entry? No. Trade discount is directly reduced from purchases or sales. Here we are purchasing it. So trade discount will be reduced from purchases. So what is the journal entry for this now? What is the journal entry for this? The journal entry is purchases account debit. Correct? No? Because purchase is real account and goods. Goods is coming in. So you will debit purchases. Done? Okay. And you paid cash. So cash is going out. So cash is an asset. Asset is going out means asset ka balance is reducing. Asset has debit balance. To reduce it, we have to credit. So to cash. Awesome. All right. During this proceeds, in this particular transaction, we also got some discount. Yes, we got some discount. We purchased the goods at a lesser price. That means it is discount allowed or discount received. We got some discount. So this is discount received. Yes, no. Discount received is an income, nominal account. All incomes have credit balance. So due to this transaction, my income is increasing. Income has credit balance. Again, hence I'm crediting it again. Fair enough. Instead of cash, you can use it as bank also. Maybe you will use bank only. Or they've told clearly cash, here. Yeah, I think they've told cash here clearly, man. So we'll use cash only. Fine. Fair enough, huh? Purchase goods for cash, they've told, no? They only told here cash. That means we'll use cash account there. Manageable? Okay. So that means what will be the purchase value? The value of the purchase was 5,000. But will we pay 5,000? No, we got some trade discount. How much trade discount we got? 20%. So from 5,000, reduce it 20%. 20% of 5,000 is 1,000. That means we will pay only, or the purchase values, the invoice will only say 4,000 rupees. When you purchase these goods, you will get an invoice. You will get a bill, right? That bill, the value printed on the bill will only be 4,000 rupees. Trade discount will be directly deducted there. Okay. But am I paying 4,000 rupees to the person? To this person, am I paying 4,000? No, we told take 5% cash discount also. That means how much is the discount amount? How much is the discount amount? How much is the discount amount, sir? 5,000 ka or rather 4,000. It's actually not given. What is it calculated on? We'll just take it as, maybe check here what value they've taken. Maybe we'll use the same thing. Hmm. 4,000 ka 5% you calculate. How much is this? Sometimes it is applied on the list price also, this discount. That's the reason I just wanted to confirm. Okay. It should be calculated on 4,000 ka 5%, which will be 200 rupees. Okay. Fair enough. Is it okay, everybody? Instead of paying 4,000, I'm getting 5% discount. So apply 4,000 ka 5%, which is 200 rupees. That means how much did I pay my vendor? 3,800 rupees cash I paid. This is my journal. Anyone having confusion in the journal? Visualizing this journal, I have to post it into my ledger. That's the reason I did the journal. You don't have to write the journal entries in your books, okay? But you have to visualize the journal and then only post it into the ledger. Okay. Now check, sir. This is affecting which account? This particular transaction is affecting purchase account, cash account, discount account. Do I have purchase account already opened up? No, I don't have any purchases. That means let's open purchase account ka ledger first. Purchase account ka ledger, let's open. Okay. All right. Next, we got some discount also. Now cash account is already available, so that is fine. But discount received, I don't have. So let's open discount received account also. Discount received ledger also will open. If you have an account, okay, that if for every account you need to draw up a ledger, okay. If you have 20 accounts, then 20 ledgers. If you have 50 accounts, you have to draw 50 ledgers like this. Discount allowed or discount received? This is discount received, no? Because we purchased and we received a discount, no? We are paying less, so we are getting discount. So this is not discount allowed. Discount received it is, no? Also you are saying discount allowed. Oh, maybe that is also there, is it? Fine. When I come to the transaction, I'll figure it out. For now, I require only these three. Now, how the posting should be done? First, come to purchase account. So entry will be, you will come to purchase account debit side, and you will write on the debit side to cash to discount received account. To cash to discount received account. To cash how much? 3,800. To discount received how much? 200. This is how you do the posting in ledger. How it should be visualized is, if you read this, how the journal entry will look like is, or by reading these three, how you should construct journal entries. Purchase account debit to cash account to discount received account. That's how you draw up the ledger there. So it should read like purchase account debit to these things. That's how we read that. Manageable? Fair enough? So this purchase account debit to cash to this. So if purchase account is getting debited, then the other components we put it on the debit side like this. Manageable? Guys who are doing it for the first time, is it fine? Purchase account debited to cash account to discount received account like this. Yes. Now in cash account, what do? Is because this is affecting three ledgers. No, you did whatever needs to be done in purchases, you have done. But is this affecting only purchase ka ledger? No, it is affecting cash ka ledger also. No, then come to cash account ledger. Okay, in cash ledger, what is the journal entry? Purchase account debit to cash to discount received. No, so in cash ledger you will write on the credit side the date column mein, which date is that? 1st January. Yeah, on the date column you will write 1st Jan 2020. You will write by purchases account. By purchases account, how much? By purchases account, how much did you pay cash towards his purchases? 3,800. So you write 3,800 like this. So how to read this entry is purchases account. If you write by, that means this account is getting debited. If you write to, then it signifies this account is getting credited. This is the convention of passing the ledger. That's all it is. If you write to, then it means that this, if you write to cash here you wrote to cash. No, if you write to cash here, that means cash account is getting credited. Alright, if you write here by purchases, that means purchase account is getting debited, cash account is getting credited. That's how it means. To means credit, by means debit. Basically, to means which account is getting credited. No, we call that as to. Which account is getting debited, we call it as by. That's all it is. To and bys, that's it. Okay, that's a way to read it. That's it. Manageable, comfortable. But purchase is 4,000. No, sir, hang on. Purchase may be 4,000, but did you pay cash of 4,000? Purchase may be 4,000, but did you pay cash of 4,000 or only 3,800? Only 3,800, yes. So I am only putting 3,800 in cash ka ledger. What is that 200 rupees? What is the 200 rupees remaining? That is discount, right? So in my discount ledger, I'll come to discount ledger on 1st January 2020. Look at the entry. What is the journal entry? Discount is getting credited. Actually, this is actually a compound entry, guys. If you want it as a too simple entry, actually there are two entries here. So it is purchases account debit 3,800 to cash account 3,800. Plus there is one more entry, purchases account debit 200 to discount received account to discount received 200. These two ledgers or these two journals have combined and have done a compound entry here. Fine. This is a compound journal entry, or sometimes it is also referred to as composite journal entry. Yeah. So it's a combination of these two entries. In maths, you do know if something is common, you bring it out and multiply, right? In accounts also same thing. Anyway, purchase is common here, no? Here you are debiting by 3,800. Here you are debiting by 200. So instead of doing that, you write directly purchase account debit 4,000 like that. Did you get that? Fine, fair enough. Now I posted this entry. Now I have to post this particular entry into the ledger. In my purchases, everything I have posted. In my discount received ledger, I need to post this. Manageable. So in my discount received ledger, I will write by purchases account. Why by purchases? Because the journal entry is purchases account debit to discount received account. Okay. So this is your debit, this is your credit. If you write by, it signifies which account is getting debited. Here purchase account is getting debited. So we write here by purchases. Amount is 200 rupees. I'll just give you a minute. Just observe that, the guys who are doing it for the first time. If you have any questions, you can ask. Because every entry going forward is just this only. One, if you get it, rest everything becomes repetitive. That's it. Don't worry, with practice you will get all this stuff. Don't have to freak out. Yeah, first time, yes, everything will be new and stuff, but slowly everything will you'll get used to it. This will not change. In every problem we'll be doing the same thing. So yes, that will get, you will get used to it. Yes, guys, still need some time more, or if you have no doubts, if you have understood, I can move forward. A month ending also we need to write brought down. Yes, generally we close the ledgers month wise. Yes, you need to write every month end you need to write by balance carried down, to balance brought down, like that. Yes, Jagat, you're right. Aage badho. Done. Okay. Then we will go for the next transaction. So this I have posted in all the three ledgers, correct? I posted in my purchase ledger, in my discount received ledger, in my cash ledger. So all the things are done here. So let's go for the next transaction. Next transaction, same thing you'll have to do. Let's see if your understanding gets a little better here. Received 1980 from Vijay and allowed him 20 rupees as discount. Received 1980 from Vijay. They have not told cash or bank. I'll just stick to what they have taken. Same thing I will take, so that comparison it will be easy for you. They've assumed it as cash, so I'm going to take it as cash only. Fine. You can take it as bank also. Absolutely no problem. Fine. Just to make sure that whatever I am writing here matches with the solution, I am using the same assumption as our study material. You can take cash or bank, really doesn't matter. Okay, coming back to this transaction. You have received 1980 from Vijay sir. You have received cash, means cash ka balance will increase. Cash is an asset. Assets have debit balance. If you have to increase something which has debit balance, again you have to debit. So the journal entry will be cash account debit. Cash account debit. How much will you debit it by? 1980. Whom did you receive this from? Vijay. Yes. Or 1 minute, hang on. We received 1980 from Vijay and allowed him a discount of 20 rupees. So that means we gave him a discount now. We gave him a discount. That means discount is a loss for us or it's an income for us. He had to pay actually 2000 rupees. Check. How much had to Vijay had to pay here? It's given here only. Check. Vijay had to pay us 2000. Instead of paying 2000, he's just paying 1980. That means he's paying 20 rupees less. That means it's a loss for us. Yes. And what does nominal account rule say? Loss to be debited. Yes. Or loss has debit balance. By this transaction, you are getting extra loss. So that means to account that loss, we will write discount allowed account. Discount allowed account debit 20 rupees. Fine. Alright. Whom did we receive all this from? We received it from Vijay. That means to Vijay account 2000 rupees. You will credit Vijay's account by 2000 rupees. This is a journal entry. Journal is not required. Just to help you understand the posting, I am just writing the journal entry. This only you will have to post it into the ledger, meaning you have to put it into ledger. Putting this journal into the ledger only, we call it as posting. You can assume bank, sir. You can assume bank. In study material, they assumed it as cash, so I'm just taking it as cash, that's all. You can put it as bank, absolutely no problem. No worries there at all. Cash or bank, you can take whatever. It's okay. But ideally, it should be bank actually. Better one is a bank, but okay. It's fine. Can I do the posting of this now? No, it is affecting cash transaction. That means first I will come to my cash ledger. On which day have they given up? This transaction happened on which day? This happened on 4th January. That means on the date column I will write 4th January 2020. Check the journal entry here. What is the journal entry? Cash account debit to Vijay account. To Vijay account, it is saying. 2 comes on which side of ledger now? You tell me, the guys who are doing it for the first time. 2 comes on which side of ledger? The words TO, 2. Comes on which side of the ledger? Debit side. The words buy comes on which side of the ledger? Credit side. Now cash account debit to Vijay account. That means this to Vijay, which side of cash ledger I need to write? You tell me, this to Vijay in my cash ledger, which side I should post it to? The guys who are doing it for the first time, you guys tell me. I should post it to the debit side. Perfect. Awesome. So in my cash ledger, I will write to Vijay account. To Vijay account 1980. Got it? So this is a posting here. So the entry will be like this. Cash account debit to Vijay account. That's how you need to read. This way, clockwise, like this. Cash account debit to Vijay account. Like this. That's how you read a particular, if you want to construct the journal entry from this, that's how you read. Cash account debit to Vijay account. Like this. Or you could say anti-clockwise. Yeah. Clock moves this way. No, yeah. Anti-clockwise. Fine. Fair enough. Okay. Good. Alright, that's all. No. It affects Vijay account also. No? That means you have to do something in Vijay. All the transaction have to be posted in all the ledger, whichever it gets affected to. So come to Vijay ledger. In Vijay ledger, what is the posting you will do, sir? In Vijay ledger, check. Vijay account is getting credited. You are debiting Vijay by these two. Yes. That means these two, what I should write here? On which day was that? On 4th January. On 4th January 2020, I have to write in my Vijay ledger by cash account. This is on the credit side. This is on the debit, this is on the credit side. Because we received, no? The journal entry should be cash account debit to Vijay account, like this. Whichever account is getting debited, you will put it on the credit side, like this. By cash 1980. Then you will write same day, 4th January 2020, by discount allowed account. by discount allowed account 20 rupees. This way you just check this side also 2000, this side also 2000. So this ledger is balanced, meaning both the side totals has become 2000 rupees. We have not purchased the goods from Vijay, or no, 1 minute, hang on. We'll close the ledger later at the end of the year. We'll see. Maybe we have purchased more goods from him. Like this, you will balance at the end. We will see. We'll read whole problem and then we'll close each ledger account. This portion, any further explanation required for anyone is or this is okay? Is this okay for everyone? Fair enough. Simple funda. Okay. If this account, if Vijay account is getting debited, then you will write whichever account is getting credited. No, you will put it on the debit side. Simple funda. If you are debiting a particular account, put it on this side of a ledger. If Vijay account is getting debited, you just read it like this. Vijay account debit to something. Suppose you paid cash to Vijay, then the entry will be Vijay to cash, no? So whatever, the to entry will come here, sir. That's all it is. The to entry will come here. Debit portion will come on the credit side. That's all it is. Yes, I understand. First time when you're doing it, yeah, it may look a little confusing and all, but with gradual, I think it is, you'll get it. No worry. That's the reason we have taken one problem with so many ledgers, no? So many twos by will keep coming in. So you'll get, at the end of the day, you should be used to it. That's all. No. It is also affecting discount allowed ledger, no? So that means we will open discount allowed account separately. I think study material has combined discount received and discount allowed. They have merged it, but I suggest you show it separately. Because discount allowed is an expense. Discount received is an income. They are separate. Okay, I think they have merged it. My suggestion is show them both separately. Done. Okay, Pratul, you said it is confusing for you. You tell me the posting now. I'll just give you a minute. You tell me what I should write. In my discount allowed ledger, what I should write and to which side I should write. In my discount allowed ledger. This is the debit, this is the credit. I'm showing you the ledger or I'm showing you the journal entry. What is the thing I should write? In my discount allowed ledger, I have to come to the debit side. On my debit side, what I should write? I should write to Vijay account 20 rupees. Is this okay? Awesome. Now you're getting it. What is confusing? You only told the right answer now. That's all it is. Fair enough. If discount allowed was getting credited, then that Vijay would have come on this side. That's all. Funda. That's it. Just the convention way of presenting it. That's all. This is the one rule they've formed and that's how they're following for every ledger. That's it. Done now? Okay. Awesome. So that means the posting for all this is done. I posted it in discount allowed ledger, posted it in Vijay ledger, posted everything in cash ledger. That means this posting completely is done. Now we can move on to the next transaction. On January 8th, we purchased a plant from Mukesh for 5,000 rupees and paid 100 rupees as cartage for bringing the plant to the factory. Cartage means transportation cost. 200 rupees as installation charges. Now you have to tell me the entry for this. Or first, before that, can you tell me what is this 100 rupees cartage, sir? Is it a revenue expenditure or is it capital expenditure? RE or CE? RE as in revenue expenditure, CE as in capital expenditure. This is capital expenditure. Perfect. Why? Because this is necessary to bring the plant to the usable condition. Hence, you will add this cost to the plant itself. Hence, it is a capital expenditure. Perfect. How about this installation charges, sir? How about this installation charges? Installation charges is also a capital expenditure because that is also necessary to bring the asset into usable condition. That means, can you tell me the journal entry for this? You purchased a plant. That means plant is an asset. Asset has debit balance. Because of this transaction, one asset has increased. Assets have debit balance. To increase it, what do? Again, debit. So the journal entry will be plant account debit. Yes. Okay. You paid some cash. 100 rupees you paid as transportation charges. 200 rupees you paid as installation charges. That means how much cash did you pay totally, sir? 200 rupees plus 100 rupees. Totally you paid how much? 300 rupees. Yes. Correct. Whom did you purchase machinery from? You purchased this machinery from Mukesh. Have they told cash is paid to the machinery or cash is paid to Mukesh? Have they told cash is paid to Mukesh? They clearly told and paid 100 rupees as cartage and paid rupees 200 as installation. That means these two have been paid. 100 rupees and 200 rupees we have paid. Mukesh ka thing have they told it is paid? No. That means this is a cash purchase, or is it a credit purchase? This is a cash purchase of plant or a credit purchase of plant? This is a credit purchase of plant. Yes, no? Correct. This is a credit purchase of plant because we are delaying him the payment. That means I have to pay Mukesh now, later date. That means the business has a liability. Liability means it has a credit balance. Because of this transaction, liability balance is increasing. That means again I have to credit. Yes. To Mukesh I have to pay 5,000 or 3,000. How much is it? 5,000, right? So Mukesh I will write 5,000. So the total plant value that you will debit is 5,300 rupees. Okay, 5,000 was the purchase cost of the plant. 300 rupees you will capitalize because it is capital expenditure. Hence, the plant will be debited to the extent of 5,300. No need to open cartage ledger because it is not a revenue expenditure, sir. Only if you open cartage account, then cartage ledger is required. Okay, fair enough. Only if you use that account, then that ledger is required. Otherwise, that ledger is not required. Here you use cash account. No? That means the cartage ledger, installation ledger is not required. You can't write purchases. I told you yesterday, if you remember. The term purchase is used for goods purchased. This is what, sir? Plant purchase. Plant means machinery, plant and machinery. Okay, is it goods? Have they told this guy is a plant dealer anywhere? No. So that means it is not goods. Only for goods we use the term purchase and sales. If it is anything other than that, like AC purchased, plant purchase, basically fixed asset purchased, you'll always refer that as a respective asset. You'll not write purchase. So you'll use the respective. If you purchased AC, you can write it as furniture account debit or AC account debit. Like that only you can debit. Fine now. Okay, this entry I need to post into the ledger. It is affecting my plant account. Have I opened plant ledger already? The way I see it, plant ledger is not there. So that means we will open plant ledger first. We'll open plant ledger. We'll write it as plant account. I'm not drawing up the full format. You know the full format, right? Date, particulars, journal folio, amount. Same 4 columns on the other side. Left hand side we call it as debit. Right hand side we call it as credit. Now help me out with the posting. What should be the posting of this? In my plant ledger, what should I write, sir? Plant account is getting debited. And it is 2. 2 which comes on which side of ledger? 2 comes on 2. What I should write here? In plant ledger, where should I post this? In plant ledger, I have to write 2 cash and I have to write 2 Mukesh. Yes, no? This is how I have to post. Yes. To cash, I think it is 300 rupees. Huh? To cash, it is 300 rupees. And to Mukesh, it is 5,000 rupees. Alright, the entry will be plant account debit to cash account to Mukesh account. This is how you'll read. Comfortable? Okay. That means in cash ledger, what will I write, sir? Because it's affecting cash ledger also. No? Come to cash ledger. And moreover, this transaction happened on which date? In fact, we should have written the date also. Date is 8th Jan, right? You should also write the dates. So I'll write it here as 8th January. I don't have space. I'll just write it as 8th January here. Okay. It should be written here actually. Plant means a tree now. No, plant means plant and machinery. Plant, it does not mean tree. Plant means plant and machinery. Not that tree can't be an asset. A tree can be an asset. Okay. Don't laugh. Okay. Tree is an asset for a farmer. That we call it as biological assets. You have Ind AS 41. You learn it in CA final. Okay. Even living plants and animals are also assets. Okay. But it's too advanced stage. So we're not discussing it at CA foundation or CA inter level. We'll be discussing all those in final level. Okay. Now. It is also an asset. Okay, but here plant means not plant, living plant. We are talking about plant and machinery. Done, huh? Okay, good. See, by mistake also some extra knowledge you're getting. Even human beings are not assets because we don't have control over them. So human beings are not assets. Asset means something which should be within your control. Human beings are not within anybody's control. They are crazy people. Today we will say something, tomorrow we will go lunatic and do something else only. Yeah. So human beings are not shown in books. They are not assets. Not accountable assets at least. Employees are not assets. You don't have control over them, so you cannot. Employees can leave the company and go anytime. So you don't have, company does not have control over employees. So you cannot show that as an asset. Yeah, all that will come. All that will come. Where are you leaving? You are in CA foundation stage. Come, no, hang on. 1 or 2 years you wait. Everything will come. Everything will be discussed in future. Okay. All right. We were doing the journal. Journal entry was what, sir? Journal entry for this is where is the entry? Purchased plan wala. Mukesh, here. This is the entry. So in my cash ledger, what should be my posting? That's what I was asking you. In my cash ledger, what I should write, where I should write. What I should write, where I should write. In my cash ledger. My cash ledger I should write. On the credit side I should write. On 8th January, I think, right? It is. On 8th January, I should write here by plant account 300 rupees. This is the credit side. So entry will read like plant. By plant means plant account is getting debited. So you'll the journal entry, by looking at the ledger, if you have to construct the journal entry, it will be plant account debit to cash account. Like that you'll read. So it will be anti-clockwise then. Plant account debit to cash account. Like this you will go and read the entry if you have written on the credit side. By means this component is getting debited in the journal entry. To means this component is getting credited in the journal entry. That's all you need to remember by. That's how I told you can pass the entries. This is in cash account. That's all. That's all, or something else is there. I think the Mukesh was also there, no, somewhere. Have I opened Mukesh account? I opened plant account. Did I open Mukesh account? No, I did not open Mukesh account. So we'll open Mukesh account also. So Mukesh account mein, I think this also has happened on 8th January only. So we have to write the date 8th January. So in Mukesh ledger mein, what will be the posting, sir? In Mukesh ledger mein, the posting will be? What will be the posting? What is the journal entry here? The journal entry is plant account debit to Mukesh account. So what will be the posting? Which side I should write in my Mukesh ledger? In my Mukesh ledger, this is your debit side. This is your credit side. On 8th January, you will write by plant account. How much? 5,000 I think it was. Yes. By plant 5,000 rupees. Now all the three ledgers, all the postings I have done. So this journal has been completely posted into the ledgers. Okay, awesome. Next, what is the next transaction then? Sold goods to Rahim on credit. That means I have sold him the goods, he will pay me later. So that's what we call it as a credit sale. This is sold goods they are telling. That means I will use which account? Sales account. So what is the journal entry for this? I have sold goods to Rahim. Rahim has not paid me. That means I have to collect money from Rahim. So Rahim is my asset. Asset has debit balance. Because of this transaction, asset balance is getting increased. Assets have debit balance. To increase it, again we have to debit. So the journal entry will be Rahim account debit 600 rupees to what? The goods is going out. Goods is an asset. Assets have debit balance. Now goods is going off. That means it is reducing. That means I will write it to sales account 600 rupees. I know. You can use the real account rule also. Goods are going out here. Real account rule says debit what comes in, credit what goes out. Here goods are going out. So I am crediting sales. So I have opened Rahim ledger and sales ledger. I think both of them I don't have. So that means next I need to open Rahim ledger. Like this, whatever account you are using, that ledger has to come. As simple as that. Rahim ledger and then sales account, sales ledger. These two you need to open. These two ledger accounts I have opened. Guys, don't worry about pen, pencil, scale on an examination. You will not have time. Always use the free hand to write, no? Use the free hand. Just like this you draw. Initially you will write it slantum, ultam palta, okay? But slowly, like it will become straighter and straighter. You may not have time to use pencil, scale, eraser and all that, okay? So leave away in the pen. Start doing freehand when you do it, okay? Scratching and all is fine. Don't do over, that's all. Somebody should be able to, yes, with pen only. Pencil you will not have. I don't remember opening pencil in my CA course at all. Absolutely no time, sir. It will be lengthy paper. Exam only I am talking about. In exam only you will not have time to use that pen or pencil eraser, scale and all. In pen only straight away using freehand do it. Okay. You can take the scale and all for the examination hall. I'm saying don't bother using them because the time will be limited. Don't waste your time on all this. For aesthetics, you will not get marks in CA. Just because I draw a very nice column, I'll decorate stiff. Okay. Absolutely no marks for that. Fair enough. You look at CA final ka, like, rank holder ka paper. Okay, you can just check first rank holder. Okay, it'll be full, like, kichi, okay, it was scratched, it was written, because the paper will be lengthy. Some scratches and all these are common. It is common in examination. As long as your handwriting is legible, that's what matters. So there is, for neatness and all, nobody will give you even half a mark extra. So don't bother too much about aesthetics. Okay, just keep doing in a free hand. Slowly, you'll get used to it. Okay, now done. Okay, awesome. Now Rahim and sales I have opened. Now come, what is the journal entry for this? Rahim account debit to sales account. That means in my Rahim ledger, what should be the posting? In my Rahim ledger, what should be the posting? Which side should the posting comes? Debit side or credit side? Which side should the posting come? In my debit side. And this transaction happened on which date, sir? This transaction happened on 12th January. That means on 12th January 2020, I will write Rahim account debit to sales account. So amount is 600 rupees. Okay, this is how you read the ledger. Rahim account debit to sales account. Fine. In sales ledger, what? In sales ledger, what? Or if you wanted one simpler way. See, in Rahim ledger, if sales is coming on the debit side, that means, see, account is always ulta, right? If one account is getting debited, other account is obviously getting credited. Yes. So in this ledger, if you are showing it on the debit side, in sales ledger, what will you show it on? Or on which side will you show it on? Obviously the ulta side, credit side. Yes, no. That way also you can remember, but I don't suggest you that. That way also you can write. So in sales ledger, I'll not write. In Rahim ledger, you wrote it on the debit side, no? That means on sales ledger, it will come on the credit side. You can remember it that way in case it is causing too much of confusion, especially for the guys who are doing it for the first time. Done? So in my sales ledger, I will write by Rahim account. Sales ledger by Rahim account. Value is same, 600 rupees. So this ledger is being posted into both this transaction is being posted into both the ledgers. We are done with. Okay. Alright, Rahim became insolvent and could pay only 50 paisa in a rupee. We had the same adjustment yesterday. Rahim became insolvent, meaning he has become bankrupt. He could pay only 50 paisa in 1 rupee. If you have to collect 1 rupee from him, then we will not be able to collect entire 1 rupee. We will be able to collect only 50 paisa. That is 0.5. Meaning 50% of the amount we are able to collect from him. That's what they are telling there. Okay. If you have to collect 1 rupee, then you will be able to collect just 0.5 from him. How much we need to collect? Just 1 rupee. How much money we need to collect from Rahim, guys? We have sold goods to Rahim worth how much? We have sold goods to Rahim worth 600 rupees. So if you have to collect 1 rupee from him, you will be able to collect only 0.5. If you have to collect 600 from him, how much can you collect? So therefore, X will be what? 600 into 0.5. This is mathematic method, no? Cross multiplication. 600, these two you multiply, like this sir must have taught you. Yes. 600 into 0.5 divided by 1. Basically, 50% of the amount you are able to collect is what they are saying. Okay, no? So 500 rupees you are able to collect from Rahim. Can you tell me the journal entry for this? Anybody? What is the journal entry for this? You are able to collect 50 rupees from or 50% from him. We have to collect 600. In 600, we are able to collect only 300. 300 rupees he has paid. That means he has paid through cash, means cash balance will increase. Cash is an asset. Assets have debit balance. To increase it again, we will debit. So cash account debit 300. Yes. But we have to collect 600 from him. In 600, if you are able to collect only 300, other 300 is loss for us. No? Tirupati Hundi. Correct. That loss only, what do we call it as? If our debtor does not pay us, we call that as a bad debt. Debt is our debtor, right? That debt has gone bad. Hence the name bad debts account debit. 300 rupees. Okay. Whom does this relate to? Whom does this relate to? All this transaction relates to Rahim account. So to Rahim account is the journal entry. This is the journal entry for this particular transaction for which we need to post now. Okay. Cash ledger we already have. Rahim ledger we already have. Bad debts ledger we need to open. That's all it is. Maybe first we will post off in cash ledger. So what is the journal entry in cash? In cash ledger, what do? we have received 300 rupees from Rahim. So the journal entry is cash account debit to Rahim account. That means in my cash ledger, what will I write it as? In my cash ledger, what will I write it as? Which side will I post this entry? Debit side or credit side? I will post it on the debit side. Yes. So which date this happened? This transaction happened on 15th January. So in my cash ledger account, I will come to the 15 date column. I will write 15 January. I will write here to Rahim account. We have received 300 rupees from Rahim. So this got posted into my cash ledger. So cash ka portion is done. That's all. No, it affects Rahim ledger also. No, Rahim ledger I think I already have opened before. Rahim here. So what is the journal entry? Journal entry is cash account debit to Rahim account, bad debts account debit to Rahim account. There are two single entries which we have combined here. So in my Rahim ledger, what will I write, sir? In my Rahim ledger, what I have to write? Which side I have to write? Debit side or credit side? That's all you need to tell me. Debit side I have to write or credit side I need to write? I have to write it on the credit side. So the date happened, the date of transaction is 15th January. So means I will write 15th January 2020. I will write by cash account 300, same day 15 January 2020, by bad debts account 300. That's all. This is the entry. So the entry will read like cash account debit to Rahim account. By means debit. So bad debts is getting debited. So we'll write as by bad debts. That's all. Okay. Yes, I think now one portion is a bad debts ledger. I think I have a space here, so I will write it off here. It's not necessary one after the other only you should prepare the ledger, okay? You can fit in. Normally you will be able to do it one after the other only because you don't have space. Okay, I have a little space here, open spaces. So I'm just writing it here, okay? Alright. So that does not mean you are below discount allowed only you should make bad debts. There is no order that way. Okay, you can open in any order that you feel like. Absolutely okay. Fine. Any order may you open ledger accounts, that is absolutely fine. As long as you do the postings correctly, you will get marks. So I have space here, so I'll utilize this. So I'll write it as bad debts account. Bad debts account. In my bad debts ledger, actually this transaction has happened on 15th January. What should be the posting? This is the entry. The posting should be, the journal entry is bad debts account debit to Rahim account. That means in bad debts account, I will write it as on the debit side on 15th January 2020, we will write to Rahim account. Perfect. To Rahim account 300. So there is my posting in my bad debts ledger. Rahim and other things we already have posted. So that means this transaction is complete. This is debit side, this is credit side. Okay, this is also done for. Any other transaction? Yes, we have sold goods to Ram for 1000 rupees. Have they told, or in fact, they have told here, sold goods to Ram for cash. That means this is a cash sale or a credit sale. We have sold goods to Ram for cash. So that means this is a cash sale. So what is the journal entry for cash sale? Cash is coming into the business. So cash is an asset. Its balance is increasing. Assets have debit balance. To increase it, again we have to debit. So the journal entry will be cash account debit 1000. We have sold the goods. So we'll write it as to sales because goods is going out. No? Yes, to sales 1000 rupees. So this is the journal entry for cash sales. Perfect. So this happened on 18th January. That means in my cash ledger, I will post it as the journal entry is cash account debit to sales account. That means in my cash ledger, I will write it as on 18th January 2020 to sales account. I think 1000 was it? Yeah, 1000 rupees. So you will write it as 1000 rupees. Cash account debit to sales account. That's how to read. In my sales ledger, I will write. In my sales ledger, where is sales ledger by the way? Sales ledger Kantanel wala here. Sales ledger, say on 18th January. On 18th January 2020, in my sales ledger, I will write by cash account 1000 rupees. That's it. So this transaction is also posted. No more transactions are there. So all the transactions that they have given, we have incorporated. This is the first step of a ledger. Okay. Post all the journals into their respective ledger. This process, we call it as posting. After you do this, we have to balance each of the ledgers. Alright, first we will close each ledgers one by one. Now, what I want you to do is, okay, just here maybe. Do the total of this for me, all of you. 8,000 plus 1980 is 9980. 9980 plus 300 plus 1000 rupees. So this side total is how much? This side total, I'm getting it to be 11,280. I have space constraints, I'm writing in small numbers. Is it okay? I told you, even ledger should match. Correct? The total of the debit side and total of the credit side should match. This side total is 11,280. Is it 11,280 here also? Check. Do this total. Is it 11,280? Is this 11,280? No, these two car total is just 4,100. Yes or no? That means there is a shortage. Is there a shortage? How much shortage is there? 11,280 minus 4,100 you do. How much is the shortage you're getting? The shortage is 7,180. Agreed? I have to write something here as 7,180. Then only this total also will become 11,280. Yes, no? Correct? Only then it will get matched. This we call it as balancing. The ledger ka both the sides should match. If it doesn't match, whatever is the deficit or shortage value, that you will write whichever side it is. Here shortage is coming on the credit side. Meaning debit side total is more than the credit side. Yes, no? Debit side total is more. If debit side total is more than the credit side total, then we say that particular account has debit balance. If debit side total is more than the credit side total, then we say that particular account has a debit balance. That is what I wrote it in my first page, if you just check. Okay. In fact, I wrote the other way around. All right. In fact, I've written credit. If credit side total is more than that of debit side, then the account will have credit balance like that. I've written for the credit one, but did you understand what I said here? Maybe for that also I will show you. Is that making sense now to you? Yes. I have to balance these ledgers. Correct. So on the last day of the month, the last day is 31st January. No? On 31st January 2020, I will write something known as opening balance. You wrote 2 balance brought down. No? Yes. Then here you will write something known as by balance carried down. By balance carried down 7180. This is ascertained as a balancing figure. That we write it as B bar F. You can just write it as balancing figure. Fair enough. Did you understand this? So hence we say assets have debit balance because asset side total will be greater than, or rather debit side total will be greater than the credit side total. Then only we call that account has a debit balance. It has a debit balance. Is that okay? Fine so far. Do you understand? This we have closed this ledger for January month. Monthly close we are doing. Yes, if you are assuming you are closing the ledger every month, then what do you do in 1st February is immediately. You have written 2 balance carry down here, no? Yes. On the opposite side, you will write on 1st January or rather 1st February 2020 it is. 2020, you will write a 2 balance brought down 7180. That's all you will write. Got it? That is what we have done here also. Last year ka 8,000 balance, we have brought it to the current year. Similarly here, 7180, no, the company has. They received 11,280 rupees or they had 11,280 rupees cash with them. They spent 3,800 and they spent 300 rupees. So 7180 is the balance cash remaining with them, which can be utilized for the next month. So for January month, we will close it. Again for February month, we will write 2 balance brought down. Like this, it will keep going forward. That's all is a concept of balance brought down, balance carried down. Understood? The guys who are doing it for the first time? Done. This is okay. For every ledger, you need to do this. That's all it is. It'll keep carrying. Month on month, you could write. Year on year, you could write. However way you're closing it. Okay, move forward now. Okay, yes. The bank side now. What should I write in the bank column now? In my bank column, what should I write now? This side total is debit 25,000. That means the total here is 25,000 because no other transaction is happening. No. This side also should be 25,000. This is credit side. Is there anything that is coming on the credit side? No. That means what do we do? At the end of the month, that is 31st January 2020, we'll write by balance carried down, arrived as a balancing figure, which is 25,000. Debit side total of bank is more than the credit side. Hence we say bank has a debit balance. Debit balance simply means debit side total of that ledger is more than the credit side. To balance the ledger, we put the closing balance. We write balance carried down on the opposite side. Debit balance does not mean balance carried down, you'll write it on the debit side. Debit balance simply means debit side total is more than the credit. To match debit and credit, we write balance carried down on the opposite side, like that. Okay. On 1st February 2020, similarly, January you may have closed the ledger, no? On 1st January, when you again open the ledger, this you will write it as, to balance brought down to 25,000. Like this, you'll keep doing the activities. That's it. Done, no? Same goes for inventory also. We need to change the ink. You don't need to change the ink. For now, for you to understand, I can use so much, so I'm writing it. You write in one pen, it's okay. That and all, so much creativity not required. Write it in one pen. If you want to do so, nobody will deduct marks for it. Why waste time? Okay. Do it in one pen, it is sufficient. Okay. Alright. Same again here. This side total is 20,000. This side also should be 20,000 only, no? Correct? I mean, 1 minute, hang on. You tell me this inventory has a debit balance or credit balance. Now you tell me this inventory has a debit balance or credit balance. Debit or credit balance? Debit balance. Why? Because the debit side total is more than the credit side total. Credit side is 0. Debit side total is 20,000. Yes? So hence we call it as this ledger has a debit balance. And to match the ledger of both the sides, on the opposite side, you will write on the end of the month, that is 31st January 2020, you will write by balance carried down 20,000. By writing this, ledger ka total will become same on both the sides. This we have ledger, we have closed it for January. Again on 1st February 2020, you will write to balance brought down 20,000. And do the again another activity. February ka transaction they have not given, so we'll just write opening balance and leave it and move on. Like this. So inventory, 3 ledgers I've closed. Like this, each ledger I need to close. That's all. Building debit side total is 10,000. Credit side total is 0 currently. That means again building has what balance? Debit side total is more than the credit side total. So building has a debit balance. So to balance on 31st January 2020, there I wrote 31st January only, no? Yeah. 31st January 2020, I will write by balance carried down 10,000 rupees. So this way, ledger ka both the sides total will get matched out. So January month ka ledger I have closed. Next on February 2020, we will write to balance brought down 10,000 rupees. That's all. So this ledger is also closed. Okay. Next, Vijay account. Check. Debit side total is how much? Vijay ka debit side total is how much? Debit side total is 2,000. Credit side total is also 2,000. That means tell me this ledger has what balance? This ledger has debit balance, credit balance, 0 balance. This ledger has debit balance, credit balance, 0 balance. 0 balance because both the side total is same, no? Because this ledger is closed. Yes, it's tallied. So that means you don't have to write any balance carried down or balance brought down because it is matching perfectly both the sides. There is no balance at all. It has become 0. And it should not have balance also. Think logically. I had to collect 2,000 from Vijay. I gave him a discount of 20 rupees and I collected 1980. That means our transaction is settled, you know. Correct? He had to pay 2,000 and we have settled that transaction. That means your ledger also should get matched out. There should not be any balance. If there is a balance, then you have done something wrong because Vijay has settled the amount. That's the reason. Okay. So is it necessary to write balance brought down for next year, next month? Yes. Write it in examination. Close the ledger and write it. Better it will be. Don't worry, these sort of questions are pretty rare. Okay, if they ask only ledger accounts, questions like this, then write a balance carried down, close both the sides of ledger. Next month or next year, write the opening balance also. To balance brought down. Do mention that. Better. Okay. So Vijay ledger is closed. Madhuka. Check Madhuka. Debit is 2000. Credit is 0. That means this side total is 2000. This side it is 0. That means this account is having what balance? It has some balance. What balance it has? Debit balance, because debit side total is more than the credit side. That means on 31st January 2020, we will write by balance carried down 2000 rupees. So both the side 2000 here get matched out. On 1st February 2020, you will write to balance brought down 2000 rupees. So Madhuka ledger is done for. Next Anand ka ledger mein. So this side total is 5000. Will it be this lengthy in examination? No. As I said, no, these sort of questions will not come, Shreya. Okay. We are doing it for practice. That's all. Just to tell you how ledger works, I am doing it. Very, very rare that this and all they will give. You have almost like, if you have talked about, you have more than 25 topics which institute can pick the questions from. Okay. And institute has to just choose about 6 questions. Those will have parts. So maximum they have to choose 15 to 18 questions among 27 topics. Okay. These sort of topics, they may pick questions, true or false questions kind of a thing, they will make it. Like this ledger question, these sort of simple things, they will not give it to you. I doubt they really give it. Okay. Anyway, when you write the examination, you will get to know. If it comes, you must be happy. Because hardly anything, this and all you have done so many times. Alright, so that means what I have to write here? At the end of the month, 31st January 2020, what I have to write? Ledger is not balancing. That means I have to write to balance carried down 5000 rupees. Now you tell me this Anand, in fact I forgot to tell about this. This Anand has a debit balance or a credit balance here. Can you tell me? This particular Anand account, you have to tell me, does this have a debit balance or credit balance? This Anand account has debit balance or credit balance? It has credit balance. Why? Credit side total is more than the debit side. If credit side total is more than the debit side, then we say that account has a debit balance. To match both the sides of ledger, we write balance carried down on the opposite side, which is debit side. That's the exact words I've written in my charts. If credit side total is more than the debit side, then that account has a credit balance, and the words to balance carried down is written on the debit side to make the total both the sides. Now, are you able to interpret this better? I've done it for a credit side, that's all. Okay. Easy. Yes, this ledger is matched out. That means to balance carried down if it's coming on debit side. Then on 1st February 2020, next month, I will write if to balance carried down is coming on this side, next by balance brought down will come on the opposite side, which is 5000 again. Like this, it will go on continuing. This is your Anand ledger. Capital ledger also. This side total is 55,000. This side total is 0. That means credit side total is more than the debit side total. That means this ledger has a credit balance. To match credit side total with debit side total, we write the words that is on the end of the month, 31st January 2020. We write it to balance carried down 55,000 and match out the ledger. That's it. On the next month, we will write, since you have written to balance carried down on the debit side, on the opposite side, that is on 1st February 2020, you will write by balance brought down 55,000. That is what I've written here also, is 55,000. If you remember this question, this was given in the question. Opening balance of capital was 55,000. That's what we did. Capital has a credit balance. So that's the reason we wrote by balance brought down on the credit side. Because of that. Every time you keep doing this and balance keeps on coming on the credit side like this. So the capital ledger is also closed. I think we have 3-4 more accounts. Let's close it off. This side total is 4,000 purchases. This side total is also should be 4,000. It is not balancing. So same on 31st January 2020. Okay. Generally purchase will be transferred off to P&L, but we'll prepare P&L at the end of the year. So for the time being, you can write balance carried down only. Balance carried down 4,000 rupees. Okay. Eligible? Okay, na sir? Maybe in your first PUC, you might have written it as by P&L because you were doing it for the whole year. I'm doing it only for 1 month. At the end of the year, all this expense will be transferred off to P&L. This is not the end of the year. I'm closing it each ledger. That means month on month, it can have a balance. But at the end of the year, all nominal accounts will be transferred to P&L. Hence, nominal accounts will not be balanced, we say. Did you understand that last part, guys? What I said, or repeat? Last part you understood, right? Sir, can't we post discount allowed and received under one ledger? Discount allowed is an expense, ma. Discount received is an income. Ideally, it should be shown separately. I know study material has done it as one ledger. Okay. My suggestion to you is open separate thing because one is an income, another one is expense. You can't knock off the two because you're giving discount to somebody. You're getting discount from someone else. These two are not same. They are different. So it should be shown separately. Discount allowed and discount received. My opinion, show it separately. Okay. Alright. This side total is 200. That means this also should be 200 only. So on 31st January 2020, you'll write to balance carried down 200. On 1st February 2020, you will write by balance brought down 200 and close it. Yes, nominal accounts are not balanced. That's what I said. No, Pratul. At the end of the year, it will be transferred to P&L. Have you reached the end of the year? Is February the end of the year? Year is beginning on January means year will end on December. In December month, when you're closing the ledger, no, instead of writing two balance carried down here, no, you will write two profit and loss account and close off this ledger. At the end of the year, nominal accounts will not have a balance. That's what I meant. Month on month, you can write balance carried downs. Fine, because every month generally we don't prepare P&L. We prepare profit and loss account at the end of the year. So the last month of the year, instead of writing two balance carried down, you will write it as a two profit and loss account like that. We are not doing that. That's the reason. Okay, awesome. So discount allowed. Discount allowed ka date was what there. We didn't write the data. Discount allowed. Which date happened? This was January 4th. I should have written the dates here. I have not written the date. January 4th. This is discount allowed. 4th January. Okay. This side total is 20. That side also should be 20. It is not. So that means on 31st January 2020, we will write by balance carried down. By balance carried down 20. On 1st February 2020, you will write a to balance brought down 20 rupees. Like this. This ledger is also closed. Only for nominal accounts we do this. Yes, only nominal accounts are not balanced. All other account like real personal accounts will have a balance. So simple funda. Any account that has a balance goes to balance sheet. That's what you mean by balance sheet. Balance sheet shows the balance in accounts. If an account has balance, it will come in balance sheet. Nominal accounts should not have a balance because you transfer that to P&L. That is the reason nominal accounts don't come in balance sheet. Only real and personal accounts will come in balance sheet. Because the real accounts, personal accounts have a balance. That balance only you show in balance sheet. Or the meaning? So other accounts you write the same funda. To balance carried down, by balance brought down. That will continue. Nominal accounts last month you should not write to balance carried down and all that. Done? Okay, good question. So bad debts count. This side total is 300. This side also should be 300. So it is not. So 31st January 2020 we will write by balance carried down 300 rupees. On 1st February 2020, you'll write it to balance brought down 300. So this is also done for last 3-4 ledgers, macha. Okay, this side total is 5,300. This side total is Nothing. That means plant account. Debit side total is more than the credit. That means it has a debit balance. All assets have debit balance because their debit side total will be more than the credit side total. So on 31st January 2020, by balance carried down 5,300. On 1st February 2020, you will write to balance brought down 5,300. This is Damdamar. Last is Mukesh. This side total is 5,000. This side also should be 5,000. Unfortunately, it is 0 so far. That means on 31st January 2020, you will write a to balance carried down 5,000 rupees. Next month, that is 1st February 2020, you will write by balance brought down 5,000 rupees. Mukesh ka ledger also done. Next is this side. This side total check Rahim account. This side total 600. This side total 600. That means Mukesh, smoking wala Mukesh, correct, smoking ad wala. He's gone. Yeah. Okay. 600, 600. It is getting balanced. That means there is no balance. And they should not have also, because we sold goods to Rahim for 600 rupees. 300 rupees he put us Tirupati Nama, which we call it as bad debts. 300 rupees he paid us. That means our transaction, hisab barabar, correct? No. Yes, we have settled our deals with him. So that ledger should not have a balance. And it is not having balance also. Sales, this side total 1,600. This side also should be 1,600. It is not matching. So on 31st January 2020, you will write to balance carried down 1,600. On 1st February 2020, you will write by balance brought down 1,600. All the ledgers officially over. Problem also officially over. You got it, What should we write in working notes? Working notes, nothing is required. What working we did here? No working and all we did, no. See, if your calculator is something, we should show it to the examination. Nothing we did here. What calculations we did? No calculation. If you want, you can just show this calculation. Trade discount calculation. If you want, you can show that as a working note. But it is fine. Alright? Sir, getting into Buddha zone, eh? No, you should not get into Buddha zone. No? One more problem is there, Noda. Yeah? One more problem like this is there. Another half an hour, 45 minutes to 1 hour is still remaining, Noda. Cha. Now only you went to Buddha zone, huh? Cha, too bad. No problem. Don't worry, I am not into Buddha zone. I will pull you out of the Buddha zone now. Wait. Okay, they're counting time and telling 25 minutes it seems. Okay, fine. Don't worry, it's a small problem. Illustration number 1. We'll do illustration number 1. Prepare stationery account of a firm for the year ended 31st December. For the year ended 31st December 2020, duly balanced off from the following details. Inventory of a stationery 480 rupees. Hang on, don't look at the solution. Inventory of a stationery, they are telling, sir. They use the word inventory for goods. That means, can I say this guy is a stationery dealer? Can I say this guy is a stationery dealer? Can I say so? Yes, perfect. Okay, inventory of a stationery on 1st January is 480 rupees. Can I say inventory is an asset? Can I say inventory is an asset for him? Stock, this is a stock. Is it an asset? Yes. Assets will have what balance, sir? Debit balance or credit balance? Assets will have debit balance or credit balance? Debit balance, correct? So on 1st January, they have given a balance of inventory as 480. That's what they're saying is inventory of stationery is 480 rupees. That means this is opening balance they have given. You tell me opening balance of this asset, which side in ledger I should write? On the debit side or on the credit side? On the debit side, should I write to balance brought down? Or on the credit side, I should write by balance brought down. What should I write? Which side I should write? This 480 rupees. I should write it on the debit side. Why? Sir, these are assets, no? All the assets will have debit balance. That means opening balance of all assets will come on the debit side. So on 1st January 2020, you will write to balance brought down 480 rupees. Check here, they have not even maintained journal folio column. They have ignored it off. maybe what they're trying to tell you in this exam is maybe you can cut off that column also if you have space constraint. Date, particulars, amount. These three are must. Journal folio, if you have space, write, otherwise ignore. It's okay. Study material also ignoring. Alright? But my suggestion is include it off. Better. Who knows how they will correct and all that stuff. Better not take a chance. Put off journal folio also. Easy. Okay, now. First portion, is it okay for everybody? Debit balance means opening balance will always come on the debit side. In fact, we also proved, no, just check here. See, assets. Now, plant also was an asset. By balance carried down, at the end of the month we wrote here. But balance brought down, we are writing on the debit side only because it has debit balance. No? All the assets ka opening balance will always come on the debit side only because it will have a debit balance. That's what we mean by debit balance. Okay, fair enough. Closing balance will come on the credit side because debit side total will be more than the credit side total. To balance, we write just balance carried down. That's it. Okay, and that's the reason we have written here 2 balance brought down 480 rupees. That's the first transaction. Purchase of stationery by check. Purchase of stationery by check. What is the journal entry for this, sir? You purchase the stationery. So the journal entry will be stationery account debit. You're preparing stationery account here, okay? So stationery account debit. Maybe you have multiple goods. Hence, instead of just saying purchase account, they're asking you. In fact, they specifically asked you to prepare stationery account. Okay? When they ask you to prepare stationery account, don't write purchase account here. Okay? Use the stationery. Fair enough? There's nothing but purchase of stationery only. If you have multiple goods, right? You can use that goods ka name also you can write. It's not a problem. Okay? Fair enough? This is purchases only, guys. Don't get confused. Okay, no? Yes? You're purchasing a stationery and they clearly ask you to prepare stationery account. Hence, instead of purchases, I'm writing stationery account debit to bank account. Agreed? This is the journal entry for this. Stationery account debit to bank. Give me a confirmation so that I can move forward. Stationery account debit to bank account 800. That's your entry. Okay. Yes, that means in my stationery account, what will be my posting? On 5th April, I will write to bank account 800 rupees. Say in this journal, I have posted into the ledger. Stationery account debit to bank account. These 2 transactions I have posted. Now the last transaction for the class, for the day. Happy now? Okay, last transaction for the day. Purchase of stationery on the credit from 5-star stationery mart. So you purchase the stationery on a credit basis. That means what is the journal entry? Same. Instead of writing purchases account, since I have specifically asked stationery ledger, instead of writing purchases account, I am writing stationery account. That's all. And otherwise, I would have just mentioned purchases account itself here. Stationery account debit to what, sir? Can I write to cash or bank? Did I pay the money? No, I have purchased this from credit. That means from whom did I purchase this from? 5-star stationery mart. That means to these guys, I need to pay. That means I have a liability towards them. Liability has credit balance. Because of this transaction, my liability is increasing. Liability has credit balance. If you have to increase it, again you have to credit. So that means the journal entry will be stationery account debit to 5-star stationery mart account. The amount will be 1280. This is the journal entry for this. They're asking you only stationery ledger, not everything. So that means in stationery ledger, what will be the posting? You'll write it as a 5-star stationery mart on 15 January 1280. That's all they gave. So the total of the debit side is 2560. Credit side total is 0. That means stationery account has a debit balance. So to match at the end of the year, you'll write by balance carry down 2560. Next, you'll write on 1st January 2021, you'll write 2 balance brought down 2560. Only one account they asked, stationery. That's all it is. The last problem, we did a whole lot of ledgers. Here, only one ledger was asked. Like this, they will ask in examination, maybe for 2 marks. One of the ledgers they may ask you. Okay. Fine. Any confusion, any doubts, anyone? Or all okay? Fine. All right then. So we'll catch up tomorrow at the same time then. Take care. See you. Bye-bye.